Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick, Mitch Hotch with you this morning, as we are every morning. Well, yesterday was all fun and dandy and exciting. Market rallied off the Fed, and I'll let Dennis say it, actually. Dennis says it better than me. Where's my...
It's gone.
Where's my soundboard? And it's gone.
I did the soundboard for you.
No, that's not the one.
Kaplooey?
Anyway, I think I deleted the soundbite, but we've given it all back. That's the point. We've given it all back. That is the point of the morning. We're going to talk about that rally and the unwinding of that rally and what that means going forward. We'll take questions from our chat. Our guests today, two guests on the docket, Mark Chaikin at 8:15 and Buck Andrews at 8:35. Today's show is also sponsored by Inform. I'll put the link up on the screen there, in4m.info. There it is on the bottom. Let's go to Joel, and we'll go to Joel's charts, and we'll have Joel explain to us what exactly happened overnight.
Still scratching my head on this one. Had a nice rally overnight. Took out that high from yesterday, got 5 points above it, 78.50, and then 335 this morning. Boom, we turned around and we lost all that. We went red. We went more red. Pre-market low 32.50. Now this is interesting because you didn't even get to yesterday's low, which is 39.25. I think I would have had a bid or two out there. So a tricky day going into the quad witch. A lot of jockeying going on, and this is a tough one. Don't have a great feel for the market yet this morning. Gold is in the green by 4:30 at 1731.30. Silver's going the same way for a change. Silver is up 22 cents. Actually 22.2 cents, room 222 at 26.27. And Bitcoin, that's just hanging comfortably near 60K. We're up $175 at 51,155. Triple D, you sign off at 8 o'clock. You got a picture of the markets.
Yeah.
You check your phone a couple times.
Yeah. I go to sleep. Markets are fine. I wake up in the middle of the night, take a leak, and I guess I'm going trading because this was 5 a.m. and I saw the hammering happen, and I was like, okay, well, I got to rework out of some stuff here. So went in there, so many efficiencies at 5 a.m. Anyways, I worked out of some of the stuff, some of my longs. I was trying to work out some of the tech longs and trying to cycle over because I thought we were going to be having an okay day today.
I know.
And that takes me completely by surprise. They turn around and hammer the stocks and give back the entire Powell pop. I don't know what to say. I mean, I've been worried about the market for a while. I was worried yesterday morning, but then Powell comes out, tells us he's never going to hike interest rates ever again, basically. And, we get this huge rally. So you think, okay, well, you can't fight the Fed. I mean, the Qs go from 317 to 324 and kiss the yesterday's high, the 2 day ago high. So now we give it all back overnight on basically nothing. I don't know what to say. You got support in here, 316 to 317, because this was, where we were trading before Powell gave the Powell pump. So I think you do have some trading support here. So I think you bring in your shorts maybe, but I don't know. I it's such a tough market. Doug Cass always says the market with no memory. I mean, we are in that right now because it completely forgot about pumping Powell. Spencer, maybe this is a time to go to the meme.
Yeah, Spencer.
Sure. David from Twitter, wherever you are, sent us what I thought was a rather flattering picture. Rather flattering picture.
Yeah. Looks pretty good.
Yeah.
He's showing it right now. Boom. I tell you.
There's our friend.
Yeah, pumping Powell right in the middle, pumping as he always does.
It's pumping Powell.
We got Joel. We got Jay.
Joel.
We got
Mitch, man, you're caught.
Mitch,
early.
Spencer too. I had no idea you guys looked that good without your shirts on, man.
I don't even know how to
right
put my
there.
hands like that.
There's a lot. There's a lot you don't know about me. There's a lot you don't know about me. All right.
Wow, that's
Spencer can
impressive.
pump some iron there, huh?
David from Twitter tipping the
We
cap.
love. I saw that last night. I couldn't stop laughing.
I want to
That's
see
good.
Spencer in those swimming trunks, though.
Yeah.
I mean, the only one that really looks like that in real life is me.
These photos are from.
Yeah, because the swimmer over there. If you look like me, I got the big belly going down. Yeah,
Who's
I got
Hans?
the six pack going on with the six
I just
beers in
don't
my
know- I
six
don't
beers in my belly.
Who was Hans and who was Franz? It's unclear. Unclear
I'm Hans, and this is Franz. And
from this picture.
Powell's here to pump up the markets. What's Pumping Powell thinking right now, though? Like, okay, he gives a nice pump. He's like, okay, mission accomplished. You know what? He's strutting. He's showing off his stuff here right now. And then overnight, they slap him in the face and they say, hey, you can control the short end, but you sure as hell can't control the long end. And they're hammering the TLT. It is off the lows, but they gave it all back and then some. So TLT is now trading on a new low of the move, which is never good if you're long. You never want to be long something making new lows on the move. This is fantastic for banks. You can see the banks showing a lot of strength here this morning because think about the environment. Powell not raising the short end and the market raising the long end for you. That's called spread. And that's what the banks want to make. So this is why the banks continue to rally. It's all TLT driven here right now. Powell's not going to ever raise the short end. He's going to lend, out and we're going to have the long end there. It's going to be a beautiful environment for the banks. And that's why the banks continue to show a lot of strength. I mean, across the board, Goldman Sachs making new highs, Bank of America, new highs, JP Morgan, new highs, Citigroup, new highs. I have some pairs trades in a couple of these, but totally hedged off. So anyways, I don't know. Is this the bank trades definitely got crowded now. It's been running, but for good reason. I mean, this TLT has been hammered. This is what the bank's been waiting for.
Yeah, for a long time. They still got, I mean, you can look at the chart and say, wow, we've really come off. But if you look where we were at, back at the beginning of 2019, still more room. It's a trend and it's broken. And man, they can just, borrow just the arbitrage there for them, right? For the banks. I mean, printing money. But want to do a few earnings here? I know we got Mark coming on in 6 minutes. A few earnings plays or any particular movers jumping out to you. I saw this UPST, and I never heard of the stock before, but Upstart Holdings. See the rally in that one, Triple D, or is that something not in your world of trading?
It's in my world of trading, but I don't know what the news is. Is this takeover or something? What's going on?
No, it's literally just earnings. That's all it is.
Craziness.
Earnings report. Yeah. I'm like Joel. I never heard of the stock.
I've traded it, but wow.
Earnings out last night, and they made $86 million in
86. Wow.
In revenue last quarter. Yeah. I mean, that's it. That's the news. Is they had earnings and they gave guidance, and they're going to acquire Prodigy Software. They announced. So, I mean,
$90 for me. I mean, this is a pretty easy call on the long side. You got up to 91. Not an easy call, but you're leaking now. Right here, you had this daily high right here as well. Where was that at? Didn't quite get to 93, but I don't know. I think if you're long this thing or you want to try and short, you're going to have to pick an intermediate level ahead of that pre-market high, giving all these people their money back from when we were under 50.
Yeah. I was going to say something, and I just forgot. The Upstart thing kind of distracted me, and I forgot what I was going to say.
Well, I'll take it back to the markets here because we're not all Upstart traders here. But, I mean, what do you think on tech? Like, let's go talk tech because everybody's into tech. I mean, we do put the double top in yesterday, Joel. So we get, what we're talking about is yesterday's high, very close to the previous day's high. We would completely reverse off of that level overnight. Despite trading up, like I said, for most of the after-hour session, the entire after-hour session, the market was positive. Then around 3 o'clock, they start pulling the rug out from under, and they just kept hammering it to give it all back. I mean, I look at yesterday's low now, 315.68, and I think, okay, you got good support there. got to hold that. I just think it's such a crowded trade, and we don't know. We still don't know if the tech top is in. I mean, what I mean by that is the valuations are just stupid. We know that for a long time, but it's been forgiven. I mean, on all these stocks, it's been forgiven. Every stock that Kathy Wood owns, the valuation's nuts, but she doesn't care because she's in a bull market, and and as long as you stay in the bull market, those multiples continue to expand, and there is growth there too. But Tesla had a great candle yesterday. It was a complete reversal. Like it's at the lows, rips up higher, looks great. And then, boom. So is this just another pullback to buy? Like, I am really, usually I have a pretty good feel for what's going on. But last night, this overnight movement took me completely by surprise because I did not think, I'm a big fan of the 2-day move where you get a counter trend move. Okay, now we got some people going. Powell's winning. You think you're going to get a follow through move. And to give it all back, makes me spooked again.
You know what?
Maybe this is time where, you're just buying dips and selling rips, and maybe you continue to do until it doesn't work anymore.
Well, I'm looking at the Qs, and until these things cleared, the Qs 325, just under 320. Yeah, look at that. I mean, until you look at all those daily highs, 324 and a half, 325. So didn't even sniff it yesterday. So I mean, just looking at the Qs, look at this technically. Until we clear this 324 and a half, 325, then hey, you want to do a projection of this move from 337 to another 30-point move down from 325 takes you under 300. So it just looks tired. You had the break, you had the rally. You're trying, but it just looks like people want out there. So that's looking at the Qs. I like to flip, from bullish to get super bearish.
Well, we all do that. That's human. That's human nature.
But no,
I do it 10 times a day.
But I mean, I just think there's expiration here. I'm just gonna wait a day. I'm not gonna make any, big major calls. I'm gonna see what happens on the quad witch, because we were talking about this on the pre-market show. They could sell this thing off today, right? And things look really bad, and then they just have 89 billion trillion to buy on the open tomorrow, right? Jack it up on the open, and everyone that's short is up the creek. Everyone that sold out their long is up the creek. They blast it off the open tomorrow, and then they sell it off again. So it's just tough expiration, and I'm just going to wait. Do we break down for the lows from this week at 39.13 Main on Monday, or do we break out? Finally break out and get to 4,000 or 400 in the spider. I think it's just a tough range, and you got to be a little bit patient here.
The other thing to consider is that everybody, and in Reddit especially, is interested in big money fast. And they're not interested in owning the mega caps as much. And we've talked about this. They're not interested in the Apples and the Amazons. I mean, we can just feel it from the show. Like 7 years ago, 6 years ago, 5 years ago, when we started doing the show, everybody wants to talk Amazon and Apple, and they want to talk the big guns.
Never did.
And nobody wants to talk those stocks anymore. They want to talk TKAT. Because it's the new hot, stock. And I'm not saying I'm just saying this is the market that we're in. We're not interested in trying to make 7-8% a year. I want to make 100% in a week. I see a commercial. There's a new commercial going on CNBC. I don't know what the hell. Some guy started with $4,800 or something. Did you see this commercial?
No.
I just caught it yesterday. He's advertising it on CNBC. Started, 2 years ago, my account, $4,800. And now that account has built up that it pays me $50,000, a month or something. And he's built the account up. It was a new advertisement. I'm like, this is what the mentality has become. It's like, it's so much greed out there. It's like, get rich as fast as you possibly can. And it makes me just think like, I think we are in the most epic bubble. That, like even, from a multiple perspective, like we're now topping over 1999 in a lot of stocks. Like there wasn't stocks trading 80 times sales, and now, people have just got to come in. They just got, I'm going to go TKAT. And, this thing blasts off. It's NFT play, right? So, these NFT stocks, $2.70 a week ago is $28. I mean, this is where the action is all moving to. People want to just like jump in to where they're going to get rich the fastest. And that's not good for the overall market because you got, like the S&Ps and, you got rotation, you still got, and there's still the majority of institutional money isn't jumping in all this stuff. But as there gets to be less and less, as more and more people are interested in the fast buck, it makes you think that there may actually be a correction in some of the other stuff just because people are selling that stuff. We've been talking about that, selling that stuff to raise cash to buy, the newest hot idea. I mean, there's people paying, $49 million or whatever, for digital art or however much it was, if there's even more than that. I mean,
69 million.
It's
Yeah.
all this age.
Can I get Mark on and
Bring Mark on all these thoughts.
Yeah, I'm sure Mark also has thoughts. Mark
Yeah.
is the founder of Chicken Analytics. Joins us every other Thursday at 8:15. Mark, do you see the same thing?
I do. I'm willing to talk about Apple. A power gauge rating on Apple has gone bearish, as has the rating on Zoom and Netflix and Peloton. Guys, there's a changing of the guard.
Is it a small cap market going forward? Is kind of what I was trying to get at. I mean, is it like a complete changing of the guard here where we've been, tech no matter what? And are we now, one, moving into a value market, but two, moving into a small cap market as well where people can get rich faster?
Small caps are on fire, and I agree with Joel, 325 on the NASDAQ, absolutely critical. It's where our long-term double exponential smooth averages, so it doesn't mesh with any of the conventional indicators. So we held 300, we bounced very weakly, and that's reflected in a lot of the tech names. It's reflected in software, which is really my beacon for the market. If the market's going to grow, it's semiconductors and software. And when trends in value and small caps finally assert themselves, they last for years. It's not just a 3-month passing fancy. So I agree with you. Small caps are really where the leverage is in the market. You don't have to buy junk. I mean, there's plenty of quality small caps out there from, remember Foot Locker is a great brand. It's a small cap stock, small to mid. Right. Signet reported really good numbers this morning, small to mid. Retail small caps, I think, are a really interesting investment area and trading area.
There's been so much rotation from those high PE stocks to the low PE stocks. I mean, Viacom is the poster child for this. The PE was maybe just completely stupid when it got down to like 5 times earnings or 4 times earnings it was trading. And now, you've seen this run from like in the last 3 months from 30 to 90. And, it's the poster child for we have moved into a value market. And, we've seen this over the course of the last 10 years where tech has outperformed value for so long. We've seen these we've seen these points where value comes into favor for a week or two, and you're like, is this the time? Is this the time? This is the longest, I think, we've been like 3 months where value has been outperforming tech now. So it's more than just, a little blip on the radar now. It's actually a trend. And the question is, I guess, are we going into one of those prolonged periods? Like people don't realize in 2001 to 2007, value significantly outperformed tech. So, and growth. So, we go to these periods of cycle. We just haven't seen them in the last decade. It's been growth, 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 growth. If you want to punish the maximum amount of participants, slamming these growth names and continuing this value trade would do that. So does the trade continue?
It does continue. I don't think tech is dead, but I don't think it's going to be a leader. It's going to participate, but it's going to be 1 step forward and 2 steps back. So you've got to think of selling tech on rallies like we've seen here in the last, call it 3 days. Yesterday was a pretty embarrassing day for tech because you had all the ingredients with what Jerome Powell said to assume that rates weren't going to starve off the tech sector PE. It's really a PE compression that you're seeing. The difference between now and 2000, in my view, is that, there are some stocks with no earnings, or very little in the way of earnings, but they do have revenue. But the leaders that took us to the highs in September, Microsoft, Amazon, Google, and Google, by the way, still has a bullish rating in our model. So, there's some havens for tech, but call them mega cap growth stocks instead of tech. And now you're broadening the tent to include a lot of stocks that people own. People still own Zoom. It's one of the most widely owned stocks, even among the millennials. They're getting creamed in it. And
Where
when
do you think Zoom is a year from now?
I don't know. It could be 100.
Yeah.
It depends on
Getting lower, though?
adoption. It's heading lower. We've had a bearish rating on it for 4 months, 5 months. The problem with Zoom is they didn't monetize the COVID stay-at-home surge. And so to make up for that, they're rolling in other services like video, telephone and chat and, sort of productivity software. Well, it's not proven that people want to get that from Zoom. And Ring Central has a very competitive product. It's really a wrapper around Zoom. So they're going to be out there competing with some of their own clients. They're going to be out there trying to get you to pay for services. When you're at 100 times earnings, whatever they are, 100 times revenue, there's no margin for error. So I think it's going lower. I wouldn't own it here. And the question is how low? And I've been a big proponent of not buying puts in an uptrend that shows you a persistent pattern of higher highs and higher lows. So only if you get that rally like we did around earnings above 400, above 425, would I go on to the put side in Zoom. If you buy puts here, you're sort of buying puts into a mini hole. So very, very downbeat on these stocks.
What about, I was just looking at DoorDash as well, and this is a stock that we've dogged on this show basically since it came out, just saying, and I just think there's going to be competition. It was a stock that completely benefited from a stay-at-home economy, and, you can see what the stock has done in the last months, went from 220 to 131. I mean, the valuation on this one is just stupid as well.
I think Motley Fool may have recommended it yesterday. I'm not sure.
It's come down a lot. I mean, it's come from 220 to 133.
Well,
but
at the highs, DoorDash's valuation was bigger than most of the people who use them. Like, I don't know if it's bigger than Chipotle, but there was an interesting report out that at the peak, DoorDash had a valuation that was bigger than the people they serve, which is insane because they're not making any friends out there in the restaurant world. They're taking a cut, and it's hurting profit margins for restaurants. Back in, it's very analogous to a bull market that probably nobody on the call has ever, a bear market, 1969-70. You had a stock called Levitt's Furniture. It was a chain of, I think, 20 furniture stores. It had a bigger valuation than Montgomery Ward, which was the largest catalog retailer in the world at that point. Company eventually went bankrupt. We're starting to see stuff like that. The problem is, for everybody on this call, the final phase of a bull market can get crazy. And so if you try and call the top, you're watching stocks go up, and then inevitably, if you're like me and you're human, you dive in at the peak. And so it's a little bit of a balancing act right now. You know that the knife is going to cut deep, but you don't know when.
Yeah,
Mark, I love having you on the show because you can even bring up things that I don't remember.
There you go.
You make me feel good. No, we're online with Mark Chaikin Analytics here. Let's just talk just real quick about the expiration, because I'm trying not to get super bullish or super bear. I mean, obviously bullish, the trend is up. We talked to you about a year ago, during the pandemic, and we had the expiration, the March expiration with the gamma unwind. I'm hearing some different things in the futures markets about, some exposures some different firms have coming up to this expiration. What do you think? You think we just kind of ride it out the next couple of days and see what, read the tea leaves next week? Is there any gamma unwinds? What are you hearing out there for the quad witch?
Well, first of all, you zeroed in on a really interesting pattern. It's a trader from Chicago who, and he's well known, and the name eludes me. I have 3 of his books behind me. He said 22 years ago, looking at trading patterns, that if the week has been up, Thursday is typically a down day. If the week has been down, Thursday is typically an up day. It doesn't work all the time, but if you look back, you'll see that the Thursday reverse effect is even stronger than turnaround Tuesday. So I think you're onto something that we will get a down day here, where the futures look horrendous right now. But that doesn't tell us much about Friday. And I think Friday is probably going to be an up day. We haven't seen a sort of washout with a Thursday, Friday down in a long, long time. So I think today down, tomorrow up. There is some gamma unwind, according to Charlie McElligott, who is the wheel on this type of analysis at Instinet.
Instinet, boy, I haven't heard that.
Yeah, well, it's a research firm now. And he has been talking about a gamma unwind in the Qs.
Mark, I want to ask you about a couple of individual names here. First up, Chat's got a memory like an elephant, man. They want to know about Pinterest. You still bullish?
No, Pinterest has been bearish, and now it's neutral because it reclaimed our 200-day average. I love the company. I think they're doing everything right. Their tie-ins with Shopify, the whole idea of the kinder, gentler social network, but the technicals aren't right here. Okay. And by the way, Fubo, Dennis, power gauges turned bearish. So
Fubo finally is turned bearish.
Yeah, and, reality caught up to it.
What about FedEx here, Mark? They report earnings tonight. We know that's one of your favorite stocks to watch as like a bellwether for the market.
Well, it was a bellwether, but we didn't pay attention to it in terms of large cap because the market has shifted to value. They've got big headwinds going into the earnings. You know, every quarter going forward here is going to suffer from comparison with the business boost that they got from the COVID shop at home, stay at home syndrome. So I think FedEx is a tired stock, and I don't see it doing very much here.
Okay. Mark Chaikin is the founder of Chaikin Analytics, a long-time veteran of bull markets, bear markets, sideways markets, corrections, you name it, he's lived it. Mark Chaikin, as always, thanks for the time, sir.
My pleasure. Be well.
All right. 8:28 here.
This guy, I tell you, if anybody has CNBC on, I don't know how looking at this guy can make you bullish.
Oh my God. Is that the CEO?
Yeah.
Who is this guy?
It's the CEO.
Yeah. What is he, a fireman too?
I was just going to say, you better get out to the crossing guard there to help the kids go to school if they're going to school.
He's right there down the line working, and they're building their cars. And
yeah, he's on the assembly line. That's bullish. He's on the assembly line.
Yeah, but it's not moving.
Oh, okay.
The assembly line's not moving. Good observation there. We got an economic number coming, don't we, in 1 minute?
Oh, yeah, we do.
What do we got? What do we got?
Jobless claims.
Remember, jobless
claims. Is that going to be a mover for me? I got to go wide?
It's a weekly number. I mean, I don't know.
I've been moving lately on these numbers, though. I'm scared. You got me spooked all of a sudden.
You're scared.
All right.
I guess scared.
Let's see what the number is. We're coming
We'll
out.
go to a 1 minute here.
30 seconds. We got a number.
Ooh, 1 minute chart.
Just commenting further on what Mark just said, and I completely agree because I can remember this, but he was saying that in a bull, the final phase of bull market can go nuts, and that's exactly what happened. So we rolled over from 1999 to 2000. I can remember the 3 months from January to March of 2000.
Crazy.
We went from NASDAQ 4,000 to NASDAQ 5,000 in 3 months. And we just were buying. Everything was just getting bought. And you're just like, I can't understand it. It's just buying tech stocks. And here comes a number. I guess it's not going to be a nothing burger because we went wide. It went wide on SPYs, 20 cents. It's 20 cents wide, but I don't see much there. But I guess just to continue my thought, because it doesn't look like the number's going to move the stocks. Then they pulled the rug out from under it in March, and it just never stopped going down for basically a year and a half. And that's when the NASDAQ fell from 5,100 to 1,100. The NASDAQ itself fell 81%. And, that's why you've got to be aware. If you're on margin, if you're just invested for the long haul and you're not on margin, you can take drawdowns of 50%. It's okay. You can. They suck, but you can take it. You're in those stocks, and eventually, 20 years later, Microsoft came back and made new highs 20 years later. But, I mean, if you're on margin and you take a 50% drawdown and you're all tech stocks, then you're a 2-to-1 margin, you're going to get wiped out. So that's why I've always said I don't like investing on margin. You trade on margin, you minimize your damage, you use discipline when you're trading, always cutting your losers. But if you're going all in and you're on margin, I mean, we have a lot of things to worry about here, and maybe it's going to get stupid, and maybe we're just going to keep blasting off, and maybe Zoom's going to go to 1,000. We don't know. Nobody knows anything the path. But if you're just looking for what their value hat on and looking at investing right now, and you're saying, we've been saying for a long time, a lot of these valuations are just stupid. Look at what the market has done in the last 3 months. It's correcting stupidity. Really, in the last 3 months, the market has corrected stupidity. It's been selling the ridiculously priced stocks and buying the cheap stocks. Value has come back into favor. Does it continue? I mean, that's what it did for 6 years, from 2001 to 2007. It corrected stupidity. So it took 6 years to correct stupidity. Is this the market that we're going into? Are we now in the process of correcting stupidity? That's a big, and we see GameStop, and you're like, yeah, we're in silly town. I mean, there's stupidity still all over the place. But the market is correcting stupidity in certain stocks right now. And I'm not sure if that trend continues or if we just get stupid again. But in the long run, maybe the market is efficient. It just takes years and years to correct stupidity.
Just to recap, finish up the thread on the economic data, we had a couple data points. Jobless claims for last week. 770,000 jobless claims filed for the week of March 12th versus 712,000 the week prior. And this is interesting. The Philly Fed Manufacturing Index for March up to 51.8 versus 23.1 in February. So I guess that goes to what Jay Powell was saying, right? I guess the economy is coming back if that number is to be believed. But jobless claims more than expected. Fed Manufacturing Index, Philly Fed Manufacturing Index, also way higher than expected.
Real quick, so just want a question from the chat. Someone about going wide when Dennis says that, and where I say that to him. Dennis makes markets in a lot of stocks, and when there's uncertainty out there, when there's an economic number, he wants to be a safe distance from the market. He doesn't want to get picked off on a surprise like that. So it's just that's part of your market making skills. Eliminate risk on headline numbers.
So what that means, then, just to add more detail, is Dennis is on the bid and the ask simultaneously right. And
I mean, yeah, in some stocks. I mean, you've got if the better case, if you look like a Citadel, or and you look at your market makers on the floor. Citadel's off exchange, but they're on exchange as well. I mean, SPY went 25 cents wide. That's your high frequency trading firm saying, okay, we got a number here, and we're not going to make it a 2-cent market right now in SPY because we have new information coming off, and we don't want to get picked off by faster algos. So we go wider where we feel comfortable making a market. They might go 20 cents wide. If it's the unemployment number, we sometimes see SPY go 60 cents wide. So the bid and the ask, the difference between the bid and the ask is what we're talking about. Right now, SPY is a nice, tidy 2-3 cent market because it's just pricing off of futures. But if futures go wide, SPY will go wide as well because then you can't arb it. And there's obviously lots of other ETFs to arb back and forth between two. Fungible liquidity is what you call it. But I mean, this is what market makers do to protect themselves because they're coming here trying to make 2-3 cents. You're not going to stand in there when they got an economic number coming out at 8:30 on a 3-cent market, get picked off. Somebody lifts your offer, and you lose $1. So they got to go wider to make up for the risk of getting picked off. It's called adverse selection risk. They've got to go wider to do that.
Can we look at Ride for a second here? Because
sure.
That interview on CNBC is over, and it doesn't seem like it went particularly well for Ride.
Well, they had numbers too, didn't they?
Yeah, they had earnings, and then they also revealed there was an SEC investigation. I think that stems from those often stem from short reports. Whenever a short seller will come out against a stock or company, an SEC investigation will follow. So that's not necessarily indicative of anything bad, but it's still notable. Sounds like the CEO Steve Burns. Sounds like there is some confusion about. And we've seen this sort of thing before, how solid their orders were. We've seen this sort of thing. We saw this with Nikola as well. Is a company says they have orders, but no, they're more like placeholders.
They're not paid orders.
Not paid orders.
And he was on the conference call, and I believe, it was Philip Bo that was saying, because he was following the call. And he's being very careful with how he's saying his words. Saying, they are pre-revenue right now. They're not collecting money. It's basically indications of interest more than anything. These orders. It's not like people are paying, certain amounts of money to get in the queue. It's just indications of interest at this time. So, you're still pre-revenue on this. This is as speculative as it gets. So you can't look at Rye and say, well, it's $30, it's 14, it's going to go back to 30. It doesn't have to do anything. I would say it was SPAC. You're probably going to find support at 10 if it wants to get into silly town and really start to sell off, just because these things. But remember, it's post-deal too, so you don't even have to find support there. I mean, it's ugly. You're in, a deleveraging on, high growth names environment here right now. We've been in that for a while. I mean, you can look at these charts of Ride and DoorDash, and, companies that don't have revenue, the market is not into those right now. The market's been moving into the value trade for months. So this is a classic example of a stock that this market isn't interested in. So like Mark says, I think rallies are to be sold in Ride. It's nice, that it's had a couple little pops in there, and it gets you,
It's crazy it gets those. I wonder how many
times. It had a nice bounce 2 days ago. I mean, it got sold off to 1364 and got all the way up to 1638. I hope maybe Marcus snuck out maybe on one of those bounces because he's good like that. He's managing risk and trying to sneak out of it because we know he was in this one. But you got to be careful of some of these stocks that are just, you can't just say they all come back because we've been in this bull market and it seems like all the stocks come back, and we've been in bailout city where, we've had bag holders getting bailed out for years on different stocks. But we're now, entering this market, I feel like, where some of these stocks are not going to come back. I don't feel like Zoom is ever going to be $550 again. Again, I say that and then it'll come and it'll go there. So you can never say never. But, DoorDash and Zoom, some of these are just, the valuations are so stupid that it's, just, it makes you just think that there's no way it's going to get back there. I just feel like we're almost like in like April or May of 2000 now. I feel like
how could you be bullish Dash if you think that we're coming out of this pandemic?
Doesn't make any sense. That's why it's sold off, Joel. I mean, you're exactly right. You're exactly right. We've got the vaccine. We're coming out of this, and
and you're still gonna
you're gonna go pay a 50% premium for your food to get.
I don't understand it. Like, I still can understand if you get a $10 meal from McDonald's, which would be, I don't know, that's a lot of McDonald's food. Like, what do you have to? What
value menu? You get on that value menu, eh, Joel?
We know Joel's a kind of guy.
What do you get? I mean, what do they charge? They charge $2 for that? $2.50?
I think more.
Really?
It's 50-60%, maybe more in some cases.
When you're factoring in the normal delivery fee with the surcharge, with the tip plus the tax, it adds up. It adds up quick.
They're raking. I mean, that's a nice business. But again, like what we were saying when we were talking about the stock about a month ago, and I said I hated it. The main reason was I think there's going to be competition. I mean, those spreads are going to come in. They're not going to be making that kind of money. So if you're, saying, okay, well, they make all this money, they're going to make all, you can project it out and you can see there's going to be so many other delivery services here that are going to do it cheaper.
Can I tell my my Domino's pizza story?
Quickly, because I want to bring on Buck, but quickly.
Well, when I was in college, they used to have, if they didn't deliver it within 30 minutes, it would be free. And we lived on a one-way street. So if it would be like 28 minutes, we would go park the car.
You're evil, Joel.
And then a guy would come running up to the door all sweating. I couldn't get through. There was a car parked there, and then we get a free pizza.
That's evil.
That's evil. All right, I'm bringing on our next guest here, Buck Andrews, the co-founder of Inform. Gonna get him on now. Buck, how we doing today?
Good morning. Good. How are you guys?
We don't know.
We're confused,
we
Buck.
don't know how we are.
Confused.
Well,
We're confused. I'm so confused. What movie is that from?
Yeah, that happens when when the Fed and the macro is moving the market, right?
Very confusing. What are your thoughts here? I mean, we're in this market where, we're getting hit yesterday morning, but then Powell comes, bails us out, says the rates are never going to go up ever again, basically. And the market rips and rallies, and then we give it all back overnight. So because we gave it all back. I don't know why we gave it all back.
Well, if you look at the 30-year Treasury, the 30-year Treasury is off over 1% this morning.
Yeah, well, that's the reason.
And making new lows. So he said that they were going to do $180 billion of Treasury purchases, right, per month, and that's what they're doing. And they're doing that, and they can't keep the Treasuries up. The Treasuries are still sliding.
That's what I don't understand. The Treasuries are still going down despite
because they can't buy enough Treasuries to keep the Treasury market up. And look at this Philly Fed number. At 51 versus 20, that's hot. It's the market thinks the economy is going to get hot. The market thinks there's too much stimulus, and they think that interest rates are going up. No matter what the Fed does, they're not going to be able to hold back. It's like putting your finger in a dam.
What does
Not
that
gonna be able
mean?
to hold it.
So let's just say that scenario plays out. Interest rates do go up, and the Fed can only control the short. They can't control the long. What does that mean for stocks?
Well, essentially, you're seeing it already. I think there was a rotation originally in the tech market, right? In the tech stocks, because they were overvalued. Or you could say potentially overvalued. They've been the hot sector. And then you get the unwinding, and people are heading to the Dows and the Dow Chemicals and the Cats and the John Deeres of the world and the infrastructure plays, right? And the financials and some oils. So a big rotation there, right? But then as is with no recovery in treasuries and as they continue to slide, every little time you get like the ARCs rallying or you get these tech stocks rallying, it's met with another slide in interest rates, which brings the tech stocks right back down. So they can't hold their ground.
Yeah.
Right now, and unless we find a plateau for treasuries and tech start to base out, which that's yet to be seen whether that will happen. I just don't know. So the safe plays. I'm holding stuff like Dow Chemical, John Deere, and Caterpillar right now on the long side.
Defensive.
Yeah, totally.
Do you think those are safe? Let's say TLT. Let's just set up scenario analysis. TLT continues this cascade lower, and we end up like a 120. Going down another 10% from where we're at. Do you think, that it continues, like money continues to pile into Deere, Cat, or do they start selling all stocks? They start to just worry about, because eventually bonds can get more attractive at prices where it actually will draw money out of equities altogether.
That's true. And
I'm just wondering. I don't know.
That's true. That can happen. I think we're a ways from seeing that. But, I think you're going to have to see some stability in the bond market before you're going to get any permanent lift in the technology stocks.
Why is it tech? Why is it just tech that's getting
that's
just because the higher? What you're going to ask that?
Yeah, well, yeah. Why are we all picking on tech? It's not.
Yeah. Why just tech? Why are they just picking on tech?
But it's counterintuitive because you would think that tech doesn't have any they don't have any debt, right?
Yeah.
So in a way, it's counterintuitive. You would think that tech would perform better, but it just doesn't. It just doesn't. Usually tech leads the market too, in most scenarios. So if you think tech is leading the market down, eventually, these infrastructure stocks will probably stop going up once they come to a fair valuation. I don't know where we are on that. And there is a big, they're talking about a big infrastructure bill coming through Congress too. It's
And JC is pointing this out in the chat. Obviously we know this. The higher your multiple, the higher the higher your valuation, the more sensitive you are to interest rates. And that's where this divergence occurs, right, between like stocks and like business, right? Because like theoretically, tech has never been better positioned to grow, and yet the stocks are going to be sensitive to any change in the interest rates wins. But it's sort of this weird thing. But that being said, Buck, I
did take a position.
You did take a position.
Stock.
Yes, tell us what you bought last week.
No, I didn't buy it last week. I bought it this morning.
This morning, even better.
Whoa, what do you
even
buy?
better.
I bought Unity Software because it's already down from like 170 to like 90.
Yeah.
So it's already had a big move down. And yesterday, if you look here, they get into the headline of the new officer down below, you read into the second story down.
Okay.
And you read into that second paragraph. This CFO that they hired, he's leaving a job. He's leaving a job at Palo Alto Networks. Okay, and before that, he was CFO at AWS, and before that, CFO at Cisco. And anybody that leaves a job like Palo Alto Networks to go to a company like this, for me, it gives a lot of credence to the long-term growth of this company.
Kathy's stock too. Kathy's like,
and Kathy's adding.
She's been adding to this. Yeah. I mean, and you can get Kathy pops off it.
So I like it. I've started buying this stock this morning, and if it holds and performs well, I'll add to it.
All right.
So that's the one I do like.
Not totally 100% bearish on everything. Taking a position in Unity Software, which is a high flyer.
CCIV, we talked about that last week. That's holding up, and just
Churchill Capital, you're still on?
Yeah, I'm still long that because that came down 50%. I've seen the Lucid studios where they're selling these cars. They look fantastic. Churchill's got an $8 billion valuation, okay, and it's got a lot of room to grow. So I like that one. It's not frothy here. Also, I saw the CEO the other day or heard him, and he was saying, this is an interesting point about SPACs. You'd think SPACs are highly speculative, but in this case, he got like $4 to $5 billion of operating cash that he says that they will not have to do any kind of raising of capital for at least 2023, which is maybe 2024, and they may not have to at all, which is very different than from Tesla, who is having to go out and raise 200 million here, 200 million there. These guys are sitting on $4 to $5 billion. So they can get their job, they can get a product out there without having to raise a lot of capital around it. So that's the other thing. You come in the morning, all of a sudden somebody's raising capital and your stock's down 10%.
Yeah.
That's not going to happen here. Okay. All right. So I like that one. One other point, Spencer, is that we now have a community feature. So there's a community list where if you put in stocks into that list, it gives the price point and who put it in. So we can start looking at, if you go to the dashboard over here on the far right, below the Bitcoin community.
There you go. Got a.
All right, so we track the performance of the stocks that have been given.
Okay, so you're crowdsourcing ideas, basically, right?
Essentially, yes.
Yeah.
So we're starting to put in a lot of like social type stuff into the system, so that people can put up their stocks. If you guys have stocks that you're talking about on the show, that people come on, throw them into the community and watch how they perform.
Buck Andrews is the co-founder of Inform, in4m.info. I'll throw the link back up on the screen here. Buck, is there anything else you mentioned you're pretty defensive. You did take a position in tech. Is there anything else that's like imminently on your radar that you're watching to maybe add a trim here?
Well, you know what? I'm still in these Bitcoin stocks.
You're still in like the ride.
And if you look back at the performance of those, they've been pretty darn good.
Yeah, they've held up.
Riot, I think I mentioned that around low 20s on the show, and it's up to 67. So it's a double since I first mentioned it, and it's held in there. Yeah. So, and I was looking at the news on that too, and they were posting, how much money they're actually making from Bitcoin. The question that I have though is, will Bitcoin hold if interest rates and tech does not hold?
That's a question.
We don't really know because we've never been in an environment.
That's it. Nobody really knows, right?
Nobody knows.
Nobody knows nothing.
I mean,
everybody thinks it's an inflation hedge, but is it the inflation hedge?
I guess, Buck, you could go back to like 2015, 2016 and look at Bitcoin, but that was before it was as mainstream as it is today. Yeah. But I don't know. We don't really know. It's a really good question, honestly. I can't wait.
Yeah. So that's going to be the big question. Does Bitcoin hold up? That will determine whether those stocks hold up, because we do hold some of those. Yeah. And they performed really well. They performed well. CCIV has performed well for us. Believe it or not, we bought AMC down around $7.
You're still holding AMC?
Ooh.
Yeah, we still have AMC.
Okay.
Goodbye.
Very interesting.
We trimmed a little bit out, but we are holders of AMC. We're in it for the social aspect.
They're opening up 98% of the movie theaters is set overnight.
Exactly.
So get another pop on that as well. Story is still intact.
We got Disneyland opening up now in California.
Yeah.
Things are reopening. All right.
Yeah.
It's Buck. We look forward to hearing about your diamond hands next week. Buck Andrews is the co-founder.
I wish I had the diamond hands. I'm not as good as they are.
Not as good. That's okay. We can't all be as good as Rowan and Katie. Thanks a lot, Buck.
Okay. Hey, thank you.
Thanks,
Have a
Buck.
good week, guys. Weekend.
All right, and once again, IN4M inform.info. There's the link up on the bottom of the screen. Okay, let's do some ticker time from the chat. I feel like we've been not doing a great job of covering questions from chat, so I want to get to more of those. As Hot Stocks Luke Jacoby tells me to scroll up into my Slack, and I don't know what he wants from me. Luke, what do you want from me? I don't know, man. Okay, let's go to the chat. Any questions from chat? Drop them in. We'll do some ticker time here, and we'll talk about what you want to talk about for a few minutes here. Okay, yeah. We mentioned this earlier. TKAT. This is one of those NFT plays, right? So there's like a half dozen stocks. I'm just going to list you off a bunch of tickers, all right? That are being played as if they're NFT plays, right? OCG, okay, IDEX, GRNQ, TKAT, CNET, CNET, MKGI. There's two more. TAOP and CLPS. Those are stocks that are moving off of the NFT mania, which I think is a fair thing to call it, right? Anyway, TKAT might have been the biggest gainer of that bunch. I'm not quite sure, but regardless, those lists of stocks are moving, are trading as if they are plays on NFT. So
and there's a bunch of other ones too. I mean, everybody's trying to find a link to NFT because it's a cool thing. It's like blockchain was. We go through these, and we see all those stocks start to go crazy. Where the pony ride ends, we don't know. And the NFT thing is early. I mean, I'm a believer. I was even saying the Kodak could be a potential NFT play as well. Obviously bigger stock, but then it got hammered on the earnings. But still looking at that as, there's potential there too. So lots of potential plays there for, going with this NFT thing. I think NFTs are stupid, but at the same time.
Wait a minute. I thought our Hans and Franz thing from was it David is going to be an NFT.
Okay, well, let's sell it. Make $1 million. David some of the money.
We were going to tokenize that. I don't know.
No, but I think it's and that's cool. Like it's fun to do videos and stuff. I just think so not the NFT. I think paying millions of dollars for a screenshot of something is stupid. And I think we'll look back on this investing age and where people are paying $69 million for a digital piece of art, or paying $1 million for a tweet. I think we'll look back on this, and these will be like the poster child things of how stupid investing was in 2021. I think we'll look back and, the digital art, even the crypto, I think the mania and all that. I think that's what this is going to be looked back at. We look back always in 1999 and say it was the internet bubble. Is this going to be, the crypto, NFT bubble, all this, digital asset bubble? I think so. But, where this tops out, who knows? So I'm not saying, go short all these stocks. Absolutely not. I mean, these are storied stocks that can just get carried away. And you know what? Maybe the story for the NFT stuff is still starting. I've tried to, find and play a couple of these stocks as well. So, but as trades, I won't be putting these in my long-term portfolio and forgetting about them, because I think when it all ends, I just don't think a piece of digital art's worth $50 million.
Isn't it the thing about art is that you buy something and it's beautiful and you hang it up in your house?
That's
right?
what I thought.
So people see it.
Rare.
So what do you do? Say, come here and look at my computer?
That's not necessarily true. A lot of people use art as an asset. It's a store of value.
So that's what the argument is that you can store that value digitally as well.
Yeah.
But is it scarce when you can just print it out? Anybody can just print. I mean, you can print out. There's an argument there to be made because you can print out any. You can print out
videos.
You want.
Can you print videos? I'm not aware of videos that can be printed. But all
right. I like, and maybe me and Joel are too old for this, and maybe it is going to be all digital assets in the future, and we're all going to be transacting crypto, and it's all going to be completely different. So that could be the case. I won't be participating in that. Like I said, I have a little bit of
Okay.
Bitcoin for fun, but if the world's going all digital and all our US dollars are going to be worthless, I'm going to be up shit creek. So because I'm not going that way, that's fine. Maybe I'm the idiot here and I should be like Pomp and having 97% of my money in Bitcoin. He's been laughing. I mean, he's killed it. He's killed it with that call. He's been, let's give him some credit. Mark Yusko as well. Let's give him some credit. I mean, Mark is more, my style.
Mark doesn't have that high of a percentage.
Yeah, exactly. Mark says
Right,
get
right,
off
right,
zero.
right.
And
right.
Mark talked me into getting off of zero. We like Mark Yusko. We love Mark Yusko. Comes on the show. The guy's very smart, and he just says get off zero. Pomp is all Bitcoin. It's like 97% of my net worth is in Bitcoin.
Who's that?
Andrew Pompiano, who works with Mark Yusko on the.
Okay.
So he was on he's been on CBC, and he puts his money where his mouth is. He's been right. He's been dead right. So we got to give him credit too. Bitcoin has continued to run. I would never put my 97% of my wealth into a digital currency.
You would put 90% of your wealth into one thing. Yeah, exactly.
I just had a quick question. Shit Creek, is that a creek in Canada?
That's the show. Shit's
that was a good show. That was kind of fun.
Great show. What a lot of
okay. Wait a minute. I asked for tickers in the chat, and then we got distracted. So SOS, Joel, can you give us
SOS? I think that's a
save our stock.
Yeah, that's just a tough stock to own. I mean, just on the symbol itself.
Kind of rapid finance.
Oh boy! It's
I'm
down.
not saying it, but smaller Chinese stocks you never really know. Counting over there is sketchy. So I don't know.
Let's just.
I like going to the big Chinese companies. I don't like going to the little ones.
Yeah, I would just say first things first here. The 8. Let's get over 8 today. Too high, 788, 796, and then maybe you can make a challenge at this 865. But also matching range days almost on the downside, right? You did take out the low 6. Was that an inside day? No, not an inside day. A little bit of a higher high and a little bit of lower low. So let it shake out. It just seems like there's someone out there selling at 8. That's just what I'm thinking here in SOS Limited, whatever that is.
Question about Neo.
Haven't looked at Neo.
Valuation's nuts, and this is a stock that if the bull market continues, it will be a buying opportunity. It's the kind of stock though that, again, competition all over the place. Yes, they're actually making electric cars, which is excellent, but competition coming for all of these. I mean, I still say there's a reason you see General Motors continuing to go higher here, made new highs again yesterday. Ford sold off a bit because there was some news or something. But, I mean, I think the Ford's a buying opportunity too. I think GM and Ford are going to be major players in EV. And I think when, the dust settles there, there's going to be Tesla, obviously. There's going to be Ford and GM right up there too. Is Neo going to be one of the major players? It's number 2 right now. Yeah, apparently with their electric vehicles, at least they see it as a number 2. I'm not sure that's the case, if it's real or not. I just don't know. The competition is going to get so intense here. I can't pay ridiculous valuations for those kind of plays. I mean, Neo's trading with a market cap more than Ford, is it not? Let's just give it perspective.
I believe so.
Yeah, let's look at the Neo market cap. You got to use, this is what you got to do sometimes. Just use your exercise and use logic.
So 46.
68 billion. This did not work with Tesla, by the way, when I did this, years ago. so obviously it's Neo's worth more than Ford. Yep. It's worth a lot more than Ford. It's worth 30% more than Ford. They're going to make a fraction of the vehicles. It's almost worth as much as GM. I would much rather own GM or Ford than Neo.
46 is a pesky area, and you did sneak over it back on the 11th. You snuck over it again on the 15th, but the last 2 days, the sellers have come off 46. They've come down. We're trading down in the pre-market, so also that high at a little bit above that. I don't know, just until this clears 46, kind of got hit after earnings, and if this can't clear 46, hold 46 in a jiffy here, I think you roll over, take back some of this rally. Where to get down to 31.67, maybe get back half of that rally, 15-point rally, 7.5. That'll take you down to the 37.38 area. That's what I'm looking at in NIO.
Let's do one more Dennis's favorite stock, which is Woof.
Talk about dogs barking. There you go. I don't even remember saying
right?
that one.
What now? What do you mean? That was you and Dennis. What?
I don't remember. I don't remember saying that.
Here, I'll play it.
I think you made that up.
I'll play it again.
Talk about dogs barking. There you go.
Kind of sound like JC there.
I don't know where you found that one. That's ridiculous.
It was 5 years ago, Dennis.
Nice pop.
Jeez.
Yeah, that's why
Wolf
I can't remember
Petco.
5 minutes ago.
Woof. Woof.
Petco Health, they had earnings this morning. EPS beat, sales beat. They gave guidance for the year. EPS well above the guidance, the estimate, well above the estimate.
How much they make?
This is how much did they make last quarter? Their sales are $1.3 billion, 1.34. This is what they guided though.
What are their earnings?
They guided for the year, adjusted EPS in like the 63 to 66 cent per share range, and the estimate was at 23 cents per share. So they guided well above the EPS estimate.
That's for the entire year. They're going to make
for the year. That's for the year. They guided well above the EPS estimate for the year. Sales also about sales for the year. They're guiding in like $5.25 billion, which was above the estimate as well, 4.89. So estimates well above. I'm sorry, numbers well above estimates for the year in Wolf.
Get me to 26 here.
Yeah.
Show me you can get to 26. You had a high at 26.24 on one day, 25.98 the other day. Where are we at here? We're at 25.10. So longer it takes to clear, get that, take out 26 and keep on going, maybe roll over a little bit. But that's a really good number. After it came down, it just kind of held there, and then it really broke down on February 16th. So that's my
How is
number
this
on the
different than
upside.
Chewy? What do they do different? This is online pet food.
Well,
This is.
it's Petco, right? It's also
Is it like the physical stores that we see Petco, like the physical
mortar.
stores?
Yeah, you're talking the physical store and online.
You get
And one,
both.
one thing that I can tell you that Wolf has an advantage now is they're using their stores like their delivery thing. So they're giving you a discount if you go and pick up. If you do pick up, you get about 25% off. So this is helping them. I think, they changed this around in the pandemic. They used to not have a pickup service, and I think this is definitely helping them.
All right, we got a super chat. One more, American Outdoor ALUT. This is the spinoff from Smith and Wesson. This is not the firearm assets. This is like everything else. This is their outdoor recreation thing. They had earnings last night. Their EPS was up year over year. Their sales were up year over year. They gave guidance for the year well above estimates.
Outdoor stuff is still hot, and I think it still stays hot. Breaking out to new highs, and I don't. When they're breaking out to new highs, I don't short them. I don't like buying rips, so I'd like a pullback to buy it, but it's a breakout. Looks pretty good on the charts.
Yeah, I mean, what are you going to do? This thing is not quite the all-time high. That would be 30. So that was on when it re-IPO'd. Just take it through the pre-market high right now, 26.48. You're right there right now. I think if you're looking exit along, maybe see if you get lifted at 27, see if you get lifted at 27 and a half, see how what their appetite is on the upside, because the only thing you have is that opening high at 30.01. That was back in August of last year.
All right, we've spent the entirety of this show pretty much trying to hold up in the S&Ps, and I guess it's working for now.
Doing okay.
Yeah, we're doing okay. All right, that'll be a wrap for pre-market prep. Everyone, please remember that all the information on our show is meant to be used as informational purposes, not for investing or trading advice. You can also catch this show on a podcast. If you are busy in the car or whatever, you don't want to actually stare at a screen, you want to listen, that's fine too. We're on all the major podcast platforms, Spotify, iTunes, Google Podcasts, Stitcher, TuneIn, all the major ones. Just search Benzinga or Pre-Market Prep to find it. And thanks to our guests today. Thanks to both of them, Mark and Buck Andrews. Once again, today's show sponsored by Inform. To learn more, go to in4m.info. Joel, I will catch you for the At The Close show at 3:30.
Yeah, we'll see. We'll see. Get some fireworks. All right.
It'll be a very interesting day, that's for sure. Joel, I'll see you later.
All right.
All righty. Okay. Programming note for the day, just like yesterday, we were doing one continuous all-day stream for St. Patty's Day, and we thought, what the hell, let's just keep doing it. So we're going to keep doing an all-day stream once again today. So the stream will not end until I think last night we ended at 6 Eastern. We're going to go until 6 o'clock today as well, I believe. So we've got Get Technical coming up here in a few minutes. JC Peretz is the guest for that. We've got SPAC Attack at 11, another exec interview on that show. Power Hour today, and then after that, we've got a special Raz report. Jason Raznick interviewing Kevin O'Leary, aka Mr. Wonderful. The man hated Bitcoin for a long time. He's a recent convert. He is super bullish on psychedelics. We're going to talk about that. We're also going to get a little bit into his background, right? I think he gets asked a lot of the same questions all the time, so we're going to try to ask some different questions. If you have a question for Mr. Wonderful, Kevin O'Leary, hang out in the chat, or you can just email powerhour@benzinga.com with your question. We will try our best to ask it. Okay, that was what I wanted to say about today's programming schedule. We got a lot going on today. Crypto show after Raz Report, the At The Close show, the Cannabis Hour, and then After Hours with Ryan Rozbiani. We'll wrap it up at 6 or from 5 to 6 p.m. Eastern time. Yeah, okay. That's it for the programming announcements. What else did I want to do? Yeah, I got called out in chat earlier, and I deservedly so. I do a very poor job of... I put this up on the screen, but I do a poor job of actually saying the words to hit the like button, right? It's one thing to read it, but now I'm saying it, right? Hit the like button. Smash the like button. I don't care if you tap it. If it's just like a little tap, that works too. Just tap the like button. That helps us out. Really, I don't think you guys know how much it helps us out because in the eyes of like the mysterious YouTube algorithm, likes really do make a difference for some ungodly reason. So hit the like button. Thank you very much. We've got one all-day stream, and then each show is being cut out into its own show. So you'll still, if you only want to watch Get Technical, you can still do that. It's being cut out and re-uploaded after the fact. But again, one continuous audio stream because we got some feedback. Y'all wanted it. Frankly, it's a little bit easier logistically for us to just keep going all day. So that's what we're going to try to do. And if we get a lot of feedback that people don't like it or whatever, we will consider changing it. But for now, that's how we're going to roll with Benzinga programming. Okay, let's hang for a few minutes. Just us. We can do a little intimate hangout, and I'll bring Neil on in a few moments. I know Neil is always itching to get started, which is great. And his show is super. He does a better job of getting to questions from the chat than we do. I want to do a better job, everyone, of getting to your questions. We used to do like a segmented part of the show. The last 10 minutes was always like ticker time. We've gotten away from that. I want to get back to that. So I'm gonna ask you to hold me to that. Right, last 10 minutes of the show, ticker time, just for your tickers, because that's sort of one of the unique parts of our show is the engagement, and I want to be held to that standard. So okay, where else are we at here? Answer me. Easy. Why trade in the mornings when it's the worst time? I guess that would depends on your point of view, right? The whole premise of pre-market prep started because Dennis was trading after hours and in the pre-market, and him and Joel realized that there was this whole other world that most people at the time, this was 8 years ago, 9 years ago, don't have access to and don't even really know about. And the activity in the morning, A, it's when all the news comes out. So it's when all the news flows is being disseminated. And B, it can often foreshadow what's going to happen at the open, right? That's the simple reason. The pre-market and after-hour sessions are sort of the wild, wild west, right? There's no market. You have to only use limit orders. But that's where all of the volatility is. Intraday, it's all HFTs. It's all, I almost said NFTs. It's all HFTs. It's all high frequency traders, right? You can make money trading intraday for sure, but it's just harder. It's harder to exploit inefficiencies, and that is why. And that actually extends to like the first half hour and the last half hour are also a little bit easier. What's up, Neil? Because everyone's coming together at the same time. There are more inefficiencies at the open and at the close, but after like 10:30. And before like 3 o'clock Eastern time, right? There's really not much to be had in the way of inefficiencies. There isn't often intraday news. Intraday news is pretty rare, right? We know that news is highly regulated on Wall Street. So we don't really get news very often. Days like yesterday, right, are a great example where everybody knows what time this game's coming out, 2 p.m. Eastern. Everyone knows when the press conference starts, 2:30. Everyone's on the same page. So there's fewer opportunities for for taking advantage of inefficiencies. And that is why this show exists, frankly, because the pre-market is where there are hundreds of inefficiencies every single day, and that's the kind of trader that Dennis is. Neil, what's up, man? How we doing?
Hey, I'm doing well. How are you this morning, Spencer?
I am doing well.
I'm hearing from chat that this mornings are a very emotional time for traders, so I'm here for you if you want to talk.
Maybe we should do like a part trading, part therapy show.
I think that's what your session already is, my friend. I listen to you before I go to sleep.
I don't know.
So a lot of folks here are saying that and we'll get into like the little early get technical thing, but a lot of folks are saying that the amateurs trade the open and pros trade the close. That it would be nice to have something right about at the close, but we have that, don't we? Don't we have?
I mean, Joel and I hang out into the close every day, right? 3:30 to 4 o'clock. So,
have you guys watched that? Everyone is like
Spencer is my ringtone.
Everyone is saying they want a Dennis Dick all day stream. We would do it if we could. He just won't.
I'm not even sure you want that. You might think you do, but after a while, you'd be like, all right, this guy talks too much.
This is coming from a guy that has known Dennis and worked with him every morning for what, like 4, 5, 6 years.
Look, man, without Dennis, the show wouldn't exist. Just like the show wouldn't exist without Joel. And the man is a machine, for sure. I don't know. I've spent the last 6 years talking to traders for the show and elsewhere, and I've never met anyone that can trade with the quantity, the frequency of him. He's just a man, but in terms of his activity, right? He can have 100 positions on at the same time, which is frankly not normal.
I think if we were going to rank traders that we know from like using the Japanese grading system, like from D, like A, B, C, D, but then you also have S tier, which is like above A. Dennis would seem to be an A or an S tier trader.
And the best part is he talks about when he loses too. He talks about when, and he's frankly he's on the wrong side. I don't know. I don't know this for sure, but I would venture a guess that on a significant portion of days, Dennis is underwater. Maybe like 30-40% of the time, and he finds a way. The game for him is finding a way to work out of that, right, and getting back to scratch or even eking out a profit on those days. That's the real trading, right? But Dennis is because he's trading overnight, frankly, and there's a lot of stuff happening overnight, a lot of news, and he will be underwater very often when the show is starting, or at 7 a.m. whatever. And by the time we get to the open, he's sort of tried to earn it back, or by the time the market closes, he's earned it back. So, not for the faint of heart, for sure.
So, moving on to the next thing, we are getting a bunch of tickers. There are people that are saying they've smashed the like, they want their ticker to come up. Yeah. Do you mind if we transition?
Yes, let's transition. Should we you want to do your little intro?
Yeah, let's go ahead and just roll it.
Let's smash the intro. All right, smash the like for Neil, and I will smash the intro.
3, 2, 1.
Here we go.
Welcome into the open, where we get technical. You should have investments in long-term growth. Good morning and happy Thursday. I'm Neil Hamilton. This is Get Technical. With me today is producer Aaron Bree, as always. Had a nice little conversation with Spencer about what a human machine, the human algorithm, Dennis Dick is. I don't think the 24-hour stream that some folks have been asking for will happen soon, but would be cool. Would be cool. You could watch him trade all day and then, watch him sleep, I guess. I don't know. He doesn't need to sleep. I don't even know if he sleeps, to be honest. Anyways, thanks for joining us. The agenda for the day the agenda for the day. I'm on the hunt for high type flags, and I'm also very interested in GM right now because I think GM's an easy opportunity with good support. So I'm interested in that. I want to really quick, just as you guys right now, I just want you to know, if you drop in your ticker now and you give me the time frame, we can look at it, and we can do the whole thing. But first, I just want to show you how GM is starting to outperform the cars ETF, in which GM is actually the largest holding, but it's starting to emerge as an absolute leader. So we can see that yesterday, this is actually the weekly. So last week was an absolute watershed moment for GM starting to break through this head and shoulders reversal that GM has had against the cars ETF. So what we're looking at is, what is the strength ratio of GM to other car companies, right? And the strength ratio was bad for a while. This is weeks at a time. The strength ratio was bad. Let me just really quick. There we go. Boom. But we are emerging. So all the chart patterns that you see on individual stocks, ETFs, any individual asset, it can be a future, it can be a forex pairing, it can be a cryptocurrency. Patterns matter on anything, as long as it's priced over time. They also apply when you're doing these ratios that show relative strength. So this is GM/cars, CARZ, that I'm doing here to see how is GM comparing to other car companies. And right now it looks like it's about to have a breakout, baby. So we've got the neckline of our little head and shoulders here. This is my bull case for GM. So it's like something like these. With a full resolution coming from the absolute low here, which I'll use my line tool for, the absolute low to the neckline. We'll go ahead and add that. All right, so that's simply the resolution of this head and shoulders reversal pattern. This is a head and shoulders bottom. And if you guys don't know what that is, just ask me. We can go through it. I feel like a lot of the folks in here are just, we've had like the same crew of people, so they kind of already know what I'm talking about. But if we're growing and you're new here, I can talk about that kind of stuff. But this is the relative strength against the rest of the car companies that are in the cars ETF. GM looking good, looking for a steady breakout. So about from yesterday's, or what is that? That's got to be last week's candle. From the close of this, or the open of this candle, about an 8, almost 8.5, 8.2, whatever, percent change. Looking just at GM though, we have a firmly established bullish trend, upward trend. We have this nice impulse up, very nice impulse up. Good on you if you've been in GM. I have been sleeping on it, absolutely sleeping on it. It came out of this little ascending triangle reversal very nicely, establishing a new trend. So we went from sideways trend to now upward trend. Now we have an impulse up and a corrective phase. And let's just measure that corrective phase really quick. Pull. Flag. Pull added to the breakout of the flag. And you can see that that's exactly where it started consolidating. So now I'm going to expect the same thing. All right, so we've got same length pull, and we're establishing our next flag. Looks like looks to me like a descending triangle that's already broken out. So we're already broken out, and we're looking for a resolution of the pull plus our breakout point, which brings us up to a nice $68 price target. So that looks like if one were to enter into GM right now, you can reasonably expect growth up to 67.9 with another consolidation phase, which is another entry point or exit point, depending on what you want to do. Sam, keep it clean. Keep it clean. The question was bull flag. A bull flag looks like this. That's when it's rectangular. And then you can have descending flags, which would be a descending bull flag. But it's all I try to break these down into different patterns, and so people can really focus on them, because I think it's easy to understand, at least because it's easy for me to understand. I'm not a guru, guys. But at the end of the day, what I'm finding is all the patterns are the same. You just need to be able to recognize them. And then all of your entry, stop loss, and price targets are all the same, just based on a few principles that vary very slightly from pattern to pattern. How do I choose the price target? Jake Watson asks. So in this case, oh, you know what? Someone mentioned bull flag and I completely ignored them, which was dumb. Because this is more of a bull flag. You can say it's either or. But this is kind of the point that I was making, that it's like, as long as you recognize that it's a period of consolidation and you have the trend behind you, you can set your price targets based on the trend leading up or the impulse leading up to this little period of consolidation, and then adding it, in most cases, adding this pull or this impulse height to your breakout point. And I'll do exactly that. But to the person that said bull flag, totally right. I was like, nah. This is a what did I say, descending triangle? No, it's totally a flag because it's rectangular. That's why I drew these horizontal lines initially. So this was the swing highs were hitting the same resistance line, and the swing lows were hitting the same support line. All right, so we were rectangular here. So that's why this was the breakout point, not this. I done goofed. But the way you do it, it's easy when there's a previous impulse, is you just go, when did this impulse break out? And say that's the start of my trend. And then you add that to the point of breakout. Right? And this one I got like a little bit aggressive on. I think you can go down even more. So I think I went down to the bottom of the wick. So we say this is the swing high. I went down to the bottom of the wick here, which is right about here. And then I added to this point. So I think deleting that, we get a little more bullish on GM. The price target is actually more like 74 if you see this as a flag, which I think you very reasonably can. And if one were to enter at the current price in the pre-market, we're at 59.5. It's a nice 24%. All right. I feel good about that. I think it's a great entry point for GM. Oh, Brandy's still on Mark Jakin. Yeah, I'm a lo-fi geek. Yeah, no, this is lo-fi geek. Good call on the music. Vincent says GM will be a $100 stock in the next 2 to 3 years. I mean, it might be a $100 stock. Yeah, like within the next 2 to 3 years, it might be a $100 stock before that. If this trend continues, look at this. Let's look at the long term on GM. Look at how long this base is. This is like Tesla. Remember Tesla, that company? The base was like this. Relatively flat, not really impressive moves. Let's look at the point of control here. We were just holding this point of control forever. This thing wants to pop. And EV, I think, is the catalyst. I think the EV story is that catalyst. I think honestly that the story of EV will show itself in the price action before actual EV like materializes. Danny, he would stab his ears all day if Dennis talked all day. Okay, so guys, if you have a ticker you want me to look at, let me know what time frame. If you're thinking about day trading, or if it's so you guys say, like, tell me the day, show me the day chart, the week chart, month chart, 5-minute chart, 1-minute chart. Another thing that, while we got the time here, just look at a macro perspective, and while you guys catch up with the delay on the video, I've got all of my sector ETFs here. Wonder if there's a way for me to make this. Oops, wrong window. All right. These are the ones that I'm really watching right now. So this is, I believe, tech. I believe this is consumer discretionary. This is energy. This is metals and mining. And I believe that this is consumer staples, XLP. These are the ones that I'm watching right now. So what we have seen very recently is a lot of folks getting out of tech, going into oil, getting into energy, which is at this point is oil. And that performing extremely well. Some of the early picks from the show, Oxy, all of those were benefiting from that. So the question now is, does the energy train continue, or are we starting to see the emergence of some things that might be related to reopening? So that's where I'm interested in consumer discretionary in particular, which the biggest holding there is Amazon. And then I'm also interested in comparing constantly XLE's performance against tech, to see if that rotation from tech into energy is staying, or if we're getting outflows back into tech because of what the Fed has done, and the story about vaccination. So this is, watching different sectors for strength against each other, or relative strength, and then picking good names within them. Okay, thanks, Isaac. So Isaac's got GRNQ for a day trade. Wait, a daily trade? You're getting fancy with me saying a daily trade. Does that mean you want the day chart? I'm assuming just a day trade. I got you. I always do the wrong one. So that is. How long is the delay? I'm curious, because we got a little surprise for you, and I want to make sure we time it exactly right. Yeah, of course, the reopening's coming, Jerry, for sure. It's just when, and how many speed bumps are going to turn off the sentiment in the market before we get there. RNQ. All right, this Isaac. We have a stock in peril, my friend. Look at the daily chart. Oh my goodness gracious! Call the ambulance. We have a stock in peril. Why do I get kind of quasi-sexual when I see this stock? Because I really like stocks that everyone else hates, that have formed long-term rounding bottoms, so that we can get in on big moves, because rounding bottoms rule. Wait, Green Pro Cap? Is this related to NFT creation or minting or whatever? No. What are you talking about, dude? Hi, Luke. Oh, by the way, guys, the ponytail saga, I just want you to know, is not over. We will tomorrow, for Friday Fun Day, when we don't have a guest. Tomorrow we are ranking. I want to know from you, but I'm going to be the decider. I want to know from you, from S tier down to D tier, who has the best and the most compelling, I would say, and authoritative ponytail in the financial services industry, in the stock market, in Forex, in futures. I want to know from you, and we will rank them. All right? Because my goal is to get on that chart and knock all those motherfuckers out of the game. All right? So without further ado, I have a special little surprise for you. See if I can time this right. Oh God. I'm nervous.
3, 2, 1, 0.
Pretty cool, huh? There you go, guys. That's our opening bell. Let us know what you think in the chat. Yeah, Jason, you already know I'm coming after that guy. Jason Douglas as Warrior Trader, ginger ponytail. Oh, I'm going after that. So let's look at GRNQ right now. We are into the open, so I want to see some performance on these ETFs just to see what they look like for the day on the 10-minute chart. But let's do this first, huh? GRNQ, a snack. Absolutely. Look at this beautiful rounding bottom after a period of just getting trashed. It's a very cheap stock, though. Very cheap stock. So we've got this volatility in here, and that's okay because the stock is such a low price. It'd be like that. All right, so let's do the damn thing. All right, so we've got our last swing up before the formation of our rounding bottom. Before the absolute, this is the swan song. The little before the stock started to really go down and consolidate at a lower price. So we'll draw the peak of our rounding bottom arc here, and then we'll bring it over here. And this is doing what every single rounding bottom wants to do. Is doing this. This is what these rounding bottoms be doing out here. Let's get the paintbrush. All right. So this is why I don't see this as a failed breakout, guys. See the spike above our resistance line? So this is what our rounding bottoms like to do. Down, 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 down. Swan song. Down, 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 down. Consolidate over a long period of time. The longer, the better. The bigger the base, the bigger the pop. Goes up to that breakout point. Consolidation. Pop. Back down, maybe below the consolidation. Comes back up. Consolidates again, trying to test it. Breakout city. That's what we like to see. So here, let's put this to the task. Let's put this to task. So I'm going to draw my resistance line just based on the left pivot and the right pivot of our rounding bottom. And then I'm going to set my price target. We have this resistance level of $3. Nice and even, perfectly lined up. We're going to go to the absolute lowest point on our rounding bottom, which seems to be about like, Jesus. Okay, I got to zoom in on this. Which seems to be, how did you find the stock? Tell me. Which seems to be about 21 cents. All right, so I'm just going to draw this and I'm going to zoom out a little bit. Make sure I'm logarithmic too, so I can, oh, that's why it's not working. All right, so I just switched my chart to logarithmic. Don't freak out. It's just so we can see more of the chart at a time. All right, so I'm going to drag this. Whoops. Let me resize. There we go. So this line is the height or depth of our rounding bottom. Going to add that. See, don't freak out that it's changing size. That's because we're on a logarithmic chart. I'm going to add that to our level of resistance, which looks about right here. I'm going to switch back to regular because even I'm starting to freak out. All right, price target 578, 570, something like that. So very, very attractive. Very, very attractive. Why? Well, let me change that. Why is that very attractive? Because this is still about to break out. So you can watch this for a healthy day candle close above resistance at $3 and enter for a profit target of 90%. Nice pick. Nice pick. Bring that one back up. If you're going to be, is it an NFT? Tell me how it's an NFT play. I don't understand. Engages in the provision of business solution services to small and medium-sized enterprises. Operates the service business. That just sounds like gobbledygook. That's just business. I don't understand. Viv has a really good question. All right, can you explain the difference between logarithmic and non-logarithmic charts? So the regular chart that you're looking at all the time is just regular, and all that has to do with is the scaling of your y-axis, which on a chart is going to be your price axis, right? You've got time on the X and you've got price on the Y axis. And that's fine. In fact, it's easier to draw patterns in most cases on a regular old chart, and that's what probably 80 to 90% of people that are trading or investing are using. So this just shows the actual magnitude of price movements in equally distributed across the entire chart. Now, There are times when there's so much activity in a stock. If I were to do Tesla, for example, that when you're zooming in and you're trying to look at the price target the price action in a small window of time, you're going to cut out all of the stuff that happened before. Now, in technical analysis, what happened before is very relevant to what's happening now. So we always want to at least have that in mind. So it's easier when you're looking at doing an overall assessment, a big picture of assessment of a stock, if you find a way to fit those previous vastly different, very far away prices into your screen at the same time. So what Logarithmic is going to do is put emphasis on the most recent prices on your chart at what you're looking at, and then sort of de-emphasize what's happened in the past by condensing the scaling, right? Each tick here is much closer together, and then they get more spaced out. So I can see this within a magnitude that's closer to its actual reality of magnitude, and then this stuff is drawn in so I can actually pull it up on my chart. Does that make sense? MD, why isn't Robinhood completing my put calls on Tesla? You're asking the wrong guy. I know how it is. Oh, that was in Benzinga Pro. Isaac, if you could share. So Isaac says, what was the last one we just did? What was the ticker on that? That was sick. What screener settings did you use? And Kevin, I'm gonna pin that. Better to use log at fast time frames and non-log at longer time frames. Faux show. All right. Let's look at some day trade opportunities really quick. And guys, also be mindful the ponytail wars are upon us. So if there are any ponytails that you know that need to be assessed, go ahead and drop those in chat. I'll add them to my list. So we're looking at the open. We're just going to look at our sector ETFs. I've got technology is about at this sort of resistance level. This is an important point. Consolidation. That's where we are today. Down open. We got, this is our consumer discretionary, which is heavily weighted with Amazon. Not doing anything interesting to me, although it is a nice healthy green candle on the 10-minute chart. Energy crossing down on the two exponential moving averages, 8 and 21, but it's holding at this point of consolidation, so we'll see what it does. Metals. This is I think metals is a black horse. I think I've been sleeping on metals, guys. I might trade this ETF a little bit depending on what it does. If we get some good movement here and break out above this this level that we're kind of stuck at, I mean, damn, look at this glorious thing. This is XME on the 10-minute chart. Very simple. I'm just going to do this really simply. Consolidation to the height of the candle, rounded bottom, right? Up to our resistance line. I'm drawing the height, which is the depth of that. And we can see that it broke out above that resistance and basically closed right at that price target. And then now we're consolidating here. This is looking like a nice little flag, this consolidation period. I'll go ahead and use the wicks. I'm going to draw my pull from the base here. Big move. Bull flag. We can look at Ford too. Bull flag. And I like this bull flag. Oh, yeah, we're going to hit some control up here. So we'll hit resistance around 41. At any rate, this is XME metals. Good looking candles. If we get a breakout, could be strong. We're going to hit resistance. But if this trend, if we do establish a firm upward trend, we'd be looking for about $42 on this. So what I'm going to do is I'm going to set an alert for 41 and some change. Bjorn. Whatever, dude. I don't know what that means, but I'm doing it anyway. I just want to get alerted if the price breaks out. If the price breaks out, I'm very interested. We won't look at MO. Altria Group. Ooh. Are you in this? Let's look at the daily. That's what you asked for, right? Ticker MO on the daily chart. Holy cannoli. Well, this thing rocks. What a beast. Good stock. What is the how 50? I like this stock. Added to watch list. Nice moves. So on the daily, you're just in a firm upward trend. Looks like a brief period of consolidation here. This thing rules. Whoops. What am I doing, guys? Good gravy. I'm so annoyed with myself right now. Oh my god. God, you guys ever do stuff with a computer while people are watching? Like if any of you guys work in an office or you have like a family, I don't know, any setting where you're like, yeah, let me show you how to do this on a computer, or like let me show you this presentation. And because people are watching you, you screw up the dumbest things. Like you forget how a mouse works. That's how I feel right now. At any rate, if this continues, which two things are missing from my situation here. My RSI and I don't even have volume. Why though? So here, let me do templates, get technical too. Let's see if that works. Okay, cool. I got my chart settings back where I want them. This thing's super oversold. I mean, it's simply oversold. So what I would be doing is watching for the pullback. Watch for the pullback because we're in oversold territory. Still, everything's very bullish. I mean, the trend is with the price movement on your RSI. We're just a little oversold, so you might get a little pullback. And I think that pullback would be within this range, right? So you got your support here at 48. That's my take on MO. But I'm going to keep it on my watch list. I really like how the stock is moving. Bigger time frame. Oh, wow. Stock's been around for a little while, huh? Week chart. Wow. Using the wrong one. Let me use this. I think you're breaking a 17, 18, 19, 20, like a 4-year trend, a 3.5-year trend. Wow. Really cool stock. I don't know anything about it. Altria. Is this like consumer non-durable? Oh, it's tobacco. Okay, yeah, I should know Altria. That's looking like a snack, my friend. That is looking like a snack. And you can see this reversal here, which is I know this is super small. Let me zoom in for you. So you're breaking this trend, right? We consolidated. We weren't really sure, and then we're out. We're out of it. We're reversed. We're in bull trend territory. And this whole thing, you could use as a flag. Like, this is insane. I expect great things from this stock. Great things. Let's switch to what am I on? Oh, I'm on regular. Good. So you could say the base is right about here. Let's just do that. We can say that this trend started about here, this bull trend. Although I keep selecting the wrong tool. It's ticking me off. Let's use that spike. All right, so what I'm trying to do is get a very long-term target that I think has to resolve itself as long as the company doesn't do something really crazy and just disappear to the breakout point. Oh no, it's the height of the pole. The height of the pole, which is this swing high here, added to our breakout point, which is right here. So my long-term price target for MO is 91.50, which from today, 80%. Sweet stock. Oh, wow. Yeah, I kind of want to... Okay. Ex-dividend date on MO is the 24th. I think I'm going to buy some. Okay, you want to look at Palantir? Palantir, you got to give me a time frame, bro. Need a time frame. Jonathan Tapia. AAL. Ooh. Okay. This one is it's doing that thing. So this is a very important line for American Airlines, 24.89. Let's see what volume profile has to say. Yeah, I mean, of course, during this period of consolidation, there's so much fighting. So you're obviously going to have very strong support here this previous period of consolidation. Thanks, volume profile. Let's get rid of that. So I've drawn this line here. It's 9:47. Today we have JC Peretz from All Star Charts. So stick around. He's the king of charts, the king of technical analysis. So make sure you stick around. With American Airlines, let's kind of look and see if there's a discernible reversal pattern. One is you just need to break above this resistance and hold it. Your very important number is just 24.86. And you have a double bottom. Double bottoms rule. The producer AB's dancing in the background. Hey, Brandy. Yeah, double bottom, guys. All right, this is how we do it. Let's get to the daily. Whoa, hold on, one more time. All right. So American Airlines, ladies and gents, this is a reopening play, obviously, but boy, has it been tossed in the dirt with a very classic downward, ziggy-zaggy downward trend. And now we are right where we want to be in double bottom zone. We saw this double bottom walking across the room, and we want to have a conversation with it. So what are we going to do? We're going to use our rectangle tool to draw our support and resistance lines to box in this bottom where the meat of the trade is. Not where this little frothy tease me kind of thing is. It's right about here. It's where you see actual consolidation. So let's do that. Interestingly enough, actually, it looks like it could be a little bit higher. So we're going to go up to this wick. Why am I bringing it up to this wick? Because I noticed that on the right side, on the far right pivot of my rounded bottom, that we hit resistance here. That means that this was the meaningful level. And then if I zoom in more, that this wick here on March 17th was also meaningful. So this is what has shown up again and again as the meaningful price level. All right. And then let's adjust this rectangle down a little bit to 825 is our absolute low for American Airlines. All right. And the price level to break out of that has been broken out of is 1865. Now, let's look at the measurement for this pattern and what it needs to do to resolve, which it may have already done. It's kind of looking like. So we take the depth of our base, of our double bottom, and then we add it to our resistance, which brings us up to about 28, about 29 actually. But I would be conservative and say 28. All right, so that's a 28% or $28 price target. From where we are at this point in time with American Airlines, that's going to be a 16.5% move. Very nice, not bad, but I think there's still gas in the tank, because this is right at this resistance level. What I would look for is a period of consolidation. This is what I hope for with this stock from a technical perspective. This is in the realm of hope. This is not in the realm of what I predict, right? Is we get to this level and then we do a little of this, right? So that the buyers and sellers can cool off. We're not in overbought territory. We consolidate at this price level. And then I want to see a full break from this full bottom. Just something like this, right? So I want my my move to kind of be like this. And I want to see a close above that line. Close above that line would set a very aggressive price target. $53. That's kind of price target number one, target number two. Target one, what was that? 29. What was that? Like a lot on the line here though. Reopening play. Ross Martin says, Neil, to what extent does technical analysis matter? Don't stocks just follow futures on bad days? All of the things that stocks do show up on the chart. And we use the chart to make our best estimate of what is going to happen next. That's the fulcrum on which I don't even know if fulcrum's the right word, but that's like the main thing of technical analysis, man, is everything that's happening fundamentally. Let's look at XME, happening fundamentally, everything that's happening on a macro level, economic trends, all of those things are reflected in the behavior of all market participants, whether they're human or not. And that's what shows up in the price chart. The price chart is the manifestation of the behavior and sentiments of all market participants. And that's why we use just the chart. Because everything's baked in there. So I want to go to my ETFs. I want to go to, oh no, that's not the cool one. I want my sector ETFs. I want XME. Let's take a little look here. $10-minute chart, XME, metals ETF, Spider Metals. Metals and mining. We are broken above. I like the stock. I like it. I'm going to go long on XME. Which is, it's not totally oversold yet here. And the trend is agreeing with us. MACD is agreeing with us. One is I just want to buy some shares, man. I want to own XME. I'm just going to buy 50 shares of XME. It's just 2K. I've been sitting on a lot of cash, so that's not like a crazy aggressive, thing. I'm just not holding a lot of stocks, and I like the strength, the relative strength that XME is showing. And I'm also going to check out the options. In the money call options expiring Friday for XME are about $68 right now. They're up 20% on the day. I'll just buy one. I'm not trying to be crazy. Putting $69 on the line. Would hope for returns like 20, 40%. TKAT. Well, we got 5 minutes left, guys. NFT. Oh, John Sylvie asking the question of the moment of the times. What does NFT mean? Non-fungible token. To be fungible means that it may be truly replicated. Maybe truly replicated. So when you think about a digital thing, like a picture of something, you can copy and paste it, and it's been truly replicated down to its code. It's the same exact thing. Non-fungibility is possible with blockchain technology, where you place a stake in the blockchain, in this case Ethereum, to say this stake or this token, and I know I'm mincing words, I'm sure a bunch of crypto geeks are going to crucify me, but this is the only true version of this that exists. You may find something that looks like it, that behaves like it, feels a lot like it, but it's not it, because it has been staked in the blockchain. Yeah, Chris, thank you, Chris. You guys can't obviously click that URL, but look in the chat for the link that Chris just provided. That's going to give a much better explanation of what an NFT is. Very interesting. I've actually been into NFT art for a few years, having no idea exactly how it worked. I just like the way the art looked. I just thought it was interesting. At any rate, XME doing his thing. Come on. Let's go. Why? This is why option orders don't get filled, is because there's too much volatility, and the price that you wanted to get your option at no longer exists. And then what happens is, if you don't cancel your order when the price starts coming back down and the stock starts going into a free fall, then you get screwed holding the bag. So we don't want that. Yeah, so I just got some common stocks on XME. Whatever. I'm here for you guys, not for myself. Okay, PLTR, what time frame? NNDM, what time frame? We got 3 minutes until we get JC. He's not here yet, though, so we might have a little more time. Okay, so we got X on daily or weekly swing. Thank you. X, your steal. Cup with handle, right? So this is a cup and handle because it's not following a downtrend, although this is round and round, round and round. All right, tell me, look at the lyrics for Round and Round by Rat with 2 T's and tell me that song is not about technical analysis. Fight me. I will take that to the grave. So big picture, small picture. The big picture is this isn't just absolute textbook gorgeous, most attractive rounding bottom on steel with resistance at about 23, 24. We're going to do the depth of the base from the resistance. So we go right about here. We come down to the absolute lowest point on X. I want to compare X to XME after this just to see if it's standing out. So we're at a resistance level. Price target of just the rounding bottom is 43. I'm going to clip it and ship it. Boom. And we still have room to enter because what have we done? We've done that thing that we get with these rounding bottoms where we form our right side, our right side of the bottom pivot, our right pivot, and then we come back up. We hit that resistance, a little bit of consolidation. But what's the cool thing about this consolidation is that it's actually a continuation pattern. What kind of continuation pattern is it? It's a cup. Cup and handle, right? Is this a Cobra Kai song? No, I don't know. Maybe is Rat on like the Karate Kid or something? That wouldn't totally surprise me. All right, so now we've got a cup and handle continuation pattern that is telling us that this upward trend will probably continue and break through. Probably do it. There's a greater than 50% chance that it will. And also the overall sector has strength. That's why we like this stock even more. All right, so we're bringing this U down to the absolute low. And then I'm just gonna, this is the way I do cup and handles. I've been trying to do them with like the arc like everyone else does. I don't like that. All right, we're in breakout territory for our cup and handle, right? It's doing what we want it to do. Cup and handle, the handle has to go down for a period, and it's done that over 3 days. And then we broke above the sloping downward resistance level on our handle here. Now what we want to see is just a solid close above where this pivot is. This pivot is right at 24.22. That's where we're going to draw our line in the sand. Very meaningful level here. Let me do this to just show how this level is harmonic, or it resonates through the past. I'm totally making that up. I'm ripping off like Elliott wave stuff. If you know, you know. But see how this resonates in the past? This was the resistance level when we had this last swing higher little swan song. It looks like it served as somewhat of a consolidation period here. So when we had an impulse up in the past, we had consolidation down to right about this level. It's right about where the consolidation or resistance lines are. Let me turn off these moving averages to make this much more clear. We're in the past, so like this price level is here based on what has happened in the past. What has happened before will happen again in a different form. All right, so we've got our nice cup and handle. We are watching for, which just gives us more confidence that this rounding bottom is going to break out and resolve. So we are watching, of course, for a break above $24.50, $24.50, which will give us at that break. I'm going to go just a little bit above it. I'm going to say 24.81. Give us a price move of about 76.5%. So really, really nice. Really, really nice on X. This one's getting added. Good picks from chat today. Good picks. You guys, I'm literally gonna make an LLC and call it the Get Technical Brain Trust, and I'm gonna hire all of you. And we're just gonna listen to 80s hair metal and pick stocks and talk about rounding bottoms all day. All right, good stuff. I've got that on, and just really quick, let's just look at how that compares. Currently, some nice relative strength, but not as compelling as I would have hoped. But still, it's highly performant. Highly performant. All right. That's enough out of me. Our guest has arrived. The venerable JC Peretz is in the house. So everyone, you guys, yeah, if you guys join the Brain Trust, you do have to grow ponytails. I hope that's not a problem for you guys. All right. The venerable JC Peretz of All Star Charts is with us today. Producer AB, could you bring JC in? What's up?
What's up, Neil?
How we doing?
Never been better, man. Things are good. Market's ripping. Bull market, baby.
Love it. What are the I guess what so you were calling rotation into value. You were kind of very clear, even though people were denying the reality of what was, and you're like, all right, well, here's a chart. This is what the chart says. Rotation into value. Really quick, I just want to go over, how do I, as a normal person with a normal charting tool, what's a good way for me to just see that in action? How do I see the rotation into value in action?
Yeah, listen, I think it really comes down to understanding what you're looking at and what you're talking about. People talk like, oh, what did the Dow do today? What did the NASDAQ do today? You know, what did the market do today? I think where a lot of people fail is they don't understand what's in these indexes. You know, there's this misconception that the NASDAQ 100 is the market, right? And it's the furthest thing from it, right? The NASDAQ 100 has zero exposure to financials. It has a 0% weighting in energy. It has 0% weighting in materials, 0% in real estate, 2% in industrials, right? So like there's almost nothing in the stock market in there. What you have are 45% technology, a bunch of Amazon, and communications is like 85% of that index. So what you're looking at in the NASDAQ 100 is you're really looking at a growth index. So it's important to understand what's there. It's also important to understand what types of industry groups run the world, right? Europe has twice the exposure in industrials that the S&P 500 does, for example. It has more financials. Some of these European countries like Spain have twice the exposure to financials. You know, a lot of these countries in Latin America and South America, they have more exposure to natural resources like Peru and Chile. Chile is huge on copper, for example. So it's understanding what's driving all of these markets. Why has the US been the best place to be in the world for such a long time? Because they got a ton of growth. And, you know, right? And the NASDAQ has been so great because it has no banks and no energy. And those have been the worst places in the world. So how does an investor that doesn't rip through 5,000 charts a week like we do recognize this? I think number one is understanding what's driving these markets, what's inside of them. And then it becomes quite obvious when you're seeing, you know, on a day like today, financials are up 1.5%. The NASDAQ's down almost 2%. It's quite obvious the bifurcation that's been taking place. And again, it's not anything new. This has been going on since Labor Day of last year, right? So this has been happening for a long time. I think the only people who have missed it have purposely been ignoring it. I mean, it's been quite obvious. Like, I mean, and it's, again, it's not like I called it like, oh, this is what's going to happen. You know, we were looking at it in real time. It was more like, hey, this is what is happening.
Yep.
Right? It wasn't like this grandiose call. I mean, it's right in front of you. It's quite obvious.
Yeah, and that's another thing that I really like, JC, is that you're kind of removing this mysticism that people project, like frankly onto you and onto others, like looking at the charts like it's this voodoo woo woo, you know, you're using charts to like predict the future in it, or like the tea leaves thing and all that kind of thing. But no, the price is what is happening with these companies, is what investors are doing.
Right.
And this is simply what's happening. I'm not trying to project anything. I'm not trying. This is not a magician show. So I have seen that. I've seen you. I saw. I think you're on like Investor Business Daily. You've been getting interviewed, and just saying like this is just what's happening, and people are always kind of like surprised.
Yeah, and what are we doing? We're just recognizing trends, right? In this case, we're talking about the tremendous outperformance of value over growth. I mean, it's just a very obvious trend. That's one trend, but we're trying to I could talk to you all day about all sorts of trends going on around the world. And the reason we look at charts, not because of voodoo or tea leaves, the reason we look at charts is it just so happens that the best way to visualize the changes in equilibrium between supply and demand just happens to be in chart form, right? You don't need charts. You could look at them on Excel spreadsheets. Like there's all different ways to do it. It just makes your life the easiest by looking at charts. And I'm a big fan of making my life easier. You know, no doubt about it.
Yeah. I think that's a very good quote, actually. Is a visualization of supply and demand.
And you know, the pushback I get is like, oh, JC thinks he's so smart. He thinks he's smarter than Cathie Wood because he's buying value and selling growth stocks. So JC thinks he's the smartest guy in the world, and he thinks he's smarter than Cathie Wood. Like, I really get that sort of feedback. And like, first of all, I don't know anything about Cathie Wood. Like, you know, she's like a superstar now. Good for her. You know, she has all these ETFs and like $1 zillion under management. Great. Yep. That's fantastic. What the hell does that have to do with me recognizing that money's flowing into value at a greater pace than it's flowing into growth? Like, I don't think I'm anything. I don't think I'm smarter than Cathie Wood. I don't know. I know very little about the woman. Yeah. I have respect for her, if anything, right? In fact, I could probably guarantee you that she's smarter than I am.
Yeah, same here.
Let's be serious.
Yeah. Absolutely. But I think the main thing here, and this is just, I mean, this is JC and I having an absolute, like, we're having a kind of a circle jerk about how technical analysis works, but the thorough thread here is that it's objective. It's completely objective. We're not trying to project ourselves onto what's happening. We're not trying to project our love or disdain for any asset or organization or any currency or anything like that. We're simply looking at what is happening and then reacting to that.
Because I don't care.
Right, like exactly.
The S&P 500 could double or it can get cut in half. Gold can go to 10,000 or it can go to 0. I don't care. I don't care. It doesn't matter either way. I'm good either way. I got my family. I got some good wine, some steaks. I'm good either way.
Yeah, but then so that's good that you got all that stuff. But then as an investor, I don't care what any one of them is doing because I'm just going to the one that is performant if I want to grow my wealth, right? Like there's always going to be some form of opportunity, even if you're going short on something,
right.
Even if there's something is very obviously in a free fall for a reason that you understand, then you can go short on it. If something is about to perform that has been historically thrown in the garbage, or at least in recent memory, because everyone's very, very focused on like now, then switch over to that. And that's something that I did based on a lot of cues that you had was I switched over to some oil. Actually, I did it like without even realizing what was happening. I was like, damn, like XOM is looking like it's doing a thing. And then I started to understand the big picture, and I've been a lot more interested in looking at relative strength among asset classes and
relative
sectors.
weakness, for example, the opposite of relative strength, which what you see in the growth stocks and technology and consumer discretionaries. Communication has been the one area there that continues to show some relative strength, particularly versus some of those others in the group. And then also the intermarket implications of a rising rate environment, right? Interest rates have been going up as this rotation into value has been taking place, which is perfectly normal. So if you're stuck in these growth stocks and you're stuck in these mega cap, it's because you've purposely ignored what's going on in rates. You've purposely ignored the rotation into value. Like you just close your eyes like it's not happening, which I think is great because I think it's going to be really hard for a lot of investors to convince themselves that, you know, their portfolio shouldn't be in these companies that are revolutionizing the way we live. Those are some of the worst places to be. And in fact, and clean energy and all these things that they've been told are great things. It's actually the opposite. We want to be in the grossest, most terrible, most polluting types of companies, the ones that affect climate change and hurt the world the most. Those are the ones that have been doing well, that we've been buying, that we want to continue to buy. And all those banks that you thought you hated so much, those are great too. And JP Morgan, as we speak, breaking out to new all-time highs.
Oh, really?
You know, the banks people think that they should be hating, and the companies that are polluting the world that they haven't been buying, which is great, right? Because those have been terrible companies to buy. You've wanted to be in the growth and technology, but that was a different cycle. That was a different market environment. It's not the one we've been in. And if you're ignoring this, it's like, what are you doing?
So yeah, here's what I have to say about that. So like we have an emotional connection to assets for whatever reason. Like I had an emotional connection to Cathie Wood ETFs because I just set it and forget it, and they were making me money. That's great. But also I liked the story behind it, right? Like I like the disruptive innovation. I like the next phase of the internet. I like the AI stuff. That's something that I'm a sci-fi nerd, right? Like it's easy for me to imagine that these are going to be firmly established norms 5, 10, 20 years down the line, and be great organizations that are based on this technology. Totally makes sense. But the thing is, that's just one piece in a massive system. All right. The system is what matters. All right. So we can't fall in love with any one piece because it's all kind of moving around in a stew. So even though oil is ugly, yes, most of the oil use is for combustion engines, and it's putting carbon into the atmosphere. It's just a part of the same system as that stuff that you love. So if you're going to take part in the markets, you've got to love all of it. Right? You can't just love it. There's no buying or selling with one class unless it's going on with another one. So JC, if there's any lesson for folks that are trying to get ahead of this type of thing, say I want to be able, and I'm going to narrow this. I know you're going to hate me for this, but I'm going to narrow this to just the stock market. And so let's say I want to always be in a sector or industry that shows strength. Are there any tips that you can give to that person?
Well, new highs are not a characteristic of a downtrend, right? So when you're seeing new highs, that's evidence, right? I'd say even if you're just trading in the stock market, to ignore the other asset classes is irresponsible. Right? Like you're missing the bigger picture, and you don't have to trade bonds. You don't have to trade currencies, commodities. You can ignore all that stuff if you want, but there's information in those trends. And at the end of the day, there aren't that many commodities. So like to follow what's going on in the commodity space is really not that hard. Same thing with bonds, right? What do you need to look at? High yields, treasuries, corporates, like it's not that many. Look at those rates. I mean, how many of you got You got your 5-year yield, your 10-year yield, your 20-30, maybe your 1 or 3 or something like that, right? There's not a lot of bonds. So with very little work, you can get a lot of insight into the intermarket complex, which helped most certainly identify the fact that we've wanted to be getting out of growth for a while, heavily into value. And then it makes sense, right? Because you're seeing interest rates breaking out, right? And bonds rolling over, which is characteristic of an environment that value tends to outperform. Then you're looking at all these natural resources and commodities breaking out to new highs. Again, characteristic of an environment where value is outperforming because all these are value names. Then you look at financials, and then you look at some of the countries with exposure to financials like Europe, and then the US financials index breaking out of a 14-year base. So now you're incorporating interest rates going up, which is good for financials. And you're seeing that not just in the United States, but globally, right? And then the countries where they're taking these natural resources out of the ground, the companies building the machines to take these natural resources out of the ground, and the banks financing the whole thing, all of that is value, 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 value. I mean, so these other asset classes, and then look at the bond market getting absolutely slaughtered, right? Again, classic environment for a rotation into value. And, we've been comparing it to 04, 05, 06, where the stock market did well, technology went up. It's just that technology went up the least of all of the other ones. Financials are where you needed to be. Energy was where you needed to be. And I just don't think investors, the NASDAQ 100 has zero exposure to energy. The S&P 500 has 2% exposure to energy. Small caps and mid caps have 1-2% exposure to energy. So think about an environment where crude oil is at $200 a barrel. How's your portfolio looking? Is that great for the economy? I don't know. Probably not. Is that great for earthlings and citizens of this globe? Probably not. But I have no say in the matter. So we can either take advantage of it and make money for ourselves and our families, or we can complain the whole time. It's up to you. I'd rather not complain because nobody cares about JC's complaints. My wife certainly does not. And that's really the only person I care about. And my daughter's too young to care. So, for me, I'd rather just profit from the whole situation and, worry about the consequences later. I am confident that I can withstand the consequences of higher oil prices if I have more money in my pocket than if I have less. So if I spent all that time complaining instead of making money off the whole thing, I would be at a disadvantage if and when oil gets to 200. I prefer to be at an advantage.
Yep. All right. So that's just a dose of reality, right? We're just focusing on what is happening versus what we want to happen.
I don't get a say in the matter, right? Gold going to 0 or 10,000. I get no vote in the matter, right? I can only take advantage of the direction if and when they move, right? I get no say in the matter. Nobody, right? I can tell you what I think should happen. The market certainly doesn't care what JC thinks should happen.
Right. And history would show that they never really have. So, JC, where can folks find more from you? Because I think that people really like this way that you, frankly, when I hear you talk about the markets, you make everything seem matter of fact and simple. When I hear other people talking about technicals, they always make it seem inaccessible, which I hate so much. And I really want to destroy that. And I think that you are in many ways one antidote to that problem. Where can folks find more from you so they can look at technical analysis with clear eyes and without all the BS?
Listen, I'm easy to find. You can normally find me on Sunday afternoons at Jason Raznick's house, right? Just sipping tequila with Raznick. Go to allstarcharts.com. You can find me at All-Star Charts on Twitter, Instagram, Stock Twits. We're on Clubhouse every day at 11:30 a.m. Eastern time. YouTube at All-Star Charts.
How do you get it? How do you get into Clubhouse? You send me an invite to get in there? How do I do it?
I honestly, this is above my pay grade. I know. I press a button. I press a button and just start talking shit. That's it.
Okay. Hey, that's
I don't really know how it works.
All right,
guys. People show up and ask me questions. It's great. I don't know how it all works.
Well, I hope to join one of those sessions. JC, man, you've been great. I really appreciate you coming on this morning.
You got it, dude. Thanks for having me.
All right, have a good one, bro. That's JC Peretz. He is the founder of All-Star Charts, allstarcharts.com. Definitely check out the website and follow him on Twitter. It's the same handle. It's at All-Star Charts. We dropped it in there. Sorry, Snap Crackle says he'll invite me to Clubhouse. Dude, Twitter already started a Clubhouse thing that's like exactly the same. And I like it better, right? Because I don't have to start a new platform or anything. I think they've already gotten ripped off. No, JC, I don't know if he's done anything with Raging Bull, to be honest. I don't think he has, though. I do not think so. I think JC's always had his own organization. He might partner with other people so he can get his charts out there. But what he does is he and now like a pretty large team of people are just always looking at charts across all of the financial markets, sort of like he talked about. And then they find correlations or they find between markets and asset classes, whatever, and find patterns, meaningful price levels, etc. And then they provide those charts to institutions. Like institutions ask him for his technical analysis research. So anyways, right, I just want to remind everyone, if you're on YouTube, and I think on some of the other platforms, we have 4 platforms that are watching right now, but go down to the description. You should see a link to our Discord if you want to join the Benzinga Discord. Can I compare SPY with yesterday? They look the same. So Daniel says, let's look at SPY. Let's do it. Got about 9 minutes left. I'm hungry, dude. I think I'm gonna have a bowl of Cocoa Pebbles after this. Okay, so you want to zoom in. So this is what we would call an inside day. An inside day. Why is it an inside day? The candle for the day is within the bounds of the previous candle. Right? And what do you need to make money in any market? You need prices to change. You need volatility. So we're pretty much inside where we were yesterday. Not really sure. Here, let's look at a shorter time frame. What I would say to this, though, is that it's good that it's not going lower. All right, that's bullish. That's bullish SPY. But we are confirmed no longer in a correction. We were in a correction with SPY. We are in a correction with QQQ, I'm pretty sure. With NASDAQ, I believe, is still in the corrective phase. SPY is out of it, and we're holding. Yeah, Cocoa Pebbles, what's up, big? Problem? I don't know, there's something about Cocoa Pebbles. I think it's the mouthfeel. They rock. They rock. 5-minute chart Daniel wants. SPY. What do I have going here? Is this, it's the 50-day. Just throwing VWAP. Let's get crazy. We're just doing some serious consolidation here. Let's see what the EMAs say. Yeah, this is serious consolidation. Yep, so you just want a nice break above this level for you to be confident in any sort of upward movement, upward price action. See where it shows up in the past. It was support in the past. The body of a candle was stopped there. Let's go back. It was the beginning of a gap. Partial support. So it's a meaningful level that we just got to get through with SPY here. We're looking at the 5-minute. I'll switch to the 10. It's where I'm more comfortable right now. Let's look at RSI. Let's look at everything else. It was oversold for a period on the 10 minutes. That was during the pre-market. We have an upward trend on RSI. We're in bearish territory with MACD, but the fast line just crossed above the slow line, and we're heading up. We are heading in the right direction. So yeah, I just think a break above 395.5 is going to be a bullish indication. Hunter asks, yo, Neil, what do you think about the market after listening to Powell yesterday? I didn't listen to Powell. I just traded options while it was happening. Which is not, I'm not trying to be cocky. I honestly, I don't don't understand enough about market dynamics for him to say anything that really matters to me. I just know stimulus checks and interest rates. Oh, he's speaking today. Guys, I gotta be honest. I'm too dumb. Sorry. Just looking at the charts. Man, Steele, what a beast. Good pick. Anyone else have any good picks? We've only got 5 minutes left, so you guys run the show. You guys are running the show. I want to remind you guys, so just a couple of things. One is, I would really appreciate it. It's very helpful if you guys, if you haven't already, just hit that like button. Super helpful for us to keep doing this. Number 2, check out our Discord if you haven't. We want to get some activity in there. We think it's a good way to continue the great conversations that we have during the show. Neil just said the magic words. Great, strong name. It's spelled wrong, but strong, handsome name. It's incredible. I feel like I've heard it somewhere in the distant past. I have a feeling of nostalgia, warmth, and courage when I hear the name Neil. I don't know what it is. So looking at NMM, messiest chart on the show because this is I'm heavy into NMM right now. So NMM was a previous high tight flag. For those that don't know, it broke out. We've earned so far on NMM, which I'm full disclosure, I am still in. We've earned so far about 45% on it. It is beautiful. We love it. I got like kind of quasi leaps, options contracts on it, but mostly I just got common stock. Price target 1 has been BTFO'd, but we're oversold. So what I've been doing is just raising my stop very tight every single time. I'm keeping all of this profit. And I'm going for price target number 2, ladies and gentlemen. That is for sure. NMM shipping stock, believe based in Greece. What we had was a double bottom that formed a nice high tight flag here. And boy, what a ride has it been. What did I do wrong? Daniel, I don't know what I did wrong. What are you talking about? What was my worst trade ever? God, I feel like it was probably like in the past. What was my worst trade ever? My worst trade ever is probably a mistake where it was probably options where I meant to buy like a put and I accidentally bought a call while something was in a free fall. And someone was like, yeah, sure, I'll sell that to you. And I immediately lost like, I don't know the details of my exact worst trade, but I have definitely lost $1,000 on a single trade. That's probably the most I've ever lost on a single trade. And that's all of my money. That's like all the money that was in the trade. That's the whole thing to zero. All right, so Jason's pick, VISL. We'll look at VISL. That will be the end. Make sure you check out the Discord. Make sure you guys check out Benzinga Pro if you haven't. You're about to find out exactly why you should. Okay. So VISL we looked at, and I did all my stupid drawings on it. Let me delete that. I mean, the man's got good taste. Don't tell him I said that. It's a rounded bottom that keeps getting a little effed by my rectangle here. So let me bring that up. There we go. Don't tell Jason I said that. And it's doing the thing, man. We get rejected, and then we get a little action here. Let me move these moving averages out of the way. We're on the daily chart. I still want to see a break above $5.08, 504, something like that, above the meat of the move, and then we're flying. We're flying, guys. Turn on volume profile here. We can see that. Whoa, I don't know why my volume profile looks like that. We can see that we're just above this value area, which means that there are not many hands above us. So this is like free sailing once we break out above this level. The RSI is diverging, though. I will say that. So we've got a downward trend on RSI. Where's my freaking volume? Volume is diminishing. MACD is diverging. But we are in a consolidation phase. So things got to get sorted out for there to be like an actual uptrend on this. But just really what I'm trying to illustrate is that your RSI chart, your MACD chart, they should be kind of doing the same thing that your stock is doing. So, I mean, actually, it's not terribly off. So I kind of take that divergence thing back because we can see it reflected down here, this little upswing. So at any rate, I want for Jason's pick to really mean anything to me, I want to see a break above 506. That's the show for the today. For the day, folks. This has been Get Technical. I'm Neil Hamilton. With me, as always, is producer Aaron Bree. Get the name right. Keep that name out your mouth if you're going to say Aaron Bry. Thank you so much for joining us and for those picks. I'm going to make money with your picks. Guys, remember, the Get Technical Brain Trust. We are forming it. Applications are open. Qualifications must be willing to grow a ponytail. You don't have to have a ponytail yet, but must be willing. All right. And if you have one in the past, I'm going to need to see a portfolio. I'm going to need to see some pictures. All people of all stripes are welcome beyond that. Tomorrow is Friday Fun Day. We won't have a guest. We'll be hanging out, doing some goofy, silly goose fun time stuff. Among those we're going to be ranking profiles throughout the stock market and financial services industry. You know who's going to be there. You already know what ponytails are going to be there, with the goal of taking their asses down. All right? I will not stand while I can't live in a world where I don't have the most badass ponytail in the stock market. All right, ladies and gentlemen, so I need your help. We'll have more picks tomorrow. Of course, it's Friday, so options will be expiring, so we might get some really YOLO trades there. But again, right now, it's all about protecting capital. Markets are a little bit weird right now. We're not in just crazy everything goes up mode that we were in 2020. So just remember, protect your capital. That's what I'm trying to do. Thanks so much for joining us. That was JC Peretz earlier. What a guy. Fun guy. Follow him at All-Star Charts. Up next, we've got our Benzinga Pro Showcase with the one and only birthday boy, Ryan Faluna. Everyone say happy birthday to Ryan Faluna. Definitely. And the venerable, the powerful, the name that must go without speaking. I'm trying to do a Voldemort thing, but it's Jonathan Mallard. Jonathan Mallard will be there. So show him some love, guys. Thanks so much. This has been Get Technical. Happy trading.
Hey there, everybody. It's Jonathan Mallard and Ryan Faluna here with another Benzinga Pro Showcase for today. Ryan, I've never been compared to Voldemort before. I
was just thinking, what do I got to do to get Neil to follow me around and introduce me everywhere? Because his introductions are spectacular. I didn't know where he was going with the Voldemort thing, but
he was trying to say the one who shall not be named, and then he named. He was like, wait a second, I'm trying to say his name, but then say the one who shall not be named.
I'm sorry. You're nothing like Voldemort, dude. You're nothing like him. Voldemort's a bad guy. Jonathan's an objectively good guy. All right, thanks. Sorry about that.
Do you have a rate for following people around and introducing them? Because it's spectacular, my man.
Yeah, no, that's one Dogecoin. One Dogecoin every minute. No freaking problem, dude. I'm going to send you my Doge wallet.
Let's do it.
Right,
that's perfect.
All right. Always a fun time here. And thank you, everybody who's in the chat. Just so you know, today's little session is a result from a request in the chat a couple days ago. So someone was asking, how do I find some great dividend stocks on Benzinga Pro? And so Ryan and I put our heads together, and we think we have a pretty good way here to find some dividend stocks, maybe using the screener, using the calendar tool. So Ryan, where should we start?
Yeah, we are going to start with the screener. Basically, what we did here is we've put together a strategy that should make it easy for you to deploy a dividend capture strategy, if this is something that you're interested in. What we're going to show you will also help if you have a bunch of stocks that you already own that pay dividends. It'll help track when you can expect that payment and when you need to be a holder of that stock, etc. So fairly simple to use here. It's just the first step that we're going to do is we're going to go ahead and load the screener. Now, the screener tool is going to allow us to narrow down the stock universe to the stocks that we're looking for. And in this case, we're looking for stocks that pay a dividend. So the only field that I'm concerned with here is the one that says dividend yield. So what I did here is I clicked on all next to the filters so that I can see a list of all of the filters. And dividend yield is one of the ones near the top. So I'm going to come in here and I'm going to actually select a high dividend. Right now, you can put in whatever percentage you want here, either above or less than. What I'm going to do is I'm going to select the preset that we have for high. This is dividends that are going to be over 5%. The next thing that I'm going to do is I'm going to actually add that dividend yield to the table, and I'm going to go ahead and sort it. I'm going to be able to look and see what some of these stocks are. Now, when I'm making my watch list, what I want to do is you want to make sure that you sort this by market cap, right? Because you want to make sure that you're actually adding the stock instead of either the warrant or the unit or a preferred share or something of that nature. So I'm going to sort this by market cap here. I have a list of all of these stocks. It pays out dividends, and we have the dividend payout here in another column. All right, so the next step here is we want to turn this into a watch list that we can then use in conjunction with our dividend calendar, because that's going to make it easy to figure out what dates we actually need to own these stocks in order to get that payout. So the next step here is we're going to click this little down arrow in the upper right corner that's going to export this data to a CSV file. All right, you'll see it just goes ahead and it downloads it right here on the bottom. You can use any program that you have that will open CSVs. So Excel, in my case, I'm actually using LibreOffice, which is an open source CSV program that you can go out and download right now for free if you want. All right, so we're going to go ahead and open this up. And all I'm interested in here, you can save this data for your own records if you want, but all I'm interested in here is the list of tickers. So I'm going to go ahead and I'm going to go down this list, and I'm going to select all of these tickers, and then I'm going to copy them. All right, now I'm going to mute this. I'm going to go back to Benzinga Pro, and now I need to create this watch list of dividend stocks. So I'm going to go ahead and click on the watch list tool. Remember, the watch list tool is how you actually build watch lists. All right, and I clicked on that from the left-hand feed here. Next, I'm going to hit create a new watch list, and I'm going to call this dividends greater than 5%, right? Because that's the filter that we use on the screener to acquire this list. Go ahead and hit create watch list. And now I'm going to hit Control V, right? So I'm just going to paste all of those tickers that I just copied from the CSV file into this watch list. We get asked all the time, how do I import tickers? How do I import a watch list? There's not technically an import function, but you can achieve the same thing by pasting these tickers into the watch list. So now we've got our dividend watch list here. This can be helpful for watching these stocks over the day if you want to do that. If you want to enter notes about any of these particular stocks, you can do that as well. But what we're going to do is we're going to go back over to the calendar here, right? And then once we're actually in the calendar tool, we're going to click the drop down at the top, and we're going to select dividends from that drop down. Now, what we're looking at here is the dividend calendar, and it's filtered for today. Remember, it's going to default to today, and it's showing you these different stocks and some of this information. What we're going to do is we're actually going to filter this by the watch list that we just created, right? Dividends over 5%, and click done. Now what we have here is we're seeing all of the dividends for the stocks that were on that watch list. So what I'm going to do is I'm actually going to sort this by X date. I'm going to click it again, so I'm going to get the most recent ones at the top. Now, the reason that this is important is because if you've traded dividend stocks before, or if you have any type of dividend strategy, you know that you actually need to own the stock prior to the X dividend date. right? So what they do is the day before the ex-dividend date, they mark down everyone who owned that stock, and those people are going to be who the dividend is paid out to. So what this calendar does here is actually provides you some real good information, right? It's going to tell you when that X date is. It's going to tell you the frequency of that dividend. Is it paid out every 12 months? Is it paid out every 4 months? It's going to tell you what the dividend actually is, the yield, when that dividend was announced, when the holder of record date is, and when the date payable is, in addition to the X date. So for our strategy here, what we're doing is we're very quickly finding a list of all of these different stocks and when you actually need to own them in order to receive this dividend. One of the other things that should be considered when doing this is, are dividend capture strategies relevant to your risk profile? Are they relevant to your trading plan? Generally speaking, in a perfectly efficient market, if we have a stock that's $10 and it pays a $1 dividend, after it pays out that dividend, the stock should be $1 lower. And so if you hold that, sure, you got the dividend payment, but your underlying asset is actually lower than it was when you bought it. So a lot of the times when stocks pay out dividends, the price does in fact go down, but then it'll come back up as buyers step in and buy that stock up. So there's no guarantee that if you buy this, the stock is going to remain high. What this is doing is this is showing you when you can actually buy the stock in order to receive that dividend payout. And as you can see, it's fairly easy here, right? We have a tool designed to find these stocks. Then we have a tool designed to give us the information about the different dividends.
Awesome. That was a nice setup there, Ryan. And just out of curiosity, do you have any favorite dividend stocks in your portfolio?
Yeah, so I don't generate strategies based around dividends. The way I look at dividends is, hey, this is a bonus, right? So when I'm buying stock, if my intention is to hold that stock for a longer period of time, obviously the stock is more attractive if it pays a dividend because I'm being paid just to hold it. So a good example there would be Apple, right? I own Apple shares. I've owned Apple shares since 2015. I haven't sold any of them, and they've paid me to own it that entire time. Now, did I buy Apple because they pay a dividend? No, I bought Apple because, in my opinion, it's the strongest company in the world. They have a great ecosystem. They have great products that people love to pay for, and the company is growing. They're also moving into other markets. There's a whole bunch of other data points that caused me to buy that. However, it's real nice to be able to hold on to that stock and get paid for it, especially when the stock splits and you get more shares. And over time, as the company does well, that dividend can go up. So again, this is kind of why I mentioned you have to make sure that this strategy plays into your risk profile. In some cases like this, you might not have a bunch of free capital lying around to buy up all of these shares in order to collect that dividend payment. One of the reasons people try dividend capture strategies like this is because you want to move your capital into a stock, get paid, get your money out, and then move it to a different stock. And that can work, but there's no guarantee that these stocks are going to go up or that the price is going to be the same as you bought them. So even if you buy them for the X or ahead of the X dividend date so that you can actually receive that dividend, you still have no control over where the price of the underlying asset is going to go.
Awesome. And I do see a comment in here from Kaylee about just ideas on how to diversify with different companies for those dividends. And so if you like a particular sector or a particular company, you could always click on one of these and open up the details tool and check out some of the peers in the details tool. So maybe you want the peers, maybe you don't. Depends on how you're diversifying, right? Whether it's in the same sector or other things. So, but in this case, you've got 5 other tickers right there that you can check out, and you can see if they also pay dividends. So that's one way you could do additional research. And just, I guess, in this last minute that we have available here, Ryan, I've also heard of using dividend stocks as a strategy, almost as like a hedge. Like, hey, if this stock goes down in value because the overall market is going down, then at least I'm going to get paid to hold this while I wait for the whole market to go back up. Have you used that, or do you have any commentary on that?
Yeah, actually, I do. So I didn't actually construct a strategy myself. But, when I was younger, when I was learning about finance and investments, I obviously paid attention to some of my parents' investments. And they had one of these stocks exactly like you're talking about. They owned AT&T. And so AT&T paid a really nice dividend. The stock price didn't really move around a lot. So it actually made it more attractive for this particular strategy, right? Because sure, the stock's not going to double or really appreciate, but it's probably also not going to go out of business. I mean, I don't know about you, but I think AT&T is going to be around for a while. So the thought process there was, well, sure, there's going to be some day-to-day fluctuations in the underlying price of this asset, but it's still a really strong company. It's not going to go out of business. It's probably not going to double, but I'll tell you what, we'll actually pay you if you hold our shares. So, my parents used this as income, right? They held shares of AT&T. People also do this with Verizon. This is another common stock. Sometimes you'll actually see when Verizon sells off, you'll have people adding to it, sometimes just because of the dividend. So things change all of the time. It's important to stay on top of this. But yes, absolutely, there are stocks that you can do that. You don't necessarily care about the underlying movement of the stock. You just care about receiving that dividend payout, and you want to purchase stocks that are going to be around, that are not going to be at a risk of going out of business or getting rid of their dividend. In fact, that's also sometimes when you see headlines about stocks that are either reducing or removing their dividend, that's why you see them sell off, because people don't want to own them anymore.
So someone is asking about the background noise, and for those of you who don't know, Ryan is an animal lover. He has cats, he has birds. So you're hearing a little bit of his friends there in the background. I think some of his birds, but
they're actually in a different room. I didn't realize that you could hear that. I'm really sorry about that. I will make the correction for tomorrow.
No worries. And lastly, there is a St. Patrick's Day sale still going on today from yesterday. So if you want to take advantage of these tools, you can start a free trial at pro.benzinga.com. That'll give you free access for 2 weeks. And then you can follow those links in the chat for 35% off of one of our annual plans. So that'll save you over $500 over the course of the year. But yeah, thanks for walking us through that, Ryan. Definitely some good food for thought there, and we look forward to seeing all of you tomorrow.
Yep, no problem. And remember, the next time somebody asks about that, just tell them I went to Costa Rica for my birthday.
Okay, right. Sounds good.
Time for a Newsdesk update. Wait, do I have the right mic on?
I hear you, Spence.
Yes, I do. Okay.
Do I have the right? Do I have the right mic?
Brent Slava, aka the Brenster, aka the head of Benzinga's Newsdesk. What up, man?
What up, man?
How we doing?
How's it going? It's like the gloomiest day in 2021 in Detroit today.
It's extremely gloomy. Extremely.
Yeah.
But
so
and gloomy for the markets too, actually.
Gloomy for the markets. Nice segue, Spence.
I was trying to ask you, like, what do you want to talk about?
Yeah, I wanted to surprise you.
You're gonna surprise me. So
you're like the guy. You're a kind of guy that you like. I think you like these things, right?
Yeah, it depends on what the surprise is.
So you guys might have talked about this on pre-market prep, but maybe not. Let's call it NFT madness or NFT mania. Did you guys talk about this?
A little bit.
Did you guys talk about this on pre-market prep?
Yeah, a little bit.
What was like the two quick takeaways from Joel or Dennis?
Joel and Dennis don't understand. They understand the reason for the existence. They don't understand why anybody would pay for these NFTs. That's
just NFTs in general, right? Like you guys weren't talking about the stock zaniness that's happening right now, right?
I did mention a couple of tickers, but I have a hunch that's where you're going with this. But I did mention a couple of tickers that are, I guess, NFT plays.
Okay, so mostly I kind of want to warn people.
Yeah.
Mostly.
Yeah, please.
We're going to talk about a few of the NFT plays that we have been able to confirm they have some kind of connection with actual NFT or maybe a little less blockchain. But in my opinion, right now, there's a bunch of names just getting thrown around that are being attributed as NFT plays. We can't find the connections for a few of these. And kind of that was the thing that I wanted to warn people on
Lay it
mostly
on
was
me.
like,
Lay it on me. Let's
sweet.
go.
So a couple things. So first, let's start with the names that we have been able to confirm there is some kind of connection here.
Okay.
And so I want you to search in Benzinga Pro non-fungible token.
Like the word.
Like the whole word. Do a space or maybe even a hyphen. I did a hyphen when I was searching it.
Okay.
I like hyphens.
Fungible. Did I spell it right?
Yes.
Yeah, I did. Okay. Okay.
Nice. Okay. So one of the newsdeskers yesterday, Mike, he put out a headline. It is the headline from 3:23 p.m. yesterday, Spence.
Okay.
List of stocks being viewed as non-fungible tokens. And so I'm just going to read off the tickers.
Yeah.
And in the body, you can see that Mike put a quick description on how these companies, we think they're related to NFTs right now. So the couple that have been going really crazy have been Tukung Art, that's ticker TKAT.
Mm-hmm.
That is like an artwork company. I don't know if they have it says it's an electronic online platform for artists, art dealers, art investors. You would assume if it's electronic, it's online, it's going to be something with digital assets, but I think that one's more like on the art side of things. The other one that's been going really crazy last week or so, Oriental Culture, that one's OCG, and that one operates an online platform facilitating e-commerce artwork trading in China. Again, you would assume
it's the magic word. It's e-commerce and China.
100%. And that's you know how some of these US traded China based stocks go, Spence. They're like Momo monsters, right?
Yep.
They're probably a low float play. The traders that are in these can really kind of like corner the market a little bit and do a lot what they want to with the trading. So that's why I think we're getting a lot of this mania anyways, is because people are kind of like targeting these because they are maybe able to be manipulated a little bit. Let me just read off a couple of these other ones here. GRNQ, that one's Green Pro Capital. They have an investment in something called Crypto SX, which is a digital assets exchange that allows issuers to tokenize, investors to buy and sell digital assets. CNET, ZW Data Acquisition Technologies. They are a technical services R&D company for blockchain businesses. Where's the connection to NFT? I personally don't know it. It seems like this one's a little bit more on the blockchain side of things.
Okay.
Moniker Group, that's ticker MKGI. They have assets for an ICO portal that is licensed in Thailand. Again, don't have really clear connection specifically to NFTs. Taoping, that's TAOP, and then CLPS. These were ones that we were able to confirm. Oh, you know what? And then Ideonomics was also one that was included here. IDEX. Okay. And so this was our list from yesterday. Since then, there has been a few names that have been added to the list, and then a few names that I specifically want to warn people about. So type in ticker, Spence, if you don't mind, LGHL. So this is one that's being circulated today, and I researched this one really quickly. So they work with a company called Grand Shores Technology that is a provider of blockchain technology, sport, and digital asset platforms. Again, you would assume digital asset platform is going to be something related to some kind of digital asset trading, investing, execution. So doesn't seem extremely close to NFTs, but like this is the sentiment that's happening in the market. It's like anything that's remotely related, these things could go crazy, up or down, you know. Funko, FNKO, that was one. I don't think we did a headline. Funko, yeah. So this was a recommendation. I don't think we did a headline on this one yet, but this is one from our SPACs guy, Chris Ketchy. He said he liked Funko. He said that he had a past experience where Funko had some exposure to NFTs, and he was looking at that one.
Is the tie-in like any company that has any sort of product steeped in nostalgia? Because that's fun.
Interesting, Spence. Why did you say that?
Because in what other way could Funko tie into NFTs? But like they're gonna tokenize their products, and why would somebody buy it unless it had some sort of like people buy like art for their perceived value, and Funko doesn't produce art. They make toys, right?
That can be art for a lot of people. Do you know what a dunny is?
A what?
A dunny?
No.
It's this like little. It's like some people like a lot of people would call it a toy, but I have a friend who is like a dunny collector. So this toy turns into a collectible item, and there's like a limited number of them. He's like, oh, I got to get this one dunny or whatever.
Yep.
So I think that's kind of the connection. The thing that I would highlight really quickly is the crossover with blockchain and NFTs is huge, right? The whole perception of an NFT is based on this ledger that traces back to a digital imprint that's unique, so that this person, an artist or whatever, can get royalties from the usage, right? So I think to something you were kind of highlighting a second ago, anything that's like related to blockchain is almost kind of being clumped into NFT, potentially inappropriately. So the couple that I wanted to warn people on really quickly, there's one today called it was running yesterday too. It's called Mercurity Fintech. It's ticker MFH. This one's being clumped into NFT.
I see.
I don't know. I don't know the connection yet right now.
I see.
And then
all right.
And then another one is Hall of Fame. That's ticker HOFV. So this is kind of a good case in point one. So look at that headline from yesterday afternoon, Spence. There was a Twitter account that circulated the name as a non-fungible token play. The evidence that they provided was an NBC article that said the NFL is considering NFTs. And they circulated this article, and the stocks started going crazy last night. There was nothing in that article that mentioned Hall of Fame specifically. This momentum can just, like, people get caught up in the momentum, and then it just goes. And so the one that I wanted to end on, Spence, is
I'm trying to go to that chart real fast. That
sure. Go look at the pre-market, it was actually after hours. Look at that spike last night.
Yeah. Okay.
And so what's the stock? The stock's still up 16%.
Last one. I want to make a point off the point that you're trying to make. So let's do the last one.
So the last one is YVR. This is Liquid Media. This is like a retro gaming and video company, and it got clumped into NFT. I think yesterday. Because they have a partnership with Atari, and Atari is doing a partnership, something related to NFTs. However, we reached out to Liquid Media and we asked them, hey, do you have any exposure to NFTs? They gave us a comment that said, we have no plans to go into the NFT market. That stock closed like 70% higher yesterday. It's selling off today. It's down like 20% today. But given from where it was trading yesterday in the morning, the stock's still up like 50% on this perceived notion that we can't really confirm yet.
Yep. Yeah.
What were you gonna say, Spence?
Brent's point on YVR and HOFV is that proceed with caution, but he's not saying that just because these companies may or may not have anything to do with NFTs, that they should go back to where they were a couple of days ago. He's not saying short this, because it doesn't. Even if there is no perceived rational reason, it doesn't necessarily matter.
Unfortunately, for somebody who likes to be logical in their mind and try to make sense of stuff, like the stock market in 2021 is not your best place to be.
And actually, that's a really great point too from Coupon Boy, and we you can see the coverage here in Benzinga Pro. Look at YVR. They do an offering. Look at that. They did an offering. They're raising
offering at 335. The stock's trading at 313 right now.
Yeah. Yeah, okay. It's trading at a discount to the offering price. They're raising money, as they're wanting to do, as companies probably should do when their stock goes up.
Right. Appropriately. Right? Yeah.
Right.
Appropriately so.
So it was that. That was YVR. But again, Brent's not saying, "Oh, this makes no sense. You guys should short it." He's just saying,
"Do due diligence."
Yeah. Do your homework. Understand why you're buying what you're buying, right?
If you're buying the stock because it's caught up in so much momentum right now that you think it can just go higher,
right?
Good reason, I would say.
Yeah.
But you want to understand that as a trader, as an investor, you want to understand that you want to be able to trace back why you ever got into this thing. And if your intent strays, that's where that discipline comes into play, and you go check yourself and go, hey, this isn't why I'm in the stock. I should just get out of this thing.
Yep.
Yeah, thanks for making that point too, Spence. Super smart.
Know what you're buying. Don't be surprised. These things, it's really hard to control your risk. Do not be surprised if it goes back to 2. Don't be surprised if it goes up to 4 or 5 or 6. Like anything can happen. These things are wild. So that's what. So no. James says he stepped away. No, YVR was not confirmed as an actual NFT play.
Again, it was what I think is that YVR has a close partnership with Atari. Atari is, I think, doing stuff with NFTs.
Yeah.
So if you think that's a good enough reason, great. If you think that specifically for Liquid Media, maybe they don't have enough exposure to Atari to have some kind of material benefit, then maybe that is when you think about doing a short or something like that.
Yep. Brent Slava is the managing director of the Benzinga Pro Newsdesk. Brent, as always, it's been a pleasure. It's been educational.
Yes, sir.
We'll talk to you again.
Thank you, Spence. Later.
Oh, sorry, Brent. I just got Brent off. Time for SPAC Attack, guys. 11 o'clock during the day. You know what that means. Let's get the SPACs show going. Smash the like for Brent. Smash the like for Jonathan Mallard and Ryan Fluta. And smash the like for SPAC Attack coming up now.
It'd be good to be on the screen. How we doing, traders? Welcome to the SPACs Attack, where we talk everything SPACs. And if you are excited about some SPACs, let me know by giving me a like right there, guys. I want to see these likes pushing up. We have a great show for you today, guys. Another interview, guys. If you guys don't get information from SPACs Attack, I just don't know what you're doing. But let me bring on my man, the brains to this show. My man, you guys give him a shout out. Chris Ketcher.
What's going on, Mitch? What's going on?
What's up, man? It's good to be with you, man. Always good to be on SPACs Attack. So definitely, guys, do us a favor. Smash the like button. Support us. Hit the share button. Let everyone know. We got Airspan on later today, guys. So you don't want to be missing out. 5G play. I mean, I know a lot of people took their eyes off 5G with the whole pandemic. But at the end of the day, 5G is coming. It's just a matter of time. The question is, we'll find out how good this company is when we get to the interview a little bit later. All right, so let's go ahead and let's get into our headlines. There's a lot to talk about, guys, so I want to get into that. Chris, go ahead. Oh, looks like I got my man Spencer Raskoff on CNBC. I could put him up right now. Do you want to start with that?
Yeah, so guys, we did have a deal announcement today. SPNV is the ticker. This one was announced a little late. It was 9 a.m. today. So Spencer Raskoff, former founder of Zillow, taking a online real estate play public here. So looks like he's talking on CNBC right now, Mitch.
Yeah, let's bring him on. Let's hear what we hear here. Let me just put the audio up here. Let me know that the audio is okay in the chat, guys.
If you press a button on your smartphone and have magic happen, I think those are going to be the long-term winners, and they'll make it through this choppy period as we see a risk-off trade and money cycles a little bit out of growth and a little bit more into value.
Well, yeah, and we will talk more about.
All right, so Chris, we can talk on the background here. As you guys know, this was the ex-CEO of Zillow.
You are exposed to real estate.
So going to be interesting to hear kind of questions he gets.
Impacting consumer behavior when it comes to moving and buying new houses.
Well, mortgage rates have been so low for so long, and that has definitely buoyed the real estate market. But the research that my team and I have done shows that as mortgage rates tick up, it doesn't really crush the housing market. It just causes people to trade down to a slightly lower price point. The housing market right now is on very stable footing with extremely low levels of inventory. A lot of markets have just a couple weeks of inventory. And in a normal market, you'd expect a couple months of inventory. So even as mortgage rates start to tick up, they're still at historic lows. I think the real estate market is going to do just fine. What you are starting to see, though, quite a bit of, is people reassess where they choose to live. Companies are shifting to a more permanent hybrid work from home type environment where you're not tethered to your company headquarters anymore.
Yep, there we go.
The studio that
Pointing
you
it
have
out
now in your own home.
I mean, look at us.
We're
at home, right,
working
Chris?
from home. It does change the real estate market. I know that's something I've looked at is, no longer having to worry about, necessarily what your commute time is. So it opens up the door for other opportunities, other, market prices
the way
and
I
ranges.
understand the model, and correct me where I'm wrong here, part of what you're doing is offering cash for homes in OfferPad and then expecting to resell. It seems that as interest rates rise, if more homes come onto the market, the end consumer, the home seller, is going to be more likely to want to use a service like that. But then there's more risk that goes onto that model, and your data's got to be really good about which homes you buy and how long you expect to have to hold on to.
Raskoff, I wouldn't test them on data.
What OfferPad is doing is it is part of this digital revolution that we see throughout the whole economy. So you think about
digital transition.
Uber, Instacart, Postmates, TaskRabbit, all these services where you press a button and some stress is alleviated in your life. OfferPad is part of that trend. So 99.5% of people still sell their home the old way. The old way, where a real estate agent walks around your house, points to all the things that you need to fix about your house before you can sell it, things that you didn't care enough to fix when you own the home, and now you're being told to fix it for the next owner. And then you list your home, and you have no idea how long it'll take to sell. It's a very stressful and expensive way of selling, and that's how 99.5% of people do. What OfferPad provides is speed and certainty. So you can either sell your home directly to them, or you can list it with them. And if in 60 days you don't get the price you want, there's a backup offer from OfferPad that they'll pay to buy your home. Then they ready the home for refurbishment, just like a car dealer would take a used car and turn it into a certified pre-owned car before reselling it.
That's a nice analogy there. The used car. I like that analogy, and I think that works well to explain this model and kind of what Open Door is doing too, right? They're buying real estate from homeowners. They're taking on some of the risk to be able to resell that, but they're able to use their own logistics to refurbish it. They have a large partner network of contractors. They can improve the house, and then they resell it to make the profit.
Do you see that
so
getting out of hand?
that pre-owned certified used car analogy, I think, is key there.
Like OfferPad is the fact that they're doing huge numbers of renovations at scale. They've done 15,000 renovations across 30,000 transactions for $7 billion of total real estate value.
So looking like more focused on the renovations here.
As a consumer should repaint your house before you list it is crazy. Instead,
it's going to be an interesting housing market. That's one thing I definitely have seen. So it looks like you can get like an offer almost immediately, or you can go to the process of actually selling your home.
So Spencer, give us a sense of why OfferPad is doing this via SPAC rather than going public via traditional IPO, and what your outlook is on the SPAC landscape now as it gets even more crowded. It seems like every day as more SPACs are launched.
Yeah, there are a lot of SPACs. Frankly, there are too many SPACs, but there are not too many good
You said
SPACs.
it. You said it.
And I think today's announcement is a good example of this, where a good SPAC group like mine, that Supernova, can provide a
there you
spot
go.
The guy.
to the public
Speak
market.
the truth. Speak the truth, Spencer.
The reason OfferPad chose this path of partnering with Supernova is because we can help onboard them. In this
What's with that
transition from private
animal?
to public. We've spent the last couple of weeks educating investors about the company, onboarding a couple $100 million of investment from the capital markets.
All right, guys. I'm gonna go ahead and pull that off there. It doesn't look like there's too much more. He's getting more hammered now by CNBC about SPACs, but you know how
now
CNBC
they want to hear
likes
about
to do that.
SPACs. Yep.
You guys have heard it. I'm sure you guys have heard it on CNBC, the knocking of SPACs. So they started giving them those questions, the ones we try to avoid to give to CEOs, because why? What does that gain? Nothing but
negative.
Yeah, nothing but just being negative towards him about his investment versus talking about the company, what we try to focus on here on Benzinga. All right, so I'll let you get into those headlines. I wanted to talk about that one. You guys know me. I've been in this one for months. This is my favorite management team. I've read articles about how they selected it. It definitely was my favorite. I'm still in this one, guys. I'm still in this one, and I loaded up the boat. And we'll see what happens. But Chris, take us to some headlines. What else we got here?
All right, yeah, perfect, guys. We're going to dive into that deal in a minute, but up first, we've got some notable headlines. Not too much going on out there, and as I said, we did get that deal announcement at 9 a.m. today rather than, earlier in the morning. So up first, we have RPLA. This is Replay. Merging with Finance of America. We, of course, had CEO Patty Cook on SPAC Attack 2 times over the last couple months. She did appear on Mad Money last night, so RPLA did get a bump up in the after hours market. Keep an eye out on this one, again, in the mortgage and different loan offering, marketplaces. Very diversified, unlike some of their competitors that are pure plays on the mortgage industry. So if you want to learn more, go back, find that interview we did with Patty Cook. Definitely worth checking out their ticker RPLA.
Yeah, before you move on to the next one, I do want to add here, Kramer kept saying in his interview that this was the unknown one, that nobody was covering it. And guess what, Kramer? You were wrong. We've been had this one here, guys.
I guess Kramer's not watching our show after all. I thought he was watching, but I guess he's too busy for us.
But I will mention one thing he did say. He said that it was crazy for this stock to be at the price that it was. So I'll mention that.
This was around $10 for a long time. So looks like we're around, $10.50 last I checked. So keep an eye out on this one. They do have that merger vote coming up. So another great interview with Patty Cook. And if you guys have been watching the show, you should already know that name. Another interview that we did not too long ago was HOFV, Hall of Fame Entertainment. So the stock moved in after hours last night and is up today. I'm seeing out there on Twitter circulating that the company could be a player in the NFT market with that relationship with the NFL. I have to say that at this point, that is just speculation. Their HOFV was not mentioned in the press release where the NFL talked about, exploring NFT options, and HOFV does not have any NFT experience. So take that rumor with a grain of salt. For me, HOFV, I think the story is later this year when they have that Hall of Fame induction ceremony and, we start getting live games, played with fans. They're at Canton, Ohio. So keep an eye out on HOFV, though, if it dips back down. Then we have to talk about RIDE, RIDE, Lordstown Motors. Full disclosure, I do still own a position. They announced last night their earnings, but of course, pre-revenue, so not a lot there. They also announced that they did receive an SEC inquiry after that short report was filed against the company. And then Steve Burns appearing on CNBC today. Not a great interview, in my opinion, talking about the comparison of actual orders versus, letters of intent. So saying that I don't think anybody thought we had actual orders is one of the quotes that he said during that interview. Said that the company has always made it clear they collected non-binding letters of intent, but referred to them as pre-orders in the real world. They always classified them for that, and they have a lot of those pre-orders. So we've talked on the show, they do have some existing fleet deals from some companies, for that new electric pickup truck. But this one got hit hard by that short report, and then also the news that Workhorse was not getting the USPS deal. So kind of a double negative right at the same time, really hit these shares. So this is one, you're really going to have to either, probably hold for the long term or pay attention to buying opportunities if you want to get into this one, because that interview and that SEC inquiry, could make this, keep dipping lower. So keep an eye out on RIDE here. And then we have VLDR, Velodyne LiDAR. They announced that the former NTSB chair, Deborah Hersman, is joining the board of directors. She brings 30 years of leadership in the transportation and safety industries. That's a pretty notable hire for, a LiDAR company looking to attack that auto industry. So keep an eye out on that one. And then we turn to our deal. So SPNV, Supernova. You just heard from Spencer Raskoff, the founder of Zillow, on CNBC. So OfferPad is a leading tech-enabled real So that leading digital platform, iBuying, empowers homeowners the solution to streamline the home selling experience. The deal values the company at $3 billion post-transaction equity value, going to provide that cash to help them expand. BlackRock included in the pipe, and also home builder Taylor Morrison Home. So here you have the founder of Zillow, and you have home builder Taylor Morrison, both getting involved in this, digital buying of homes company, which I think is pretty attractive there to me. So they expect to generate revenue of $1.4 billion in 2021. And as you heard Mitch say, they can request a free 24-hour cash offer online, less than 3 minutes, or they can go through, the sale process, and there are other options. So right now, online penetration of real estate is low, less than 1% in that $1.6 trillion addressable market. So OfferPad is one of several companies, really looking to expand in that TAM. So they said right now they raised less capital than competitors, and that they operate in 900 plus cities and towns across the country and plan to expand nationwide. So we've talked a lot about Opendoor, OPEN, the Tomas SPAC, similar process. They are in less cities though, if I remember right, Opendoor. So here you have, OfferPad, looking to expand nationally. They get this SPAC deal. Investors not, really buying into this deal yet, but, I know you own this one, Mitch. I'm excited about this one. I'm looking to buy, with today's dip, at the 1050 or below range. So what are your thoughts, quick before we get to that interview, Mitch, on this deal?
Well, one thing that I have been mentioning, and this doesn't have to do with SPNV, but just more along what they're in, is I've been mentioning about the housing. And I've been talking about this for a while, guys. So one of the things that I noticed is that the housing boom has started. I mean, you look at housing prices compared to last year, you can see sometimes 10, 20% the value of the house. I mean, gaining 20% of value on your house in 1 year, that's called a housing boom. And so I think that's what this company is really trying to take advantage of here, is that they're gonna take advantage of a housing boom. And with that housing boom, it could get big. So I'm in this one, guys. I still have orders to add more. So I'm going to stick tight in this one, SPMV. I love the management team, love Razkov. I mean, you're talking to the ex-CEO of Zillow, and then he's going to get into another housing play. Yeah, I'll stick with him, and I'll stick with him as the CEO. Sometimes you can buy a CEO, and I feel like this is the same kind of deal. So I'm going to stick tight in this one, and that's SPNV.
Yeah, and Mitch,
All right, guys.
real quick, I know you and I talked too, before we started the show. ARK Funds, Kathy Wood, we have to at least mention here, Opendoor is a top 10 holding in several ARK ETFs. It's one of the few SPACs that she owns in more than one ETF. She loves Opendoor Technologies. She's talked very vocally about that. And she also used to have large position in Zillow. So she has experience with Zillow, knows Razkov. And then you have Loop Ventures, Gene Munster, who's been, a frequent guest on Pre-Market Prep, really diving in and talking about how Zillow and Opendoor are going to transform that industry. I think you're going to see a lot of attention from some of the bigger names talking about this industry and this company. So I wouldn't be surprised at all if Kathy Wood took a position, either today or tomorrow, and we'll kind of play that from here. So, again, not a for sure thing, but keep an eye out for that ad.
All right, so let's go ahead and let's get into our interview. But before then, I did want to mention that keep a lookout. You never know. The Biden tax, the first-time buyers comes out. That could even push this even further. I think there's definitely a supply of homes that want to be purchased. The new homes are not coming out right now. The lumber is too expensive, guys. They're canceling contracts on new homes, and they're looking at the old supply. So I think that old supply still gets the house booming. All right, let's go ahead and let's get into our interview. This is when we go ahead and unlock SPACs, guys. So definitely, I'm going to go ahead and play this video, and then we'll bring on our guest.
All right, guys, super excited again on SPAC Attack. Another exclusive CEO interview. So joining us today, we have Eric Stonestrom. He is the president and CEO of Airspan, a company going public with the SPAC New Beginnings Acquisition Corp. That's ticker NBA. Welcome to the show, Eric.
Hello.
Welcome.
Good morning, everyone.
Good morning. Good morning. All right. So I'm going to go ahead and have Chris do some questions, and I'll be back with some of my own.
Great.
All right. Good morning to you, sir. First question I have, we talk about SPACs on this show. So the question I have is, with Airspan, why the decision to go public via SPAC instead of maybe a traditional IPO or a different route here?
Yeah, that's a great question. And we were very excited about taking advantage of our growth to get in the public markets. We have a very good relationship with the NBA. The principals are just world-class and outstanding and bring a lot of industry synergy with the businesses that they've been in through their history. We like the size of the SPAC very much in terms of the right size to hit this market. And so that was a lot of the inputs. And obviously the S4 filing process is more efficient than an S1. So those were some of the reasons we want to get out and take advantage of our growth and give public investors an opportunity to participate.
Perfect. So you joined Airspan back in 1998. You've served as the president and CEO for a while, a member of the board of directors. Can you give our viewers a little bit of history, on your relationship in the telecom industry prior to and with Airspan?
Yeah, so I started my career right out of university at Bell Laboratories. That was in a time when the U.S. was the preeminent manufacturer of telecom equipment for most of the world. Got a lot of excitement and education along the way, and got to start working in wireless a little bit before we set up Airspan. We then were able to leap in and do some very transformational stuff in the fixed wireless space. Up through around 2012. At that point, we got some really good tailwinds to move into 4G and into the much deeper market of mobility. And that has been a tremendous journey since. We pick up a significant experience from working with world-class operators like SoftBank, Masayoshi Son, very personally involved with what we're building, and we've helped and sold them a lot of equipment. Similarly, India, Mukesh Ambani, Asia's richest man, has built a network from 0 to 400 million subscribers. We've been a part of that journey. So it's been a great buildup to now bringing 5G out to operators of all stripes and flavors around the world in the mobile side, but also fixed wireless, returning to our roots as now fixed wireless and mobile converge, and people just want to be connected. Doesn't matter if they're out and about using a user device like a cell phone, or they're in their premise or in their place of work. It's definitely a convergence play between mobility and fixed wireless. It's also a really exciting time as new operators enter the space. Rakuten is one of our bigger customers. We announced something yesterday. It's a greenfield build, hundreds of millions of dollars to spend. Similarly, in the US, we're seeing new networks being built, both by cable MSOs who purchased spectrum in the summer, and also some new market entrants. And then the private side. When I say private, I mean all that connectivity that's needed in buildings and at airports and campuses, things like air to ground. We have really significant intellectual property there, and we're able to attack all three markets. The SPAC gives us an opportunity to grow even faster and go after all those markets with a vengeance.
Perfect. So you mentioned SoftBank. One of the things that stood out to me in the investor presentation is you now have investors like SoftBank, as you mentioned, and then also Qualcomm and Dish Network, and some other large names. What do these, large partners mean? And, how could that be viewed as a positive sign for potential investors in this SPAC?
But it's been a great investor roster that we put together, and we've added some names in the PIPE process of the SPAC. It's a validation of our capabilities. It's a validation of why we're different. These strategics, whether they're leading customers like SoftBank and Reliance Jio, suppliers like Qualcomm, who are very selective about who they work with, manufacturing partners like Foxconn, who have scale, all of them have seen in Airspan something really unique and really groundbreaking and innovative. And customers are seeing that as well. And so it's a very good pedigree that says this is a group that really gets things done and breaks the mold to bring broadband and connectivity and 5G tools in a much more creative way than traditional suppliers of this equipment like Nokia and Ericsson and Huawei.
Talk about 5G. I'm sure most of our viewers, a lot of investors are familiar with the 5G concept, the market. Can you, explain to us the role that Airspan plays in the growing 5G network going forward?
So first and foremost, 5G is happening now. It's the most exciting cycle of innovation I've seen in my whole career. Key points for your investors and our investors to understand is the fact that it's going to take a lot more cells. There's a lot more information being moved through the air in not a lot more spectrum. So imagine your highway or the lanes of spectrum hasn't expanded much, but you got to move 10 times as many cars through there. So that creates tremendous push on the operators and the folks building those networks to do things differently. It's a much more dense architecture. It's not this cell phone towers along the side of the highways. It's devices in presence, in homes, in offices, in your moving device like a plane that actually become part of that network. So it's a densification and a pushing of processing to the edge of the network and closer to the end users. That's an essential part of 5G. We have the best pedigree to do that. We've already done that in a lot of cases in scale, in the lead up, and we're in the process of doing that now in some really innovative ways. So it's all about more software. You have to be able to deploy these many more tools and base stations quickly, and you have to be able to have them configure themselves quickly. And that's a revolution in terms of how networks are built. And we've defined the terms of that revolution. We'll continue to do so moving forward. And the great thing is, in the past couple of years, the real innovators, as I mentioned before, adopted these tools and we did really well. Now they're going mainstream because as 5G comes, these are essential ingredients in how operators and private operators build out to get to you, the consumers.
Perfect. So in that press release on this deal announcement, one of the things that I saw was, saying that Airspan is the best kept secret in that industry. Can you describe what that means?
So we've been very seriously building our business, our intellectual property portfolio. We made an acquisition to give us a really strong fixed wireless offering to compete with the likes of Cambian and Ubiquity, in addition to our mobile offerings. And we've done it low profile up to this point in time. We wanted to hit the market when we actually have the real tools. I'm really proud as I look at the SPAC universe. We're a real company with really fantastic growth and measurable growth and metrics of performance. And so this is the unveiling now as we go to much broader customer base, really increase our growth to take the news a little bit more public. We obviously worked very closely with some real innovators to get to this point, and many of them like to keep tools as secret weapons. And so I think that's the point what you talked about as a well-kept secret.
Perfect. So I want to turn a little bit to competition. I heard you talk about Ericsson and Nokia, both, well-known companies, legacy suppliers. So, how do you, stand against the competition and kind of differentiate a company like Airspan? We do have that slide up right now talking about some of those competitive advantages. Can you just kind of walk us through, the key points there?
So we, again, have a great portfolio of innovation in what we're offering. We're the cost leader, not because we sell at lower prices, but because we design very heavy grade products on very low cost silicon from partners like Qualcomm. And that allows us to have product leadership. We have absolutely award-winning performance and designs. We won a Glow Mobile World at Mobile World Congress. That's like the Oscars of the industry. We win awards continuously for our innovation and actually getting things out at scale. Ease of deployment and rapid time to value is so important. A lot of the money that's spent building networks is in the operational and the logistics and site acquisition and tower rental And we just turn that paradigm upside down and bring things out at 1/10 of the total cost for the same amount of information being carried. That the bigger, the competitors like Nokia and Ericsson, in my mind, are like the mainframe suppliers of yore, who wanted to sell you $1 million computer when you could do it for a lot less money. And that's really where Nokia and Ericsson sit today. They have a lot to lose as this goes to more densification and broader numbers of cells. Their tools are not on the innovation curve where they need to be. Operators have to bring in that innovation. That's our opportunity.
Perfect. So I see, a huge customer base mentioned, more than 1,000 customers, over 100 countries, talking about a global scale that Airspan has. How does that set Airspan up for, competition and also for that future growth with that scale opportunity?
So we have a really good base. It is global. It's not any focused on a given market. The US, Japan, India, very different markets, our 3 biggest markets. We know how to compete and operate in all of them. By going to a lot of the cost-sensitive markets, we're able to develop products that really are fundamentally earth-shattering in terms of economics. In India, the average monthly cell phone bill is 1/10 of what it is here in the US, and we're an enabler of that. We allow our customers to succeed there. We have about 750 people. We have major offices in locations like Mumbai, Tel Aviv, London, Tokyo, as well as the US, but we are a US supplier. And that's important, as Huawei is a name many of the viewers, I'm sure, are aware, has been really banned from about a quarter of the quarter of the world, as the suspicions about ownership and so forth have come to the front page. And that means there's a scarcity of supply. We've got that reach, and it's really exciting right now to grow out in all these different types of markets. We've got experience in all the different types of markets, developed and developing. And as I said earlier, there's so many more types of companies launching networks. It's no longer the 3 main cell phone providers in a country. It's now tens, hundreds of opportunities in each country.
Awesome. I want to talk a little bit about growth. So in that investor presentation, one of the slides, we have 4 key points. So expansion in existing customers, customer acquisition, additional 5G use cases, and channel sales and strategic partnerships. Can you just walk us through, how are we going to accomplish that growth, and what's the timeline to meet these 4 goals going forward?
So we are adding new customers every day, and we're selling more to our existing customers. They tend to buy 1 or 2 projects from us first and then add in something we call land and expand. So we have a very significant momentum once we get traction in a customer. We also have a growing sales channel using partners as well as selling direct. We also have many more addressable customers because of the factors I mentioned before, the additional use cases. Also, we make products now that work in lightly licensed or unlicensed spectrum, and all that's happening now. So we're going to see a customer roster, I think, that's 2 times as rich in a year's time, and we're going to have some significant new wins with major new build-outs, but also growth with the current customers. It's all happening now. This is not a story that's 2 and 3 years out. It is, because it's a very deep market. That's what makes it so exciting. But the next 12 months are all about customer acquisition and growth.
Perfect.
All right.
So I want to talk about financials. So seeing revenue estimate of $254 million in fiscal 2021, 47% growth. Can you just talk a little bit about revenue growth going forward?
So this is a market that's organically growing due to the 5G spend, and then growing as the TAMs increase. The addressable market includes fixed wireless and private. You mentioned Kathy Woods in your last interview, talks about $1.5 trillion that's spent every year on the IT cycle. The great thing is 5G touches so many parts of that, and that's a big difference between 5G and the previous generations of cellular technology. So we're very optimistic. We've got a 30-something growth rate looking out over the next 5 years. We do have a 47% looking at 2021, and again, with the momentum and the rate of increase in the bookings that we're experiencing right now, and the growth of the markets and the additional spectrum, that's hitting the market, spectrum like the C block that just auctioned for $80 billion, spectrum like 6 gigahertz, the FCC just approved. We're very confident in those numbers.
All right. I want to touch on, you brought up yesterday there was an announcement, Airspan and Rakuten. Can you walk us through that joint announcement and what that kind of means for overall growth and the partnership between the two companies?
Yeah, so Rakuten is a phenomenal. It's been very phenomenal operation. They've launched a network in Japan in 4G and 5G that's just unparalleled in the innovation. They're a leader in bringing in the latest and most intelligent ways of building, and it's at scale now. We've been very much a part of that for the last 18 months, and really value the relationship. We've also worked now as they take their platforms and their innovation to markets outside of Japan. What we announced yesterday is we are a piece of that ecosystem as well. So export the knowledge and the learning. The great thing is operators in other countries can't sit still. They can't keep market share by spending more money on advertisements on soccer teams' Blazers. It takes real innovation. 5G is a catalyst that's forcing it. RCP, the Rakuten export platform, is a really great vehicle to help capture some of that growth.
All right, I'm going to go ahead and jump in here, guys. So one of the questions that I have is focused on the 5G market. We've been talked, it's been said we might get an infrastructure bill or something according to that. Do you feel that the Biden administration will be helping the company grow?
Oh, yeah, very, very much so. And we're very bipartisan. I visited Washington 12 times in the months just before COVID. And both sides of the aisle are so deeply committed to getting broadband. Broadband is now like highways. It's a right. It's something that everybody needs. The industry, using the old-fashioned tools like Nokia and Ericsson, has not done a good job of serving the rural markets at all. There was a recent analyst report that talked about 24 million homes that aren't served by mobile techniques and won't be. There's no magic bullet in 5G, using the old-fashioned tools that the legacy equipment suppliers provide, and it's a national priority, which is really great. It's also really important that we are a U.S. RAN company, so Radio Access Network. We are the only U.S. RAN company that's scaled and been selling across these sectors, and that's a very important element. It's also important that as we work with our government and the specific pockets of funding that are being allocated, looking at 2021, there's a program called RDOF, Rural Development Opportunity Fund, $9 billion of money being given out to people to build out the less dense areas, operators of all walks of life. We've got a rip and replace bill of money that's just dedicated to allowing the tier 2 carriers to take out Huawei, replace with favorable secure equipment. We're in prime position for that. CARES Act's a place where we're bringing tools to state and local government. We have a partnership with Motorola Solutions where we produce the radios they sell into that sector, and then a whole lot of business around connecting students and education. So Washington is a really important part of this equation. And again, it's just additional momentum around getting everybody connected. And that's not only here in the US, but also in the UK and Japan and Germany. These initiatives are happening all over the world as governments realize they have to have a connected a population to be able to thrive. And people have often said, but COVID has compressed, 5 years of migration into a year. And we're seeing that as traffic patterns change. We all work from our homes. We all need to be connected. Nobody wants to walk to the end of the hill up the road to be able to talk to their boss. And this is places where the government's realizing they need to step in and be serious. And the new FCC chairwoman has been very vocal about being serious about getting these gaps closed. And Airspan's front and center on that.
Yeah, definitely. It's definitely a trend that I feel, it just isn't being focused on. But for a while there, it was one of the biggest focus was 5G and how it was going to come into play. You guys can see here on the investor deck, autonomous cars, robotics. There's going to be a bunch of different usage. Can you explain maybe how the EV kind of innovation and how that will come into play for your company? That would be about the last question that I have.
Okay, great. Yeah, we are very proud to be part of an opportunity in England that was funded to focus on high-speed cars. We worked with McLaren, who produces the Formula One cars. We built out a test track at Millbrook, and we have 4G and 5G connectivity to police, fire, first responder vehicles, cars going up to 160 miles an hour. Here in the U.S., we have a project with GoGo Networks to build their air-to-ground for the business aviation sector that they're doing so well in, to bring super high speeds to planes. Airspan has intellectual property there that's unrivaled, and that's a real differentiator for us. Obviously, you can look forward and think about controlling drones. You can think about military and DoD applications, and there's just an awful lot of. It's a great question, because this is where 5G is really pushing the innovation curve so fast compared to just getting a faster signal to your cell phone. So great question.
Yeah, we always talk about the thing behind the thing, and it seems like another one to add to the list. All right, Chris, we got maybe a question from the chat or two?
Yeah, I'm seeing 2 questions here, and I think they're kind of connected. So we have Carl and Kenneth talking about satellites and space mobile. So my question, Eric, is we've heard a lot about, 5G from space and satellites. Will Airspan be able to play a role in that connections, or would that be competitors to your offering?
Very much complementary. That this distribution at what I call the terrestrial side, which is the ground side, is an obvious extension of satellite feed. It's something we've worked with satellite providers for years in different remote areas. It'll go more mainstream, but you ultimately need a grid and an architecture you build out cost effectively, and that's a lot of terrestrial distribution using the spectrums that I mentioned before. So it's a complementary step.
Perfect. So we want to thank you so much for joining us on the show. So again, Eric Stonestrom, President and CEO of Airspan, going public with New Beginnings Acquisition Corp. That's ticker NBA. So thank you again, Eric, for taking time out of your busy schedule for joining us on the show today.
Thank you all very much. Have a nice day.
Thank you.
Thank you. We'll have you back. All right. Appreciate it, Eric. All right, guys, as you guys heard it first here on the SPAC Attack, like we always do, guys, bringing you another company, getting in depth, letting you know so that you can be informed. There's too much in the SPAC world where they're just trying to run on your emotions, guys. We try to get you the information here at Benzinga. So do us a favor. If you enjoyed that interview, definitely hit the like button, smash the like up. I want to see these likes jump. I'm going to pull up, see where my likes are right now, because you guys got to give us some support. Give us those likes. Let's see what happens. Can we get to 800? I see 750 there. Can we break the resistance at 800? Hit me that like if you appreciate us doing this, and let's talk some SPACs. So what do you think about the 5G and in the industry overall, Chris?
Yeah, I think 5G, we've talked about it a lot before. It's already happening. You're seeing all the mobile operators already pushing. They need 5G to stay competitive. They need 5G in today's, generation of electric vehicles and Internet of Things. I love your comment, of course, the thing behind the thing, which is our Benzinga phrase from our founder, Jason Raznick. So interesting to hear how Airspan kind of, is the thing behind the thing, and they complement some of those businesses, and the investments from Qualcomm, SoftBank, and Dish, I think are those partners that they have. So, I like that. And then those comments from the chat, again, Carl and Kenneth, great questions. I was wondering that, as soon as I saw those questions, is Airspan going to be in competition with 5G from space, or will they be able to, get a share of that? So I like his comment there too, that would be complementary. So, that's a positive in my eyes to hear, that comment back from him on that question. So thanks again to the chat.
Of course, one of the things that we do, I think really great. I honestly think we're the best in Benzinga, and we really pay attention to our chat here. And just to give you some example here, I caught Ziggy me telling me about the patents owned. Look at this. I got you, man. Boom, baby. There you go. Innovation leadership with 150 patents granted and 94 patents pending. Founded in 1992, 769 employees as of December 31st. So definitely keep your eye out on this one. I kind of like that it's a smaller company with 769 employees. I mean, I would consider a smaller company under 1,000 employees, but it's going to be interesting to see how they expand. I mean, they have been founded since 1992, so that gives them years of experience, years of data. So I'll keep an eye on that. It is interesting with their kind of investments. You see a lot of you're seeing banks here stand out, right? So the banks always usually do their due diligence. So I'm going to definitely keep an eye on this one. But 5G overall, long term, I definitely think it's going to be a trend that comes back into play once we move through the pandemic and transition back to the trends that were present prior to the pandemic, but just not focused on. So we'll see what happens there. All right, so it looks like we got about 15 minutes left until Power Hour, guys. So let's go ahead. Let's do some ticker time. We haven't been able to do some ticker time in a while. We appreciate you guys out there, so definitely smash the subscribe bell. Let's go into ticker time. All right, guys. So I'm going to go ahead and take a look here at some of the tickers. Looks like we lost Chris there for a second. I don't know if it's my internet or Chris's that's been playing, but you know how it goes sometimes. Oh, looks like he came back, but in another one, I'll bring him on. My man.
Yeah, I just left real quick to test it. I think the internet was a little buggy there, so not sure, if you guys in the chat were hearing me or not, but I definitely saw myself and Mitch both freeze up on my screen. So we're going to test it, see if this is any better, before we get to your tickers. Of course, I want to make sure everyone can hear what I'm saying.
All right, guys, let's keep rolling through here. Let's see what else we got on the list. What's on our watch list? You guys put some tickers in the chat. Let's start running through the ones you guys want to take a look at. Of course, my man, Carl telling me I'm the man. Nah, you're the man, Carl. Let's get into, he wanted to take a look at BFT here. So let's take a look at that one. I know Carl's mentioned this one before. So let's take a look. I like the weekly chart, but let's take a look at the daily and see where we're at right now. We've seen this kind of $15 and $14 hold multiple times. I talked about it when we got right back above that 15. Let's see if that 15 holds now. If that 15 holds now, I like this kind of trend that you're starting to attack. If you look here and you do Alt-T for our Benzinga Pro users, draw that trend line. Now what do we need, guys? We need some volume, baby, volume. So that's what I'm going to be paying attention to. When can this one get some volume? Somewhere in here. This is kind of like now your line in the sand right here near that 15. I'm going to look to see if it gets strong through 17. That's what I would like to see, guys. Some big volume flowing through 17, and then you would see the move there. But we'll keep an eye on this one. All right, so seeing in the chat, of course, Igor, come on, man. You don't got to put your ticker up 5 times, dude. I don't mind, but I mean, I'm sure someone else might.
I don't think it's a SPAC either, that ticker. So.
Don't worry. That's why he gets put in the corner. He gets in the timeout.
Timeout
time, That's the old slap on the wrist they used to say. All right, let's keep rolling through here, see what other stocks we got moving, see what we got here. So I'm seeing mentioned one that I haven't talked about in a while, Ash Invest, GHVI. All right, so what's up with this one, Chris?
Yeah, GHVI, I don't think we've talked a whole lot about on the show. This is Matterport. So it's kind of like a 3D rendering of physical locations. So, they use the use case of like museums, houses where you can take the video with your phone, right? So you have the app, you can go to your home and you can take a 3D video and using that technology, and then you post it to like your real estate listing, or you can do virtual, tours of museums, sports stadiums. So it's interesting, especially in the pandemic world. My question would be, how does this play out post-pandemic? This is one I don't know the financials that well on Matterport, but you look at those volume bars there, and it's interesting where it had a lot of interest. Even after the deal was announced. This wasn't just, day one. And I do remember that on CNBC, Josh Brown, who's a friend of Benzinga's, talking about this company going forward. And he doesn't talk about a ton of SPACs. And this was one that he really thought stood out, GHVI with Matterport. So interesting concept there, and getting the love from Josh Brown.
Yeah, guys. All right. So I'm seeing in the chat being mentioned like volatility index. That's not what we do here, guys. We're on SPAC Attack. I'm not even going to bring up AMC. Don't even get me started. But let's continue rolling through here, guys. I'm seeing mention of one that I am keeping an eye on. Brad Moore talking about NGA here. Let's get into NGA, see what we see here. I liked it when it bounced. But let's take a look here as it's pulling back now, closer towards this 18. I'll be looking to see if it can get below 18. Then I can look for maybe a risk towards 16. I do like this one long term. The biggest thing I think with NGA is going to be, to me, is government support, because I've seen a lot of their buses, and I think that's a very great product. But the key is I think they need some support. They need some backing, some government backing, maybe a bill or something that can really push them forward to the next level. But right now, I am getting interested a little bit in this chart. What do you think about this one, Chris?
Yeah, and Mitch, so on that point with government support, so NGA, Lion Electric, this is a Canadian company. We had them on the show. They do have the support in Canada. Justin Trudeau has toured. They just announced that new battery manufacturing plant, and they do have some deals in place there. But they, as Mitch said, it would be nice to see them get more deals here in the U.S. They are working on adding a facility here in the U.S., and that announcement will be a catalyst going forward. I do own shares of NGA. This is a long-term hold for me. Electric buses, electric vans, and, I think that there will be more to the story coming when they start to announce some of these facilities, plants, and deals in the U.S. expanding past Canadian market.
Hey, it looks like somebody was able to grab NGA near that 10. Go. Hey, JC, power to you. If you want to slide it to my account, I won't be mad at you. But if you keep it in yours, I won't be mad at you either. So, hey, can't blame you for that one. Let's keep rolling through here. What else we got moving? Hey, Rick House, bringing up one that we talked about multiple times. But, hey, I can't blame him. We've talked about this one multiple times. But APPH, this is going to be interesting. It keeps bouncing off that 20. I think that $20 is kind of like a line in the sand now. If you look at the chart, that $20 just sticks out to me. As long as it can hold 20 now, I'd be interested in it. It went from, let's say, about 17 up to 25. Now it's pulled back. It's looking like a nice day today, at least. But I'm going to keep an eye on this one. One of the things that I did see is on this big down bar, you got a huge amount of volume, 10 million shares traded. I'm sure that was people getting out. But one of the things that you did see is that it bounced off this prior resistance that was between December 11th to the January 7th time. And that's where it caught that support right there at 1750 area. And now we're back up to 25. We've pulled back. I want to see that 20 hold. And if that 20 can hold, it looks like it could probably push back towards that 25.
Yeah,
right,
that drop, you remember, that was when they issued that filing that they were going to offer more shares. And that was actually the day that President David Lee was on our show. And everyone in the chat, of course, wanted us to ask, hey, how come your shares tanking today? But remember, it was about that share offering. And now look at the recovery that it's starting to make. This one's getting a lot of attention. It's a sustainability smart growing company going forward. You heard us on the show talk about how there's more to the company than just tomatoes. I know people in the chat were even talking, cannabis in the future. There's a lot they can do with that technology with the indoor growing. So this is a long-term play, I think, in my opinion. And if you were lucky enough to, buy in on that dip, I think you got a good position post the year.
All right, guys. So let's go ahead and continue rolling through here. See what other stock I'm seeing mentioned. John Doe with the most original name, HZON here. HZON. Let's get into it. This is one that's on my radar, Chris. I don't know about if it's on for you, but once it dropped through 11, I talked about that level. I said if it drops through that level, I definitely will keep an eye on this one. And one of the things that I've been mentioning to Chris is that this could be a time when we really start paying attention to SPACs that actually have the acquisition, the definitive agreement, because what that can do for us is that we can at least start looking at evaluations. And I think for a second here, growth is not the forefront and value is actually becoming more of a forefront. And so when value becomes into play, the fundamentals actually matter, guys. But when we're focused strictly on growth, it's just like when you're growing a company. You're just focusing on keep going up. And that's kind of what I'm seeing now. So let's look at some maybe value plays. Let's take an assessment, look for see if some that you like and some that are on my radar. HZON. I mentioned another one that's on my radar, of course, that Spitfire acquisition. I kind of like this one. I'm going to pull you down, John Doe. No offense to you, but just SPFR here, looking interesting, down below 1034. I thought this one was going to get above 11 and never come back. So the attempt to hold these 1020s is going to be important, but it gives you at least an ability to go off of it. And maybe this is a value, and long term it comes up. Looks like we got a smash the like from Freddie. So definitely do us a favor. Thumbs up, baby.
Yeah, Mitch, interesting you say HZON is on your radar because what's the rumor out there, of course? Sport Radar. So, that's been a rumor out there for a little while now. They haven't announced a deal. I did actually see comments out there from, I think, Sportico, which originally reported the rumor, saying that there was an issue now with funding, right? Because this is a large deal and they're going to have to secure additional money for that pipe. The concern I'd have with HZON too is it's a smaller SPAC. So as we saw yesterday with that eToro deal where shareholders are only getting 2.4% of the company going forward, I think that would be similar with HZON, and that $10 billion valuation for Sport Radar. For me to get excited about that, I would have to hear more about that NFL exclusive deal that's up for renewal this year. If they can't, say, yes, we renewed it, or yes, it's exclusive, I don't know if that 10 billion is really, needed there. And to me, I'd look at Genius Sports, DMYD instead. DMYD, they have an exclusive deal with the NCAA, right? So we have March Madness or March SPACness going on right now. And then also they have a lot more soccer deals, which we know how big of soccer bets are in international territories. So to me, when that Sport Radar deal is announced, we're going to take a look and compare, Genius to Sport Radar. But I want to see the valuation and I want to hear more about that NFL deal to get excited, to push HZON over 11 here.
All right, Chris. So I'm going to go a little ballsy here, guys, and make a call here. I'm sure I'm going to hear about it on Twitter, guys. So definitely let me know what you guys think in the comments below, or hit me up on Twitter, Story Investors. CLOV. I'm calling it. I'm starting to look at it. I almost got in yesterday. I think it's time. It's time to start looking at this one. We're starting to get some bottoming action. We got that bottoming action near that $7. And now one of the things that I'm starting to see is a couple days sideways, right? And the real interesting fact for me in this one is that it's below all this pricing, all the $10 pricing. And so, yeah, we don't have that floor anymore. But what does it give me? It gives me an opportunity that I have a feeling there's a couple people that are still stuck somewhere in between that $10 to $11 or up there towards the 12. And so that gives me the idea that maybe this could create a resistance there, make a drive up towards that $12 level. Then it could pull back, maybe come back closer towards that 10 before it comes back to 12. But hey, if I can go ahead and how you guys know my trades are always based off of kind of my risk assessment here. And so Alt T, this is what I'm seeing, guys. So if I draw kind of this trend line here, we've been downtrending straight down almost. Right? But that bottoming action is what starts getting me interested. Now, the real key is, do we retrace to this level closer towards 8, or do we just start pushing through to get to the 10? So I'm going to be watching this one right now. It did seem interesting. I couldn't watch it today because I was a little bit busy, guys, but I was looking to get near 850s. And today the low is 836. So it wouldn't have been a bad position, at least for me in my eyes, if I would have took it today. I've been feeling good because now you have two bottom supports that you can go off of. You could say that the low of today, the low of yesterday, 825, the low of March 12th, 822. So something to go off of, something to measure the risk. And now I think if it gets some volume through 9, 10s, it could push right back on up. And I know there's a lot of people in this one. So it's definitely gotten on my radar, and I've become a bull. I'm going to change my story here, and I think it starts moving. What do you think, Chris?
There's a lot of people out there, and you think you're going to get some hate on Twitter. For as much as you think you're going to get some hate, you're going to get some love too, because this is a battleground stock. You got 50-50. The thing I don't like is there were a lot of people pushing this one, from 10 to 14. So, you talked about some people maybe being out there still caught in that 10 to 12 range. I think you got a lot of people caught out there in the $14 range too. But I do like the entry here, the level you talked about. I know we've talked about this one under 10 before. I think, we just need to hear more from them. Their earnings report wasn't that exciting. So the chart looks good. But from the story side of things, I think we need to hear more partnerships from them. It's just not as exciting as it was when they announced. But, it is trending to look positive, as you said. And for those of you watching who don't know about this chart out there and Alt-T, Mitch, what software are we using out there? What's this Benzinga Pro all about?
You already know, guys. I mean, hey. One thing I definitely do like to do, guys, is use my Benzinga Pro, guys. And why do I use it? Because, hey, it makes my life easy. It was one thing I've always said about Benzinga Pro is that the user, it's just easy to work with. And there's too many programs in the financial world that you feel like you need to go and get a degree just to run. I don't even want to talk about a Bloomberg terminal, but one of the things is, can you get things nice and easy? So to me, I have SPAC Attack watch list. Yeah, I have some penny watch list, some esports watch list, even a Chamath watch list where I just put stocks that he's involved with. And this is the fun part, guys. There's lots of different things that you can be doing. And one of the things that I like is just using the movers tools, the news feed, and getting everything just easy for me right there and there. I love the charting. And you guys see us use it every day. You can get into fundamentals, the financials, the peers. One of the things that I always look at is when I start looking through a stock is that I want to see the news quickly. And so let's say like a stock like what did a big move today? We could say Ride. Trying to find some news here, some breaking news here for us. Ride on Express. No, that's not what I wanted. All right. So you see right here, guys. So the why is it moving section. This is my favorite section, guys. If you want life to be easy for you, this was made for that intention, guys. So when you see a stock moving big, a lot of the times we're going to have a why it's moving section. And this section tells you exactly kind of what's going on here. So, Q4 ESPS results down from last year. It was on CNBC. So that's how it rolls, guys. And that's how it happens. So we got Power Hour next, guys. One more that I did want to mention, and that's new. I think it was New Media Solutions. Was that one of our on our SPACness? I saw it moving up, Chris.
I think so. That sounds familiar. New Media. Yeah, I think that's a completed deal. Can't even find it now.
Yeah, I'm trying to find the ticker. I know we had it yesterday.
I just want to hit on Benzinga Pro too. You heard Mitch, talk all about the positives. If you're not using it, you get a free 2-week trial. The link is below in the description to the video. So if you want to test it out, you're not sure if you're going to like it, sign up below, give it a shot. I think you're going to like it. Mitch and I use it all the time. We love it. And then, we've got Power Hour coming up next. We've got some great guests. We also have that Kevin O'Leary, Mr. Wonderful Raz report at 2:00. We've got crypto today. We've got Cannabis Hour today. We've got an exciting lineup of content all day long. Don't go anywhere. Smash the like, hit subscribe if you're not already subscribed to the Benzinga YouTube channel. And, we'll catch you tomorrow for SPAC Attack.
All right, guys. So I just wanted to mention, I got it here.
There it
is. DMS, guys. I don't fail for you guys. I tried to get it up there. Boom. Look at that. Look at that move. Look at that move, man. This is probably another one into that programmatic section where you see MGNI, Pub M talked about. I know Jason talked about MGNI on pre-market prep on Friday, so that one's been doing great. I see hot stocks, Luke. He looks like he's getting ready. Energy drinks is up in the air. You already know. I need my own little soundboard here.
You need that soundboard.
We're going to be double fisting today, Mitch.
Double fisting Luke here.
What's up, Luke? How we doing?
Doing good. Can you guys hear me?
You might turn into that lightning bolt that I see behind you, man.
Boom! It's coming right out of your head right now. Lightning. We got that energy from the drinks flowing in.
That's what we're going for, man. I'm feeling like a little goofy today. We're going to do some live trades today. We're going to get flying.
I love to hear it. Love to hear it. Bring us into Power Hour, the best show in the afternoon, where you can get your stocks, actual trades, real trades made happen every single day. So if you want to see and stick with Hot Stocks Luke's, win or lose, you guys can watch them here, guys, on the Power Hour. We'll get on out of here.
Let's go.
And we'll see you next time, guys, on SPAC Attack.
Let's get ready to rumble!
Zinger Nation jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on. Jessica Billingsley, that is the CEO of Akerna.
The best trade idea resource out there. Yo, what? There we go. All right, Mitch, I brought you back to hang out with us. You were doing such a good intro.
Hey, I'm super down. What's going on, Hot Stock Luke's? What's moving? What's up in the market, man?
All right, so first things first, we'll get to the agenda and what's going on today in just a second here. But I saw somebody say VISL, Vislink is rocketing right now. Let me pull up a 2-day chart and let me share my screen here. Hold on. Got to get the trusty Benzinga Pro up. There we go. All right. Yeah. Okay. The breakout taking place on Vislink. There we go. All right. Check it out. Here it is. Really cool Benzinga Pro feature. Watch this. I'm going to tweet this out. Vislink, ticker Vissel. And we're telling everybody to come to the Power Hour. But check this out, guys. Vislink Technologies. If you don't remember this one, we had the CEO on the show about 2 weeks ago. This is a company that's doing some really cool camera work. But like the coolest product that I think they talked about is they said for like NFL games, they're going to put cameras inside helmets. So you'll be able to view it like you're, they're playing actually inside the game. So again, company tweeted out that Verizon has deployed a 5G service. Vislink's main revenue stream are from government contracts. This is a Hugh Henney. Shout out to the Atlas gang. This is a Hugh Henney stock, and I believe he's actually going to be back with us tomorrow. So if you guys are in Vislink, ticker VISL, Victor India Lima Sandy, make sure you're here tomorrow. We're going to bring Hugh on the stream. We're going to ask him, hey, what does this mean? How does this change your conviction in the stock, etc.? But we are getting a nice little ripper here today.
Yeah,
so
I see a solid floor at 3. So
there we go. Definitely. Okay, where? Okay, I see what you're talking about. You got some right here, a little more up to 315 or so.
Mm-hmm.
Breaking out. Let's go. Next level. We need to get through these 4s. So we'll be watching these 405s, guys. We'll be checking in on this one throughout the stream today. But all right, I just went off script and somebody said Vissel is ripping, and that's what I love about you guys. That's what I love about Zinger Nation. That's what I love about what we have going on here, is that it's so much about the community, guys. That's what makes us different, is that it's not just me and Mitch and Drew here talking to you. It's all of us doing this thing together. Look at this. Somebody else is throwing out another high flyer, Vuzi. All right. Oh, Vuzi's ripping too. All right. Let's zoom this one into 2-day chart. Oh, I didn't even have my screen up this whole time? Oh, my God.
Come on.
Well, I got guys on the screen that didn't tell me anything. Here's Vislink, okay?
I thought you were doing something special. You were like, I'm pulling something on Twitter.
Yeah, I was hitting up the guys to see where they're at with this one. They are the experts in the stock, but all right.
Look at that thing.
Starting today off, 405 is the level on this one. 405. You got psychological 4, and then you've got 405. You got previous highs right there. So that's the levels on that one. But all right, guys, drop any other stocks that are breaking out into the chat there. Somebody's saying put Ford in there. I don't think Ford's probably not breaking out. Sitting there right at that 13. We like that. Any other stocks that are breaking out, drop them in the chat.
I got an idea before I get on out of here. So, and you guys are gonna hear about this. I told you about this one, Luke. I think you should have got in when I was trying to pump it to you, man. I tried to even get you on it, man. The genius game, bro. The genius game, man.
All right, let's pull it up.
All right, guys. So I'm in this one, guys, and I could even show you my account. I'm in this one at 168, guys. I've been in this one for like more than a week. Diamond hands are up in the air on this one. I'm turning my paper hands into diamond hands in this one. Normally, I'm a paper hands kind of guy, and I could just be honest about it. I take my 20 or 30%, but I've been sitting in this stock over 30% for more than a week now. I'm up about 37%, almost 38% right now. I'm looking for this one to get above 3. I think we might need to ask the penny stock boys about this one, but I think it could get a rip. One thing that I do focus on is the news flow, right? So if you look at the news flow and overview, you'll see that we keep getting press releases from them. And when the company starts spending that money on the press, I think they're looking at the stock price. And so that's one of the things that I keep focus on is how you're seeing news come out. First, it was Genius Brands International CEO newsletter. Then it was, that we're going to have the April premiere of Schwarzenegger show. Then you have a little bit more chatter about Roblox. And then you have more about how now we got the Toy Story writer making some writing up. Hey, the news flow is there. That's why I'm sticking in this one. I'll hang out, guys. I could think this one could get all the way up to $5, $10. So that's why I'm hanging out. I'll be in
all
this
right.
one.
So there we go. First pitch of the day. Mitch Hodge coming in. Hold on. First air horn. There it is. Yeah, there we go. First pitch of the day. Just kicking us off. Basically, Genius Brands PR machine. That's the thesis. Steady news flow. Move the stock higher. All right, Mitch. Thanks.
We'll keep an eye on it.
Going out there.
See you guys.
Cool. All right, peace. All right, guys. So, time of the day. Let's do the agenda. Let's talk about why we do the show, why we spend these 60, 120 minutes together every single day. The point of the show, name of the game. That's a term that I use internally here at Benzinga all the time. What's the name of the game? Is that we want this to be the best trade idea resource out there. Okay, if we are not delivering on bringing trade ideas, call us out in the chat, and we'll bring you on the stream, and we'll give you the floor to bring some ideas. And ideas are not just going to come from myself, not just from Drew, who's hanging out with me today, Jason, any other guests that we bring on, but more importantly, out of the community, out of Zinger Nation that's here with us every single day, in and out. So what we have going on today, we're going to do some put selling, okay? Yesterday we did covered calls. We did a live covered call trade on the show. We're going to do a live put selling call today on the show. And I'm actually going to let you guys vote and pick which stock we are going to sell a put on. We're going to walk through the whole transaction. I have the live interactive brokers account up here. Decent day. Yeah, check this out. Let's go. Up a G today on a day when SPY is down. I'll take that any day. But we're going to let you guys vote in the live account which one we're doing it on. I don't know if you can read that, but you have Rocket, Bank of America, Palantir, Baba. So we'll get to that. Of course, we are going to be doing an update on our chat challenge where Zinger Nation is going head-to-head to figure out who is the best trader in the chat. I've got a new page on benzinga.com that I want to show you guys. If you recall, we did that dividend page. Let's go check in on that one. And then we've got 2 very special guests, 3 really. So at 12:30, Beach Trades is joining the stream again. 1 o'clock, Cabbage is coming on. Cabbage, if you're not familiar, does small business loans. So I want to hear about loan activity and whether or not we're seeing things uptick with small businesses. And then 2 p.m. ET, 2 o'clock Eastern, Kevin O'Leary, Mr. Wonderful, Shark Tank. If you don't know him, here you'll recognize the face, Kevin O'Leary. backspace, enter. I'm on a different computer today, guys. I'm sitting down and on a different computer. Yeah, this guy. Mr. Wonderful is going to be joining us live, hanging out, and doing an interview with questions out of the audience. Jason Raznick's going to be doing that one. So stay tuned, and there we go. All right, sounds good. And Drew, what's up with you today?
I'm doing well, man. Got some exams tonight, but I'm hyped. I make the time. I'm showing up to Benzinga Power Hour because that's my favorite show of the day. I'm ready to talk stocks with my boy Luke. Let's do it.
All right, let's do it. Yeah, and if you guys don't know Drew, he is our resident college trader. I asked Drew to come on when he can, because when you have to go 90 minutes by yourself and you're just, I don't know. It's tough. It's very tough, okay? When you don't have somebody to take 2 minutes to talk, you think about, okay, here's the next thing we're going to pull up, etc. And so Drew always bringing the ideas, always bringing the insights. So I always appreciate when he hops on with us. But all right, guys, let's hit it. Drew, what do you want to do first? We can either start with put selling or we can start with Alibaba.
Ooh. Let's start with put selling. I know you got some great options there. I think you already know my favorite, but I'll let the audience speak for themselves.
All right, guys. So we're doing some put selling. Let me type these options in the chat. I'm gonna put them in here. So we're gonna vote on which stock we're doing this. Back 3 PLTR. I just want to get them in before people start voting. All right, so I am going to go through a live put sale. Why we sell puts on the show? I've made more money selling puts this year than any other type of trades. Even like stock appreciation, we've got crazy stocks like Voyager Digital, BYGVF, still running on our Voyager. Check this out. Here's the year-to-date chart on Voyager Digital. Right, I've made more money put selling than any of the stocks we own. Ford, another great one. Bank of America, another great one. And so I'm going to talk you through why I like put selling, why we do it, guys. Vote, okay? Type a 1 in the chat if you want Rocket. Type a 2 if you want Bank of America. 3 if you want Palantir, and then 4 if you want Alibaba. Those are the options. We're getting a lot of 3s here. We'll let a couple more votes flow through because I know that we've got a little bit of a delay. Oh, can you share your screen, Luke? God, I'm tripping today. The new setup is throwing me off. Yeah, there's Bank of America. There's VYGVF. There's Voyager Digital. Ford, another one that we've been super into this year. And again, we have a lot of awesome stocks right now, and I've made more money selling puts than any other strategy. So. All right. I think the 3s went out. I sort of expected that. It's your stock, Drew. All right. But before I get into the put selling on Palantir, we make the live trade on the show. Tell anybody who doesn't know what the company is. I think everybody does know at this point, but tell anybody who doesn't know what the company is. Why you like it. I know you're a huge Palantir bull. Why you like the stock. Why you think it's compelling. And then I'm going to get into the options trade that we're going to make.
Yeah, so Palantir, right, is Peter Thiel's baby. If you don't know Peter Thiel, he's an absolute beast in the the whole startup game, the whole VC game. And he started a company with Elon Musk. Maybe you heard of it. It's called PayPal. I know that's one of Luke's favorite companies.
We're out of PayPal.
We
almost high-ticked that one.
What?
We almost high-ticked our PayPal sale. We're out.
Okay. Well, great company overall still, I think. Maybe Square is a close competitor. But, Peter Thiel, that's what we're talking about here. And Palantir, crazy company, right? These guys, they have 2 products. One of them is for government and one of them is for corporations. And the government one, finds – maybe it found Osama bin Laden. There's rumors of that. There's rumors that they find IEDs using weather patterns. We're just an absolute machine when it comes to data, and I think data is the new currency, right? Every company wants your data, no matter what they're trying to do. They need to know who they're selling to, and I think Palantir is just going to be the next revolution in that. So data is the future, and Palantir is an absolute beast when it comes to data.
All right, so there it is. Okay, Palantir, big data play, great management team, great track record, several success stories, and of course, a retail trader favorite. So here's what we're gonna do. And I see somebody in the chat, Edward, saying high interest rates should boost Bank of America. Yeah, we got into that trade live on this show. I don't know, several weeks ago, but check it out. We bought Bank of America calls, 300% runner, and I don't know, maybe it's been 2 months now. It's been a little while, but that's exactly why I like bank stocks. I own several other bank stocks for that reason. But all right, we're talking about Palantir. We're not talking about banks. The stock that I wanted to make the live trade on was Bank of America. I'm like, all right, everybody's gonna get bored if we do Bank of America, and so let's leave it out to a vote. I'm gonna pull it up now. Okay, PLTR, Palantir Technologies, and we're gonna open up the option chain. All right, and so when we sell puts, what we're doing is we're getting what I like to call, this is, I don't know if anybody else uses this term, it's not a technical term, but I say synthetically long the stock. In that if the stock goes up in price, we make money. Okay, when you sell a put, there's a couple things that happen. The first thing that happens is you collect money. Money gets added to your brokerage account right away. Okay, so we're going to go through the live example and we'll do the math on it. But if we sell a put for $1, right, we're going to get that $1 credited to our account today. The risk that we're taking on is that we may be forced to buy shares at the strike price at some point in the future. All right, if that was too hard or if that was too fast, don't worry. When we go through the live example, it'll be way easier. Okay, so and if you guys have questions, drop them in the chat. We're doing this for you. If I wasn't doing this for you, I would be selling puts against Bank of America right now and not Palantir. But that's what Zinger Nation is all about, baby. That's why we do it. All about that community. So. All right, whenever we're setting up an options trade, there's two things that we need to decide on. We need to figure out the time horizon and the strike price. Okay, so time horizon. Whenever I'm selling puts, I typically go about 30 days out. I think anywhere from 2 weeks to 30 days is sort of your sweet spot. You are taking on risk, and we'll get to the risk that we're taking on in a minute here, but you are taking on risk when you sell puts. And so by keeping that time horizon shorter, you're minimizing the window at which you're absorbing risk, okay? So there's our time horizon. We're going to be looking about 30 days out, and then we need to find a price, a strike price to sell the stock for. So here's a chart going back to when the company went public last September. Daily candles, right? Each candle, each red or green bar here represents 1 day. And check this out. I see a ton of support here, right around $23. Okay, look at this. You've got low. You got basically 1, 2, 3, 4 days of lows, 2 days of really clear lows right here, and then you got lows here. A low here. Broke down a little bit, but somewhere right around this $22, $23, there's definitely some buyers that are stepping in. There is some support there. Okay, so we're gonna look at either $22 or $23 strikes in this stock. Okay, 22 or 23. We may even go lower. We may go below it once we look at the option chain, and so let's go ahead and do that now. So here's the option chain on Palantir. We want to go out. Let's do monthly contracts. We're going out, I said, about 30 days. There's 29 days. Does not get any closer than that. All right. So where's our strike price when we're selling puts?
Right there, yeah.
So here we are. So the 22s are $1. The 23s are $1.31. And so our break even on this one is about $21. Our break even here is what, $22.30. We do collect more premium up front. I'm gonna hit the 22s, okay? The 22 strikes in here. I'm gonna open up an Excel sheet too. Y'all know I love my Excel sheets. If you guys want them, just email us powerhour@benzinga.com. We'll email them over to you. But this is where I like to keep track of my math. I'm just gonna do this on the fly. So all right. So the stock in question is going to be PLTR. The date All right, so let's go back to the date. It is April 16th. Yeah, turn it into a number for me. The strike that we're going to do is going to be 22, we said. Okay, and then the credit is going to be 0.93, and I know that's so small, so here we'll zoom it a little more. All right, there it is. All right, and we'll just be keeping our notes here. All right, so we're gonna sell this 22 strike April 16th put on Palantir, and we're gonna sell it for 93 cents. All right, so check this out. We're gonna get the trusty calculator out. Okay, we're doing the mental calculator because it's easy math. But all right, each options contract represents 100 shares. So when we sell this put for 94 cents, 94 cents, we're not going to get 93 or 94 cents credited to our account. For each contract, we're going to get that 93 cents times 100. Okay, so we're going to get $93 credited to the account. All right, so let's go ahead. Let's do this. I mean, how many shares do we want to take on? That's the risk. So here's the risk that we're taking on. Okay, is that we might have to buy shares of Palantir for $22 at some point in the future. Okay, that's the risk. So we're gonna get $93 per contract sold. And the risk that we're taking on is that we will have to buy shares for $22 at some point in the future. All right, and we're going to walk through this again. I just wanted to get a quick size. So we'll start off. I already own shares of Palantir. I don't want to be super long this stock. So we'll start off with just, I don't know. We'll do 3 contracts. How's that? All right. So what'd you say?
I like it. You kept on upping it. You're thinking 2, but you did 3. I like it.
You could do 30. I don't know what they let us. Let's see. Buying power? Yeah, we got buying power. It's already a negative cash balance. We're already on credit. What's the ticker? Somebody said PLTR. PLTR, okay? All right, we're not doing 30 contracts. We're going to go with 3, okay? 3 contracts. All right, we're selling puts. Again, we're selling the April 16th 22 strike puts for 93 cents a contract. We're doing 3 contracts that represents 300 shares, okay? So hit submit sell order. It's going out there. And there you have it. Order's out. We're not filled. We'll check in a second and see if we get a fill here. But all right, so there we have it. And then let's do some more math. Contracts 3. Okay, so let's break down exactly what happened here. So where's it? Sorry, look at this. I have a new keyboard. I can't find delete. Oh my god. How am I gonna? There it is. Okay. All right. So money into account today. All right. That's the first thing that happened. There's a few things that happened when we just went and sold these puts. So the first one is we got 93 cents per contract times 3 contracts times the 100 shares that each contract represents. So we got $279 deposited into our account today. All right. The risk that we're taking on, okay? The risk that we're taking on is that between now, I'm going to write this one out. Between now and April 16th, have to buy PLTR for 22 per share. All right, we'll get some nice text draft. All H. Drew, what's my text draft? W, there it is. All H column width, we'll set it to 20 pixels. Okay. HOH, I don't know. Do something like that. All right, so there we go. Okay, so the risk that we're taking on, we get $279 today. The risk that we're taking on is that between now and April 16th, we're going to have to buy 300 shares of Palantir for $22 per share. Buy 300 shares of Palantir for $22 a share. Okay, and so let's talk through our scenarios. If Palantir stays above $22, Let's pull up the chart. So if Palantir stays above $22 between now and the next 29 days, we keep that $279. The amount that we sold those options contracts to, this $279. We keep that. It stays in the account. We roll it to the next trade. We keep going. The risk that we take on is let's say that Palantir drops to $20 per share, right? Between now and April 16th. We have to buy shares for $22 per share. All right, so we lose to $2 per share times the 300 shares. So we're down $600 on the trade right away, right? So that's what happens if we're forced to buy the shares. But check this out. We got the $279. Okay, so the $600 that we're down, we're not really down $600 in that scenario, right? We're down $600 minus $279. So we're down $321.
What price is that at, Luke? You're saying?
What'd you say?
If Palantir goes to what price?
If Palantir goes to 20.
Okay, yeah.
Between now and the next 29 days.
Mm-hmm.
And so here I'm gonna pull together the conclusion, and then I'm gonna go to the chat and look at any questions. So if you have questions, drop them in. Hit the like button, share the stream. Let's get this thing going. That's the Power Hour, baby. But all right, here's the beauty, in my opinion, of selling puts. First things first, only do this in stocks that you're okay owning for the long run. But, Palantir is what I view as a high quality stock. I think it's still not totally understood by the market because they do so much government work, and it will maybe never be understood by the market. Right, but I think Palantir is one of those super high quality stocks. I hold this one in my IRA, right, as a long-term holding. I'm in it to win it with Palantir, okay? When I sell puts against the stock, I'm either every single month going to keep paying myself this credit, right, this $279 credit. Great, I'll take that all day, right? Throw me the money and I'll keep going. And then the worst case scenario is I'm forced to buy the stock for 20% cheaper than what it's trading at right now, right? You see Palantir is trading at $25 a share right now. I might have to buy it at $22 per share right now. So what is that? 15% discount to what it's trading at right now. Okay, great deal for, again, a stock that I'm okay holding in the long run. So when you sell puts, you're either going to keep the money that you made by selling the puts, or you're going to be buying the stock at a discount to what it's trading at right now. And one last thing, all right, I'll get to the questions. One last thing, break even on this trade is $21.03. Or wait, did I do that wrong? What was the price that we sold it at? Okay, sorry. Break even on this trade, I forgot what we sold it for. Break even on this trade is these two numbers minus each other. There we go. $21.07, right? So because we sold the $22 strike, we got the 93-cent credit. So as long as Palantir is above 2107, we are in the green. If Palantir shares are below 2107, we are in the red. Again, I love the put selling to make me synthetically long these stocks. I think are high quality names. Like I said, I'm up about 20% year to date so far this year, and I've made more money selling puts than anything else. And I've owned some awesome stocks this year, right? We've had Ford as our pick of the year. We've got Voyager Digital. We've got the Bank of America we looked at, amongst others. So there's the deal with put selling. If you guys want this spreadsheet, we'll email it out. I mean, it's sort of just like a one trade example, but sort of walks you through all the factors that you need here. What the risk that we're taking on is, etc. Email powerhour@benzinga.com. I'll drop that in the chat, powerhour@benzinga.com, and we will send that over to you. And all right, I'm going to hammer through some questions in the chat. And Drew, let's look at this Vissel really quick. Vislink. Somebody said it's about to break out. 2-day chart. Let's go. Who called the price it's going to get stopped at? I said 405 is your level. Look at this. Two highs. 405 on the freaking dot, baby.
Good call. Very nice.
I mean, I said that rewind this shit like 15 minutes, okay? All right, it's not always that good. We're cracking the second.
You're cracking a cold one open.
Yeah. Cheers. So all right. So we'll be keeping an eye on Vizlink. But all right, go into the chat. Do you want to call out questions, Drew?
Yeah, sure. I'm reading through the chat right now.
Shout out to Ash Invests.
I see some people saying Palantir goes up, he just keeps the premium. That's correct, right? So Palantir can actually go down. It could go down to 21 and it could go back up, right? So that's that second question I'm addressing. It has to expire under 22, right? So I believe that's a Friday. Usually they probably only have Friday expirations for Palantir.
Unless there's a holiday.
Or whatever. Oh, it might be a holiday. So
No, unless there is a holiday, it's always Friday.
Unless we're talking SPY, then they got like every other day.
Yeah, say unless you're
But
so yes, if Palantir stays above $22, my $279, I keep it in the Interactive Brokers account, and I'm just going to throw it into the next trade. Maybe it'll be a Drew pick.
And then somebody said, what happens if Palantir goes to 35? Well, Luke would just still make the $300, right? This is a synthetic long position. So if he was long, yeah, he would capture $10 about per share. But the thing is, if Palantir goes down, he can still profit, right? So if you look at the monthly chart of Palantir, the 3-month even, this is a great strategy, right? He could have rolled this out 3 or 4 times by now. If he's doing monthlies, 3 months, obviously it's just 3. But this thing's basically been trading sideways, right? It had a spike. And that's why I think, it's a great time to sell puts, and it has been. And, you might miss out on some short-term gains, like when it popped up to 45. But I think me and Luke, we don't want to sell this at 45. I think I personally want to sell this at like 150. That's kind of my exit price. Honestly, when it gets there, I probably won't even sell it. So, I think that's kind of Luke's idea too. And it's a great way to get into stocks, right? There's a lot of stocks that run up and you want to chase, but selling puts, is a great strategy too, right? Palantir went from 11. Well, they IPO'd at 10, then it kind of traded at 11 for like about a month, and now it's around $20 to $30. So it's a great way to start getting a position. And yeah, anything to say there, Luke?
No, well said. A couple other questions. You need to keep $2,200 in your account in case it hits strike, because again, we're forced to buy 100 shares at $22 per share. You don't necessarily need to have the money in your account if you can get assigned the shares on margin. So as an example, I don't have $2,200 in my account. We just looked at it. I've got negative $15,000 in my account because I'm on a little bit of margin right now, right? But we just looked at it. We have buying power of $650,000 on this account. So if I get I'll pick up the shares on margin. So you either need to have the cash or you need to have margin.
But also, if you're using Robinhood, they let you capture the premium as you sell. So if you had $2,107, you'd be able to make the same trade Luke just did.
Yep. A couple of people asking, what are the fees on Interactive Brokers? I don't know. That's a very Googleable question. I do know I've incurred about $100 of fees year to date, and that's over about 60 trades. So, it's a combination of stock, option, and warrant trades. So it's not crazy significant. My favorite comment, YOLO or no-go. There we go. That's what the Power Hour is about. This is no pre-market prep. This is the YOLO trading show. That's why Drew likes to come on this one.
So someone said they still don't really understand options. They're just contracts, right? A put, in my eyes, is an insurance policy. It's saying, if you're buying it, you're saying, I'm scared the stock might go down. So let me say, I'll sell the shares at 22. That's the person that's buying these contracts from Luke. They're saying, if Palantir goes down, at least let me sell the stock to you for $22 a share. That's all they're saying. And Luke's saying, I'm happy to buy it at $22 a share. It's at 25 basically right now, 24.83, right?
Exactly.
It's just a contract between two people.
And the way that I picked this $22 strike, right, is again, look, if you can see the dash line on my screen right now, that's at $22. The stock hasn't been that cheap since November. And then look at it. We're getting buyers right in that 22, 23 range. We see several times, 1, 2, three times where it got down into that $22, $23 range. Buyers stepped in and drove the stock price higher. So that's how I came up with that $22 price, and why I feel decent about it. What are the price drops to 20 and then rebounds above the strike at the time of expiration? It depends on who's on the other side of the contract. They could force me to buy the shares when it drops to 20. They could hang on to their option, and I'm not assigned the shares. So that's the deal.
So someone just said Palantir goes to $15, he gets smoked. So this is like kind of a funny thing to think about, but when I buy or when I sell puts, I'm thinking like, I'm fine with the stock going down, usually because maybe I want to buy the share. Like, I don't know if Luke wants to necessarily buy Palantir.
I do. I only, and I implore you, only do this on stocks that you want to own for a long period of time. So if Palantir goes to $15, right? Let's if Palantir goes to $15 and we get smoked, so let's do that math, right? Let's just scroll down. So we have the $22 strike with 15. So we got the strike. We have the last trade. So we're pretending it's at 15. We have the number of shares is 300. Okay. So then I basically am starting off because I'm forced to buy the shares at $22. So I'm starting off with 22 minus 15 times 300. So I'm starting to trade off down $2,100, but then we got that credit up front of 279. So don't forget about that. And so I'm starting to trade down like that. Starting to trade down $1,800. And again, this is a risk that I am only okay taking on stocks that I want to hold for a long period of time. Like I said, this stock I already own shares because this is a long-term hold of mine, right? This is a multi-year hold. And so if I can keep selling puts against it every single month, which I have been. If anybody who's watched the show for a while, we've done the Palantir put selling example before, right? And keep getting that credit. And then again, if I can buy the stock at a 15% discount to where it's trading at today, if I wanted to add to the position today, I'm okay doing it. So that's why, yeah. And again, the risks are always most important. Somebody say, did you get filled? We got filled. We always get filled. That's why we use interactive.
Well, the thing too is if Palantir goes to 15, Luke's other option, because he's synthetically long, is just actually going long, right? If he bought 300 shares, I don't know if he wants to do this next to it on the spreadsheet, he would be down probably double, right? Because he'd be buying it at 25 instead of 22, and he's not going to capture about the 97 or 94 cents.
Okay, so
he's actually saving money. That's the best part about selling puts. When the stock goes down, you feel even better because now you're like, all right, I got the shares for cheap, and I didn't buy it when I thought I wanted to get long, and I made a little bit of credit, so I'm saving even more money from the strike price. It's like a win-win-win situation for me. Getting assigned a put and like just barely getting assigned is like a snipe in my eyes.
Yeah, so check this out. That's a great point. So here's what the P&L would look like if we just went out and bought the shares outright. Okay, the current price is $25. That's what we'd have to pay for the stock if we were just going to buy it right now. God, being on a different keyboard is screwing with me, guys. All right, if it's down to $15, and we're buying 300 shares,
$10 right. $3K.
So there we go. So let's do our PL. So we're down. So we're down $10 a share times 300 shares. So we're down $3,000. Okay. So in this put selling example here, exact same scenario. We're starting to trade off down to $1,800. In the common stock example right here, we're starting to trade off down $3,000. So you're actually a little bit more risk adverse in that sense of it. Again, where you're losing out is if the stock runs from 25 right now to 50 over the course of the next 29 days, we still only get the $279. That's what the difference is.
Yeah, right. That's not a fun feeling, but
that was an accident. Sorry. That was an accident.
No, it was perfect.
All right. So there we go, guys. If you want the spreadsheet, powerhour@benzinga.com. That's how you get a hold of me, Drew, producer AB, the whole damn team. Jason Raznick's on that email address. Shoot us the email. We'll send the spreadsheet out very late tonight. Thursday nights are always my latest night of the week. I'm usually up to like literally 3 or 4 a.m. grinding away, working on building some Benzinga on Thursday nights. I did the same thing last night, so we'll see if we make it tonight. But expect a very late email from me with the spreadsheet if you hit up that email address. And again, guys, smash that like button, share this stream. Let's get this thing going. We have our first guest of the day ready to hop on with us. So we'll pull him on the stream and oh, I don't see him. I see his camera. I don't see him. So we'll see if he can pop back on with us. But let's look at this Vissel. And if you guys have other tickers for us to look at, we'll check those out too. There he is. All right, he's back. We're gonna bring on our beach trades in just a second here. But Vissel, oh my God. All right, guys. Drew.
Luke, bro, quit Benzinga, become a full-time day trader, and just short these penny stocks when they get to these highs that you snuck.
Bro, I said it's 405 is your price. I said 405 is your price. 2-minute candles. We touched on it, got rejected. Now down to 384. God damn. All right.
You needed some snipes next maybe Zoom Nation. Maybe some,
all right, and again, guys, if you're just joining us, I think we're gonna have Hugh and Dan on tomorrow. They are the Vissel guys, so we'll be talking to them. Other things on the docket today, we're about to bring on our very first guest of the day. We're going to talk some stock ideas. We're then going to be bringing on Cabbage. They are a small business lending platform. So I want to get a sense as to, hey, what are small businesses doing? Are they reopening? Are they cash strapped, etc.? And then, of course, Kevin O'Leary, 2 p.m. Eastern. He's going to be joining us for an interview with Mr. Kevin O'Leary. But all right, without further ado, all right, I think something went awry there. What's up, man? Welcome back to the Power Hour. Good to have you here. How's life? How's trading? How's the beach? What's up?
Everything's good, although I'm in the city right now, but everything's good.
Which city? New York City?
The only city.
That's the only city. Well, I feel like every state, though.
I just probably insulted about 95% of the people.
Yeah, exactly. Every state has a city, right? So it's like I'm here in Michigan, right? And when we say like my dad will say, "Hey, I'm headed down to the city today." You know, that means we're going to right. You know? Ann Arbor's a good one too. But okay, so what brought you up to New York at this time of the year? That's the question we need answered.
It's a good, New York's always kind of my home base, and I lived on the beach, and I travel around, but New York City's just home. So April's coming, spring's coming, the world's opening, and you just go where you feel comfortable.
Okay, all right, there you go. I like the flexibility.
You know, if I don't keep the local bodegas and restaurants open, who will?
Yep, and I like it. And then I talked to your good friend, I believe, Brian Rasnick, yesterday on the phone.
Oh, give him how's he doing?
Doing well. He's always a good ally to have in our court here at Benzinga.
Yes, the both. Those are great guys. I'll just say that.
Yeah, that's Jason's brother, if you don't know. But all right, CJ, what's on your mind today? What should we be looking at? What should we be talking about?
Well, this is interesting. I mean, I'm sure you've seen all the action with the NFT plays and this, and I heard you guys mention Vissel and. Everything, everyone's got their style. Discussed with you last time. There are TA guys. Me, I'm more of a tape reader, a theme guy, a Momo guy. And, this morning I was like, okay, and I even put it out there. I'm like, where's all this money going next? For what we do, everything is money flow. And you kind of saw the market kick back a bit with the NFT plays. And especially in the small cap retail space, it's okay, you have all these traders now, they made this money. Where's that flow going to go next? And this morning, I started to buy some Vissel because, again, for me, everything is reason. You're going to have that space ETF launch soon. No one knows the exact date. Is it the end of March, beginning of April? So, sometimes better lucky than good, but I say there is no luck. It's about chance meeting opportunity. This morning, I started buying some MDGS, some Vissel, some ASTC, and, it's about putting yourself in the right spot ahead of the crowd. So this NFT craze is crazy, and I'm sure it will continue and up and down. And one day they're up 30%, one day they're down. But
I know.
Eventually,
are you trading any of those stocks or no? I haven't.
Yeah, I mean, I'll send you a text that's heartwarming from my father when I had him get into OCG at $4. But yeah, I'm basically out of those now. To me, the money's been made, and I can trade them, scalp them, but. That was something I read about a week ago and started to scale in. And now, again, I'm doing this, with the space ETF. So there's no guarantee, but it's all about risk reward. So that's where I'm at now.
Okay, and CJ, we got so many comments about New York. I'm just looking at the chat right now. It's everything ranging from go Red Sox to this man is personally trying to save New York to Nets or Knicks.
I know Austin's a big place, and everyone loves Austin. So I'll give a shout out to all my Austin people.
There we go. But all right. But you said Vissel is one that you're in right now, or you got?
Yeah, just Vissel, MDGS.
But can we stay on Vissel for just a second?
Sure, go ahead with Vissel.
So I want to know like what did you see? What compelled you to enter the trade? And then what are you watching now that you're in the stock?
Well, let's just say this morning, to me, I'm not watching now. It's probably somewhere in the 380s, 390s, but it was
385,
350s, and to me, a lot is where reason meets the chart. I was looking at the chart this morning, risk reward, and again, everything knowing, the market is usually ahead. So I'm telling you about that space ETF that nobody knows the launch date, but it's roughly about 2 weeks. So you have to think, how is everyone going to think? I use that great Wayne Gretzky line, don't skate where the puck's going to be, skate where it's at. So right now, where it's at is NFT. So I like to exit a little early. So I'm out of there. And then where's it going to be? And nothing's perfect timing, but you start to scale in. So to me, in a week or two, especially next week, you'll probably see it. So that's where I'm at. So I saw the chart. I saw the reason, the launch coming, and Vissel, out of all of them, seems to, let's just say, be the cult crowd favorite.
Yes.
You mentioned you have Hugh Henny. He's an unbelievable trader. And you have these guys who have a huge following, and it's just a lot about beating the crowd. So, if I can enhance my risk reward entry, that's everything.
All right, there we go. Okay.
But I never go all in at once.
So the catalyst is the ETF launch.
Yeah, I mean, and there'll be speculation of which small cap stocks will be in, whether they're or not. And just like a biotech catalyst, they usually run up to it. So you maybe have a 2-week run up. So that's my thinking.
Okay, I like that. And so is the idea? Do you think it's most likely? Of course, you're going to be watching the stock. But do you think it's most likely that you'll be getting out of it and the price will be running up into the launch, or is it going to be after this thing gets going, we get all the constituents, etc.?
I'll probably be out before the launch.
Okay.
A lot depends upon price action and your profit and where the stock's at. I'm fluid. I'm open. So like every day, there's trade what you want to see and trade what you see. So whatever is presented in front of me, I'll react to. And if I have a big run up before, I'll probably scale out most. So, okay. I have a set idea, but at the same time, I'm always fluid and open.
Okay.
So how long is your time horizon usually on these trades?
I mean, Vissel, got a spike actually today because not because of what I was saying. That's why I said better lucky than good. I believe they put out a tweet. So
here it is. I've got it up on the screen here. And CJ, whenever I have a chance to plug, I can't help myself. I'm going to plug it. Benzinga Pro had it first. The Vissel tweet right when the thing started to move like that. In the link, I think there's a promotion still. St. Patrick's Day, in the description, there's a link. Benzinga Pro, 2 weeks free. No reason not to try it. But all right, keep going again. If I can plug it, I will.
If people had your link, they would have made the money. So, but yeah, so that's just great. So now the chart keeps setting up, the news keeps getting better, it keeps building. So, there's many ways to play. You can swing, you can trade these spikes, but that's exactly what you need because the market, truthfully, was dry, as we all know, the past couple of weeks. You need day traders, you need scalpers, you need swingers. All this leads to liquidity. So that's why I welcome all. Just bring it all. You need liquidity, especially now in small caps.
Okay. All right. I like that. And then you're about to do another ticker. I'm the person who slows everybody down on the show, which is exactly what I did to you. But what was the next ticker you were going to give
MDGS.
MDGS. Okay. So that's what is that? Mike Delta Golf Sandy. So somebody help out Zinger Nation. Help out your fellow friends here. Drop the ticker in the chat so other people can have it, and of course hit the like button. But all right, tell us about this one.
Yeah, it's a stock that's involved in many angles. They had a PR yesterday that probably went a little unnoticed. It does the electric vehicle market. It does the space market. You know, it has many angles, but mainly that's one to me that'll be bought up on the space theme. So it has the electric vehicle side as well, but to me, it's ripe in all areas.
Yep, and if you're worried about the press release going missed, Benzinga Pro had a summary of that as well. Look at that.
There you go.
There we go. Okay, and so is it a similar sort of thesis on this one? Again, guys, the ticker is Mike Delta Golf Sandy. That into the run up into this ETF, when there's speculation about the names that'll be included, etc. That's where the stock could get moving.
Yeah, and you have plenty of time, so you can play it any way you want. Trade it, scalp it, swing it. That's up to you, and that's the beauty of what we do. There's no right or wrong.
Yeah,
to make money.
And you said it's got the space plus the electric vehicle angle. Yes. This is producer AB. This would be a good one to bring onto the show. This seems like a really. If they have space and EV, it's a good company to talk to. So we should try to get them on.
Where are you guys at right now? You're not in New York. You're in Michigan?
We're in Michigan, Detroit, Michigan. Normally I have a background, my camera faces out the window, but Jason Raznick took my normal setup from me because he's got his big Kevin O'Leary interview coming up in about, I don't know, let's see, 40 minutes or so. So I'm banished to the dungeon today.
Big game Saturday, so.
I know. And tonight's the kickoff, right? Tonight is the first round of games for basketball.
Yeah, me and Jalen will be watching it together.
Boom. There you go. All right, so I'm going to throw this one out to the chat. We have not asked this question yet. March Madness teams. Drop them in there. I want to see where everybody's at with it. For me, and for all three of us on the screen, we've got 3 University of Michigan guys on the stream at once. There's a big go blue. But yeah, look at that.
I mean, it's Michigan or bust, of course, even without Isaiah. So yeah, I heard Juwan might suit up. They might give him a 25th year of eligibility.
There we go.
A photo of me and Juwan, actually. So that just dated me, but I'll save it for another time.
Okay, and Drew's actually a student at the University of Michigan right now. Drew, do you have your university provided face mask? At Quick Access, we can see.
I wish I had. I actually never got one of those. I came late to school, but I got my keychain. Always repping this Go Blue, baby.
Yes.
Where I go.
Yes.
Well, nice to see the Michigan lineage. So that makes water seeks its own levels. That explains why this is such a great place.
There we go. I love it. All right, we need a special sound for that. All right, I don't know. I guess I don't have anything that's especially good.
$1 million.
Just bring back Chris Rubber. That's all I ask.
Yeah, there we go. Awesome, man. Any other stocks that we should be looking at, checking out today?
In terms of, you have the Bitcoin, of course. It's popping to 60K. That keeps cycling. So there's a bunch of Bitcoin tickers out there.
Okay. Do you have a favorite? These are hot tickers.
They are very hot. You have
you're gonna have half the crowd love you and half hate you, regardless of which one you say. So I'm curious to hear it.
You have the big guys. You have Riot Mary. You have smaller guys like
SOS.
SOS is another one that
everybody loves that stock.
Usually, it's really actually helpful when they all kind of trade as a group because again, they all fuel each other. So even if I'm not in it, I root for them all because. Let's just say, if I'm in one, they all push each other. So, you can actually buy Bitcoin itself. You can buy GBTC. There's, again, so many ways to play. But Bitcoin, if anything, seems like once that 60K break happens, we're off to 100, and you'll see a big leg in these stocks.
Yeah, and I don't have a good Bitcoin chart, but in case you missed it, basically, in case you weren't on Twitter this weekend, we did get there. Right, so here was the weekend. My Twitter just blew up with Bitcoin at 60K. We dipped a little bit, and now we're rip roaring back. So okay, and do you have any positions right now?
I have a few light ones, but just kind of mainly speculating at this point.
Okay.
But there you go. There's the Grayscale. That's probably the best way to play.
All right. What about other currencies, like Ethereum or Cardano or anything along those lines?
Ethereum, that's the big one because that's the one that's actually behind NFT. So you're going to see that one built up, and then certain stocks that actually have that in will also get bid up. That'll be a craze. So Ethereum is another great angle, especially right now. With the
Totally agreed. And guys, check this one out. VYGVF. Anybody who's listened to the show more than once, sorry, you're gonna hear me talk about my favorite stock again. This is the craziest stock that I've ever owned in my life. Let's see if we can get it here. Look at this. I've never had a 4,400% gainer in my life. It's super abnormal. But Voyager Digital, this is like my crypto play. If you guys don't know it, every 2 weeks on Twitter, I do like a long deep dive. It takes me like a couple hours to dig through everything and then try to get it into just a few hundred words. But I go through multiples. I put out revenue estimates, etc. There's like not really any analyst coverage on this stock, even though it's a $2 billion stock. And so that's why I do it. Just I don't know. Nobody knows about it. But CJ, this one is super interesting because it's a crypto brokerage and not exchange brokerage. They connect to 12 different exchanges. They trade 55 different coins and pay interest on almost 30 coins. Is what makes this one super interesting. So regardless of if Bitcoin's price goes up or down, they make money on transaction volume. So you're not necessarily tied like you are with like a Riot or an SOS to, hey, Bitcoin's got to go up to support this stock. As long as there's activity and momentum and people are trading the cryptos, and again, they've got 55 coins that they support, they're making money.
Brilliant idea, kind of like the real estate broker. You don't care if the market goes up, down, just collect your fee.
Exactly, and that's why I love this stock so much more than the other ones is because yeah, I mean I sort of like what you're saying, just own Bitcoin if the thesis is that Bitcoin is going to go up in price. So again,
one thing I want to mention that as for the stocks and the market, what you're seeing, kind of right now, everything just on a side note is tied to that 10-year yield, and you see that spike, and the tech stocks go whoosh, and a lot of things follow it. So no matter that's what I say. You can trade what you want, trade what you see. That is right now spooking the market a bit the past couple of weeks, right or wrong. And we need to see a little decoupling from that. You need to see some assets, some sectors act on their own, no matter what the 10-year yield is doing. Be it Bitcoin, individual stocks, anything. And it's kind of a slow unwind from that. But the past day or two, we're kind of seeing that. But that's kind of holding us down a bit. So, for anyone in this environment right now, whether you're trading, swinging, or whatever you're doing, that's something I would really follow, because right now, when that spikes, and that's why I saw the futures down a bit this morning, right or wrong, it is what it is. Right now, kind of the market and the SPY all in conjunction is following that 10-year. So we need to kind of decouple from that.
And check this out. Just as you were talking, I got pushed this alert on my Benzinga Pro. SPY, all the indexes are getting hit right now. I'll just read it off. Stocks fall following report. U.S. Democrat seeks progressive tax on financial transactions. So we just got, look at this. These some of these red candles right here over the past several minutes. That's what it was. So I guess we'll stay tuned.
Yeah, so watch for that. Watch for a sector, be it space, be it Bitcoin, be it NFT, which you've seen. That's huge. I love to see when something kind of what I call trades on its own, when it decouples from what's going on. So whatever it is you do, I would look for that. That's kind of like how your fee collector is on its own. Doesn't matter. That's key.
Yeah, and I love what you're saying about the hot sectors too. Right, I love picking the laggards out of some of those hot sectors. Like my big one earlier this year was Ford. Right, it's making this huge EV push. All the EV stocks were going buck effing crazy. Right, from Tesla to NIO to XPeng to pre-revenue and Lucid Motors and all that. And I'm like, all right, let's get some of this EV energy into this stock, and eventually it happened. The thing popped. So
there is no, on a long timeline in 2040, we can look at it and it seems so simple, but that's no stopping that future. 2025, 2030, and everything that's tied along with it, that's coming.
There we go. Awesome, man. All right, well, thank you for joining us on the Power Hour once again. always nice to have our repeat guest, and especially a fellow
Always go blue.
Wolverine. Yes, this week especially. Let's go March Madness, baby. Kicking it off tonight. Go blue. I even saw somebody put Maryland as their favorite team. Get out of here with that BS. So, all right, there's the move. CJ, thanks for hopping on.
You're welcome.
Maryland.
All right, Drewski. But before we're gonna get to our next guest in just a second here. But I'm gonna preview everybody. Oh, you know I like my previews, Mr. Drew. I'm gonna preview everybody for what we have coming up later in the show. So we're about to bring a next very special guest onto the show. After that, I've got some very strong opinions about Alibaba. Right? If you're an Alibaba trader or you're Baba curious, I've got some opinions to dump. I want to get Drew's reaction. I want to get the chat's reaction. I'm sort of hinting a little bit that the thoughts are not positive, and so I'm going to get flamed for this one. But I'm bringing it with Alibaba. All right, that we're going to do an update on our chat challenge. That's our stock picking contest we run every week from the community, and of course, Mr. Kevin O'Leary is going to be hopping onto the stream. We're going to be pulling questions live out of the chat, guys. Kevin O'Leary, Mr. Wonderful, Shark Tank star. If you've ever wanted to ask him a question, maybe even pitch a high-level business concept, I don't know if we'll get to that, but hey, throwing it out there, 2 o'clock Eastern, 2 p.m. Eastern. That's just, I don't know, what time is it? My watch is broken. 50 minutes away. We'll be getting to that, so stay tuned. Hit the like button, and without further ado, I'm going to roll our special guest video and bring our special guest. All right. Catherine, did that video stop playing for you partway through?
It felt like it was a loop, actually.
Something screwed up with that video in particular. I don't know if it's all of them or if it's just the one or what the deal is, but it's the third time I've tried it today, and I guess it'll be the last time.
I was not offended.
Okay, all right, good. It just so you know, I was about to say very special guest, which you are. You said you're not offended, but we are excited to have you here and wanted to have our nice little video. But Kat, you're coming to us from Cabbage. Thank you so much for joining the Power Hour. This is what we like to call the most entertaining stock market show on the internet. What we like to call it changes pretty much every day, depending on how we're feeling. But for those of us who aren't familiar, can you just tell us a little bit about Cabbage? Give us the background, and then we'll hop into it.
Sure. Cabbage helps small businesses manage cash flow through a variety of products that include things like lines of credit, small business checking account, payment processing, invoicing, bill pay, and charge cards.
Awesome. And I'll ask one more background question a little bit. But when you were getting the company started, where did it start, and what was the hole that existed in the market that you guys saw and said, hey, this is somewhere where we can step in?
I'm glad you asked that question. Our company was actually influenced by technology. That's what inspired Cabbage to begin. My co-founder Rob in 2007. We're really old. He had the idea for using a recently launched eBay API to provide capital to eBay businesses that were selling online, and so that transaction and seller level data allowed us to get real-time access to verified data that we could use to determine how well a business was performing. And we took that platform that we built and expanded it to not only serve other online businesses, but also brick and mortar businesses.
Got it. Okay. All right. No, that's helpful. I didn't know that. I always like to pick up on some of these fun facts, but something that I'm particularly interested in, and I know just based on the comments that we get that our chat is particularly interested in is where exactly are small businesses at? And there's probably no one better to ask than you, given that you guys are providing the financing for so many businesses across the country.
Well, one of the things that we learned that we didn't really realize when we started the company was that small businesses have always been underserved for financial services products. 100% of our customers had a checking account with a bank, 80% of them with the big banks, but they couldn't get other services from them. And so they've often found themselves without access to a lot of tools and services that larger businesses take for granted. And so from our perspective, what we're seeing is a lot of the same things playing out today. So we're seeing that smaller businesses are not recovering as quickly as larger businesses from the pandemic. And they also haven't had access to some of the benefits, the economic benefits that larger businesses have had, whether it's, the Fed buying up corporate debt, or whether it's access to lines of credit. They've really had access to PPP, and that's about it. And so I think it's taken them a while to recover.
Okay, and I mean, how far along are we in that recovery? So you just told us it's taking longer for them to recover. I mean, is it are we getting back to being half operational across the board? Is it a quarter of the way there? Are we still a long way off? How far along in the process are a lot of these companies?
I think it's important to provide a little bit of context on who the small businesses are. So of the 30-ish million small businesses in the US, 90% of them have fewer than 20 employees, 80% have fewer than 10. So it's this 90% of businesses that we generally are talking about when we talk about small businesses. Those are the ones that have historically been underserved. And so what we're seeing is that 57% of these customers are reporting that their businesses are fully open. So imagine if you're a restaurant, that means all of your tables are open. If you're a gym, that means all of your treadmills are open. So they did find that online sales have certainly increased, and they've been embracing digital services, but they think that for them, recovery means that they can pay all of their employees full wages without being concerned. So, and again, if you compare the year-over-year growth differences between larger business and smaller businesses, smallest businesses have had a 3% employee change and 2% total sales and 0% profit change, while the largest businesses have seen a 36% employee change, 35% in total sales increase, and a 33% profit. So I think that you see it play out in the numbers every day.
Okay. And do you guys get, and I imagine you have some sort of insight, but do you guys have any insight as to like levels of investment? Is it like these businesses are starting to come back and they're ready to hit the ground and building out operations? Is it like a little bit of cash recovery mode and let's just get our feet under ourselves? And the reason why I'm asking is that I would imagine that would give some sort of degree of confidence of these business owners.
I think it's also important to sort of segment the businesses by business type, by geography. There are a lot of businesses that are doing well. There's this K-shaped recovery that's happening in small business as well. Businesses that were focused on home services, large and small, from Home Depot down to your local contractor, they're crushing it. My local picture framing shop has just been, 2 months behind ever since the pandemic started because people see their ugly frames on their walls and they want to change them up. But if you are a dry cleaner, then you rely on, urban commuter traffic, folks who are going to office buildings. You're having a hard time right now because that traffic hasn't returned yet. And, the vaccines haven't really rolled out fully yet. And so I think it's going to be a while before that traffic returns, if it ever does, because in many ways, people's work styles are changing. Maybe they're not going to get on as many planes. Maybe they're not going to go to the office as often. And that's going to have a permanent impact on certain segments of businesses.
Okay. I've got two reactions to that. The first one is not only are the people seeing their own ugly frames, all their colleagues are on the Zoom calls, right? Everybody sees the ugly frames. So you need to get those swapped out. And then your point about the dry cleaners, super interesting, super relatable. Like myself as an example, I call this the year that destroyed all my shoes because I've gotten none of my shoes taken care of for the entire year just because see the same 6 people every day. no need. I'm not traveling, etc. No need to get them polished up and resold and all that sort of thing. And Catherine, I know you have to bounce in just a couple of minutes here. But any final words of wisdom would be greatly appreciated.
I think it's just important to remember that small businesses power our economy. 50% of our non-farm GDP comes from small businesses and 66% of all new jobs. And so they are a vital part of our economy. And it's important to remember that they need access to all the same tools that larger businesses do. And we need to make sure that they fully recover before we say, that we've made it to the other side.
Awesome. All right. Well, Catherine, I know you're so busy, so I really appreciate you taking the time out of your day to hop on with us, talk small businesses. It's such an important part of our whole economy, as you stated. And there you have it, everyone. Catherine Petralia, co-founder Cabbage. I dropped the link in the chat so you can check the company out. Thank you so much for hopping on with us, and we'd love to have you back whenever you're available.
Thank you so much. Have a great day.
All right. You too. Take care.
Bye-bye.
All right, guys. It could be we lost Drew. I don't know where Drew went. He just logged off. Okay. Maybe a Friday segment when we have a slower Friday. One of these weeks is we'll go through all my shoes. I mean, they're like destroyed. Like whenever the world goes back to normal, I'm just gonna have to probably go buy new shoes because I didn't take care of them at all for about 12, 13 months or so. Is Cabbage public? It's owned by American Express, I believe. Amex, what is that ticker? I should know that. AXP maybe. There it is. So there's the answer to that one. Yeah, Drew's microwaving lunch. Yes, probably. There he is. He's back. Drew, the people need to know. Did you leave to go microwave lunch? You turned the lights off. I mean, what the hell? You just live in the dark. It's noon.
No.
It's 1 p.m. You just like to sit in the dark all day?
The power here is, I swear, as a third world country sometimes kind of goes out. But I'm back. Lunch, still waiting for that. But I'm glad to be back. Power is back on.
Awesome. All right, guys. So if you're just joining us, welcome to the Power Hour, baby. This is your high energy stock market segment. This is where we're getting things flying. We make this the trade idea show. That's what it's all about, guys. And we all want to make
$1 million.
$1 million. Yep, that's what we want to do. So yeah, no power on the Power Hour. There we go. I like it. College kid can't afford his electric bill. And then this asshole, sorry, Mbaye, I'm just gonna call you out as being an asshole. He needs to upgrade his IKEA furniture. He's in college, okay?
I didn't buy any of it. No offense taken.
Yeah, all right. Yeah, I mean, Jesus Christ. He's trying to build his account. We got to get him out of that PDT, all right? Okay? So that's the deal there. And there should be a bumper sticker on your end, too. Okay. Yes. All right. Here's what we're doing tomorrow, okay? Tomorrow we're going to do stocks, right? We're going to talk Vissel. We'll talk Torchlight. We'll talk SOS tomorrow. We'll talk some of the hot names. We're also going to do a best joke giveaway. All right, whoever has the best joke gets Drew's voice on their voicemail answering machine, okay? I'm pulling this one straight out of 1990s public radio. That's what I was raised on. Whoever has the best joke in the chat tomorrow is going to get Drew's voice on their answering machine. But all right, on to today, guys. So we're going to jump to our chat challenge in just a minute here. This is where Zinger Nation is going head to head to figure out who's the best trader in the chat this week. We asked, what is the worst performing stock of the week going to be? All right. I said I feel like the market is toppy. The market's held up okay, but I've been running scared a little bit. So the question of the week was, what's the worst performing stock of the week going to be? So we're going to check in, see who's winning that contest. After that, we're going to do a stock battle. We're talking Alibaba, BABA. I've got a hot take on Alibaba. We're going to do it. Somebody's saying check the Peloton news. Raz won't like that. Let's look at that. And then at 2 o'clock Eastern, Kevin O'Leary, Mr. Wonderful, Shark Tank star, he's coming on the show with us. He's going to be taking questions out of the chat. All right, Kevin O'Leary, again, coming live on the Power Hour. Let's go. We said after we did the Kathy Wood interview, we said, who do you want next? The people, they said Kevin O'Leary. After that, we're bringing Elon Musk on. That's the move.
Damn, son, where'd you find this?
All right. Oh, yeah.
What up, Peter?
Oh, yeah. Peloton. Let's go. Let's drive Peloton down. I was the bear in this stock yesterday. We got into a heated fight. I don't know if you saw that, Drew, but me and Raz got into a fight. Check this out. My trusty Benzinga Pro, again, pro.benzinga.com. Peloton CEO requests customers keep children and pets away from Peloton exercise equipment, citing fatal accident. Okay. All right, that's actually really sad. All right, I didn't get that far. All right, we're just going to move on.
An animal or a small child?
It was a small child. We're just going to move on.
Oh, that is really sad.
Yeah. All right. Let's move over to the chat channel.
Zinger Nation is going head to head every single week. What is the best performing stock of the week going to be? All right, did that video stop again? Guys, if that video
I thought it was good.
Wait, it didn't
Was there
freeze
more?
for you?
No, it played all the way through on my screen.
Okay. All right.
Also,
Well,
the one with the gas, it looped. It started to do it a second time.
yeah, that was me an accident. Okay. All right. All right. So here's somebody saying buy puts on Peloton. All right. If you guys, so we did covered calls yesterday. We did put selling today. If you want to do just naked put buying tomorrow, put the one in the chat. If you want us to do some other sort of live trade, I'm trying to bring a live trade on this show every single day. If you want to do some other type of trade, put a 2. Again, if you want to do a naked put tomorrow, throw it out, a little bit of a YOLO trade, hit the 1. If not, hit the 2. All right, Drew, our chat challenge. Worst performing stock of the week. That was the question. Throwing it up on the screen.
TLT.
Zooming in here. All right.
Ooh, there's some big L's.
There's
fat L's. Yeah.
All right, we're gonna pull out who did the worst on this too. All right. So the winner, the group that's winning. I'm not gonna say the person who's in the lead. The group that's in the lead is everybody who picked GameStop as the worst performing stock of the week. Again, this runs from Monday through Friday. There's still another day. We're gonna be closing it out at this time tomorrow. Hit that subscribe. Hit the like button. Share the stream. Let's get this going, guys. But all right, GameStop, GME down 17.5% since the start of the week. Let's see how many of you put GME. So range is we're gonna look there. We're gonna look for GME. Oh my God, 15 people, 15 of you. We only had like 100 entries. 15% of the population guess GME is going to be. Yeah. So look at this. So somebody said we need to prohibit GME from these games. Like the last 2 weeks, the winners have been best performing GME, worst performing GME. It's all GME, okay? This is what Zinger Nation is all about. Plug. It's not about me, Drew. I'm a flawed human. Plug is down more.
Classic.
Who pulled that? Chris calling it out. That's what it's about. Plug Power down 18.6%. It's not GameStop down 17.5%. Plug Power. Oh, fuck, I'm losing my voice. Dustin T, you are the in the lead right now. Let's go. Air horns on that one. Come on, baby. All right, Plug Power down 18.6%. And it looks like we actually might have a couple plug guesses. Let's count it. Here, we'll put it down here to make it a little clearer. Plug equals count if. There. Looking for plug. If it would be helpful too to do like a quick Excel segment, a Google Sheet segment, to go through some of these formulas, we can do that one day too. Let me know in the chat. All right, and producer Rohan, I'm like dying of water. I need some water and a charger if you could help me out. But all right, Plug Power. 2 of you pick Plug Power. Worst performing stock of the week. You are ahead. Dustin T, Chris saving you in the chat. We've got one more day. Luke, can you link the spreadsheet? Of course I can. That's what I do, baby. I link spreadsheets. So here it is. Having that into the chat. It's view-only mode, so you can't go and delete your competitors' guesses. And again, if you missed out this week, join us next week. The winner gets whatever they want from swag.benzinga.com. Shout out Caesar, who's running that site for us. But again, you're in the head if you pick Plug, and I said I was going to call out whoever had the worst pick. All right, so this week would be the best performing stock of the week. I got to do it. Peso Capital, ready? We might get a copyright claim from that. That's from what's that show that's got Drew Carey now? You look so old. Drew, you're too young for this shit. Drew Carey's show. Price is Right. There we go. That's the one from Price is Right. That is so you guessed the ticker AI. Peso Capital is going to be the worst performing stock of the week. Stock is up 54%. I hope you didn't short it.
Not a good time.
Yeah, look at this. All these zingers out here saying Price is Right, helping us out. If we're gonna have one copyright claim, we might as well have 3. It doesn't matter. You get one, it's all the same. You can have unlimited. I can start playing Snoop Dogg songs now. It doesn't matter. We get screwed anyways. Price is Wrong. Boom.
Price is Wrong. I love that.
All right, there we go. All right, guys. Next up, shout out Bob Barker. He was the GOAT. Every day I was sick from school. Watch Bob Barker middle of the day. Drew, you might be too young for that. But all right, guys, before we get to Baba, we're gonna do a stock battle on Baba. We're gonna be battling. We're gonna be seeing. I'm gonna be asking you guys. We're gonna be fighting about Baba. But before we get to that, we've got a very special guest. We have somebody from Zinger Nation is coming on. 5-minute stock pitch. Again, this is the Stock Idea Show, guys. Share the stream, like the stream, pass this thing around. Let's get the ideas flowing. Let's get the creative juices flowing. That's what it's all about, guys. I'm putting the email address in there right now, powerhour@benzinga.com. I'm on that. Jason's on that. Producer AB is on that email. You want to come on and pitch a stock, we'll bring you on. But all right, Happy Mohammed, what's up, man? Welcome to the Power Hour.
What's going on, Zinger Nation? Just wanted to come on, represent the chat for you guys.
Hell yeah, that's what it's all about, baby. Representing the chat. Have you been listening for a while?
I've been on for about a week now. Every day since. There's no better place where you can find everything you need. You got questions, you ask it in the chat. It'll get answered eventually.
Exactly, baby. That's what I'm talking about. So, all right, you've got a stock for us.
Yeah, so basically, I wanted to talk about CCIV. Everyone knows it, Lucid Motors. So yesterday there was a little bit
Wait. Is this a long pitch on CCIV?
No, it's not that long. I'll give you a quick little one.
No. I mean, like, are you bullish on the stock?
Oh, I'm definitely bullish, but it's a long-term bullish play.
All right. Let's hear it. Here's the chart.
So yesterday there was a big conference. It's called SSW. People know it as the Arts and Tech Conference. That was big. It's about $400 just to watch the stream. So it's quite expensive. Yesterday, Lucid Motors had a little bit of a conference. If you go on YouTube right now, there is a video. Type in Lucid Motors times Adobe Digital. Or not Adobe, Dolby Digital.
All right, we'll look for it. Lucid Motors, Dolby Digital. All right, we're looking.
And basically, this is like, when you go see the best movies in the theater, who's playing them? Dolby Digital, right? This is what, people are always trying to put subs in their car, always trying to make their sound in the audio in a vehicle sound better than, their house. So you can play that in the background. I think this is going to set the future of EV, It's Peter Rawlinson, he didn't seem too worried on his video with Jim Cramer. Jim Cramer obviously see the vehicle. I don't know why they only decided to show the front, but it was. But I'm sure there's a reason behind it. I'm sure there's a big release coming soon. But this is gonna set the future of EV. He's been working with. He worked with Elon Musk. He was the lead engineer for what's it called, the Model 3.
Okay. So basically the CCIV, that's the SPAC that's going to be merging with Lucid Motors. And if you don't know Lucid Motors, it's a high-end EV company. And basically, the pitch is that Lucid is going to set the stage for EV in the future.
I think by the summertime, you like it. By the summertime, they're going to be doing their first release of their vehicles. They're already in production, so we already know they have the product. We just waiting for the release. As soon as this release happens, it's going to shoot up, guys. I think anywhere in the 20s, high 20s to low 30s range is a great price entry point, because I see this as really the future.
Yeah, and this stock did get a decent rebound. Shout out Evan Brandoff in the chat, good friend of mine. But okay, I mean, yeah, we're definitely a decent bit off the lows. That's what scared me, was when this thing was in free fall for a while. This is 1 month. Here's 3 months of the stock price, right? It's obviously been a
it started
crazy
getting
one.
some ground, and then that Mad Money with the gym, it didn't go so great, and then it kind of dropped off back then. But you know what? He didn't seem too worried. They just had this release. If you guys watch this video, you're gonna see like how advanced this car is, and I think it's just gonna be a better, like unavoidable future. We know everyone's moving to EV. We got Volkswagen gonna take over Europe. We got like places like NIO gonna take over China. We gotta know who's gonna take over the U.S. market, and we gotta know who has the product now to deliver to you guys, right? And it's gonna be soon by summer. By summer, this car is gonna release, and 90,000, I think they said, on first production release.
All right, so there it is. All right, I'm gonna throw this one out to the chat. You definitely have more supporters than haters in the chat so far, based on the comments. But we all know it comes down to the ones and twos, right? There's nothing more true in this world than the ones and twos in the chat. Okay, that's what defines our universe these days. So here it is. If you guys like the pitch, you like Lucid Motors, you would be long CCIV right now, hit 1. If you would be short it, hit 2. There's no abstaining, right? You're not Switzerland or whatever country doesn't get into wars, okay? You're not sitting out of this one. You're either a 1 or you're a 2 or you're out of the chat. So there it is.
You don't like the pitch, make sure you hit the like button for Zinger Nation. We got to grow this community. We got to share our streamers. These guys are doing a great job.
There we go, baby. That's what we're talking about. Appreciate the love. Happy. Thanks for coming on. Thanks for pitching the stock. Again, guys, powerhour@benzinga.com. Email that. You want to come in. You want to drop a pitch. You want to throw an idea out here. Go ahead and do that. Oh, no, absolutely. All right. Let's see.
Guys. See ya.
All right. Peace, man. All right. We've got a mixed bag, Drewski. So I don't know. Where are you at with this one? And stay seated. I have to go get a cup of water. I'll be right back. When I come back, we're talking Alibaba, all right?
I'm definitely going to have to stick around for that, and then I'll probably head out. But with Lucid Motors, guys, let me kind of give you the opposite, the other head of the coin, maybe the tail of the coin, right? The other side of the coin, as they say. Not the biggest fan. I was not very early Tesla owner, but I think the first time I bought Tesla, maybe 2018, right? I've traded a little bit, and then I bought some, held it in like 2019, and I got out way before this bull run. So maybe I'm not the best person to talk to when it comes to EVs. I almost made like 6 figures off one trade, which is huge for my account. But it is what it is. Can't look down on it. So the thing with Lucid is it was going to go with a $24 billion valuation based on a $15 PIPE, right? So they did a private investment in public equity. That's what PIPE stands for. And that put the valuation at $24 billion at $15 a share. Right now, it's basically double that. So it's basically almost a $50 billion company, right? We're around $48 billion. And the thing is, right, these guys, they're in my eyes, they're way overvalued, right? Even looking at Tesla's valuation looks way more better. I don't think that's proper grammar.
Yeah, that's not right.
Way better.
Keep going. We get the point.
Lucid, right? Lucid, how many cars have they sold, right? Not too many. I think it's closer to this number. And Tesla, is just a safer bet. Like these guys, they're trying to be groundbreaking. They're trying to make a name for themselves in the car industry. Brand is everything, and Tesla has an insane brand, right? Everyone knew what a Tesla was when there was only one vehicle, or technically 2, the Roadster and the Model S, and now they're like dropping tons of vehicles. Everyone knows the brand. Everyone thinks they're a luxury product. Lucid, my mom doesn't know what a Lucid motor is. She probably think that's like some motor. She doesn't think that's.
You probably think that's some wacky drug that your friends are giving you at college.
Exactly. It's not though. It's but that's just my take on it. I think it's a little too hype. Everyone's getting into it. This thing wrapped to $65. That's just ridiculous. You know, if you look at the puts, they're like $24 a month out when it was trading. I almost bought a put, but I couldn't justify it. But I think this thing is going to sell off like a fire sale once the merger happens. We've seen that with Hyliion. Look at Nikola. You know, guys, SPACs, they're fun, they're hot, they're exciting, and there's probably going to be some huge long-term potential. But get in on the dips. If you like CCIV, sell some puts, take the Luke Jacoby, Hot Stocks Luke approach, and make it happen. Zinger Nation, if that doesn't deserve a like and follow and subscribe, I don't know what does.
Boom. There we have it, guys. All right. And Drew, we're going to do an update. You weren't here Wednesday. You know, today's Thursday. Tuesday, we did a covered call lesson, right? We sold covered calls against Visa. Check this out. We've already made 67% of everything that we can make on the trade. So we're going to do an update on that. We're going to walk through the covered call trade, why we made that decision, what it means for the portfolio, etc. Again, that's pretty nice. That was faster than I expected. 67% in 2 days, and we did it all live on the show. So you can go back watch that again. Tuesday was when we did it. But all right. We got to talk about Baba. All right, we got to bring Baba to up to the front of the stage. All right,
I'm ready.
All right, you're not Raz, but
I'm Jason Raznick.
That's the best I got. Okay. All right, guys, we're talking Alibaba. I used to like this stock. I actually sold puts against this stock. At the beginning of the year, at the beginning of 2020, again, we're going back to put selling. We made 100% of that, right? The puts that we sold, it never dropped below the strike price. We collected the full premium. Like I said, I've made more money selling puts this year than anything else that I've done. And I've got somewhere around 60 or so trades throughout the course of 2021 so far. I hate this stock right now. I'm going to go out and say it. I hate Alibaba stock right now. And so here's why. The wave of bad news around this thing is freaking unbelievable. All right. I just did like I've been like watching it come in, right? I did like 3 minutes of research before the show started, right? Like 5 minutes before the show started. And check this out. This is all over the past couple of months. And let's zoom this out. Here's a 1-year chart of Alibaba. Okay. All right. First, you had their Ant Financial. That's like their fintech, their peer-to-peer lending, their Venmo type product, their digital banking product for China. That was supposed to have an IPO, a blockbuster IPO. It's supposed to be the hottest IPO of the year. Chinese government blocked it and then put handcuffs on what Ant Financial can do. In terms of the banking space, giving more power to the legacy banks versus the new startups. Okay, so there's one. Then Jack Ma went missing for like 2 months. He was gone. We didn't know what happened to him. His shit got canceled, and then we just don't see him. He just disappears, and all of a sudden one day he pops up, and somebody gets a picture of him golfing 2 days later, and the stock goes up 10%. Okay, yeah, it's a good thing. We didn't know what happened to him. Still weird that he went missing. Okay, there's two. Number 3, story out last week that the Chinese government is going to be putting more regulation on Alibaba and potentially hitting the company with a $975 million fine. And then just last week, maybe that was even the beginning of this week, the CEO of Ant Financial resigns, steps down, leaves the company, right? If you're supposed to have an IPO, okay, that's your cash out. That's when you're running up the bands, right? You don't resign right before that. You know, that he stepped down, okay? And so the amount of bad news and uncertainty around this name, I think, is insane, right? Who remembers Sino Forest? Do you guys remember Sino Forest? Right, it was a Chinese stock that was basically fake. All their numbers were fake. And how many times Luckin Coffee, right? How many times have we seen these companies running into problems? The first time that I met the guys at I think it's Citron would have been in like 2013, 2014 when I was just new here at Benzinga. And basically what they were doing, maybe it was geo investing. It was one of those awesome research firms, right? They were basically doing research on all these Chinese stocks. And they got, I believe, literally dozens, if not literally dozens, then at least 10 Chinese companies delisted just because of like regulatory bullshit or like totally fake, obtuse financials. Okay. That's why I don't trust this thing, right? I think it's a very I loved this stock 2-3 months ago. It sold off, and I thought, okay, they got a couple bad news hits, but the bad news reel has not stopped. We're at Benzinga here, baby. We are financial news, right? That's me. So that's the problem there with this stock. It sounds like you lost some money on Baba. I didn't. I made money on Baba. I sold puts against it. I sold what strike was it? 220 strike puts, maybe. I don't know, something like that. We'll go back and look at it. But I sold puts against it. They never hit. I kept all the premium, made like a G for nothing. But I seriously hate this stock right now. I'm throwing it out to the chat. Again, you're not sitting out of this one, okay? You either like the stock or you don't. If you like the stock, you want to be in it, press 1. If not, press 2. That's the question, guys. If you like the stock, press 1. If not, press 2. All right, Drew, your turn. I did my rant, but what do you have to say for yourself?
Luke, I'm going to ask you one question. If you could buy Amazon at a 26 price to earnings, would you do that? I think Amazon trades near like 100 PE.
I would buy Amazon at 26 PE all day.
What if the U.S. just decided, everyone's going to have 3 kids and our population tripled? That would probably be a pretty bullish factor. Well, that is China, okay? Alibaba, AliExpress, in my eyes, is the Amazon of China, okay? They have grown revenue almost 50% year over year. They've grown EPS almost 60% year over year. And their price to earnings is like 26, 28. Their price to sales is like 7. Like, this thing is just, it screams value, right? So, yeah, if you're right, if they're cooking the books, which I think is just
which I'm not alleging that.
You're not alleging that.
I'm not alleging that
Chinese companies.
I'm throwing out that this is horrible news cycle and some worry about some of these Chinese stocks.
Yeah, like, if they're cooking the books, 100%, I'm screwed, right? I have a position in them. I'm going to get my head chopped off.
They're not. Yeah, I mean,
and like, I'll take the L, if this is the next Luckin Coffee. But I just really don't think that. I think this is a very solid company. Jack Ma, he seems like a down-to-earth guy. He was a school teacher. Now he's a billionaire. I think he's a chill guy. Went through that type of stuff. But this just screams value, right? And the market is kind of forgetting about it in my eyes, right? Look at that uptick, going into October. Like, that thing is ridiculous. From April to October, this thing was just going off to the moon, and now it's kind of just trading sideways. And like, is e-commerce dead? Like, why are people paying 1,000 times multiple on Shopify, but not, on this? So I think Alibaba has so much growth. It literally is the future, and I think that's kind of where we're headed. That's where we're going to be. E-commerce is only growing. Alibaba's only going to grow through that.
I'm sorry I brought it up, man.
Yeah, I mean, so oh my God, I just hear Jason yelling in the background. You hear that?
A little bit.
Oh my God. Right. Hold on, and then we're getting back to Alibaba.
All right, let's see what the chat's saying. All right, we got to see do you guys agree with me or not? If not, talk shit to me on Twitter. I love hearing the hate. Looks like a lot of ones. 1.5? You can't do a 1.5, buddy. I'm sorry to say. There's like 2 1.5s.
All right. So I agree with you, right? If the Chinese population is increasing, they're going to get more a greater population. Then great, okay. That's obviously a good thing for the stock. But again, it's in this horrible news cycle. I did 3 minutes of research. I'm sure there's more, right? You had the Ant IPO was canceled. You've got Jack Ma went freaking missing. You had the rumor of increased Chinese regulation, a $1 billion fine, and CEO resigns. I mean, when is this shit going to stop, right? Is it Xi Jinping just going to say, hey, I'm going to let Jack Ma be the most famous Chinese person in the world, literally in the world, the most powerful in literally the world, let him walk all over us, talk shit about our policies? Hell to the no. You can hit him where it hurts, which is in Baba. So that's why I don't like this thing. And the chat, it looks like you scrolled through it. It looked pretty mixed to me.
It does look pretty mixed now. I was in the higher chat. But Jay Rice said this, Baba, buy the blood, It's that when things are rosy. That is literally the facts, right? That's how you get an edge in the stock market, by not being a little wussy. You buy when other people are scared. You sell when people are greedy. That's how Warren Buffett made his money. We've all seen that stuff. If you've been trading through COVID or before that, people get greedy. Everyone can feel that, but you want to partake in the actions. And when people don't want to touch things and you see value, but it's not really moving, it's harder to jump in, right? The first stock I pitched here, I think I told Luke, was Huya. He absolutely cooked me for talking about Chinese stocks, and that thing's done decent. So do all Chinese stocks get destroyed? I don't think so. I think there's value. It's only the biggest country in the world when it comes to population, I think. So there are opportunities there. India, maybe next. Indian stocks next.
I think India is super interesting. We need to do that segment. If anybody has Indian stocks that they're interested in, let me know. I think that's actually, that India is really interesting. I don't have any exposure right now. I'd like to, though. All right. So there's our Baba rant.
Buy Jamia, argument solved. I think that's fast too.
Wait, what does it say?
Buy Jamia, argument solved.
Boom. All right, there's the Drew stock. Shout out to Drew. Somebody remembering Drew's favorite name on the market. All right, Drew. We what else were we about to do? We're about to do something right after Baba.
So
which one was it? I had another good ticker that we need to talk about.
Did we? I think this is the last thing you said, but I could be wrong. I think.
Oh. Visa covered calls.
You didn't tell me about that one.
What are you talking about? I said that. Okay. Did you guys hear me say that? All right.
Drop one in the chat if Luke said that. Jump into the chat if Luke did not say that.
Yes, maybe Tata Motors. Somebody's saying Tata effing Motors. Somebody's dropping the missile. Drew, I've got to relog back into my brokerage, but can you give me a price check on Vissel while I do that?
Yeah. Up.
I mean, that you have to admit that was the.
All right, you did say that, Luke. It looks like one person backing you.
Okay, you have to admit that price call on Vissel was freaking unreal. On literally the penny, that does not usually work out that well. That was a little bit of madness right there. All right, but what's the price check, Drewski? You have a computer. You don't need to go on your phone.
Yeah, my computer's so slow. So Vissel, $3.84.
It's what?
$3.84.
All right, so it's boring. It's boring then. It's just hanging out.
Going up, yeah. It's ticking up though. It is ticking up. Buy the dip, sell the rip. I don't know. It seems a little late, but it's very interesting. I don't know much about it. It's coming off a fat pop, $5. But
all right. Somebody's saying, please don't spam. We should respect other people's opinions. I spam a little bit. You see me trolling in the chat sometimes during the other shows. Do not talk bad about my Baba. I love that.
Tata Motors up 344% this year.
And again, Vissel, that's the Hugh Henney pick. Remember, he came on our show. He pitched it. The stock ripped after that. We're bringing him back on. We then interviewed the CEO. He was going to be back with us to talk the stock. Hopefully tomorrow. But all right, let's talk about Visa.
Yeah.
All right. Here's the live brokerage account. Is this big enough?
It'd be a lot easier if I had the mouse here so I could see what the
all
hell
right.
I was doing.
Jesus Christ, these guys are so loud. I'm literally in a separate room and I hear every word they say. Holy crap. All right. But all right, let's talk about Visa. Ticker V. Don't you remember when Kate couldn't pay the rent last year? It was 15 by the blood. Okay. Yeah, sure. I mean, buy the blood if you want. All right. Whatever you want to do. Okay. All right. I just show what I do. Again, I make all of my trades, as many as I can, at least live on the show. I mean, I show my brokerage account literally every day. It doesn't get more transparent than that. I'm not buying it, but if you want to buy the blood, go for it. Is there someone talking in the background? Yes, it's Jason Raznick going crazy before his Kevin O'Leary interview. Kevin O'Leary, guys, 10 minutes. My watch says the current time is 2:21 Eastern. It's broken. I keep resetting it, and it's slowly losing time. I have to do that every day right now. I just need to take it to the store. But all right, let's talk about ticker V gang. We're talking about V gang, Drew. That's what we called it. Visa. We still have Huya up on the screen. Producer AB fell asleep, so we need to get that out of here.
We didn't keep it there. It's a fan favorite.
All right. There it is. It's gone. All right. And I did tell producer AB, he's got some other stuff to work on. I said, you don't need to hang out on the stream. But all right. Ticker V Visa. Okay. So on Tuesday, we did a lesson about selling covered calls. Okay. And what a covered call is, and basically my pitch on it was you manufacture your own dividend, and you take on in what is, in my opinion, a great risk. It's a risk that I am happy to take on, and I'll walk through it really quick, and then we'll talk about what's happened to this trade over the past 2 days. We did this live on the show on Tuesday, so if you want to do the full segment, we did the math, we did everything just like we did on the put selling today. It's like 20 minutes long. Go back to Tuesday, watch the Power Hour, like this stream, like that stream, and we'll be okay. All right. So covered calls. Quick once over. We own shares in my live brokerage account. I own shares of Visa, ticker V. Okay, this is not a stock that I own and am holding because I want it to double over the next 3 weeks, right? It's not like a rippy swing trade. This is just like when I talk about I want to own more high quality, good stocks right now. This is one of those good, high quality stocks right now. Okay, that's why we own Visa. What we did was we sold calls against Visa. Okay, so we own the stock. We then sold calls. The price that we sold the calls for was $2.73. All right, here's our trade. Okay, $2.73. We went short calls, and what does that mean? So we first of all we sold 2 contracts to cover the number of shares that we own. So let's get the calculator up here. Okay, so $2.73, 2 contracts, 100 shares a contract. So we got $546 credited to our account as soon as we made that trade, right? We sold the calls. We got $546. Let's go. Money in the bank. We'll take it. Run it up. That's the move there, okay? What was the risk we took on, right? Whenever we're selling options, we're taking on some sort of risk. What was the risk that we were taking on? The risk is that sometime between now and April 16th, so it's a month away, we did 30 days, we might have to sell the shares of Visa that we own for $240. Okay, if we look back at what the price of Visa was on Tuesday, ticker V, throwing up our V gang here. All right, Tuesday was somewhere around here. All right, it was somewhere around 220. All right, I don't know exactly what, but it was somewhere around 220 in this range here. Okay, and the risk that we were taking on is that we might have to sell shares for $240. That's great in my opinion. In my opinion, that's an amazing risk to take on, right? We might be forced to sell the stock at a higher price than what it's trading at right now, and we're getting paid to take on that risk. Okay, so we sold the call options again, $2.73. We got that credited to our account. We can now, there we go. Ryan Rozbiani in the chat saying what up. But again, we got $546. That comes from selling 2 contracts against Visa. And the risk that we're taking on is that instead of selling the stock right now at 225-ish, we might have to sell it for 240 sometime between now and a month from now. That's great, right? How do we lose if Visa somehow goes from 220 to 300 over the course of a month? We only get upside up to 240, okay? So I am all about call selling, right? If we did this every single month, right? Think about this. If we did this every single month, because you can do this every single month, we get $546, 12 months. That we're getting paid $6,500 a year just to own our shares of Visa and potentially have to sell them at a higher price. Again, don't do this on your YOLO stocks that you're buying the stock because you want it to double in the next month, right? That's where it doesn't make sense because you're going to miss out on that upside. But Visa is one of these high quality core holdings that we have. Somebody in the chat saying, yeah, do it every single week, not every single month. You know, I think fair on that one. And so right now, last trade update on this one. we're up. We've made 61% of everything that we can make on this trade. Okay, so we got $546. You know, when we open the position, if we wanted to close the position now, the way you close it is just like you close a short stock position. You buy back the option contract. All right. 104 times 200. So it costs us $208 to close the position right now, minus 546. So we're up $338 if we wanted to close it now. So we've made 61% of everything that we can make. Once we make maybe 85% of everything that we can make, that's when I'm going to close the trade and sell calls for the next month, right? Just keep rolling it, paying myself $400 or $500 every single month just to own my shares of Visa that I want to own anyways. All right.
Another great trade, Luke. United Wholesale Mortgage covered calls. I've been doing this for a while now.
Well, the stock hasn't been working out for me.
Sell the 11 covered call for next month. Collect 85 cents back.
All right. The 11?
The 11 for next month. I mean, literally that stock, I bought it at $10. I'm down like some cents now. I've been selling calls on this thing like every other month. When it ripped up, I didn't want to sell the stock. I just sold calls. So I sold the $12.50 call for like $1.10. You can just keep on selling the $10, the $11 call for next month. It's a really nice premium. I think that's really high. That's almost 10% of what the stock is trading at right now. Right? If you sell the $10, you're getting 10% return basically a month out. And, you know,
I have to see how many shares of this I have. Not many. 200. Okay. All right. So let's do it. All right. You threw it out there, Drew. I'm not one to back down from a challenge. Did you know that?
Of course I knew that. This is Zinger Nation.
Boom. There we go. All right. Not backing down from a challenge. We already hit one live options trade. We did the put selling. Yeah, not a bad Visa play. Let's go. Everybody loves that Visa trade. So I always do these rippy YOLO trades on here, right? We're talking Vissel all day and stuff like that. But people like sort of the sane mind trades as well. So all right. Let's do this and ask questions if you have questions about doing the covered calls. We're making another live trade on the Power Hour, baby. Let's go. Let's get some hype video going, and I need to take a sip of water. All right, breaking news. Luke Jacoby, hot sauce Luke selling covered calls against his UMCH United Wholesale Mortgage position. So all right, guys, we own 200 shares of this stock. We are going to sell the $11 strike calls that are expiring April 16th, 29 days from now. We're going to sell these $11 strike calls for 80 cents here. Maybe. My trade ticket is loading.
If you really want to get out of the stock, you could sell the $9 call.
I'm not selling the 9
and
calls.
You're basically making, what is that, $10.45 a share? I mean, I don't think that's the move, but
all right. We're running into some problems, Drewski.
Oh, no.
But where's my options chain? My option chain button is gone. It's normally right here.
Interactive Broker said Luke can't trade GameStop, and we're done letting him sell covered calls.
Maybe I got cut off from live trading. Let's try to reload the whole page again. they cut me off from live. There it is. All right, it's back, baby. I knew where that button was. All right, so we're gonna sell the covered calls against our position in the stock live on the show. We're gonna talk through how, dude, what the hell? It won't load. All right, let's try to refresh again. Come on now.
All right.
We have the option chain button.
Well, you're doing.
All right. There it is. All right, we got it. Okay. All right. So here it is. Live account. Okay. So we're selling the April 16th, 29 days out calls against UWMC. We're going to sell them for 80 cents. We own the stock. We own 200 shares of the stock. So I'm going to go over to my sell order. Selling 2. This is essentially making us bearish. The stock is what this is doing. All right, limit price 80 cents. Hitting the sell order. There it goes.
Oh, you're undercutting me. I should have told you about the trade.
And what?
No worries.
All right, we're filled. Okay. So we're filled on this thing. So what happened when we just did this? All right. So 80 cents a contract. Here's our trusty calculator. Okay. 80 cents a contract. We sold 2 contracts that represents 200 shares, 100 shares a contract. So we just got $160 put into our account right now. $160, okay? What's the risk that we're taking? The risk that we're taking on is that sometime between now and 29 days from now, because again, that's when the contract expires, we may be forced to sell our shares of stock for $11 per share. Okay, that's the risk that we're taking on with this trade. We're Jesus. All right, we're getting paid $160 in order to take that risk on. That the stock is last traded at, let's see, it hasn't been fairly well.
940, right on there.
All right, so the stock last traded, check it out. $9.38 is the quote that I have right here. So we're getting paid $160 to potentially have to sell the stock for $11 sometime between now and a month from now. All right, that's the transaction. That's why I like selling covered calls. Again, essentially, you're getting paid to sell stocks that you own at a higher price. Yeah, everybody's saying that I got cut out. I got cut out of Interactive Brokers. Yeah, I guess they turned me back on. But that's why I like selling covered calls, guys, especially on stocks that you're not buying because you think that they're going to double in the next week. That's not really my style anyways. Ryan Rozbiani saying 7 likes to get us to 900. Ryan, I'm going to ask you this. You're speaking for Zinger Nation. If we get to 1,000 likes before I have to go, should we give away a Benzinga Pro? All right. Whoever, we're going to give away a Benzinga Pro to somebody in the chat if we get to 1,000 likes, if Ryan wants us to. Okay. It's his call. So we'll see what he says. But again, there's our covered call selling. So Drewski, we're running light on time. I think Mr. Raznick is about to take this thing over.
I was trying to say hi to you, and then you said Jesus. You got all mad at me.
I was mid-sentence. I'm explaining how covered calls work.
Yeah, they're not as interesting as you think, but I'm echoing, guys.
All right. If you guys would not like us to do any more options trade explanations, put the 1 in the chat, and we'll stop doing them. All right. And Jason just left. He's like, screw this, I'm out. All right. Are we doing the Benzinga Pro giveaway? All right, let's do it.
Luke, I got to get started. We're at 2:00, man.
Oh, it's time to fly?
Yeah, it's 2:00.
All right, guys. So here's the deal. I'll say one last thing. Okay, here's the YouTube stream. I'm going to be watching the chat, okay? Whoever has the closest comment, whoever makes a comment in the chat when we hit 1,000 likes on the dot, you're getting your month of Benzinga Pro for free. That's how we do it on Zinger Nation. Run this thing up, guys. Again, we have to get to that 1,000 like mark. I'll be watching it closely.
Love Zinger Nation. I love Zinger Nation. I'm not sad Luke kicked me off. That's what it's about, educating you guys on how to use options. Luke has made me a lot of money learning how to use options, so why not you guys as well? It's more important. So I agree with you guys.
Yeah, of course. All right, Jason, you've got a big thing coming up right now.
Yeah, Kevin O'Leary, Shark Tank, a bunch of stuff. We're gonna chat it up, and we'll see how we do. Last week was Kathy Wood. A week before, this week Kevin O'Leary. Is Jeff Bezos next week, or is that 2 weeks? I forget what we scheduled.
It's Bezos or Musk? We got to check the
schedule.
No,
Musk is April 16th. You're off on the dates, Luke. See, I got you on one thing. Okay.
All my options expire on April 16th too.
All right, Luke. Enough. Okay, guys. Hey, team. Producer Rohan, let's go. Switch it up. Come on. Get the We're going to start the Raz report. I'm waiting for producer Rohan to put my graphics on for the Raz report, but producer Rohan is taking a little old time, or maybe I have to do it, I guess. Okay, hold on. Come on, team. We're ready to go.
And Jason, you look very nice today.
So if that doesn't fire you up to hear from Kevin O'Leary, I don't know what will. We have known Kevin for many years. Maybe we'll show some photos of that. But Kevin O'Leary, listen, he started out at an ice cream shop. He wanted to be the master ice cream scooper. He wanted to be the manager and work his way up. But then, and this is what I think he told me. But then one day, a manager said, Kevin, come over here. Can you scrape up this gum off the floor? And Kevin's like, what? I got to scrape this gum off the floor? I mean, the way that you're telling me and how you're talking to me. Kevin said, no way. He packed up, left the ice cream store, and that day went on to other avenues. He went home and he decided, I'm going to take the future in my own hands. And what was that future? He went in his basement and started building educational products for kids. Well, that, you start in your basement, you never know where it goes. That company turned into the Learning Company, which he sold for a lot of money and made a lot of people very wealthy. Kevin didn't get tired. He didn't stop there. He could have just stopped, relaxed, chilled out. No, he likes to be in the action. He likes to be in front and center and make things happen. He went to Shark Tank and he kind of got the Simon Cowell reputation. He gave the real facts and people loved him for it. Actually, he got a name called Mr. Wonderful. Some of the most successful companies he invested in are Plated, Groovebook, Blue Land, Honey Fund, Benji Lock. Those are just a few. And then he has a company called Beanstalk, another financial advice, shares. We have so many different things that Kevin does. And so today we're going to spend the hour to learn about not just these companies, but the mindset it took for him to just keep going and producing success after success and not being afraid of failure. So that to me is exciting. And I'm going to shut up. I just want to show one last thing before I do. Where is my Spencer? He likes to change things on me. I can't find it. Where is my Spencer? You changed my videos. Of course you did. Okay. So, well, I can't show it. I was going to show a little fun video I have of Kevin playing the guitar, but I don't see it anymore, Spencer. So I guess we're just going to hand it off to add Kevin to the stream. Here we go. All right, Kevin, how you doing?
Great to be here. Thank you so much.
How did you like that intro?
I thought it was absolutely spectacular. Whoever that Mr. Wonderful guy is, he sounds great.
Yeah, exactly. Exactly. So you look like you're on the set of Shark Tank, but maybe you're somewhere else. I like the look. It looks good. Was I right on my story? You wanted to be the ice cream scooper of the century, and then that thing happened?
Yeah, with one small modification. I didn't leave. She fired me. She said, if you're not going to scrape the gum off the floor, that's the end of your job here. And I didn't want to get down on my knees because the girl I was interested in was working at the shoe store right across. And the whole plan was to get that scooping job so I could, kind of date her after we went. So we were in high school, and I thought, gee, my first day, she's going to see me, scraping gum off the floor. It's going to destroy my street cred with her. So I took a chance and I got fired. And that's when I realized there's two types of people in the world. People that own the store and people that scrape the shit off the floor. And you have to kind of decide. There's nothing wrong with being an employee. You can have a great career doing that. But it's probably not going to give you the freedom that you may want if you take the entrepreneurial path, which is much harder. But you don't do it for the greed of money. You do it for the personal freedom you achieve if you have success. I tell all my students that now. This is not about money. It's about personal freedom.
Yep, I hear you. And so I want to take people back a little further because there's something in you that's innate that, and we're going to talk about everything you have going on now. But last night I hosted a clubhouse in the middle of the night at 1 a.m. and literally hundreds of people came in the clubhouse and I got like 200 questions in a half an hour for you from a clubhouse group. And one of the big things this one guy asked me was about mindset. What is Kevin's mindset that got him from there to there? Like, was it university? What was it that like makes you think differently and makes you like go after things in a different way? Like, yes, you built a company in your basement, but then you sold the Learning Company. What was that? Is there something that you could describe, or is it you just got lucky? I mean, what is it?
I think luck's part of it. I think, just serendipitous karma and all that. I believe in all that stuff. But, I think the whole idea, and I see this in many entrepreneurs that I actually fund, is you make this assumption that you're doing it, because you're trying to get rich. It's the ones that are successful really don't do that. They're so passionate about some mission they have or some business they have that they're willing to work 25 hours a day, 8 days a week. And that generally is very powerful if you're successful and you understand how to manage that process. But the problem is, even if you spend 10 years doing it, like I did in the learning company, and then you sell it, we sold it for $4.2 billion. And there were 10 of us as founders. So it was a huge liquidity event for us. And I remember the next day, everybody came right back into the office and said, okay, what's next? I mean, we don't know anything else except working, and we like to do it, you know. And if you look at the majority of those 10, they're all alive still. They're all working their asses off. They're all doing other stuff, and they're just driven by the fact that that's what they know and that's what makes them happy. They don't have to. None of them have to. And yet they're doing all kinds of things. Some of them, you know, in different sectors. Some stayed in software, but you know, we keep in touch because we went through that experience. It's almost like serving in a war in some ways, and we're very close to each other. And but there's no retirement. I don't know. There's just, I want to keep doing what I do, and they're working even harder. That's crazy. So I know it happens, but I've seen it happen myself.
When the learning company bought you, were you guys out there shopping yourself to get sold, or was it like a partner you were working with? Like, how does a deal like that come about for $4.4 billion plus?
No, what happened was the personal computer price collapsed from $2,600 to $799. Walmart did that. And all of a sudden, we were the largest provider of educational software in math and reading skills for families. We had Oregon Trail, Reader Rabbit, Math Rabbit, Where in the World's Carmen Sandiego, all those titles. And all of a sudden, the toy companies realized that most of the waking hours of these kids that were sort of, you know, 4 to 9 years old was sitting in front of a computer using our software. And they said, wow, we got to get into this game. And so we had, you know, multiple toy companies coming after us and others. And, you know, it was a public company by then. You have a fiduciary duty to entertain offers, and it just became a bidding war in some ways.
I can't believe that you were the guy selling Where's Carmen Sandiego. I remember playing that in like 4th grade all day. I should have known it was you. Oh my God, that's crazy.
It was Oregon Trail too.
Oregon Trail. Well, yeah.
When I remember one year when we got a Walmart order so big that we had to actually hold back one of Michael Jackson's, I think, Off the Wall album.
Wow.
Because we had all the stamping capacity. Back then it was distributed in CD-ROMs, and Bertelsmann was the largest provider globally. And we were a bigger customer than Sony was. And so we said, nah, we're gonna get these discs out to Walmart, you know, something like 120 million of them. And I guess you're gonna have to delay that stamping. So Michael, wherever you are, I'm sorry.
I hear you. All right, we're going to get to psychedelics and all that in a little bit, but the question I'm asking now is, in the morning when you wake up, is there like a thought thing? Like, what's the first thing you do in the morning? Is it like, hey, I got to make sure all my portfolio companies, like, what's the first thing you do, or first couple things you do in the morning that maybe people can learn from?
I get up around 5:30. And I get onto the Peloton for about 45 minutes, and I read all the research because, you know, I work for various networks, including CNBC, and you can't go on to Squawk Box or Halftime Report without reading the research. You look like an idiot. You got to know what you're doing. And I'm a bond guy, a balance sheet guy, and so I review most of the Asian and European bond markets, because the truth about stocks is the smartest money is in bonds because they have duration and quality risk. And so you want to watch if there's any moves in the bond market or the credit market, and it'll tell you the direction of the equity market. So I do both. And then, you know, it's sort of doing what I'm doing right now. I spend a lot of time working, supporting various platforms that mean something to me, and support my companies. The portfolio review occurs every week, 10 o'clock on Tuesdays. So the whole team gets together. We have 36 portfolio companies currently. So we're reviewing the situation of each. That's part of the protocol, how we work. And then my primary job actually is to help my portfolio companies, my entrepreneurs, reduce their customer acquisition costs. I mean, I enjoy millions of followers on all these different platforms, and I like to tell the stories of these companies and explain what they're doing, what their missions are, and generally that model works. And you know, Jason, one thing you know, and you're kind of part of this. This social media aspect of investing, you know, the phenomenon obviously manifested itself in GameStop, but it's all over the place now. If you have you have an investment and you're passionate about your company and you're a large founding shareholder, like I am in multiple companies, I want to support those teams. I want to support those companies. I want everybody to know why I'm an investor, why I made that decision, because I want the company to thrive. And I can use my reach to get a conversation going about what these companies are doing, whether it's in mental health, whether it's in wireless technology for recharging, all of these different mandates. But there's a reason I put capital at risk. There's a reason I did it, and I just want to explain it. But that combination now has become very powerful, and you're actually, Benzinga is part of it. You're well aware of what I'm talking about.
Yeah, and as you've been talking, I got like 16 text messages. They're like, Jason, he said Peloton. So this is not in the interview, but you use a Peloton. Do you like the company, like the stock? I was bullish it because I think the social network is powerful, but a lot of people say, oh, there's be another one, it's a fad. What is your take on Peloton?
No, I tend to own, and I own that one too, positions in companies where I use the products. It's sort of, I understand their business model. I've had a chance to, part of the CNBC stuff, meet their management. I don't go to a gym anymore because I have a Peloton and elliptical in my home, and I can use that time far more productively. And I think that's one of the reasons I had to wait, 9 weeks. So that in a normal situation, I'd say that is crazy. But the demand, it's not just, the whole COVID thing and being locked in your house. It's really about working from anywhere. And so now when I shoot, Shark Tank, I asked that a Peloton be installed, in my dressing room because I have an account and I want to use it when I get I need exercise, and it's a very efficient way to burn some calories and get some aerobic exercise.
Are you on the bike or running?
I do elliptic. I do 45 minutes of Peloton and about 15 minutes of elliptical. So a total of about 400 calories burned. And I've got or a ring and all that stuff. And I care what I eat. And obviously I'm an O'Leary fine wine, so I care about how many calories I take in drinking wine, which I do every night. So all of that stuff comes together. It's sort of a lifestyle thing, but I just want to use my time efficiently, and that's part of the story.
No, that's where you're reading reports. Now we're going to move over to mental health, but before we do, I got to play a little thing. All right. So psychedelics, mental health, MMEDF or MindMed. You get on a lot of different things, and you get in early. People. I have all types of questions around this. Will you give your thesis on MindMed and psychedelics in general? What got you confident in this, that you wanted to be this as one of your next big ventures?
J.R. Rand, the CEO, approached me a long time ago with this insane thesis. I thought at the time that psychedelics from the late 50s and 60s were actually very powerful medicines, but got basically sidetracked by the whole psychedelic overdosing movement. And now the research should come back towards medicines, and he wanted to form a company that would do the research because he knew that and I know now that there haven't been any new medicines for mental illness in 35 years. We tend to sedate or drug people or give them Ritalin or Zantac and all these drugs that are just terrible for kids or people that have anxiety or opioid addiction or alcoholism, whatever it is that's afflicting them. He claimed that there was merit in going through the clinical trial, FDA-approved clinical trials all around the world, to show that these drugs are in fact very powerful medicines that can really help in these massive societal mental illness problems. Now, for example, up to 40% of an evening's patients going into any emergency ward in any major American city do not have any lacerations or physical damage. They're mentally ill. They've attempted suicide maybe or whatever. So it's a massive problem. And so after listening to him, he said, look, I'm looking for early round investors willing to take substantial positions and put capital to work. I had my guys check him out. I have a team that does due diligence, and even my own people said, this guy is really interesting. The deal's really interesting. Alex Kenji, who runs O'Leary Ventures, it's not often that he says, not only do I want my allocation that you loan me, I'm putting my own dough into this. And that was the case for MindMed. So we became major investors and have, we just got, this company's hit every milestone that JR set for it in everything he's done. Last year it was my most successful stock. It was unbelievable. And I still say that it's in its third inning because it's advancing these trials. When you invest in this space, here's my advice to anybody looking at psychedelics. There's many, many, many companies now because it's now been, psilocybin's approved in Oregon, Washington, D.C. There's all kinds of companies trying to get into this. the outcomes are unknown. It's highly speculative. You want to find a company with as many trials, as many molecules as you can find, diversify your risk. So for me, that number one company, it's MindMed. JR was very, very sure and certain that he could get multiple trials going, which is what he's done on multiple molecules. So my risk is mitigated. What I don't like are companies that have one drug, one molecule, binary outcome, 1 or 0. If the drug doesn't work, you're toast. The stock's worthless. So I stay away from those. MindMed is where I put my bet on.
So it's kind of like in the venture capital space, you invest in 50 companies and 1 or 2 or 3 home runs, and that the same kind of concept.
Yeah, exactly. And I think you're going to see this sector get indexed soon. There's so much interest in it at the institutional level. The institutions are all looking at it. You know, remember, as a recreational drug, it's a Schedule I narcotic, so it's illegal. But none of these companies are pursuing recreation. MindMed isn't. Their mandate is a medicine. So they work very hard on going through the FDA approval process, and they have relationships with Langone in New York. And I mean, the company's really killing it. They're doing a fantastic job. And look, I'm biased because I'm a shareholder, of course. But I think if you're going to put money in a highly speculative sector like pharma and early pharma, which is what MindMed is, you better have a lot of trials going on, not just one.
Yeah, and I know MindMed applied for a NASDAQ uplisting. Any updates on that you want to break?
Well, I'm just a shareholder, so I don't know really what's going on internally, but I see no reason why NASDAQ wouldn't be interested in this new sector. I'm sure there's going to be multiple companies. The thing I like about the NASDAQ exchange, because I've been, many of my companies have been public, and I've been on all the different exchanges. NASDAQ maintains an entrepreneurial spirit. It's got this kind of, we can get it done. They're very heavy in compliance, obviously, but they have the companies that are entrepreneurial, like MindMed. That's where they should list. That's the community of companies that are on NASDAQ are very, very entrepreneurial in nature. And I salute the exchange for that, because they have built that into their culture. They build that into the way they look at new offerings, and they try and make it balanced across sectors, and in a way that just seems to happen naturally. So it's a big shout out for them, but those guys nail it. NASDAQ is the entrepreneurial exchange globally, I say.
Yep. Got it. Now, switching from MindMed to, what is your opinion on the Biden stimulus package and then potential of the raising taxes? What do you think that's going to do to the economy? What's your take on that?
I think the stimulus package that we've just signed into law is making a huge mistake, and I'll tell you what it is. It's trying to resuscitate an economy that no longer exists. The 2018-2019 economy is not worth investing in. America 2.0 has emerged. It's a far more digital economy, a far more direct-to-consumer economy. Many consumer preferences have changed, and yet here we are trying to bail out airlines yet again, or keep defunct movie theater chains open with money that taxpayers are just throwing out of a helicopter. We're sending checks to people that are already gainfully employed, that are above the national average of income. I don't understand why that has anything to do with COVID. I mean, this bill has so little to do with COVID, which was the paid package on it. They basically said this is for COVID, but we've got $380 billion bailing out poorly run states. You've heard all this rhetoric before. I found $300 million to study how animals feel about COVID. What the hell is that? I mean, that's just a complete waste of money. And there's plenty of that in this bill, full of garbage. And what the risk is, it's inflationary. But at the same time, now that it's here, you have to realize that, my attitude is the economy is really strong right now. I think we're going to have a GDP growth of north of 7% in Q3 or 4. And it's going to come back really quickly. And we basically put a lot of money to waste on this bill. I would have liked to seen just 2 mandates. One, if it cost $1 trillion to get everybody vaccinated 3 months earlier, spend that. And anybody that's been displaced and unemployed, I said unemployed, I would have supported them till they find new jobs, including airline employees, because there's going to be a place for them in the new economy, and nothing else for anything else. Those are the 2 things that are holding back the economy. So that's how I would have done it. That would have maybe been a package of much less than $1 trillion. It could have been 800 billion or something, because Biden's doing a great job getting these vaccines into people's arms. And that's what he said he was going to do. But the rest of this money is a waste.
And Kevin, we're here in Michigan, in the county I live, Oakland County. They have no budget shortfall, but they just got a check for $290 million from the government, and they don't know what to do with the check. They literally, and this is multiple counties. And so what happens there? I mean, just gonna be so much waste. I don't know if it's inflation. I don't know. Like I mean, I know at one point you were running for in Canada. I mean, we wish you would. I mean, people keep saying get Kevin to run again, but do you ever want to run again? Is that like?
I never say never to anything, but that experience cost me millions of dollars. I don't speak French, so I couldn't get the 78 seats in Quebec. Quebec is the Florida of Canada. It determines who the next prime minister is going to be. You got to get at least 23 seats there. I didn't, so I knew I was toast. But at the same time, that may change one day because there's so many different, ethnic people. Including me, I'm Lebanese, Irish. So, I mean, that's why, my parents went to Canada. I was born in Montreal. I moved down to Boston in the 90s. But still, I remember it fondly, and I thought I could have done a great job with a majority mandate. But politics, and I've said this before, Jason, I warn everybody to think about this. I understand celebrity. I've been doing this for a long time. I understand that people may not like Mr. Wonderful on Shark Tank because he's a mean shark. I get all that. However, politics is different. When you become a politician, 50% of the population hates you, and some people want to kill you. And it's a very crazy, crazy thing that I was not expecting because I was used to the whole, celebrity thing. Politics, whoa, that's a whole different ballgame. So I'm not sure I want to get into that again. That was just too crazy.
Okay, we're going to get to O shares in a second, but I want to go to a Pacific stock for a second. Hold on one second.
You pay for this thing.
I know, but
no one tells you
anyways,
websites.
I love it. I love the car. Now the stock is crazy. I mean, why would you pay that multiple for a company that makes no money? And I'm just, Elon Musk is a freaking genius. He really is. And I tip my hat to him, and that car is a beautiful thing.
Okay, so this is you were at our office like say 3 or 4 years ago, and you didn't like Tesla because the multiple. But then your son got an amazing internship, and you started researching the company more, and you said this company is actually a data company. And before the crazy run in Tesla, maybe it was a year and a half ago, you changed your mind and said, I'm going in Tesla. And your timing couldn't have been more perfect. Can you talk about how like some people get so stuck in their opinions and they won't change their mind. They won't use different knowledge to change it. Can you talk about your thesis on Tesla, but how you take these differing viewpoints and you're not afraid to change?
Yeah, the scary thing about you, Jason, is you have this tape. That's how long you've been around. So it's good on Benzinga. It's a hell of a platform, but anybody coming on here has to know that you've got stuff in the vault that's scary. I get it. But let me answer that question because it's a very good one. That day, I believe it was that day, I was on Squawk Box with Kathy Wood, and in fact had a chance to talk to her today about that event. And she was the hammer on Tesla at that time, and I was, in fact, discussing shorting it. But the borrow was really hard because so many people were short the stock. And when I got home, my son, it was lunchtime, and we were watching the stock was correcting because some analysts, did a downgrade on it, and it was trading at like $238 pre-split. And Trevor said to me, "Look, Dad, you don't get it. It's not a car company. I mean, I've worked there for the summer, and this is an incredibly entrepreneurial team that I work with. This company gathers data. It's in it for the long run. It has incredible battery technology. It has all this stuff he was spewing." Because I said, "Well, you're talking the book. You're working there. I think the thing's a joke. It's so expensive." He said, "Why don't you just shut up and buy some stock? You can afford it. I can't. And just consider it a data company. Think that it gathers its information, the resolution of what it sees all around the world. Every mile that a Tesla drives gets better. That's extremely valuable for autonomous driving down the road. Why don't you just think about that for a minute? And while you're thinking about it, go online and buy a whack of this stuff." I did. I mean, I said, maybe the kid's right. I don't know. And yeah, the kid was right. And so was Kathy. I mean, and the problem is I have this mandate that I manage my own, operating holdco. I never let a stock become more than 5% of the portfolio. That stock was a nightmare for me. Every week I had to sell more to keep it at 5. So my cost base is 0 a long time ago.
Why do you do that? Why, like for your own thing? Like, why did you have a bad experience? Like, why not? Like Tesla's 35% of my portfolio. That's probably really bad. But how are you so disciplined?
So the reason is my mother taught me this years and years ago. Because she was not a classically trained analyst or anything. She just had this rule: 5% in any one stock, 20% in any one sector. And the reason that has really worked for me is that you're keeping in the game on the Tesla. You're still at 5% weighting as it goes and goes and goes. You're taking that capital as you keep it trimmed down to 5, and you're investing in Zoom, or you're investing in DocuSign, or you're investing in Adobe, or you're keeping your port and or Palantir, and all these names that I invest in, and I'm basically harvesting my winners. My cost base goes to zero. And Georgette's right. I mean, my outcome has been spectacular because I've got all these, but I'm always redeploying my capital. I'm always looking for a place to put it back to work. And she, look, it saved me in the big downturns, in the tech crash and all that stuff. Listen, you listen to your mother. What do you do? And she's been absolutely right. And so that is I had to sell down my real estate portfolio. It got up to 31% of the portfolio. So I before the pandemic hit, I was selling down to get it to 20. And then we kept selling as we started to see the impacts on commercial real estate, climate control, storage, hotels, all this stuff that I'm glad I don't own now. It's down to 8%, but I got a whack of cash I have to put to work. And so now I'm looking for new opportunities.
Good. You guys hear that? We'll get to that. Now we're going to get to something special that Kevin has. Here we go. All right. These O shares have been just hitting it out of the, I want to say effing park, but that's the honest truth. That's honest truth. I remember actually, Kevin, when you were getting these things going, it was actually at this event, or this was part of it. Ready?
Been balling a shiny SPAC, steel jackhammer, been chipping up
rocks for the great highway. So this was Kevin. This was Kevin at the Benzinga FinTech Awards, playing the guitar in front of a packed 1,000 people way back when, Kevin. And that was a YouTube celebrity. I don't know if he still is. Anyway, O shares. I mean, there's so many things I could say. I mean, OGIG, OUSA. I mean, all of it. And I remember the thesis with your mom about dividend stocks. But like, what's your take? Like, how do you decide what money to put in each one of those things? Like, if someone's listening right now, because I've had about a bunch of questions about the ETFs, how should they think of how to allocate money into O shares?
Yeah. So the reason I became an owner of an indexing company, because that's what O shares does. It designs indexes. It's sort of financial scientific rule development, and then it creates ETFs. And I wanted to be part of that so that I could. My whole thing about my trusts actually are nowhere near as speculative as the stuff I do in private. All the Shark Tank companies, all the other investments I make. I have to find a way because I have generational skipping trusts that support all kinds of charities, family members, and whatever. And we distribute 6% a year. So for me, it's not trying to beat the market. I'm trying to find ways to preserve my capital. So my largest holding for equities is in an index is OUSA, because it looks at all the S&P 500 companies and says, okay, which ones are broken, which ones return on assets are declining, which ones are getting hammered by policy or whatever, and it's showing up on their balance sheet and in more debt, like the airlines or like the energy companies. And I only want to own the ones that really will continue to profit, reduce debt, and have high return on assets. So that's only 100 of them. So out of the S&P 500, I own 100 stocks in OUSA, and that's 40% of my portfolio. And it pays a distribution. It's in the form of dividends and profits, but it's really designed to. I don't want to participate when the market corrects, and it will. It always does. I don't want the drawdown. I don't want to participate in 100% of the drawdown. So the S&P goes down 30%. I want to participate. I only want to go down 20% or less if I can. And that's the kind of thing you get with a portfolio like O shares. So it's not really trying to beat the market. It's trying to protect you on the drawdown and give you stability. That's, really it's the core. Then for growth, and this is something you guys talk about all the time, I don't look at PE and growth stocks. If you looked at price earning ratios, you would have never bought Amazon in the last 17 years. It's always been expensive. The only metric, there's two metrics I look at in a stock, in a growth stock, and a lot of them are tech companies. What is the revenue growth quarter to quarter? Every 90 days, I want to see 20, 30, 40, 50% annualized growth rates, because that's what you get out of a great growth company. And I want to see the quality of the balance sheet go up with more cash because they're profitable. And that's how OGIG came to in existence, because I was writing all these checks to, Shopify, to CrowdStrike, to Zoom. I didn't even know what Zoom was 24 months ago. And now I'm a big shareholder in it, and I certainly use it every day. And, all of these these tech companies had these growth metrics. And so if you look at what's inside OGIG, I bet you don't even know the names of 2/3 of those companies. But they way outperformed the FANGs. They grew much faster. The FANGs are what held back OGIG. OGIG was up over 100% last year. To me, they're only in the third inning. They're not stay-at-home stocks. They're work-from-anywhere stocks, and that's 15% of my employees are going to work from wherever they want to going forward. Some of them have never met each other except on using technology to do so in person, and that's going to be the new America. So I use these ETFs. I'll disclose my weightings. I got 40% in OUSA, 20% in OUSM, which are small caps, so a subset of the Russell 2000, the profitable companies. So there's a couple of hundred out of the 2,000 that actually make money. That's what's inside OUSM, so that's 20%. I put 20% into Europe, 50 companies there that everybody's heard the names of, the Pfizers and the Nestle's and all that. Good balance sheets, that's another 20%. And then for my growth, I do OGIG, 20% there. That's 100% of my equities in these mandates, in these trusts. And hey, it's one way to do it, and I'm very comfortable. I know the people that develop the rules because they work for me. It's great.
Do you ever like one day call up and say, hey, let's put this stock in here today because I think it's going to move in the next 2 weeks, or is that not how it works at all?
That never happens.
Do you have a red phone like the president? You just like
no, that never. That's what I love about indexing. When you create these rules, it doesn't matter. You cannot. These rules determine, as they're tested each quarter or every year, what stocks deserve to be in and which ones get removed. You have no say in that. You either believe in the rules or you don't, and you watch the performance. That's the whole idea. So I own, hundreds and hundreds of stocks. I go to sleep at night. I know every one fits into the rules. And then if I want to do some trade on the side, if I want to, do something crazy with some stock, I just buy it myself and I have some fun. But it may be one that doesn't make the cut but it's not a long-term investment. It's a trade. I even joined the crowd. I downloaded, I had a chance to call up Vlad over at Robinhood and talk to him for a while. And I downloaded his app. I put $10,000 in there. I put another 10,000 into Bean stocks to see if I could day trade and beat the indexes that Bean stocks puts me into. So far, I haven't been able to win day trading. So I'm not saying you shouldn't day trade, but it's damn hard to consistently beat the indexes.
Oh my God, Kevin, you got the stream going crazy. Vlad, you own Zoom still, correct? You own Zoom, right?
Oh yeah. I mean, Zoom. Look at their numbers. They blow away their numbers every quarter. I mean, I love people saying, "Oh, it's over for Zoom. Zoom is over. It was a flash in the pan." What a joke! These guys are killing it. Now they're going in the telephone business as well, using their platform to reduce your communication costs on the phone. I mean, the company's on fire.
I mean, I'm reading a comment. He's like, Mum, said his name wrong, but he's like, this O-share is exactly what I'm looking for in terms of like an ETF family. My question is, what is the assets under management or AUM now for O-shares, and what was it like 3 years ago?
I think 3 years ago it was like a couple $100 million. I think now it's 1.5 billion, and so or maybe more. I mean, I don't look at that too often, but this is a platform that's built around this concept of preserving your wealth. With the exception of OGIG, which was the star last year, and I think it continues to perform because I don't think this trend's going away. O-shares are boring. They're boring as hell. But if you want to preserve your wealth, I like boring. And that's really what I'm doing there.
Oh my God. I mean, I don't think people realize how hard what you guys have accomplished is. I really don't think. It's not just that it's grown, but your timing and you're taking these risks. And we're going to go to one more. Yeah, this is, okay, hold on one second. All right, the Bitcoin, Kevin. So it's Bitcoin. What is your take? Is this, and guys, I see 75 people have sent me the same thing. Ask them about NFTs. I will ask them about NFTs. Stop it. Okay, let's go on Bitcoin. What's your take? I mean, you guys got one of the smartest guys in the industry around. I mean, this is like, you can't pay for this stuff, literally. So yeah, give your advice on Bitcoin. Whatever Kevin says, I'm doing. Go ahead.
So here's what I've been really slammed by people because I said disparaging comments about Bitcoin in the past as an asset class. But when facts change, I change. And the reason I was so concerned, I originally bought Ethereum and Bitcoin in 2017 in a wallet. Okay. And I watched it for all that period of time. I never talked about it because the regulator, because I'm in many regulated business. O-shares is a regulated business. I'm a chairman of that company. I'm an investor in many fintech companies, many payment companies. And, the regulator determines the tone of what institutions are willing to buy and not buy. And clearly, for years, the regulator was not on board on cryptocurrencies. That's obvious. I don't have to tell anybody that. But lately, things have changed. You saw it first in Switzerland, then France, then Germany, then Australia, then the UK, and then Canada, just north of us, opened up to the first ETFs that only owned Bitcoin in it. And so I felt, okay, we're in a new place now, and I want to, as they say, come out, which I did, and said my allocation is 3% in Bitcoin. Now, something happened, Jason, to me in these last couple of months regarding this that I want to make you aware of, that I think is a big issue for all of us that are involved in this sector. Because I'm so involved with institutions, in constant dialogue with them and sovereign funds in various countries, I got a ton of phone calls. I was not anticipating this, and they were all the same. Where did the coin you own, the Bitcoin you own, where was it mined? Who cares? They said, no. That coin was probably mined in China, where they take coal and they burn it to generate electricity at an ever increasing amount to mine Bitcoin. And they have, human rights issues with the rest of the world, and they have, human rights abuses, and they're a sanctioned country in terms of tariffs of the United States, and you own coin mined there? Okay, didn't see that one coming. And so if you know, and I know this now, every single coin, you can tell exactly when it was created, but you can't tell where it was created. And so to be compliant with these compliant committees that are sitting on top of institutions that care about sustainability, care about human rights abuses, care about origin of assets, including Bitcoin, you completely caught me off guard. So I said, okay, new plan. I have to own my own coin. Virgin coin that I know was mined compliantly. In other words, the most efficient I can own, using the least electricity I can use, and not in countries that are sanctioned in any way, like in China. How am I going to do that? So what I did is I started reaching out to miners, big ones, small ones, big ones, saying, you guys need capital, right? You want to get the latest equipment? New deal. How about I loan you the money or give you the money, become an equity shareholder in your mine, and you pay me back, wait for it, in a royalty. And you give it to me in coin, virgin coin that I own with a timestamp on it, and I know where it originated from, and it's compliant. Those are now, that's the new way I'm going to do coin. So I'm out there talking to every single miner. I'm going to give them fantastic technology so they can go from a 98% or 96% production up to 99.9, be more efficient, use less electricity. And I'm going to lend them anything they need in terms of expanding their operations. And all I'm going to get back are virgin coins in a royalty. That's my new, and since I said that, I've got inundated with calls to institutions saying, wait a second, why can't we do that with you? Why can't we be your partner in compliant mining? Because that's the only coins we can own. Who knew this was coming? Who knew this was coming? This means over time, Jason, I'm speculating when I say this, that maybe the virgin coin with proof of where it was actually made is going to be more valuable than blood coin in China. How about that? That's what I'm thinking.
I mean, that's crazy and amazing all in a sense. I mean, you're the royalty king, so you know how to get those done. People are asking, well, how do I invest in this? And I'm sure you'll have stuff in the future, but the royalty part of it, is that like the effective way that you're going to get involved in it? You don't actually have to own the mining. You can fund the operation and get royalties for whatever coin they sell. Like, how does that work? I guess
I'm going to do both. I'm going to buy miners that need expansion. They want to take equity. I'm happy to do that. Or I'll do royalties. I'll loan them money and loan them equipment and loan them technology, and I'll take a royalty. I'm going to do both. There's a reason they call me Mr. Wonderful.
It's amazing. I mean, those royalty deals, like over the years, have they worked and stuff like for the Shark Tank? Have those been your best deals when you do the royalties?
They have been. I mean, look at the Blue Land, a company like that. They didn't want to give away more than 3% of their company, and they were willing to go into a royalty plan until I got back my capital. They were so successful that I got my capital back in 45 days, and I still own a huge chunk of the company. The royalty structure is brilliant. It's going to work for me in Bitcoin. It's worked for me for decades. And, everybody says, oh, all he wants to do is royalty deals. No, I do all kinds of deals, but I love royalty deals because of the, as I like to say, cash flow. Rolling off my lips, cash flow. Everybody should think about cash flow. That's what you like about royalties. It's going to work in Bitcoin too, but I'm going to be compliant. I will only own compliant coin so that nobody can say to me that I own blood coin or I supported pollution or I supported human rights abuses. I don't want any of that stuff. I don't want that stuff. I want the pure virgin coin, and that's where I'm going with this. So the pure virgin coin. Now, are you ready to announce any miners you're invested in, or is that for later to come? Later to come. I'm negotiating all over the place right now. I mean, this only happened 45, 50 days ago. And then I've also said to everybody that talked to me about, the China coin problem, I will divest of those coins and I will get my 3% at my virgin level so that I can prove to you every single coin I own in my wallet is compliant, 100% compliant. And I think you're going to see many other institutions, Jason, follow. This is not me. This is the Sustainability Committee saying, wait a second, you're supporting countries that have, all the issues I've talked about? No, I'm not. I'm not doing that anymore. I am going to do it on a compliant basis. Now, the value of virgin coin, and I've said this earlier, I think the thesis will be over time, if you can prove the provenance, just like blood diamonds, if you can prove the provenance, there'll be a delta in value, because a lot of people don't want coin that came from wallets that helped crime in any way. It's institutional. And remember, less than 10% of institutions that could buy coin have done so because of issues like this. Yeah, absolutely. And it's like, Jeff Bezos built Amazon, but it's like you're doing all these different things ahead of the game before it becomes a thing. Psychedelics wasn't a thing. Now, wherever I go, my dad, Jason, ask Kevin about MindMed. Oh, well, what's the next one? It's like you're just ahead of the thing. Beanstalk. That was an app for people to look at their finances, invest. Then the ETFs. If you realize people aren't going to have all the time to trade stocks, like you said that you tried with Robinhood. Now, those are all the things that Kevin's doing, and we only have a few more minutes. But I gotta be remiss not to ask. You said you called Vlad during the Robinhood stuff that was going on. What kind of conversation was that? Why'd you reach out? Any things to share about what you think, and any takeaways from that call with Vlad, who is the CEO of Robinhood? Yeah, I wanted to give him support before he went in front of Congress and got grilled by those guys. It's so unfair to take an entrepreneur that was so successful as he was. The number one app on Apple during that period, 20 million plus accounts. You can have your issues around, whether you approve of the way his platform works or day trading at all. But the truth is, you can't short a stock on Vlad's platform. Robinhood doesn't let you short stocks. It's really about safety. And he's an engineer, and I love to work with engineers. And I didn't know if he'd call me back or not, but he did, and we had this conversation. He had his marketing team, and I was really impressed with that guy. He was really a pragmatic guy trying to make it safe for people to learn how to invest, which is what I'm doing in financial literacy. So we're totally aligned. And I also learned many other CEOs had called him with words of encouragement before he went up to that crazy show that was going on in Washington. And I'm very supportive of what he does. And I shout out to anybody that asks me, that guy they should shut him down. No, they shouldn't. He's done something no one else has done. He's got 20 million people that probably had never learned how to buy and sell a stock or build a portfolio, doing it on the platform, which I think should be applauded. And I'm a supporter. And so, we can disagree whether day trading's investing or it isn't, but they're learning something. And I argue to everybody that day trades on any platform, including Robinhood, take 10% of your winnings and put them into a robo app like a Beanstalks and leave it alone. Just let it grow for your future. That's exactly what I did. And I looked at it a year and a half later. I'm like, whoa, I had no idea. I was up like 31%. I'm like, this is like free found money. I left it in there and I'm not looking at it. And agree with you. Vlad has opened up the markets to the average person that wouldn't look at it. And he was a forerunner there. Absolutely. The question I need to follow up on is NFTs. What's your feeling on NFTs, or are you not there yet? No. Listen, I think the way you have to think about it from 30,000 feet. There's a digital asset class that encompasses many different ways of viewing it. If you believe, and I do, that there is going to be a digital universe of assets, they fall into that digital universe. Any way that you can create an asset that can't be, copied in a way that you don't know about is going to have value in the new world. And so when you talk about eliminating counterfeit, which is what you can do with a digital platform like this, you're going to create a lot of different things that people put a lot of value on. And so, you know, it was interesting to see digital art selling for $69 million because, in fact, that model is, you can't counterfeit it. It is a known asset. It is tracked on the blockchain, and the artist who originated it will actually participate forever every time it retrades, which is actually the way many musicians feel about their asset. They want to digitize music so that it's sampled on the chain in a way it can't be counterfeited, and when it's sampled, they get a royalty. That's coming too. And so if you can wrap your head around that and understand it, because many people are not there yet, and it goes right back to the Bitcoin discussion, you are either binary yes, no, and Bitcoin. And if you decide yes, Bitcoin, the next step is what percentage allocation of my net worth or my portfolio? For me, it's 3. And then now this new element I talked about, which is going to come into the digital world in a big way, where was it made? What's its provenance? Did you do it on a sustainable basis? Who knew that was going to be an issue? But it is. And so I'm in the place now where a percentage of my assets are going to go digital. It may be in all different kinds of forms, but the core holding is going to be Bitcoin because the world is treating it as a property. And I think all of these assets are properties in some way or another. Just like your home is a property, your virgin coin will be your ownership in an asset that I believe will grow in value over time.
Okay. Before I ask my next question on another one of your company's Start Engine in 1 second, the question I want to ask first, do you think, I mean, we have Benzinga Pro. Do you think that the retail trader will ever be fully on a level playing field as prop traders or hedge funds? We're trying to do that with Benzinga Pro, but what's your thoughts on that?
Every day it gets closer. Every day it's more democratized. It's proof in what happened with GameStop. I mean, you know, when you get a sophisticated group of individuals that may not have a lot of money, but they have enough to actually buy some shares, and you have millions of them, they can cause chaos on a heavily shorted stock that some professional hedge fund manager, some, you know, considered smart money, not looking so smart anymore because they never saw this coming. And they got slaughtered because of the herd just basically saying they did their own research. They found a stock with a very small float, very illiquid, that was heavily short, and they went after it. And now, not everybody made money, but a lot of people along the way timed it properly. And I think this is a never-ending problem for hedge funds now, and a new way that everybody says, oh, the algos will solve this. I'm not so sure. I think the new technology makes it easier and easier for the individual that's willing to do the research to go out there and compete with the so-called smart money. And
I mean, yeah,
that's it. And
that's why Benzinga exists in the sense we're for the people, by the people. We like a lot of the questions I've asked you are from over 1,000 questions submitted by our community over the last 2 weeks. A lot of the
well, let me do a shout out for Benzinga, because I remember when we met years ago, and I thought this is incredible. It's kind of like a platform for entrepreneurs and to support nascent companies as they grow. And you've come into something else now. You're kind of like your own digital universe, and you're competing with all the big guys, even Reuters. I mean, I listen to your feed all the time to get new information, and you're doing a hell of a job doing it. But I don't think even you, Jason, saw that coming. I can't imagine you thought what you have now is what you started with. That's just the digital pivot going back and forth. And now for every company, including MindMed, I tell the CEOs, you got to get involved with Benzinga. They have a huge reach to early investors. And you know, that's what I told JR, and you interviewed him and everything else. I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there in a must-do campaign to get information out about companies' missions.
Yeah, and Kevin, the funny thing is, you know that Tesla clip I played, and you're like, oh, Jason, you have these clips? That clip, I turned off the comments on it. It was from like 4 or 5 years ago. It was one of my first live interviews ever. I got ripped on to shreds because I took questions from Twitter, and people were tweeting, and I had my phone. And so the people who were watching it on YouTube said how disrespectful I was, that I was like, they thought I was texting people, but I was really reading questions on Twitter. It was my lesson that I learned that if you're going to do questions from Twitter, you have to have a big screen in front of you or something else, because that video has like 200 or 500,000 views. I had to turn off the comments because it was literally just a rampage on me about looking at my phone when I was interviewing you. It was my first real live interview with you. That was 5 years ago or something. No. Did I expect we'd be here and have 25 million people coming to our site a month and all that stuff? No, like I didn't. And you're right. And so, and it's a different world out there. And that's why there's alpha to be created here. I mean, you said you're investing in miners on here, and the community is going crazy. They're writing all these different US miners, Hive, this one, that one. Oh, we should look at this miner. And that's where it goes. And then maybe eventually it gets to these other networks. But like, this is where it starts. We had Kathy Wood on 2 weeks ago, and everyone was taking our clips and putting them everywhere. And so, totally agree with you. I didn't see it all coming. For sure not. For sure not.
Yeah,
or I would
listen, you did it, and that's the great executional skills are really hard to find, frankly, because that's the number one thing I look at on these nascent private companies I invest in. I'm willing to put more capital to work if I'm confident that that there's executional skills. And I think in the case of mining, and I know there's a lot of miners, I've been contacted by many, there's a big consolidation coming in the mining industry. There's going to be 2 or 3 big players eventually, because they're going to be under the pressure of CapEx. There's a lot of capital required to really get efficiency. I mean, you want to get your mining costs down below $5,000 a coin. It's not easy to do, really hard. And so you've got to find places where you're not burning your cash on air conditioning, northern Sweden, Denmark, things like that. So it's really an interesting space. But once you're committed to it, as I am, you now have to optimize it, and you have to find ways to be compliant for all the stuff I talked about earlier. So I think this journey continues with you and I and Benzinga, and I'm proud to be part of it. Those clips make me part of the original. The only thing that pisses me off, I don't own half of it. That's a shame.
Yeah, I mean, that's the thing. I mean, we're going to grow 3 times this year. I mean, the last 2 years we've grown. And the thing was, when 3 years ago, we should have restructured our cap table. Had you take out the original investor that for $1 million, and, because like we're now getting like, I mean, we're the biggest vendor of financial news into the brokerage space. Every broker.
Yeah, no, it's what you've done is it always pisses me off when I should have said, I'll take a third of it,
I tried to wow you in that short little time in that little conference room. We walked you down, and you guys, when we walked Kevin O'Leary, we're in downtown Detroit. He came in our building, and when I say Michael Jackson used to have crowds around him, I'm going to tell you there was anywhere from 30 to 150 people running after Kevin as he left our office. We had to get security, and we didn't have enough security. So me and like a few other guys are like walking around Kevin in a circle. I wish I had video of that, because
it's my bad. I should have just, anyways, okay. That's the thing. You can't win them all, but we're still working together, and I'm very proud of what you've done. And everybody talks to me about you. Oh, well, Benzinga said this, Benzinga said that. I remember the days when you were so nascent. You were so early.
Yeah, so early. So the last question, I appreciate the Kevin. I appreciate the nice words. We love you, the rap, everything. The last question is, I just don't want to, I'll be remiss not to ask, one of your companies that you're out there for, the government just changed the law, Start Engine, 1.4 million, I think you could invest, and now it's 5 million. Is that a huge boon for investing? Does there need to be a lot more changes still? What is your take on that? And then we'll let you go, and we'll do this again next quarter or something.
Game changer on the move. The Jobs Act years and years ago was really to democratize early venture investing. The government wondered, why is it that only venture capital firms get all the winners like Microsoft and Yahoo and and Google? Why isn't there a more broad, more democratic way to invest? And Howard Marks, I got to hand it to him. He came up with me. He was a co-founder of the Activision. We were competitors back in the Learning Company days, so I certainly knew him. He did it. He took the Jobs Act and he said, "I'm going to reverse engineer this. I'm going to build a platform and get hundreds of thousands of investors on it, and I'm going to get them first. Then I'm going to bring deals, and that people can shop the deals and build their own venture capital portfolios." And that was when the most you could raise was $1,070,000. Now, most venture capital companies would compete with great deals, great entrepreneurs by saying, if you do all the work for Start Engine, you're only going to raise $1 million. But if you work with us, you can raise $5 million. Well, guess what? The regulator looked at that too and said, we'll fix that. Bang. Now the maximum is $5 million on the first round. So now Howard's got this and I went to see him because I was going to compete with him. I always go see my competitors first, saying, I'm going to set up the Wonder platform. I compete with you. And he said, why are you competing with me? I've spent years getting this platform going. Why don't you become an investor and join me? And I'll make you a paid spokesperson if you believe in the platform, and you'll represent me in the markets. And I went, wow, he's right. You got to listen. You got to listen. So I'm an investor. I bring my companies onto it. I work for Howard on it because I believe in what he's doing, but I want him to be wildly successful because I'm an owner of that business too. And I want to use it to help entrepreneurs. So now you get to set your own, you don't have to take preference shares. You can, the level playing field on the cap table. I can't stand deals where somebody says to me, well, this venture capital firm has a preference over you. Like hell they do. I'm not doing that deal ever. So if you want to get funded, come on to Start Engine and be part of a democratic cap table, in which case there's many customers that become shareholders that don't have to exit in 5 years like all those VC guys. I'm not against VC guys, but I love competition. And I never let somebody have a preference over me as a shareholder in any company. That's not even in my DNA. Why in the world would I let anybody have a preference over me? That's un-American. That's the way I look at it. And so I like the Start Engine platform in what it can do to democratize and let you as an entrepreneur, if you have a deal and you want to raise $5 million, come and see us. We'll show you how to do this and help you and show you, make sure you're compliant. And you'll use this platform for the rest of that company's requirements of capital.
I mean, hearing you say that, like, just has me so amped up. We have to do a lot more then to get the word out, because the good entrepreneurs who have startups and stuff, they sometimes don't go do the research. Like me, they just go and execute, and they don't necessarily go do the research on the investing part. And I'm not saying I'm a good entrepreneur. I'm saying I didn't do the full research when I was raising. My point to you is we got to send that message to the world, because there's so many guys creating companies. And you're right, preference, you know, like I know what you're talking about. And you're right, like these solutions are out there and they're not utilizing them. People are still sending these emails to you. Hey, you want to invest in my company? I mean, 4 guys said I have an idea to pitch to Kevin. Well, Kevin will take it. You can go to Shark Tank, or you can go on Start Engine, or you can send to me and I'll try to filter it. But whatever it is, I mean, this is the kind of stuff that Kevin is on. Kevin, we appreciate you coming on the Raz Report. You're the best. We met you so many years ago. When I first met you, we were like, is he nice? Is he mean? Kevin tells you the facts. You know, 5 years ago, he didn't want to really invest in Benzinga, but he came to the office. He didn't know me from Adam.
A big mistake. It happens to everybody.
But it's all good. And we're going to figure out many ways to work with each other where it's always going to be win-win. And we're all going to make money together. And we're going to have Kevin on more. I know everyone here is a fan of you, and they got to hear a lot more of how you think. They just thought you were the handsome guy on the show. They just thought you were on the show for your good looks. They didn't think you were actually, they didn't know you knew all this stuff. They're like just super amazed. They're like, how can I see more of Kevin? Well, we have more interviews on YouTube and articles. Go look at them in the past. Kevin, thank you for coming on the Raz Report. You were the man. Have a great day. Check out O-Shares, guys. Check out Beanstocks. Check out everything Kevin does. Start Engine, the Shark Tanks on Fridays. That's it. So, Kevin, thank you for coming on.
Anytime, Jason. Thank you, my friend.
Yep. Thank you. Have a great day. Now, the rest of you guys, make sure you like and subscribe to the channel. This is the Benzinga channel. We go every day from 8 a.m. to around 5 p.m. Like and subscribe. There'll be a lot more coming. We had, Kathy Wood, Kevin O'Leary. We are serious about Elon Musk. We're serious about other really large names coming on, and you're not going to be able to find out unless you're subscribed and liked. You're not going to just get alerted from a notification if you don't have that bell turned on. Turn that bell on, get subscribed, share with your friends. The only reason we can do this stuff is if you're here to support the channel. If you don't support the channel, if you're not here, then we don't bring you these interviews. And the thing that you're probably wondering, well, why should you support the channel? Why should you, I can go look at another channel. Because the thing that we do different, it's for the people, by the people. I have 2 pages of questions here, okay? 80% of the questions that I just asked, 80%, 85 were from the users, from us. Someone said that I asked a question about what does Kevin do every morning when he wakes up, because I was just, wanted it for viral articles. Not at all. That was 11 times people asked a very similar question. What does Kevin do the first thing he wakes up? That is what we're about. Check out Benzinga Pro. That is where you can get real-time data. I'm in the chat room all day, but that's Benzinga Pro. That's our premium thing. Like, think of like a naked Bloomberg. And, and Benzinga may have ETFs, but yeah, if you're interested in working here or joining us on this mission to build better media, to build better way content's delivered, if you have a drive and a passion, and what Kevin said, if you know how to execute, if you're an executor that takes things and runs through walls, send an email to cooljobs@benzinga.com. That's cooljobs@benzinga.com with 3 or 4 bullet points on what you can do. We have a lot of holes and a lot of opportunities to improve, but we have the hardest working workforce. We got a guy named Mitch, Spencer, Rowan, Aaron, who are working in this thing, Envy are working this stuff, doing an amazing job. And this is just the beginning of a crusade that we're on to give better information to investors throughout the day and every day. And that's what we're here for. So if you can help us, because we can't do it on our own, we need Zinger Nation to be part of us. We need you guys bad. Kevin is one of these guys, and we're going to bring you guys smart guys, and we're going to bring you guys people that you never heard of. So the future Kevin O'Leary's, the future Kathy Woods, we bring them all the time. I had a guy, Jack on with ENG and CLSK and Viv. Like, we're going to bring you guys those people that no one knows about really, or a little bit of people know about, and you could profit off their picks. We have a show starting. Catherine Ross on crypto's coming up. Like, we bring those people. I see Catherine in the waiting room, and that's what we do at Benzinga. So I'm sorry if I have too much energy, but I get really excited when I see the work this team puts in to make these shows possible. I don't know if you guys saw that Kevin O'Leary intro video. It was awesome. The whole thing was awesome. So again, Benzinga Pro, you can check out, or if you want to learn more about Kevin's picks and how he makes his decisions, just go on Google, type in Kevin O'Leary space Benzinga, and you're going to see 10, 15 different articles and about disruption, innovation, and building ETFs. Check out those O shares. Those O shares are tremendous, absolutely tremendous. So, and Beanstalks, like, those are things, and that's what we do here. We build information, and we're changing the way people invest. We're changing the way people invest. If you use a brokerage or a platform, if you don't see Benzinga on there, send them an email. Say, I don't see my Benzinga on it. It's like back in the day, cable television didn't have MTV, and they had a slogan, I want my MTV. Say, I want my Benzinga. If it's on Comcast, if it's, whatever, Charles Schwab, whatever, say you want your Benzinga news. If you do that, send an email to powerhour@benzinga.com with a screenshot, your name and town, and we will send you some swag. Again, say you want your Benzinga news, Benzinga information on the platform that you use. If it's not there, then send an email to powerhour@benzinga.com. And we will send you swag, t-shirts, jackets. You have to give your size, okay? And send a screenshot. And that is, again, powerhour@benzinga.com. You can tell your brokerage, tell a website, but that's it. This is for the people, by the people. You tell us the next guests you want on, and we will bring them on. If we can't find them, we will go to their house. I don't know. We will find a way to bring what you want. These interview questions weren't mine. Some of them were, but 85% of them were from the community. Clubhouse, our users, all that stuff. That's what we do at Benzinga. Zinger Nation is not just a media company. It's a movement to change the way information is delivered. That's why we created Benzinga Pro. I thought it was unfair that Wall Street had access to these expensive Bloomberg terminals and hedge funds had expensive, and you guys find out 5 minutes later. Well, that is no longer, and that we dropped the oars in the boat. We're out in sea. And we hope you join us on our boat and our crusade to change the way information is delivered. If you're looking for a job, apply. If not, tell your brokerage, tell your platform, tell your news. You're on the Benzinga mission, and say you want your Benzinga. And now I'm going to pass it off to the crypto show. And that is it. Thank you for tuning in. If you have any feedback for me, let me know. You can give me feedback on Twitter. My name is Jason Raznick. Just do @JasonRaznick or @Benzinga. I know there's things I could have asked and I could have improved on. I always try to look at the feedback and get better. There's a lot of mistakes I make every day, but that is life. If you're taking action, you're making mistakes. Thank you, guys. Have a great day. What's next? Now we're going to crypto, right, Spencer?
Wow.
Wow.
That was quite the transition there.
Wow. that's what I got. Wow.
I'm fired up. I know.
Very difficult to follow that up.
Yeah, I know. We need more energy here. Let's go. We need more energy. We need
we got to pump it up. We got to keep this going.
I don't know. I'm just playing sounds. We need more energy.
There we go.
Yeah. So that was just wow. Jason, that was awesome. Loved it all the way. But to keep the energy up, I actually came up with a bit of a song, but it's Rihanna though, so it's not, it's just the flow. I think we need to record this and have this as the beginning of our shows, like crypto on my mind, crypto on my mind. It's Pour Up by Rihanna, but I just remade it. Crypto on my mind.
Love it. Remix.
That was great. Wait, can we start off just by talking about some of what Kevin just said?
Let's touch on that. That he said a lot
about crypto. I guess I hadn't considered the social or like the ESG ramifications of crypto, right? Kevin was just talking all about like how he didn't want like blood coins, right? Catherine, is this a thing that you've seen other people discuss?
No, actually, that's a very good point. And recently, a lot of like media covered this point, Kevin O'Leary's point. Like, we need to know where your BTC that your mine are coming from, and this is the point that only governments have previously expressed, right? So no one usually cares about where this money comes from. Is, you know, it's money. I mine it, I make money, that's it. But Kevin O'Leary is, I think, the first person ever, if I'm not mistaken, to come up, you know, publicly and say that, because usually that's what governments all around the world want to do, right? We want to know that, but no one has ever said that. So that's like pretty huge.
And he kept talking about like virgin Bitcoin. I guess like I'm not. That's not a term that I'd heard before.
Yeah, I actually have never heard that term as well. If we can get into that a little bit.
I not sure what he was talking about.
He was talking about like virgin Bitcoin. Like do you know? Have you heard that term virgin Bitcoin? Because
no.
You hadn't heard it? Oh man. Okay.
No.
All right. Looks like we all got to learn about.
Let's do it.
So that's not.
So I think.
No, I think what he meant, I sort of thought that he was talking maybe about coins, right? But it's if he was talking about mining, he might have meant freshly minted Bitcoins.
Yeah, Mitch,
yes.
Here.
Yeah.
No, she got it. She got it dead on. It's minted. That's exactly what he meant.
Man, okay. So that was so like I guess this is like a whole new realm of crypto investing and mining now, right? I guess not new is not the right word, right? But like a different aspect that people buying Bitcoin need to maybe consider, especially the more socially conscious Bitcoin investors, right? Should probably consider when they're buying their Bitcoin. And it looks like Kevin is trying to set up platforms. As soon as he mentioned that, man, the chat was going wild with speculation. Oh, he's working with these guys. He's working with SOS.
Yeah, I saw that.
And he wouldn't even say, right? So I guess we're going to find out at, I don't know, in a few weeks or months who he's working with. But whoever it is probably has a nice leg up.
Yeah, you guys got the nice tip on the Raz report.
Yeah, and actually, it's a very ethical point that I love, because crypto is supposed to be anonymous, right? It's supposed to be, well, it's not really anonymous because there is a record of any transactions ever made. So if you know the numbers, or you can actually monitor the numbers, but you don't know who stands behind those numbers. But the thing is with crypto mining and, you know, those virgin Bitcoins or freshly minted Bitcoins is that the ethical question is about environment as well. And this is the conversation that has been ongoing in the crypto space as well, because Bitcoin mining and all other cryptocurrency mining is actually blamed for a lot of, for a huge environmental impact. And that, to mine a cryptocurrency, you actually take up a lot of electricity, a lot of power. So that's a question that the industry should also look into and be very careful about it, because, surprisingly, the industry that has been accused of being the biggest, in consuming power and damaging environment is fashion. But here it comes, crypto, guys. Crypto's number one again, but not the term that crypto wants to be known for, but yet, so we have to be very careful about that. Maybe I'm personally interested in whether there are any other environmentally friendly ways to mine crypto. And I know that companies like Crypto Shares are looking into that, researching on the topic, but not yet. Would you guys be interested in mining crypto with solar power or water power?
Yeah, of course. Yeah,
absolutely. That'd be super efficient. And then I could make money, because I think I did the math with my roommates like a month or two ago. The electricity costs are a certain percentage of the price of Bitcoin.
Madness, right?
So you're essentially when Bitcoin was at $36,000, we were doing the math on what it would take to mine that Bitcoin, how much electricity you would have to pay. We read a few articles, not sure how valid they were, but essentially we came around to the number of $25,000 in electricity just to mine that one Bitcoin.
Insane.
That's a lot. But honestly, when I talk about mining cryptocurrency in an eco-friendly way, I'm hearing Elon Musk. See, this is something that Elon Musk would do probably. Maybe he is doing that. You never know. But this is like, this smells Elon Musk. But then again, I'm very surprised to see Spencer today. Hi, Spencer. Wow.
Had to bring Spencer in. It was tough to follow up Mr. Wonderful, so we had to bring up the second best guy.
Oh, stop it. Catherine, I want to ask you about what Mr. Wonderful said about non-fungible tokens. It seemed like he was he didn't really kind of answer the question, right? He said he likes the idea. He said he could theoretically invest in NFTs in the future. Didn't really seem to poo-poo the idea at all. He seems to like it as an asset class, which I thought was super interesting. So, do you agree with that general sentiment?
Yes. I'm critical in terms of, whether you should own digital art and what this actually means. We have touched this with, Aaron previously, but yes, I would support that point of view. I'm not a fan though. Like, if it costs a lot of money, I don't really understand why you should, waste your money on, okay, waste is not a pretty great verb, like spend your money buying, digital art. But if it's something that is accessible as Benzinga NFT, for instance, then I would definitely buy it and be proud to own it. But, I'm not ready to spend $79 million on something that I can't actually touch.
Yeah.
Would you spend that kind of money?
If I had the money, sure, why not? You know what I mean? Like if I could afford to spend, hey, what's that Jay-Z saying? If you can't afford to buy it twice, you can't afford it. So if I had the money to spend $50,000 on a piece of digital art, sure. I mean, but I don't, so I'm not going to be doing that. The stimmy ain't that big.
I got a question here, and it's interesting because you guys are talking about NFTs, but isn't this the same for Bitcoin? You never actually hold it.
I know. I knew what I was, when I was talking about it, it's gonna come up. I mean, where Bitcoin, as you can use it as a payment option, and you can pay, you can acquire something. So for me, it has, value. Maybe not valuable. Like, it's utility for me. It's usage, so I can actually use it for something to own. But I'm very old school, so don't quote me on that. I'm just very old school. I love books, little books. Like, my microphone is actually on the book, so you know what I'm saying. But yeah, I'm critical about this.
I think you're pointing out the liquidity issue,
or lack thereof.
Yeah, lack of thereof. Yeah, exactly.
Yeah.
So,
I mean, hey, it's like we're in like the first inning of this NFT. Like, maybe we're in like the third or fourth inning of Bitcoin, but we're in like the top of the first of NFTs. So who really even knows? Like we can't even really fathom the possibilities. Like, we know art, right? We know art, but that's the only use case that I've heard of for the moment. But it could be like, who knows? Like, there could become a time where you go to a sporting event, and that game was like the best game ever, right? And it's super exciting. And then you have a video of that game that you were there, and you can maybe just resell that. You could just resell that clip on your phone that you took because you were at this amazing game. Like, the possibilities are kind of endless in that way. So that's why I'm excited. I'm like you all. I think spending $100,000 on a piece of digital art is kind of silly. But that being said, if you have the money, into your money, do whatever you want. And also, we don't really know what this could become. And so I think it's a cool concept.
Yeah. Oh, actually, sorry, Aaron.
Go ahead.
I've interviewed, I wasn't on a panel yesterday for a Hong Kong summit with CEO of Abra. So it's a pretty big company in the space of financial services company, custodial cryptocurrency wallet and exchange. So he said that obviously it is a bubble, like NFTs are a bubble. And he actually bought some of that. I think maybe some baseball cards. He didn't actually reveal what exactly he bought, but he said that he owns several of them. But he said it's a bubble and it's overpriced right now. But in the future, he sees this just as another way for artists, creative professions to earn money. And it's gonna become a little bit less in price, but it's definitely gonna stay.
Wild Boy in chat's already thinking of the fraud the fraud, the potential for fraud here. If your digital is based on a painting and they sue you, hey man, anything can happen, right? We don't know. That's kind of the point, right?
Kevin O'Leary did bring up that this would be, or NFTs could be a great way to regulate copyright management, or is a useful form of copyright management.
Mm-hmm. Yeah. Did you know there's a claim that this purchase, this $69 million purchase of the Beeple NFT was actually used to pump a coin? So, and a financial journalist looked into that, and we sort of covered that there's a suspicion that actually the person who has bought this art, the personality has been revealed, and this is something that we're going to discuss a little bit later. But he also accused of pumping a coin, so using that NFT. So you never know. That's a very good point to the guy who commented on this. And one more important thing, I interviewed a lawyer in the crypto space because it's pretty obvious to sort of ask a question: what kind of rights does an NFT art owner have? And he said he doesn't know. It's a totally gray area. You never know what's going to happen. So his advice was actually to be very careful with what you acquire, because the SEC and Supreme Court, as he mentioned, can actually come for your belongings. So be very careful.
There is no legal precedent for any of this.
No. And so the way it goes, he actually said that for a precedent to become a precedent, you have to lose a case in court, and then you have to appeal. So that might be an appeal court in the state or a Supreme Court. And then, only then, if the previous case is overturned and you get an appeal, this becomes a precedent. So it can take at least 5 years. So be very careful with that. But this is crypto.
Is it worth it? Is it worth it?
I don't know. I'm not sure.
All right. So enough of that. I'm sure you guys had things you actually wanted to discuss outside of the scope of Kevin O'Leary, and I don't want to take up any more time on that. So what else did you have on your agenda? Because we've got the At The Close show in 10 minutes, so I want to get to other things you wanted to get to.
Absolutely. Let's get into what the coins are looking like.
Yes. Oh, so I thought we were gonna have this like coin on the move thing, but okay. So
we can do that. We can do that.
Let's do it.
And it's multicolored, I'd say. Green and red. Not a very good color though together. So I want to talk about Bitcoin. And where did Spencer go? He left. You left, Spencer?
I'm here. I'm in the back. I come and go. I'm here.
He comes and goes.
I'm here.
Okay. That's what you do. Okay. So Twitter, we have a price target, guys. We have a price target. So a famous Twitter investor who goes by a handle Plan B. He's famous for using the popular stock to flow S2F Bitcoin price model. He expects Bitcoin to reach $288,000 by the end of the year. So
based on what?
Yeah.
Again, stock to flow Bitcoin price model that he invented.
Fantastic.
See, it's an anonymous Twitter investor. What do you want, guys?
I don't know.
See, but he has a following of I think like maybe 100,000 followers. So like he's pretty famous in the space, and there are a lot of anonymous crypto traders and crypto investors that tweet a lot of stuff. So be very careful with that. But he feels that this in his opinion, this is going to be that we're just a little over 3 months into the bull market, and the Bitcoin will not stop at $100,000 and will continue to reach an average price of $288,000. So see, this is not going to be an all-time high, but this is going to be an average price level for this 4-year cycle. So, you never know. And then, but it looks pretty great though. Bitcoin is back on its feet, trading. I'm trying to compose a song as we go. But let's look quickly at Ethereum, because I think we're short on time a little bit. So Ethereum, as we have discussed before, Aaron want this coin to go down so he could buy in, but it's not going to happen according to several.
It looks like it's not happening.
Yes, I'm sorry. You kind of missed this one. So, according to a Messari co-founder, Ryan Watkins, who's a pretty solid analyst in the space, he feels that Ethereum can overtake Bitcoin as a store of value when Ethereum 2.0 overhaul is complete. So, it's not a if or when question, but he feels that it definitely going to happen. So just, watch out for that. Ethereum 2.0 is a proof of stake process, right? And Ethereum can potentially become more secure than Bitcoin. So he expects the price to go as high as possible, all-time high. We are currently at what's the price right now? 1,800.
We're at 1786.
Oh, okay. Yeah, it's just I was getting ready for the show and it was 1,820, but here it comes crypto for you guys. So yeah, see, guys, I want to ask you that question. So what do we usually do? Plus or minus, 1 and 0? I want to see if you guys believe that Ethereum can overtake Bitcoin one day. So let's vote.
Give us a 1 in the chat if you think Ethereum will ever overtake Bitcoin. Give us a 2 if you think that will never happen. You guys are crazy. Stop this show.
I'm gonna go with 1 only because for the moment Ethereum has more practical use cases than
right now. Yes, it's very relevant, especially with the NFT games.
Okay. Oh, by the way, just one thought, again, brought by the co-founder of Abra. Not a lot of people realize, but NFTs are not built on Ethereum only. They're also built on Wax platform and blockchain. So
mostly 2s. We got mostly 2s.
I saw 3 in there, and then I saw 0.
Jerry Watkins, man, you're high on your own supply. Yeah, it looks like it's pretty split.
Yeah, it looks split. A lot of optimism in the chat.
That's like Ethereum versus Bitcoin debate all over again. I get it. Sorry, maybe that was stupid of me to ask. So
no, that was a great question.
Great question.
Okay, Cardano for you guys. Again, Cardano is a proof of stake and peer-reviewed blockchain platform co-founded by Charles Hoskinson, who's also a co-founder of Ethereum. He's a pretty solid guy. Everybody loves him in the space. We mentioned it last time that it was added, like the data about Cardano was added to Bloomberg Terminal, which sort of brought this like criticism all over the crypto space, but it's always critical. I mean, crypto space can be very toxic, but they're very engaged in what's going on. It's not like, if you read Bloomberg and comments on Bloomberg's articles, like, usually nothing. But if you look at crypto media and you can see like just heated debates all over on every single subject. So that's like, woo, that's a space that doesn't sleep and that works, mines. So Cardano actually is doing pretty well. And it was also added to Coinbase Pro. Coinbase is getting ready to go public this year. Again, it's a major US crypto exchange. So after the news broke that Cardano was added to Coinbase Pro, the price went up by 20%. And I just want to bring some stats for you guys. That ADA has railed 23.81% on a 7-day trailing basis, and at price. So, also you're just showing the tweet. Can you show the CoinMarketCap Cardano thing? Here it is. Yes. So Cardano has returned 687.62% on a year-to-date basis. And yeah, beating guys, the 102% returns that Bitcoin has shown. So it's pretty solid cryptocurrency. And, in retrospect, actually, Cardano is a cryptocurrency that is presented by a company that's actually doing some solid things in the crypto space. It is adding value to the ecosystem, and it's not an NFT. That's it. I said it. I'm sorry. Just NFTs are driving me crazy. Okay. 4 more minutes to go. Bank of America analyst slams Bitcoin. 2017 again. Because whenever something huge is going on, we have, investors like Peter Schliff, I think Schilf was the
Chef.
Yeah, Chef. Sorry, the gold supporter, the Bitcoin critic, who apparently does not talk to his son anymore. Who his son invested 100% of his portfolio to cryptocurrencies. But it's always that way. There is solid research on price predictions, the ones that we discussed last time. But there it is, guys. The Bank of America analyst said that Bitcoin is an exceptionally volatile asset, impractical and environmentally disastrous assets that's useless as a store of wealth or an inflation hedge. If somebody in the chat believes that this Bank of America analyst named Francisco Blanc is right, give us, let us know. I'm like very interested if there's anyone who actually believes this. I mean, it's okay if you believe that. It's good. Just interested. Can you give us a heads up if you guys agree with this analyst from Bank of America?
I don't think anyone on the show would probably agree with that. I feel like if you're watching this show, you're pretty bullish Bitcoin.
Yeah, you're probably not here to listen. How dare they talk about Bitcoin? This is like a useless store of value. This is a disastrous and exceptionally volatile asset. So this analyst also think that cryptocurrency is a practical method of payment, and it can only handle 1,400 transactions per hour compared to the 236 million transactions done by Visa. Yeah, we've been there before. There's all the haters gonna hate. And to the point of Beeple Mysterious Buyer, his handle at the platform where it was sold was Meta Coven, reveals his true identity. And I try to be very respectful and pronounce his name, but I mean, his name is Vignesh. I know that, but it's like very difficult to pronounce the surname, so I'm very sorry if I'm not correct, but I think it's Vindesh Sundareshan. And yeah, he said that he bought this because he wants to show that Indians are people of color, and they could be art patrons too.
That's interesting because I just read that India was potentially banning the ownership of Bitcoin or all cryptocurrency.
Absolutely, yes. So this is the regulation is pretty strict, and it's coming. Actually, it has been in the works for a couple of years now, on and off. But yeah, it's definitely going to ban this because this is something that the Indian government cannot control. And I've talked to billionaires from India who, one specific billionaire who worked for JP Morgan, and he's now like a best-selling author. So he said that they would never allow cryptocurrencies to prosper in the country because they cannot control it, and India cannot allow something that they cannot control. Again, it's a quote. I'm not, I'm just quoting people from the space. So he said the point of revealing himself was to show Indians and people of color that they too could be patrons, that crypto was an equalizing power between the West and the rest, and that the global South was rising. I think this is a pretty awesome, idea to do that. But yeah, we'll see how that goes. We'll see how about taxes you're gonna pay on this one. Yes, and I think the last one is very important. Bitcoin miners earn a record $64 million in one day. Again, to the topic of cryptocurrency mining. Spencer, are you looking at time or
keep going?
Okay. So Bitcoin miners are raking in record-breaking revenues right now, earning up to 52.3 million per day on average. Again, 52.3 million per day on average. Did you guys hear me?
Insane.
Yeah, according to a data platform, Glassnode. But at the same time, it shows that miners' profits have risen significantly higher. For example, the current all-time high, as I've just mentioned, for Bitcoin miners' daily profit is $64.7 million. It happened on March 14th. We have a tweet, right? Can you, Aaron?
Yes, we got a tweet. We have a tweet.
It's a very useful tweet. And this month alone, miners earned 54.6 million on March 3rd and 57.7 million on March 10th.
Oh wait, that's not the tweet. That's not the tweet.
Yeah, sorry. Can you see me doing something with the tweet in the doc? Here it is. I
got it.
Okay, perfect. So the the total miner revenue combined block rewards and transaction fees. I'm not sure if you guys mining. If you do, I actually want to do an episode of crypto mining with like biggest crypto mining companies to actually explain how it works and why people should or should not do that. Yeah. So as you can see, miners revenue, has hit an all-time high. But that tweet is from March 13th.
Wow.
So yeah.
Oh, it's more now. It's more now is the takeaway.
Pretty much.
Yeah.
Pretty much.
So it was recorded on March 14th.
Yeah.
$64.7 million.
Game. Okay.
Yeah.
I'm gonna wrap it up here.
Unfortunately,
Mass-
Kevin O'Leary was great, so we had to
Smash
cut
the
the show
like
short.
for Catherine and producer Aaron. Smash the like for them. You should, if you want, you can unlike and then relike. I don't know.
Yeah, I don't know. If you like it, stay liked.
All right.
If you're not subscribed, subscribe down below. Hit that like. That's all we ask.
Yeah,
It's
seriously.
super easy.
Crypto on my mind. Crypto on my mind. We should
Catherine,
do this.
you got to make that song. You're gonna make that song. That's your. Oh, and I want to plug real quick. We're starting a new crypto show Monday night. It's not going to be a news show. It's a crypto trading show. We found a crypto trader, and he's going to just go through his trades in real time. That'll
Awesome.
be Monday night. Everyone, Catherine, Aaron, thanks a lot.
Thank you, Spencer.
PMP at the close. Let's do it.
Thank you guys for watching.
All right, it is time for pre-market prep at the close.
3 consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Joe, we've been talking about crypto, but I've been distracted as all hell looking at this market right now. I am crazy distracted. 3 words. Financial transaction tax, I think, is probably the reason for the sell-off here.
So what are you hearing, Mr. Israel? What are you hearing on the financial transaction? Well, we've been talking about for 4 months, but anyways,
I know,
what are you hearing?
but there was a development today. I guess Senator from Hawaii introduced a bill. Democrat Senator Brian Schatz introduced a bill that would put a 0.1% tax on the sale of stocks, bonds, and derivatives, i.e. options, and also ETFs, I presume. And that hit that came out at like 12:30ish, I want to say. Here, what time is the headline in Benzinga Pro? The headline in Benzinga Pro was at 12:58. And let me pull your charts up here. We can see.
I do have the charts up. Well, we've been talking about that for quite a while, right? On the show, right? Yep. But if you want to stick a big old fork in this market, that's it. Transaction tax.
Yeah. Talk about short memory. I don't even remember Jerome Powell speaking yesterday. That's out of mind, out of sight. Forget that. That's not even on the radar anymore.
What I'm trying to do, I'm trying to get through this week, and I'm just trying to keep the blinkers on because this is a quad witch, right? Yep. And it's March Madness, and it's a year ago we had the meltdown in the market over the pandemic. So I'm trying not to get super bearish for you all here, right? So I'm just gonna wait to see. I'm gonna let the market shake and bake. Right now it's shaking, and we'll look at it and we'll see what happens on the expiration because funny things happen, folks. Mm-hmm. And you just got to be prepared for all different scenarios. Just as far as let's just, break down the market here. Rallied off the open, couldn't get to that close or anywhere near the all-time high. Rolled over, tried to come back, and then rolled over again when that news came out of the financial transaction tax. And we just made a new low for a week on a Thursday. So I can't remember when the last time we made a new low for the week on a Thursday. Oh. A Friday or a Monday is something to keep in mind. But so this Thursday action, the only reason I just don't want to leave heavily to the short side, at least for the remainder of the show, and going into is because of the quad witch tomorrow. It really is. I mean, everyone could be selling here, getting out. Oh, we're going to tank tomorrow. This is the crash coming. And you could wake up tomorrow morning and there's huge buying balances across the board, and we open up 30. But hey, I've been wrong before. I'll probably be wrong again. We are trading down on the lows of the session through Monday's low. So until we get back above 39.13 here, the path of least resistance is lower down to 3,900. So just call a spade a spade. One thing killing the market today is oil. Holy mackerel, Spencer! What did you do?
Geopolitical nonsense is what I think is happening here. I mean, U.S. is mad at Russia. Russia's mad at the U.S. Everyone hates each other, and amidst all that, you've still got to deal with the politics of OPEC and OPEC Plus. But oil giving back a huge chunk of those gains from this year.
Yeah, we had. Here's the thing with everyone's like, oh yeah, we're cutting back on supply here. We're gonna, they're just pumping, they're cranking $60. They're getting everything out of the ground that they can. They're selling every barrel they can right and left. So, supply has to be coming online. I don't even know, are there frackers around anymore? But even that might be showing a profit. So you're going to have a glut of supply, and we'll see where the demand is. If getting back out of the pandemic, if the demand gets back up to those levels, then the supply will equal it. But I just think that's what you're looking at. Crude oil market, gold, that's green. I don't know, up 590, 1732.90. Nothing real special there. Silver, that's going the opposite way. Let's just call this flat at 2605. And Bitcoin, nice range on the day, $3,500 range, kind of leaning on the lower end of the range. Let's just call this flat at 57,980. Those are the futures, folks. That's what I quote in Bitcoin.
All right, so you want to look at what's holding up. And if you look just the performance of the day, you would say, oh, okay, the financials are in the green still. But really the answer is not much. Not much is holding up especially in the last 3 hours or so. Pretty much, if you're in the chat and you see a stock that hasn't sold up, or you see an asset that hasn't sold off in the last hours, let us know. Seriously. Because I am hard pressed to find anything that has held up relative to the rest of the market in the last 2 or 3 hours. I'm having a hard time.
Bill Big D says
UPST is holding up. I bet it is. Yeah, even that's off its high. But all right, Bill Big D, props to you. You found.
What did he say?
He said UPST, the one we discussed this morning, the random earnings one. This stock was $50 2 days ago. It's $112 now. I don't know. And now chat's coming through.
Whoa. This thing just kept on going.
Yeah.
Holy mackerel. Look at that. Just the only thing I want you to glean from this chart, folks, and believe me, I'm not trading this thing. I don't own it. I'm not shorting it. I'm not doing anything with it. Probably will never invest in it. But the only thing I would have said to you is if you were trying to short this thing and it broke above 90, then you got to get the hell out of the way, because that level held up for quite a bit during the after hours and the pre-market. And then where this green bar starts right here, that's a regular session. And it told you very quickly. I mean, I don't know, opened 83.54, went to 82, but it told you really quickly that you were wrong at 90. You were wrong shorting this thing at 90. I had no idea this thing would have this kind of continuation move. New all-time high, but just wanted to point out using the after hours and the pre-market charts, just not necessarily to make great trades, but to keep yourself out of trouble. Another leg lower here in the SPOOs, folks. Selling into the close, just made a low at 0750. I did see a question here about quad witch. Yep. And I know this might be boring for some of you people, but it happens the third Friday of every calendar quarter. March, June, September, and December. If you guys notice the SPOOs and the bonds and some of the other financial instruments, they trade quarterly. So this is the simultaneous expiration of the following instruments: stock index futures, stock index options, single stock futures, which no one really trades anymore, and then options on stocks. So that's why you have the quad witch. You see a lot of liquidity. You see a lot of imbalances. And, Dennis's opinion is, or, his trading strategy is to fade the imbalances. But we won't get those until tomorrow morning. So right now, a lot of people are selling. They're selling into the quad witch. What can happen in these things, if you're waking, overnight, they start buying the index and all of a sudden there's a ton of buying balances, then it could really set up for a new scenario. So that's why I'm not throwing in the towel on the bear market or on, the bull market ending until we get through this expiration tomorrow. So
as a reminder, it's not just a quad witch. It's not just the first real day of the tournament, NCAA tournament. It's also an S&P rebalance. Have these stocks on your watch list tomorrow. Have NXPI on your watch list. Okay,
let's just go through these real quick.
Sure. Okay.
NXPI
is being added to the S&P 500.
Look what they did to that thing. They held it up there for a day and then whacked it, right?
Mm-hmm.
Okay, so just be aware of that. Okay, what else?
Generac, GNRC, the generator company. We always talk about that like every August, every hurricane season. Being
sold
added.
Sold it.
Yeah. Again, just to recap, the funds that track the S&P 500 index are going to have to buy these stocks at some point as close as they can into the close. That being said, that does not mean these stocks have to go up just because the trillions of dollars that are tracked against this index has to suddenly buy these stocks. It could mean they go down. All I'm saying is we don't really know. So have it on your radar. NXPI we mentioned, Generac we mentioned, Pan National Gaming.
Yeah, I want to talk about this for a second.
Okay.
I hope Dave Portnoy isn't listening.
I doubt it,
because this could be it for Penn.
What?
No, I think the
it?
all-time high is in Penn Gaming.
Oh, damn.
Or at least for I would say I would be able to do a lunch bet that this thing, what's the all-time closing high? All-time closing high, and I haven't said this the whole time in this major run here.
140 something?
136.47. The day that it was announced, folks, just why you don't jump in the pool with everybody else.
Yeah.
That day, it closed on the Friday, it closed at 130.47. It went to 142. Closed at 136.47. Barely sniffed that level. The following day went to 137.13. These are the kind of candles. These are the kind of destruction that you see in stocks when they make major turns, where they hit a new level and then they give it back. And you know why? Because you have a bunch of bag holders now. Like you bought this thing at 120 in the middle of last week. You're looking like a king at 140. Okay? You don't look at your account. You don't sign on. You're busy. You go on vacation. You come back to things at 112. There is overhead supply built in this stock. The mania of the Final Four. I might be wrong. I'm not taking a position, but that is some technical damage inflicted. How's Donkey Kong?
Joel, I respect you making a call. I respect it. You could be wrong, but I respect it.
Oh, yeah. DKNG's holding up better, but that hasn't been as ridiculous. So I don't know. Just keep an eye on it. We'll continue to talk about it. Continuing to make new lows here into this session. We can't find a bottom here. Where are the pre-market prep buyers? 39.06. We're right on the lows of the 05.5. We are heading for 3,900, folks. We are not having a good at the close. We might have, if you guys are going to continue to sell like this in the last half hour, then I might just stop doing the show because you guys are hurting the market.
Just to address Minnow, I'm not sure how to in the chat. Here she's asking if you're really being for real about your tone. Guys, Joel is constantly trying to talk himself out of how he feels. If Joel is feeling bullish, he's trying to talk himself out of that. If he is feeling bearish, he's trying to talk himself out of that. He is constantly trying to stay as close. He has his feelings, and he tries to rein himself in all the time. That's how Joel feels about the market.
I try to be a contrarian within my own personality.
Yes. He's got multi-personality disorder when it comes to markets here.
Triple D, I mean, that guy, you say as negative as Triple D, I think he's probably like always the most optimistic, bullish person that I've ever worked with.
He's pretty. I mean, the thing about Dennis is when he's bearish for like 15 minutes, and then he's bullish, right?
Yeah.
So yeah.
But I just want to address that question real quick.
Yeah.
There, and just referring to Dennis's tone and my tone or whatever.
Yeah.
Take the market in a historical perspective. Okay.
Yeah.
We have had just an incredible run coming out of a pandemic. Okay.
Yeah.
The market is discounting. The market is basically saying that everyone's going back to Kohl's, right? Everybody, once they get their vaccine. Oh, wait, what happened at Kohl's? They pulled the rug out from under it.
No, it's the whole market. It's everything.
Yeah. Macy's, okay? Up till, Macy's hit 21. Carnival Cruise Lines, right. And the market is saying that we are immediately coming out of this pandemic and everyone's going on vacation. And everyone's going to be spending tons of money.
Yeah.
That's what the market's saying. So I hope that's, I want to believe that, but there's something, something that tells me that not everything turns out the way it's supposed to be.
Exactly. We never see it coming, right? Like I guarantee you there wasn't a single bear that saw the pandemic coming, right? They may have been bearish for other reasons, and they ended up being right, but for the wrong reason, right?
Me and Dennis were bearish in end of January. We got our head handed to us in February.
That's not what I meant. I meant the people that were bearish all the way up in 2015, 16, all these years. People that we had them on our show. People, you're allowed to be bearish, but think whatever you think. And it could have been the yield curve inversion from 2019. It could have been valuations. It could have been whatever reason. But it wasn't the pandemic. You never see the real thing coming, right? So that's what. Just to finish that thought on what the market is pricing in and how it's never quite that easy. Just to finish up this list here, we mentioned NXPI is being added. We mentioned Penn National is being added. GenRx being added. The last one being added to the S&P 500 as of Monday morning is Caesars CZR. Those are the 4 stocks being added to the S&P 500. I
don't even want to look at this chart. Let's see.
On Monday morning. As of Monday morning, they'll be in the index.
Yeah. That's all the news.
Okay. And then the ones that are getting taken out. So again, the stocks that all the fund managers that track the index are going to have to sell are Flowserve, right? FLS. Let
me take a look.
Okay.
Okay. That's hanging in there. Go ahead.
SL Green Realty, SLG, a REIT.
Yeah, we're not going to need REITs anymore, huh?
Go ahead. Xerox. Xerox has been a very common name to drop anytime. Like, remember when they were adding Tesla? They're like, "Oh, who's going to get taken out?" A lot of people thought Xerox might get taken out when Tesla got added, but it didn't. It's getting It's getting taken out now. Thank you very much, Joel. And then VNT is the last one that is being taken out of the S&P 500.
Folks, and then we talked about this earlier in the week. You got to look at what their composition in the index they're coming out of. If they're a large composition in the index that they're coming out of, then the indexes are going to have to sell that stock, right?
Yeah.
If more people have to sell the stock than have to buy it, then it goes down. So you got to do your homework on these ads, and there's it's just not as easy as it's getting out of the S&P 500. It's got to go up. So do your homework. There's math on this. There's history. So go back and look at it. SPOO's just ticked 39,050. I was looking for 3,900. Missed it by a couple ticks. We'll see if we can rebound here going into the close. 9 minutes left.
Question from chat about Roblox. Why is my Roblox dropping? Man, it's not Roblox.
Why is it dropping?
It's not just Roblox. It's everything. Okay, it's everything. It is Unity, which Buck said he bought this morning. Ticker U is in trouble, right?
Oh my God, Buck's gonna have a losing trade.
Joel, you're so mean. It's not just your.
Hope you're not listening, Buck.
It's not your stock, man. It's everybody. It's everybody's stocks, except for here's a couple. You want some names that are holding up?
No. I want to. Who's complaining about roadblocks here?
Muhammad. And Muhammad and Christopher.
Muhammad, do you look at daily highs on a chart? Do you look at what a stock does? Its third day of trading, it goes to 77, 78. And then one day, when did it get the Kathy bump? That was Tuesday.
2-3 days ago, yeah.
Yep. So it matches that high, goes to 78, right? And then yesterday, we're still living off the Kathy euphoria.
Yep.
It goes to 79.10.
Yep.
So you have three highs basically within $1.10. What does that tell you? That tells you that someone's selling this stock on strength, right? So let's say you were saying, okay, 78 is a halfway decent level, right? Let's see if it sees 78 today. No can do. It opens at 76. It barely gets green on the session. The all-time closing high is 77. And it puked and rolled over like a lot of other Kathy stocks. So, you got very limited data on this thing. Use the data to your advantage instead of saying, hey, oh man, what happened? This stock's down $8. It's a new IPO. It's going to have volatility. It got artificially inflated with the Kathy buy. Made made three highs in the same area. A simple pattern, or not, you can't call it a triple top because it's like a buck and a half away. But when institutions are moving in and out of stocks, they're not as picky as me and say, oh, I got to sell this at 78. They say, hey, they give an order to a desk and say, get me out of 500,000 shares. The average price is 75.5. And then they work the order over a couple days. So just look, keep an eye, especially on a new IPO. I mean, look at the daily levels and see what they're giving you.
At the top of the show, I said, hey, chat, help me out. Give me some names that aren't selling off, that are holding up. Chat came through. Cannabis is holding up. Some of it, not all. AMC is in the green today, Joel. AMC is up 3% today. And at the same time, GameStop is at a key psychological level.
Okay. Nice move here. I did AMX. That's not going to do it for our AMC.
Yeah.
Tight range today. Wow. Is that really true? Is that the range this thing's at? Wow. 1454. You got into this gap area. You know what? I don't know how much upside this has. I don't know if it's going back to $20. But what I could tell you, that if we lose, I can't tell you, this is strictly for informational purposes. If you lose tomorrow's low, or today's low, which will be tomorrow, 1357, your close yesterday was 1356, I would have a little alert set that if it took that out, because your next daily low is 13, and then your next daily low after that is 1234, 1185, 990. So it drops off. So it's holding in there pretty good, a pretty good volume day, but you got a good level to keep an eye on tomorrow.
And then GameStop, Joel. It is perilously close it's perilously at.
Let's see.
Critical level.
200?
Yeah. Psychological level.
Psychological level.
Yeah, maybe not.
Well, I think you have to be crazy to trade this stock, but I would. Boy, these are some quiet ranges, huh? Look at the last 2 days here. He did not get an inside day. You know what? I'm going to hold judgment off on this one. It's too crazy for me.
Too crazy for Joel. All right, guys, 3:56, 4 minutes until Joel and I are going to hop. We've got the Benzinga Cannabis Hour up next. We've got representatives from a bunch of great companies that it's seriously a fantastic show. Jennifer Dooley from Green Thumb. She's a COO. We've got the COO of Driven by Stems, and we've got the CPO of Fluent on the Cannabis Hour at 4 o'clock, top of the hour here in a couple of minutes.
You know what would be a good name for that show?
What?
Whatever you dread, Spencer dreads. You're like my wife. Like I'd say, I got a good idea. You're like, oh, oi.
What is it?
You ever heard of the term, if you got them, smoke them?
No, actually, I haven't.
You've never heard of that term?
No.
Is anybody in the chat ever heard of that term? I bet you'll see if we got some old people in here. That's what I don't think maybe my dad made that up. That's what they used to say in the army, you know, when they were busy. Yep. If you got them, smoke them.
Smoke them if you got them? Okay, yeah. All right, yeah.
All right, what do we want to do into the close here? We only have 3 minutes.
Just a couple. Can you pull up the S&Ps here so we can just see? Because I just noticed that we bounced for the first time in like an hour.
Yeah, because we hit a psychological level, Spencer. 3,900 here. I wonder if the Fed trading room tunes into the At the Close show. We're getting a bounce off 3,900. Boom, made a new low for the week. I mean, that's pretty nice. What was your low here? Your low was 39,0075. So you got a bogey. You got 3,900 overnight. It's kind of hard on the upside, man. I'm gonna have to do some homework after the close to find an intermediate level on the upside. But 3,900 will be important overnight. Below that, not much until 3,850. Remember, we got the quad witch. So, yep, Max knows from the military. We got some people if you got them.
All right, remember, we've got FedEx and Nike earnings after the close today. That's pretty much it on the earnings front. We're just about the end of earnings season. So
sure.
FedEx and Nike, MP Materials, if you care about that sort of thing. And that's pretty much it on the earnings front. Okay, 3:59. Let's do like a couple tickers from the chat. Hey, how did TKAT do today? Did that hold up?
Oh, yeah. Who was a guy bragging in the chat? Mr. Braggadocious. Like, oh, I bought this.
Listen,
Who was that guy?
You know what? Here's the way I see it.
That guy's never coming back in it. Did you guys ban him? Because I told you to ban him.
No, here's the way I see it. If you made a great trade and you want to celebrate, great for you, man. Great or woman. Great for you. Great for you.
Yeah,
you made a great trade. That's the kind of how I see it. It's not for everyone.
I'll just tell you right now, and it's an Amex stock. I'm just looking at this thing, and I don't know about today. I don't know about tomorrow. I don't know in 2 days, 5 days, 6 weeks. But $30 is a level to me, man. You made a low just under 20, a high at 40. You're closing at 30. If this puppy holds 30, boom, 40, 50, 60, 70, 80, 90, 100. If it can't hold 30, 20, 15, 10, 5, 0. That's what I'm looking at. Those are my targets. My targets are 0 or 60. How's that for you, folks?
That's a target. All right, final tally. We are done. There's your closing bell. S&P 500 closed down about 1.5%. NASDAQ closed down a little over 3%. Russell 2000 closed down about 3% as well. Everything from
you got to let me go. I'm going to a digital art auction.
What?
Yes, I'm going to use some NTFs.
No,
I'm going to buy me some digital art. So have fun on the cannabis show.
NFTs. I can't even tell if Joel's serious or not. All right, it's 4 o'clock. Let's bring on Elliot and Javier from the Cannabis Hour, and let's get Joel and myself out of here. Elliot, Javier, what's up? Your show, guys. I'm heading out.
How's it going? You have no sound, Elliot.
Elliot, we can't hear you, man.
It's because I was on mute. I just wanted to make sure you're still on because I was excited. Anyway, welcome to Cannabis Hour. I'm pumped to be here. We've been here literally all week. We'll get into that more later. Aaron, do we have a video to cue us up today?
Yeah.
If so, maybe. I mean, we haven't. What's up, y'all? Cannabis was
Welcome.
Yeah, how you doing today, bud?
Doing great, doing great. How are you doing?
I'm good. I'm good. For everybody who has not been joining us, we've been here all week. This is our first week of daily shows. We've been going Monday, Tuesday, Wednesday, and then tomorrow at 4:30. And then our Cannabis Hour, we're still here every Thursday, bringing the best executives in the space to you all. Some deep insights, some introductions. It's exciting, but a little bit busier day news-wise than yesterday.
Yeah.
We went a little bit deep.
Yeah. I want to jump right into it with a question for the chat. Before we get into Sundial earnings and Hexo, why are stocks down today? What do you think? I mean, we have bills, for banking and insurance for cannabis being introduced into Congress. Should be great news. Still, all major ETFs, right? Like CMBS, CHCS, MJ, MSOS. I'm forgetting one probably, but they're all down. What's going on? Why is the market reacting negatively to what seems to be?
I don't know. I'm getting an echo. What about now? Nope, just me. I don't know if. Anyway, so you may need to mute yourself if I'm talking. Who knows? Anyways, I don't know. I will say, per New Cannabis Ventures and Alan Brockstein's team, tons of companies are showing really awesome signs from Q4. Very robust cannabis industry growth. GTI, we're going to talk about their earnings today with Jennifer Dooley. I mean, just incredible yearly revenue for a cannabis company. To your point with the ETFs, they've been great value, especially for my portfolio. They have been. Maybe I got in at a good time.
You got it in a good time. Here's on the chat, window cleaner saying people are scared and need to take cash off the table.
I get that.
I'm not sure. Another one is blaming it. Freedom is just blaming it on hedge funds.
I like that, Freedom. Everything is the hedge fund's fault.
Then someone called Calm Me Now say there's no way it's possible for the market to go up every day on days like this by the dip.
By the dip, but cannabis, don't sell your rips. Don't always sell your rips with cannabis. There's a lot of upside here, y'all. But honestly, we talked about MedBin yesterday with Patrick and I did. And they turn around and announce a Canadian $20 million raise for funding their Florida expansion. So they leave New York and we're all like, okay, maybe, we'll see what happens with maybe some M&A in the near future. And then they turn around and expand to Florida. Javi, what's up with that?
I have no idea.
What is that? MMNFF, right? Or
Men.
Yeah, I don't know. Anyway, so that was interesting to me. Cresco Labs enters Massachusetts, buys cannabis operator Cultivate for $90 million. Huge market. Cresco was already one of the top MSOs, if not top 5 MSOs. Wouldn't you say, Javi?
Yeah.
Now they're bigger.
Yeah, they also bought some real estate. Today they spent $158 million in total. Cresco.
As Patrick said, how about giving me one of those millions? It's been a very I would say up and down week of news. I don't know, but regardless, I'm seeing great numbers from earnings. So like you look at Hexo, I Cantor still remains neutral on them. Yep. They just bought Zenabis. I think it's a great acquisition. Zenabis I thought was a really strong LP. Hexo buys them, and they nothing's really happened to their stock. I don't know if you can enlighten us there, Javi.
Doubled the revenue in the last year. That is my positive take on it. Again, go to benzinga.com/cannabis to check out which are the technical levels you should be watching at Hexo after the earnings and the spike following the earnings report.
Yeah, and we're going to jump into the guest here soon. Today we have awesome companies. We have GTBIF, Green Thumb Industries. Everybody who knows cannabis knows GTI, right? GTBIF is probably like the top 3 companies globally. STMH, that's Stem Holdings. STMH, super cool, CPG brand focused company, wrapped up an acquisition of Driven Deliveries that really expanded.
I think that's her new name.
Yeah, Driven by Stem. You're exactly right. And then Fluent Cannabis, also known as Consortium, CNTMF. Three really, really cool companies, in my opinion. And we're diving in. Sorry, go ahead, Avi.
You know what's cool today? All three guests are women, and they're all in the C-suite, right? It's not like we got, just women to cover the quota or something like that. We feature women on every show of Cannabis Hour. These three women.
Three guests smarter than me, man. I'm excited to learn. It's going to be a fun show. Before we go, we have a little bit of a theme today on people. People within the cannabis industry. So I thought it was cool to bring up a Weed Week article and research based on actually the Leafly and Whitney economic reports. Over 320,000 Americans work in the cannabis industry. That is kind of a fun fact. More than twice the amount of dentists in the U.S. I don't know why they chose dentists, but that was one that they chose. And then this number.
People to understand.
Guess. I mean, but like, how many dentists are in your phone though? I got like 0.
4.
I know dentist office are my phone. Nobody joke on me there. But this number I thought was really interesting. 12 states. Now, granted, there's only a certain amount of legal states right now, and this number will change in the next few years. But 12 states account for 90% of legal cannabis sales in the U.S. For a total of $18.3 billion in 2020.
Oh, mama.
So this is a killer industry. The growth is real, y'all.
That is totally right.
So that was just a few fun facts for our show today. We have some operational experts, some people experts that we're going to bring on. Avi, shall we get going?
Stay tuned. Yeah, stay tuned. Between our guests, we'll be discussing Sundial's earnings. What analysts think about it.
You go for it, Avi. I'm going to exit the call. I'm going to exit the call at that time. No. So, Aaron, let's bring her over. Jennifer Dooley, welcome. How are you? Your LinkedIn says Chief Strategy Officer. My team insists on Chief Operational Officer.
Yes.
Let me know. What is it exactly?
Chief Strategy Officer. Thank you for asking.
Of course, Chief Strategy Officer. So, Jennifer, or Jen, whichever you prefer.
You can call me Jen.
Miss Dooley. I'm kidding. Jen, welcome to Cannabis Hour. We have fun. This is a fun show. We have an awesome audience of people just really interested in the public cannabis markets. But to get us started, can you give us a little bit of insight on what you do for GTI?
Sure. So support the team pretty broadly. Most closely support the team on our consumer products marketing team from a brand development, new product innovation perspective, our capital markets from an investor relations perspective. What's the story that we tell the investor community about what we're doing at Green Thumb, about the opportunity for the industry, and all sorts of other little things throughout the business, how our team evolves, what could we be doing more in retail environment. So it's I've been on the team for about 5 years, so lots of hats have shifted over the years, but a little bit of everything. A lot of learning, to your point, Elliot.
That's a lot of hats. I feel like you're the overseer of pretty much every major aspect of GTI. Is what that sounds like.
I don't know about that, but
well, if there's any company that's good at telling their story, it's GTI. I see Ben on CNBC Weekly, so
yeah,
it's good.
Actually, just humor me for a second there. For some of our viewers, who are not actively investing in cannabis, right? And don't know GTI. Can you give us an elevator pitch? You got like 60 seconds to tell us what GTI does and why it's great, why people should invest.
Sure. Pretty simply, we believe that if you can sell water at a price premium to people and they'll pay for it, we know for a fact that consumers really love cannabis for a variety of different reasons. So what we're trying to do is turn a bag of weed that you might have bought, in an alley or something way back when, turn that into a familiar product like a snoozeberry or a rhythm vape pen, a Bebo vape pen, things that are familiar that can give consumers an entry point into the cannabis space and healthier alternatives to alcohol, opiates, pharmaceuticals.
So can you also enlighten us in terms of the markets that GTI plays in? And I'll expand further on that in terms of, the product portfolio you have is pretty vast, if I'm not mistaken. So the trends from these markets, Are they similar to each other? Do you all focus on edibles in one market and vapes in another?
Sure. So we have operations today in 12 markets across the country. We're most prominent in the East Coast, kind of east of the Mississippi, these like 2.0 markets that have limited license structure. So limited supply dynamics with massive demand. You've heard us talk about the tidal wave demand. It's very real. And we believe that consumers are different and they need to be spoken to differently and shown different products. And so we have a brand portfolio. At the end of the day, the goal is that if you're shopping with us in Nevada or in Illinois or Pennsylvania or Florida or Maryland or New York, that you're experiencing the same experience from our products with consistency. Above all, brands are relationships with people, and then they're founded in trust and consistency and reliability. So that's our end goal. And the goal would be that just as you walk into a grocery store and you can find that Oreo on the shelf every time, and it's the same every time, it's predictable. That's what we're trying to do with our brands as well. So while the regulations might vary state by state, Pennsylvania, for example, didn't start off with flour. So of course we didn't have our rhythm flour there to begin. Florida didn't allow edibles to start. Now they're opening up the market to edibles. So as the regulations open up and the sky does not fall and consumers demand more cannabis access, we will continue to build our brands across the country.
Awesome. I mean, let's get into earnings. Our audience is very, very finance oriented. You reported earnings yesterday, after the market close, more than doubling revenue year over year. So I have a bunch of questions. Let's start with that one. What's driving such revenue growth, right? Because 100 and whatever, what was it? 115, 116, 133%, 133%.
For the year?
Yes, year over year.
Yeah, 157. So triple digit growth.
Wow. What's driving that?
Consumers love cannabis. I mean, it's kind of as complicated and as simple as that. We're kind of team is busting their butts to provide more supply, but that's pretty simple. At the end of the day, the more that we can produce and sell, there are consumers there who want our products. Most notably, though, the biggest change, if we're talking from a market perspective, Illinois turned adult use. So we view Illinois as kind of a primer on what we can expect from the other markets that we operate in that haven't quite tipped over to that adult use yet. It's a $100 billion opportunity, some coming from the illicit market converting to legal sales, but by and large, people who are new to cannabis entirely and haven't experienced it before, like my mom or my grandmother, who are curious and they want to try it, but it hasn't been accessible to them before. So the adult use market coming up in January of 2020, year one sales for the industry were $1 billion. It's, we think, roughly a $3 billion market opportunity. So we're only, a third of the way mature. So thinking about the runway to go, we're a large player in the Illinois market. So it's a big driver of our business. We're opening new stores across the country. That's another big driver of our business as well. So it's all the markets opening up. Pennsylvania, Illinois are big ones for us. They're massive market opportunities, and we hope to replicate that same exact model in the rest of the states.
And yeah, I have a quick follow-up. What do you think your CEO, Ben Cobbler, meant when he said the fun is just beginning, right? Because is he talking about your mother and grandma discovering cannabis? Is it about states going rec, or like, what does he mean? Because I'm assuming it has to do something more than just like the fun of consuming cannabis, smoking weed, or whatever you want to call it. It's tied to the company financials and the future of the company, right?
Yeah, I would say D, all of the above is the answer. It's exciting to see people who have never experienced cannabis before kind of break down those walls and say like, oh, I could see how this could fit in my life. And it really helps people to find a better night's sleep or get off a prescription medication that they've been on for years. We see people come into their stores with that story every day. The capital markets are opening up for us. We had our US, call it IPO, earlier this year. For us, that's massively exciting from a capital markets perspective, that we are getting closer to having equal access to capital, which is going to fund the industry and will be needed for us to continue to grow. So that was hugely exciting and a major milestone for the industry. So it's all these things. We're kind of turning the chapter. The cannabis story is a long story here, and we're turning a new chapter where the markets are starting to open up. We have regulatory momentum. Consumers are increasingly seeing it as a real viable choice for them. So you have all these really positive things that are going to propel us into the future. And what does that look like? And that's pretty fun to think about.
How much of, I guess, breadth versus depth does GTI focus on? Are you all focused heavily on expansion? And I mean, this could vary from state to state, to Canada, to Europe. Or, and how would you do that? Would it be organic, or would that be through M&A? And I'm not asking you to say anything you can't say, just kind of curious about 2021 future strategy.
I mean, it's not us who'll get in trouble. So if you want to say, investors would not mind.
That's fair, selfishly, but sorry. Yeah.
Yeah, I mean, I think it's a little bit of both. We have an incredible opportunity within our own business. So, we're pretty built out across our footprint, but not capped out. For example, we have another store that we can open here in Illinois. We have a few more in Pennsylvania. We have several more in Florida. We're not even really up and running totally to capacity, even close, in markets like New Jersey and New York. So when we think about step function opportunities to grow our internal business, our core base business, there's massive runway, not to mention filling out the brand portfolio in some of those states that I mentioned earlier that don't even allow some of these product categories before. Just an example of what that looks like from a financials perspective. In Pennsylvania, when flower turns on, because we call it like the pie, the product, how the pie slices up across product categories, flowers call it roughly, anywhere between 40, 50% plus, depending on the market. Overnight, sales increase by 50% because now you have an entirely new product category available that wasn't there before. So there's opportunities like that within our market. And then there's still several states who don't even have cannabis programs yet. And there's a whole there's a whole new frontier. I went to a school in Charleston, South Carolina. And so to see that South Carolina is even, on the table and being talked about from a cannabis perspective is really exciting. There's all those Southeast states, they're pretty nascent. They're kind of square one.
Oh yeah.
So there's a ton of opportunity.
That's such a nice way to say it, Jen. Square one.
Yeah, I mean, there's a ton of opportunity. We're square one, $100 billion opportunity, 300 million consumers here in the US. And there's a lot that we can do.
Kind of piggybacking on that, if you don't mind, Javier, exciting partnership. And I think kind of like, it's like one of those partnerships where like I would email like the C-suites of both companies and say, congrats on this partnership. Because you all just formed a cool strategic partnership with Can, the beverage company. I would say California's probably number one beverage company right now. Just really cool brand, celebrity backed. I mean, what does that mean for you? I mean, what was the draw there? Was it the product? Was it their backing, their brand? I'm so curious.
Sure. And when we think about the new consumers who are going to be entering this space and what's going to bring them in, there's a ton of barriers. The familiar product format, how do I use it? But then you have something like this that looks very familiar. It looks like a White Claw or any other sparkling beverage that you might enjoy. So it's a very familiar format. It's called socially dosed. So it's not going to knock someone off on their first sip, but it's an ease in. And that's, we believe, and it tastes delicious. And so we believe that is why it's doing so well in California, because it's an untapped category in cannabis today. Very early, let's call it less than 2% of sales. So on the surface today, it doesn't look like a big opportunity, but then you pivot and you look at how many consumers consume alcohol and wine and beer and spirit, various forms of spirits, and you see that consumption behavior. Why not? Why can't it be something in cannabis as well? And so that's the opportunity that we see here, and we're super pumped to work with the Can team. Fantastic brand and tastes delicious. So excited for Chicagoans to try it this spring.
Oh my gosh, I wish I was in Chicago. Javi, we probably have time for a couple more questions. Yeah,
I have one from the chat, right? And the other day we had Dina, who is the SVP for government affairs at GTI. I know this is a question that was maybe more geared toward her, but it's just popped up in the chat now. And it's they want to know if GTI is allocating any funds to federal, to lobbying the federal government for decrim or for full legalization. are you doing anything on that front? If so, what, you know?
Yeah, so it's a great question. We are part of some trade associations that have voices in those conversations, but from a day-to-day basis, are we allocating a ton of capital to be part of that conversation versus to build out production capacity so that we can serve consumers? We're going to serve the consumer, and rely and work with our trade partners to be louder voices in those conversations. But we're actively watching and paying attention, aware of what's going on, and all things considered right now, we're super excited about the momentum.
And to kind of bring us to a wrap here, I do want to highlight, GTI has put an emphasis on the community and your own team. So if you wouldn't mind just, chatting a little bit about that. I think you've made COVID vaccinations accessible, and then you do tons of stuff such as donating to charities, social equity programs, but just a little bit on maybe where the importance of that, or where it came from, I guess, the importance of it within your team.
Sure. I mean, it's been part of the story since day one. A big believer that at the end of the day, we're people kind of connecting and serving other people, and having that customer service lens and being good neighbors and good community partners. Cannabis is scary for a lot of people. So from a community perspective, it's really important that we kind of go in, have conversations, try to educate and teach what cannabis is all about, make it a little bit less scary and more familiar. So that's part of it. But also, I mean, broadly, we and the rest of the industry have a massive responsibility to help do what we can do to provide others with the same opportunities that we have that they haven't had before. So largely communities, BIPOC communities and those underserved, I don't know, call it under opportunities, if you will. There's just a massive opportunity for a lot of people to create great economic change, and cannabis kind of sits at the core, like at the center of all of these really interesting topics, and has the opportunity to do a lot. And it starts from the very beginning. Ben, our CEO, has founded an organization about 10 or so years ago called Invest for Kids. So there's always been a philanthropic DNA from the people at the team. And that's something that we look for when people join our team. And it just becomes part of our DNA and fabric, and it shows up in our brands, volunteer opportunities, supporting expungement activities, LPP partnerships, different partnerships with local organizations, so that we can do what we do. We can try to do our part, and certainly it will probably never be enough, but at least we can use our leadership role to be positive, a positive force.
I love that. That's incredible. Jen, it's been an absolute pleasure on. Conversation is far too short, so please do. Let's get you back on soon.
It went fast.
Yeah, right? Man, this is why...
We will change this format, to give more time to guests. So we'll have you back for maybe 20, 30, 40 minutes.
Yeah, done. Jen, thank you so much again. You have a wonderful rest of your day, and we'll talk to you soon. GTI. Thanks.
Bye-bye.
Awesome. So Javi, I mean, what an incredible show we have. Incredible first guest with Jen Dooley, GTBIF. GTI, I mean, one of the global leaders. And, Jen knows what she's talking about. My goodness. Javi, I know you want to talk about Sundial's earnings. I can't let you right now.
I don't know. What do you think? I mean, here's
no. How about this? People have to stick on to the very end to hear you talk about Sundial's earnings. How about that? All right?
Yeah.
Done. All right. Okay.
Here's something I want to know, though. People in the chat to drop a 1 if you liked Sundial's earnings, 2 if you didn't. Reactions were pretty different, right? The shares traded up to 8% in after hours. They traded up till 10 a.m. today, and then they just tumbled. Was it people just cashing in some of the gains? Was it that people looked into the earnings in detail and didn't like them? I want to know.
He wants to know. We'll get to it. We're going to keep moving, though, while Javi is just dying to talk about Sundial.
Not at all.
Stim. Next up, honestly, one of my favorite people to talk to in this industry, Ellen Deutsch. Ellen, welcome.
Hi.
Well,
Thank
representing
you.
STEM, or driven by STEM, not STEM Holdings any longer, driven by STEM, listed on the OTC STMH. Killer company. Ellen, let's just start right into it. A, how are you? And B, who are you?
I'm great. Thanks. Hi, I'm great. Thank you. Privileged to join Driven by STEM about 18 months ago when it was still STEM Holdings. And we have just been on a growth tear. Some of the most fun I have ever had. I do come from the CPG space, love working with great people. We have an incredible team at STEM, really driving our business forward. The chief operating officer for the company. We have a great matrix of brands across contiguous geographies, but we have an incredible story leaning in on how to really service consumers all the way down to their houses. We call it farm to home, and we are very uniquely positioned in the market, and we have a great growth path ahead of us. So thank you for having me here today.
Oh, we're thrilled. Now, I'd love to ask just a quick follow-up question. I'm sure Javi has just tons ready to go, but farm to home, does that differ from vertical integration or expand upon it in a certain way? I'm curious where that term or what's inclusive there.
Sure. Well, the way we look at it is we want to always deliver superior product to cannabis consumers, both current consumers and new and emerging consumers. So we are very focused on our cultivation activities, of course, our proprietary genetics, our great agricultural team, and we have built the company in a way that allows us to have best-in-class products, strong focus on our brands. Coming from CPG, everything is about brands, your brand equity, the love and trust that consumers have for you so that we can really expand state by state. And so our vertical integration actually starts a little bit before, because we went out, we secured phenomenal properties. We grow organically. We have brands that are certified organic, such as it exists in cannabis today. It's all about that superior quality for the consumer, whether they want flower or pre-roll or concentrates or edibles, which are on fire, or beverages, as you just heard. And we have core competency and capability in all of those segments, and a great management team that can really execute against those objectives across our ever-expanding geography. So the reason we say farm to home is we are so excited, and the reason we're now called Driven by STEM was our recent acquisition of Driven Deliveries. And you may know their brand Buddy. Buddy is exactly what it sounds like. It is your friend in the cannabis community for the best products, the best brands. It started in California, the largest cannabis market, right? And we're now about to expand that into Oregon, where STEM already has a very strong foothold. So you can count on us to deliver the best brands, our own, as well as the whole family of brands in each state's community, because we want to deliver that value for the consumer. But we have such love for our brands, and this gives us a great way to control quality all the way from the farm, how we set up our farms, the organic growth, the way we really take care of our employees, how we really process with the greatest care for all of our products, get it out to the shelf in our dispensaries as well as other dispensaries, and we're expanding that footprint every day. And then even more exciting, Buddy enables us to go straight to your door. And when we think of consumer behavior, look at what's happening with Drizzly and alcohol, right? Everybody wants home delivery, and this predates even COVID, although that certainly has had an impact. And especially you think of medical consumers, people who haven't been able to go out, our ability to deliver to your home door with exactly the product you want, exactly the quality you need, exactly when you need it. In California alone, we can reach 92% of all of California's consumers. And when you think about a state that size, when you think about the density of dispensaries, there are consumers and markets that are underserved. We want to take care of every single one of them. And we can do that ourselves. We can do it in partnership with other companies and build out their platform, because we have phenomenal proprietary software that enables us to do this a bit differently and really connect with that consumer and enhance that consumer experience, user experience, get new users into the category, and satisfy them over and over again with consistency of great product. So that's why we say it's farm to home, because vertical integration, you think of manufacturing, you may not be creating all the inputs fully yourself, and you may stop at just the retail door. We are strictly farm to home because we want to make sure that every consumer has the opportunity to get the best product that they can. And so integrating that capability into the rest of our infrastructure is putting us in a very different position than any other cannabis company. And we are just so excited about it.
Yeah, it's super interesting. I also, I see how much you emphasize the delivery front, and I think that has a lot to do with your CEO. I was chatting with him.
Yes, I was going to mention that.
So here's an interesting story. Adam Burke was, one of the creators of
Pioneer.
technology behind Grubhub, right? It's called something. I think
It became
it's called
Grubhub,
Osmio,
yes.
right? Osmio. And he was telling me, this has been a lifelong bet for me, right? In home deliveries. And especially, in cannabis, when people, before legalization, we're used to having cannabis delivered at their doors, at their homes. That was one of the comforts of illegality. And one would assume, when it gets legalized, things should become more accessible, more easily accessible, more comfortable, right? So I see a lot of that. What's the next step now? Like, you're reaching people's doors. What's next? Like, how do you improve this experience, right? Because to me, it feels like, okay, we're done now. What else can you possibly innovate?
Well, we're never done. And if you know Adam, we're never done. No, Adam Burke is phenomenal. And yes, he was a pioneer in home food delivery. And even pre-COVID, we recognized and we're preparing for this trend. It's kind of hard to miss. And regardless of what may have happened pre-legalization, we're looking at the consumer trend now that over 70% of consumers that are currently getting cannabis home delivered say they're going to continue that in a post-COVID world. It's a way to penetrate new market segments, to be there exactly when we are needed. And so, I think the vision of having such great products in all these sectors and being able to get them out so expeditiously and accurate to consumers gives us a wonderful footprint for a lot of growth, both in terms of our geographic reach, in terms of partnering with other best-in-class companies and helping them to get their products delivered. That's part of what Buddy's all about. So we have this enthusiasm. We have great brands like TJ's Gardens, which is such an iconic brand in Austin. Thank you. Yeah, and our Yerba Buena brand, which we're now about to take into California, it's known for having phenomenal genetics, not just with THC and CBD. So we have brands that meet different segment needs and different positions, but they're all part of our family of brands. One of our favorites is Carnivore, which is already in Oregon, Nevada, coming to California. You'll hear a theme here, which are phenomenal edibles that are taking advantage. And since I kind of come from the CPG space, looking at consumer trends, they are so applicable here. And companies like us that are disruptive, cutting edge, highly innovative, we can marry those trends and get those deliverables into every cannabis product that we sell. And Carnivore is a great example. It was just voted one of the best edible brands in a recent competition. Just great products, and we have some really great innovation coming out in the next few weeks. So we're very focused on brand and building that loyalty. So I think it's the combination of that. And again, because we are retail operators and e-commerce operators, we recognize there are other best-in-class brands. We want to partner with them and get exactly what the consumer wants. And that way we're building value for our shareholders, for our employees, for our partners, and really building out our market share in unique and exciting ways.
And I have a follow-up from the chat real fast. Talking about expansion, right? Kenneth is asking how you compete in Florida, where there's so much expansion. And by the way, quick shout out to Steve for proposing the name DoorHash for the company. I think that's hilarious. I mean, come on.
Clever.
Thank you. But back to Florida. How do you compete in Florida?
We are headquartered in Florida, but we are not operating. It's one of the states we're looking at very strongly. We have begun to expand our East Coast footprint in partnership with community growth partners in Massachusetts. We have a phenomenal new dispensary right over the New York border. And so we are not in that market yet, but we are expanding into some of the big high growth markets across the country.
You've touched very well, I think, on, Stim's place right now and what you're doing very effectively. Your operations are very impressive. So I kind of have a two-part question here. A, with the focus on your delivery aspect, it seems like you're putting a lot of focus on that right now. And obviously you have very established brands. So I'm curious, the competition, does it become other delivery companies, since you're you also provide brands through your delivery service? So I'm curious, how do you measure, I guess market percentage, where you all sit amongst your competitors, if you will?
Well, let me tackle the first part of your question first. if I could go out into every state and open lots and lots of dispensaries in every state, the capital requirements for that would be very significant. And we operate dispensaries successfully right now, and certainly are looking to expand our bricks and mortar, footprint. When we look at e-commerce and we look at how ubiquitous it can be, and every state has different rules and licenses, and we need to always be extremely compliant, and they all look at delivery a little bit differently, or most of them do. So it gives us a franchise to get our brands and products, as well as others, to consumers in markets where we may not have that physical retail footprint. So it's a very aggressive means of expansion, a very margin accretive means of expansion, and it's also playing to the exact consumer trend, which is where, when, and how they acquire cannabis. So that's why it's not that it's our only emphasis, but one of the reasons we bought Driven, which was a phenomenal acquisition for us, right size, great people, great service, is because we recognize that that's a touch point for us that we can use beyond the rest of our geographic footprint, and do that in very exciting ways. So we're still extremely, if you look at the matrix of our business, our phenomenal brands, our great cultivation operations all around different areas of the country, our ability to operate some of the best dispensaries. Anytime you're in one of our states, please come visit. They are an incredible consumer experience. So, and we want to translate that not only to other retail locations, but to e-commerce as well. It's all about the customer experience and having the right deliverables. We are so focused on the right product assortment, pricing. We have probably the best assortment of concentrates in Oregon in our stores. We want to translate that and become a home for people who want those types of products. So it gives us a phenomenal way to expand our footprint very, very rapidly, and in a way that really dovetails with the rest of our operations.
If you could you give us your insights on, since you have such an awesome CPG background, where cannabis is right now in CPG? Mm-hmm. A, is it possible to get that industry leader, the Coca-Cola, the Starbucks? And B, what needs to be done behind the scenes for a cannabis CPG company to be successful that maybe we don't know, just as onlookers?
Well, we've all seen the press. We know that besides me, and there are people from the companies you've mentioned that have segued into cannabis as well. And look, when I assume you're referencing my prior background at Hain Celestial, and when I joined that company, it's probably about the same size, that STEM is now. Shout out to Erwin Simon at Afria. So we've all kind of have strong views about growing industries that are in very early stages, and cannabis reminds me of the natural and organic foods market in its early stages, where there were lots of players, an absence of full standards, so that products made claims and they weren't always quite the same. Yeah. We're very focused on our values, our brand equity, our product quality. And I think the reason that cannabis will attract more senior executives is, if you go into a lot of sectors that, if they grow 1% a year, everybody's really excited. This is an opportunity for tremendous growth. We know that STEM has a great growth plan ahead of it. We are so excited about what we're going to be bringing to the table next year alone. So for executives that have that real entrepreneurial spirit, that identify growing sectors that are really filling a consumer need. We look at what we do, especially, let's say, in the medical community. We also have a great, ESG platform. We have the Forest Initiative, which is a self-created charity that makes sort of pain-killing products available, especially for children that may be suffering from certain afflictions. So there's so much about cannabis that has such a positive orientation to it. And I think executives who like high growth sectors want to really work with world-class companies. And that's one of the things that attracted me to STEM, having a leader like Adam. We have great financial discipline. you can't be too much of a cowboy, even in a fast growing industry. You have to really have that discipline. And that's what I love, is to have that great entrepreneurial, high growth, fast growth, get in there, be best in class, penetrate the market, do all those great things, but have that right discipline so that you're really engaging with all of your constituencies in a very positive way. And that's what's going to attract senior executives when they realize that that's the path to really growing value and really being in at the early stage of an industry that we all imagine what cannabis is going to look like 3 to 5 years from now. Anyone who's not thinking about it, they're really missing an incredible opportunity. There aren't a lot of high growth opportunities like this out there in other sectors.
Amen, Ellen. Well said. Well said. Ellen, really appreciate you being here with us. Would you like to leave our audience with maybe like a 15-second, 30-second last thought on STEM?
Sure. I think that there are a lot of sound-alike companies in cannabis. We are unique. And right now, I believe we're undervalued because we have such great brands, such great cultivation, that whole farm to home connectivity that gives us a very unique platform. So we don't have some of the risks perhaps that other companies do, because we control our supply chain as much as we can, for our own brands, and then really pick best in class partners to work with. So that's what I think makes STEM so exciting, is our unique business model, our phenomenal people, phenomenal brands and products. And watch us for the next year. You're going to love us.
I love it. Thank you so much, Ellen. Really appreciate you being here. We'll talk to you very soon, I do hope. But you have a good one.
Thank you so much. Great seeing you guys. Thank you so much.
You too.
Bye-bye.
OTC STMH, STEM Holdings, formerly, now driven by STEM.com.
I am ready to bring up my screen for a second.
I swear, if you bring up
I
Sundial.
want to show you something that's interesting. It's a chart by our good friends at Viridian Capital Advisors. We were talking about about this the other day. For the first 3 months of 2021, we've seen smaller or more, less covered MSOs, and I mean covered in the sense of analysts, perform as a basket better than the larger MSOs, right? In the larger MSO group, we have GTI, for instance, TrueLeaf, Cresco, Terracent, Curaleaf. In the smaller MSOs, we have Marimed, C21 Investments, STEM Holdings, Harborside, and Medicine Man, now Schwaz. And I wanted to ask the chat what they think of this in terms of what would they rather invest in, right? What do they see?
Kicking me off. Listen,
What do you see as better, right? A 3-month performance. Do you think this will be sustained? Do you think it's better to bet on slower growth, but sustainability? Is larger growth a synonym of non-sustainable? Or I just want your opinions on this.
Yeah, drop us your opinions. We are moving on, though. Javi, I got to cut you short, man. You're long-winded Leon today. We're going to Fluent Cannabis, Consortium. This is OTC CNTMF. We have their Chief Operating Officer, I hope I say this right, Natalia, what's last name? Javier, help me out.
Natalia Velasco.
Thank you. That was so much more beautiful than I would have done. Natalia, welcome. How are you?
Good. How are you?
Good.
Thank you so much for having me here.
Oh, it's a pleasure to have you. It's been a fun show so far. But last does not mean least in this case. I love Fluent. Fluent is one of my, I think, favorite companies to watch in the space. Tell us a little bit about it. Tell us about what you do, about the company, and maybe where the company's at.
Okay. So I am the head for human resources. I am responsible for the most important asset that Fluent Cannabis Care has, which is its employees. I joined the company back in 2017, and it's been a great journey full of experiences, a lot of hard work. I think we have accomplished a lot, but still have a long way to go. I'm incredibly proud to be part of a growing industry, and that it helps so many people. We have built an incredible team that is working really hard to produce a high quality product for our patients. So this is who we are. We're very excited to be here with you guys and share with you a little bit of who is Fluent Cannabis Care.
Absolutely. Now, Fluent is primarily Florida-based, if I'm not mistaken, but you also have other markets.
Yes. So we are based here in Florida, but we also have operations in Texas, Michigan, and Pennsylvania.
Fantastic.
Florida being our biggest market, we have 24 dispensaries, and we have 2 cultivation facilities, one in Tampa and one in Sulphur Springs.
Interesting. The Texas is very interesting to me. Javi, I mean, when I think of Texas, I think of Consortium right now. So maybe that's just me. I think that's really cool. But I'll let Javi, just one quick follow-up. I'm sorry, Javi, I'm the worst.
Yeah, go.
What is it? What's your duties as Chief People Officer? Obviously, I think cannabis has done a decent job at putting the employee first, especially in the pandemic, from a lot of stories like GTI we heard. But what it is you do for Fluent?
So basically, I'm responsible for bringing all the talent to Fluent. So we do a lot of hiring. Last year with COVID, even though it was extremely hard year for everyone, I think for us it was a blessing that we were able to stay open. We were considered an essential business. So it was different from other companies where they had to let go so many employees. And I think in our case, we had the opportunity to stay open, and we continue hiring employees through all the years. So we stay open all the time. Hiring has been, I think right now, a challenge for us because we are trying to maintain our operations open, and we've been hiring employees like 24/7 for our cultivation facilities, for our dispensaries, even for some positions here at headquarters. So we have our headquarters here in Miami, but we constantly with my team, I have a great team of 4 people, in total we're 5, and we are constantly looking for talent out there.
What are you looking for now specifically? Are there any interesting, cool, positions open?
So we have many positions right now in our cultivation facility. We're constantly hiring for cultivation. So I think when I compare when I started with the company over 3 years ago and where we are right now, I think right now we're trying to bring more people that comes from the cannabis industry, that they've been growing marijuana for many, many years. I think that's something that we are learning, how to be open to that type of employees, to bring their talent and their knowledge on how to grow cannabis. Javier, we have many positions like from cultivation techs. We have positions in packaging. We do our packaging, so we need people to come and join us for flower, for pre-rolls, capsules, oil, vapes. We have our new facility in Sulphur Springs that is going to be huge. It's beautiful, and so we look for positions all over the place. I think something that we work really hard, and I think we're very proud of it, is that we promote within. So I think the employees that join the company, we try to give them the best training possible so they can learn all the areas of the company so they can grow within the company. So I think people really see the opportunity for growth.
And I have like a very self-interested follow-up. Like a lot of my friends from around the world in Latin America and Europe, they always ask me, dude, you've been working in cannabis for a very long time. How can I go and work at a cannabis cultivation facility in the US, right? Because they've always heard about these awesome stories of people just going to California for the crop, and spending a couple months in a wheat field. Does this still exist in this new, like, uber legal, ultra regulated context? Is this still an option at all?
I think there's two. I think we need to mention 2 points. Like, if they can work legally in the country, contact me. I'm always have open positions. Happy to talk to them. I think there is an industry because here in the state of Florida, we are legal on the state side, but not on the federal side. Immigration has become an issue, especially for working visas, or if you want to bring immigrant workers. It is an issue right now just because of being approved by the state and on the federal side. But I think if people are able to come, I think we're always looking for people that really want to work hard. It's not an easy job. I think sometimes when we receive a lot of applicants, they believe they're getting to this like, oh, I'm going to grow marijuana.
I know, no, it's not.
And it's not like that. I mean, it's coming into a facility where you really need to work hard. It's a lot of it's labor work. I think we work as a team. I think we're proud of that because we have our teams helping with each other. So I think employees have the opportunity to see all the divisions of the company and learn how to do it. So it's a lot of like cross training. And that's why I think when we're looking for promotions or we're looking to fill another position, all our employees like to apply. So I think that's really good. But I think from people that wants to come from overseas, and I have a lot of friends that always ask me and they call me and say, Natalia, let's do this business. I want to export. I'm like, wait. There's so many regulations over there that we cannot pass. Like I have a friend that called me, let's export this. I'm like, I would love to do it, but we're in an industry that is very regulated right now, and that's not the way to do it.
Yeah.
From state to state, does it differ for you in terms of, I guess, hiring practices and recruiting from Michigan to Texas to Florida? Does that present different challenges for you?
Not too many. I think when I compare the 4 states, Michigan is the only one that the employment law is a little different. But we partner in Michigan with another company, so our employees is a small group. Texas is exactly the same. I think it's just right now with Texas is trying to understand what's going to happen. We have a small cultivation facility, and we're waiting to see what the future holds for Texas. We produce medicine right now for epilepsy, and cancer was recently approved, cancer patients. So right now we're waiting. But for example, here in Florida, we cover over 19 different illnesses. So I think that the spectrum is different. But as far as hiring is kind of the same process. It goes through our human resources team. We are responsible for pre-screening and interviewing candidates, and we work very closely with the responsible hiring managers of each department. Mm-hmm. So we work together on bringing the best talent that is out there.
I have another, personally geared question, right? I mean, I'm from Argentina. I know, where are you from originally? Colombia. There you go. Oiga, párese, relajado. So, you are in very, Latino forward markets like Florida and Texas, particularly. Are you gearing any of your marketing toward Latino customers? I have not seen that at all. And I've spoken to a bunch of companies operating in California, in Texas, in Arizona, in Florida. And I asked them like, hey, do you even market in Spanish? And they go like, oh, no, not really. But there's tens of millions of people who speak only Spanish in the US today, right? So I
have to tell you that when I joined Fluent back in 2017, there was a huge back and forth when we were hiring people for the call center, because back then the plan was to have our call center based here in Miami to oversee the customers in Texas, for example, or Pennsylvania. And back then we used to be in Puerto Rico. And it was a lot of back and forth, no, this is a market that goes towards more like Americans, like Latinos. But I agree with you. I think what I see out there is a lot of Latinos that want to use our products, that they speak Spanish, and especially here in Miami, here in South Florida, I will say, I mean, everybody jokes, but sometimes when you come to Miami, people speak Spanish.
So sorry, go ahead.
No, go ahead.
I was just going to say, so, being the person who hires the talent, you probably have insider knowledge on maybe where you're hiring the talent next. Are you all looking at any type of expansion plans? Same question I asked to GTI earlier. Is this breadth or is it depth in the market that you're in right now, in markets that you're in right now?
I think right now, where we are. I think when we started 4 years ago, we were like concentrated on a specific market that maybe it was here or based in Texas. We were looking for Texas, when we were looking for Pennsylvania employees. But I think time has taught us that we need to be more open for the talent that we need to bring. And with our new CEO, Robert Beasley, I think that is something that we kind of open up, and we look in other areas of the country. We really want to bring the best. We are not the biggest company in Florida, but we have our goal to be the best one in where we are and produce the best medicine as possible. And that means that we need to align all these people that maybe have grown marijuana for many years, and align that with your lawyers or your financial managers, and align that base of people is where the success of the company is going to be. When we can integrate that knowledge from cannabis to what the knowledge that we can bring from corporate experience from the past, I think that's the perfect match to be successful in this industry.
Mm-hmm. Yes, someone in the chat says, I have a bachelor's degree in agricultural economics and would love to get into the industry, but there's still a lot of stigma and turnover.
That's true. I think the turnover, the way I explain to the candidates when they want to come and work for us, I try to explain. People get very excited because they believe they're going to come and grow weed. And this is not that. Like, we need to grow a plant that we're going to produce a medicine for our patients. So I think the turnover is that they come into an industry where as soon as they get in, they realize like, oh, this is hard work. This is 8 hours, like trimming a flower. And
tell us about it.
It's hard work. It's not like I'm just going to go and have fun. No, I think it's hard work. And I think we need to find, or the people that want to join the company, they need to see the potential of the opportunity of being part of a growing industry. I think from my past, I come from, my previous experience is finance. I joined this company back in 2017. I remember when I told my family that I was interviewing, I'm from Colombia. Like my mom was like, is that even legal? Because of course we grew up in Colombia with this stigma of the negative marijuana. And I think when you get here, I think it's seeing more the opportunity of being a part of a new industry that is growing extremely fast. I think the beauty that you join an industry that you can learn from the beginning, because I think all of us in our industry, we have gone to ups and downs and we have learned our lessons. And I think what we have to do is learn from it and continue. But the opportunity of building your department from scratch, you don't have that at any company so often. I always tell employees, we're not the Coca-Cola that you're gonna come and everything is in place, all the policies are in place. No, we have accomplished a lot, but we still a lot of work ahead of us in order to get to that point and elevate the company that it is like easy, you come, you do your job and you go. No, it is a lot of work.
Very fair assessment. I'll leave us with this. Javi, I'm going to steal the last question here. What is the hardest job in cannabis?
To find?
Or just to do? I don't know. However you interpret that question, Natalia, but I asked it as to do. Who has the hardest job in cannabis?
Wow.
It's Natalia, isn't it?
I think for HR, I think is dealing with all the issues that you can have from employees, like trying to keep them engaged, motivated. I think new generations are very difficult to keep motivated in this industry. It has changed. It has changed a lot. Like sometimes I'm so proud to tell about these benefits. We have 401k, and they don't really care about 401k. So it's finding like what is exactly that is motivating my people. Because look, I think sometimes when I see the reviews about what they say about the company, what they leave, it hurts me because that's not what we're trying to do over here. I mean, we know we're not perfect. We're trying our best. We're trying to help our managers, our leads, our supervisors to be the best of the best and try to make sure they motivate their team. And I think what I want to have from our employees is like, I don't know if their future is going to be at Fluent, but I just want that the time that they spend with us, if they go to another company, they remember us like, wow, this is how much I learned at Fluent, and they're happy to be, or that they were part of Fluent. But that's something that I'm trying to work on, just to make sure that, look, if you decide to live in the future, I just want you to have the best experience and the best knowledge from us.
I love that. Natalia, thank you so much for joining us. I actually learned quite a bit on people and hiring and talent. So I really do appreciate you being here with us and do hope that you will come back soon.
Thank you so much.
Thanks, Natalia.
Nice meeting you. Bye-bye.
Fantastic. That was Consortium, Fluent Cannabis, OTC, CNTMF. Awesome company. I will say with Fluent, every executive I speak to from Fluent, I just love. I love, like, they're all just, they're forward, they're honest, they're good people. And I like the shit there and over there. I'm a fan of Consortium.
Nice. I like it too.
Hey, and Viridian released a report, I think a week ago, saying they're one of the undervalued guys here. So, all right, Javi, I promise you could talk about it. Ryan, we'll just running 3 minutes over here. Javi, you got 3 minutes. Talk about Sundial.
First off, shout out to Totti Perinotti. I hope I got it right. He's always watching, always commenting on all of our shows. He's asking us to get Kim Rivers on the show. We will get her on soon. Of course, she's a friend of the house. I want to hear what the audience thought about Sundial's earnings. Were they good? Were they bad? Did you like them? Did you not? Analysts are usually responding pretty neutral. We have only one analyst so far, Cantor Fitzgerald. So I really want to know what the audience is thinking. And I see here's what I found particularly interesting here. The divergence between retail investors and user-generated media outlets, that analyze stocks. And I'm not talking Reddit, but like some of the larger financial websites who have a bunch of contributors. They were all talking about how positive the results were, while the analysts were not as positive, were just neutral on it.
Mm-hmm. Well, I mean, if you look at their own internal sentiment, though, they basically said they're in a transition phase. Like that to me is it's not an exciting sentiment. They are looking, I think, like M&A potential, further M&A potential, probably acquiring more than getting acquired, and cost-cutting efforts. I don't know. I mean, listen, I said it yesterday. I'll say it today. The Indiva investment to me was very smart.
Yeah.
So I love that.
And that's part of the thesis, right, behind Cantor Fitzgerald. They say, we see the stock is somewhat overvalued, but on the other hand, the fact that Sundial, is riding this bullish moment and can make accretive acquisitions makes a strong case against shorting it as well. So they're just staying on the sidelines. They're saying, we do see a little bit of overvaluation here, but at the same time, they could ride this wave. So, shorting it is not really the best of options.
I would not short this stock. I was in it. I'll consider getting back in again. I just, for me, I have other stocks in my portfolio that I put more weight into recently on the cannabis side of things. Which if you've listened to the past 3 shows this week, you've heard me talk about them. But we got to drop it there, my friend. But this has been a fun cannabis hour. GTI, how often do we get to talk to GTI? We talked to Ellen from Driven by STEM, and then of course Fluent. 3 incredible stocks. I think 3 great stocks to get into if you so choose. Javi, any last words for our wonderful audience? Thank you everybody for joining us.
Join us tomorrow, 4:30 p.m. Eastern for Cannabis Insider.
Cannabis Insider, more stock news. Stocks, yes. All right, or as John Nigerian says, pudding. Don't sue me. All right. Later, everybody.
Thank you guys. Thank you, Javi and Elliot. That was awesome.
Thank you, man.
Yeah, let's we're gonna transition here into our after hours live trading show. We bring on Ryan here. Ryan, how we doing?
My man, Aaron, how you doing, brother?
Oh, I'm good. It's great to spend this hour with you as we've been doing every day, it seems like now.
Yeah, we got 3 days in a row now. Those guys kind of saved my butt. My computer Windows computer randomly did a restart on me, and then I was like, Aaron, I'm gonna need a 2-minute buffer, and they're like, no, Cannabis guys got us, we're good. And then I came and I was like, oh, I hate being late, so that was a breath of fresh air.
Yeah. Well, now let's it was kind of an okay day in the market for me, not great. I kind of got beat up a little bit. I don't know about you.
Man, what happened today? I don't even know how to talk about it. It's such a weird day. Mitch in the comments is saying NFT Ryan. I saw that tweet. Which the NFT? Yeah, I'll talk about the market, then I'll come back to Mitch's point. The market was weird. Like the bond yields started to matter again today out of nowhere. I think the Fed report yesterday was fine. I guess they got to learn to trust themselves a little bit more. Look at the data that was put out. It was good data. I think it was good data. And you just got to let the growing pains kind of shake off. It's shaking out a lot of new players in the market. And I think long term, just like always, the market will be fine and we'll adjust from there. But speaking about NFTs, I saw the awesome Kevin O'Leary interview with Raz this morning. I was actually in that chat watching the whole time. It was really exciting. I think the tweet that Mitch is referring to is my tweet. I think NFTs are the first exposure to mainstream for people on blockchain. So blockchain, for those who don't know, is like it's a public ledger where if you're a part of the blockchain, your information is kind of printed on it. Jivo works on a blockchain. Bitcoin, Ethereum, all of these work on a blockchain. It's that big public ledger. And NFTs are essentially, it's from my understanding, again, I'm still learning about the NFT stands for non-fungible token. It's like, for example, if you have an art piece and you sell it to someone on the ledger, on the blockchain ledger, you will be able to have a record of who made this artwork, who it was sold to, how much it was sold for. So you can always trace it back to the original artist and they can get credit for it. And they could set up like royalties and stuff as they've been adjusting and selling it back and forth around. So I think it's the first mainstream exposure we have to blockchain. I think eventually we'll see blockchain everywhere. I think the biggest place blockchain will be implemented, if we ever get there and we have the proper securities in place, will be probably in our political systems for buying and selling. I'm sorry, not buying and selling, for voting purposes. You can't buy and sell votes. I mean, can you? I don't know. Who knows? But we'll definitely have to see where that goes. Mitch says, love it, Ryan. Going to keep you in my ear. I enjoy your show. Thank you, man. Mitch, I enjoy your show too. I've loved watching you guys on the SPAC Attack show. I see Luke is here. How you doing, Luke? Luke did a really good analysis on covered calls this morning. Covered calls is a great way to kind of make back your initial position in your initial buy. It's slower. It's a little bit more risky. You don't want to do it with the penny stocks that could pop and then you're forced to kind of sell. But with more long-term investments, like they were talking about Visa, V Squad, this morning, you can do that because like Visa is not going to go to $300 overnight. The float and the whole company wouldn't make sense, but you can start making back some of your initial capital, kind of like you put it in a good way as like dividends. It's sort of like a built-in dividend. Speaking of dividends,
yeah, I'm wondering.
Cash App.
Well, I was going to ask, what I see you got something pulled up on your Benzinga Pro. I didn't know if we want to pull it up, look at it.
Oh no, it's SPY. We'll jump into that. We'll jump into SPY for sure.
Yeah, what were you going to say about dividends, real quick?
I feel like I got a nice little dividend from Square today. Cash App was running a giveaway for Bitcoin. I never enter these things. I never think that they're legit, but I just like right before the show started, I got a notification on my phone that said you got $10 in Bitcoin from Cash App. I was like, awesome. That was a nice way to end a red day. So I just wanted to throw that out there. If you guys wanted to, you can check it out. I think Cash App's giving away $10 in Bitcoin. Not sponsored, but I was just happy to get that. So that was awesome. But let's talk stocks, man. Let's talk stocks. Anything that you were watching that you want me to go over before we jump into the chat?
Like I said, I got beat up a little bit today in the market. My eyes got a little bit bigger than they should have, and I saw some stuff that I liked, and I knew kind of the market's a little uncertain, and I hopped in anyway and kind of got beat up. Specifically, I bought some kind of like 3-week out calls on Apple and Facebook, and both those got hammered today because both those stocks didn't really grow at all today.
Let's jump into the chart for Apple then. Let's look at Apple and Facebook back to back. These are
this is what I'm here. I'm here to learn from Ryan too. I'm like,
yeah, man. This is actually great
comment.
because we can go back and forth, and folks will, as we're discussing here, they'll learn from us too. And as we go into other stocks and stuff, we'll be able to see. We'll have less frequency of the same questions we get every single show. Because the whole point here is for you guys to learn and obviously, hopefully, use what you learn to make money. And neither of us are financial advisors. This is all for education and training purposes only. All risks you take are your own. So Apple, this is one that we discuss a lot. Apple, we both know, is a company that has succeeded and will hopefully continue to succeed. They had a 4-to-1 stock split over the summer, which helped push their stock up a lot.
Just real quick, what time frame are we looking at, real quick?
So we are right here. We are on the daily stock. We're on the daily stock chart. Each candle represents one single day across the board. So here we have a bit of I want to say it's a little, you could say almost a year to date, a little less than a year to date time frame here on the stock chart. But again, this is the Benzinga Pro tool. If you folks don't have it, it's a very, very powerful tool that is very, very affordable, in my opinion, compared to like a Bloomberg terminal. You also essentially get a free TradeView account built into it because you could do all the cool tools you could do with TradeView built into here, and it actually saves all your drawings and stuff from the way that I've been playing around with it. So I think, in my opinion, that's a nice little plug for Benzinga Pro.
Got free plugs. We got the links in the description. We have a St. Patrick's Day sale going on. I'll get you hooked up with a free trial. Yeah.
Get in there. So with Apple, the big thing was we saw the stock split hype kicked in, and then of course the post split, it calmed down a little bit. All the gaps essentially in the chart have been filled except this one here, which I believe that we are so far out now, we hopefully should never come back to that gap area to fill it, and it shouldn't really be important. So I'm just going to take it from like a kind of like a 6-month time frame view, plus or minus a few weeks, because I can't get it exactly to 6 months. I'm still trying to see. Oh, it can. There we go. See, I'm learning more and more every single day. But the problem is when I click the 6 month, it turns my candles into 2-hour charts. So I'm just going to stick to the daily candles, and we'll rock and roll with Apple this way. So unfortunately, we've broken the 200 MA, the 50 MA, and the 21 MA. It's fighting to regain that 21 MA. Tech is going to struggle a little bit here with the market sell-offs. Tech is the first thing that always sells off, but then it's also the first thing that also recovers very quickly. We had the big hype up about the Apple car that happened here, and of course, Apple will never tell you what's happening until the day of the event, so people realize, okay, that's a rational buy-up, and I think Apple will stay within this little box right here between the kind of the 216, 215 area to 225. It'll cycle around here until the market regains some confidence and kind of gets up there. I really, really, really hope we do not come back down to this low 116 and test that support level. That would be kind of heartbreaking. We can actually draw a line here. So like I was saying to the viewers, you can draw lines and all that stuff within Benzinga Pro, just like TradeView. So it'll like magnetize you to 116.21. I'm trying to get this perfectly here.
Yeah. And that way, can we go back out for a second to like the full year chart?
Sure.
I think in general, just like, and I'm not a very technical trader, but I like to see, or something that I do like when looking at a chart is if I see a stock that has kind of climbed, but then it's been kind of like steady for a while.
Mm-hmm.
And so looking at
it starts consolidating.
Yeah, that's what I was seeing. And kind of, I think when I made, when I bought these call options, I was basically kind of banking on the fact that maybe we would see a reversal from this, outflow of tech that we have seen. But
for sure,
do
you mind if I ask what strike price you bought your call for? You don't have to share it if you don't want to.
Yeah, of course. No. I just got to check my brokerage account. I'm not going to say which one it is because I don't want people in the comments getting mad at me.
Oh, come on. They got to get over the whole, they got to. It's time to get over. It's time for everyone to forgive.
I'm trying to change brokers, but it's taken me a while to figure out.
Webull is doing a good promotion. And this is not a Webull plug, but they're doing a good promotion. Like if you transfer over your stock, depending on how much money you have in your account from Robinhood to Webull or any broker to Webull, they'll give you like a bunch of free stock. So
yeah. I bought $128. That's the strike price, 128, and they expire toward the end of the month on March 26th. So I think next Friday.
Okay, so next Friday. Okay. So you have about a week, and then you are.
Yeah, I'm not feeling great about Apple hitting that strike price in a week now. After I was hoping
today was ugly.
Yeah, that's what I was. I bought them yesterday, hoping today was gonna be a little bit better. I think I was hoping, and that didn't turn out to be the case. So I might need to rethink that play.
I mean, it's okay. You can always, the good thing about calls, you can always average down. Also the other thing is with tech is sometimes intra week we have pops, so you can kind of use that to kind of cut your losses there. 128 is, I'll admit to you, it's very high.
Yeah,
very ambitious. That's the perfect word for it. Very ambitious. But
well, I will say too. I mean, a lot of times with my options is I'll sell them before they hit the strike price, just if the contract themselves increase in price.
Just trade premiums, right?
Yeah, exactly. So if Apple were to go up to 124 today, and I still didn't think maybe it was going to hit the 128, then those calls still would have, the premiums still would have gone up a little bit, and I could have sold them back and just made some cash.
Oh, there you go. Yeah. So that's smart. You went in with a plan. You have a strategy. That's what everyone should do with anything that you're doing. You're buying commons, you're playing options, you're doing puts, shorting, whatever you're doing. If you go in with a plan, you'll be able to kind of maneuver no matter what the market goes. Best case, you make some money. Worst case, you cut a loss and you kind of take a paper cut and you learn for the next one. So we'll definitely, that's a good one. So I think Apple's an ambitious one. Let's take a look at Facebook. Facebook is a stock that I'm liking long term, not from the social media aspect standpoint of Facebook. Again, we're on the daily chart here, but the reason I like Facebook is from a technical standpoint around their Oculus and their VR AR data and hardware. So I think that Facebook is, so they kind of hinted this during the Oculus 2 event. They had these AR glasses that they kind of hinted at. They look like goggles. But they said that, hey, it looks like they want to enter the AR space, which is AR stands for augmented reality. It's kind of like Pokemon Go. We saw how hot Pokemon Go was, and they want to enter that space. I think AR is going to be big, not just for gaming, but for healthcare, for advertising. So imagine like, Aaron, you and I are out. We got AR glasses on. We're just walking around, and then you see an advertisement. Every single piece of white space in your surrounding area can be an advertising billboard. So people could sell, if you're a building owner, you can sell advertising space on the front face of your building. So you won't see it without the goggles on or glasses on, or with the glasses on, you'll be able to see it. So it'll be really, really, really cool to see what they do there. So I think that's the kind of ambitious point that I have. And that's why I've been accumulating slowly more and more shares of Apple. I'm sorry, not Apple. I have Apple too, but Facebook. So I think that Facebook can get very, very interesting. Facebook can get very interesting. Yeah. What's your strike price, if you don't mind me asking, so we can do a little bit of analysis here on that one too?
Yeah, so I have a couple different ones because, like you, I do like Facebook long term. I was trying to find this article I read the other day talking about the number of employees that they have working in their Oculus department. I was actually telling Luke about that the other day. How basically there's, I'm not going to say pivoting, but it seems like they're putting more and more of their focus from, the Facebook social media aspect into that Oculus technology. And furthermore, I've from some other more people that do deeper DD, fundamental DD are basically saying that from a fundamental standpoint, the stock's being undervalued based on the assets that Oculus has, because people are looking at it more of as more of a social media stock still, as opposed to the technology and stuff they have in Oculus.
And the data they have. Everyone sleeps on the amount of data they have. It's been a hindrance for the stock from a legal standpoint with the whole Senate hearings and all that. And that's, I think, what's held back the stock a lot was that. But I think Facebook has the fact that it is not a $300 stock already, to me, is surprising. It has, as we've seen here, last August during the summer, it hit 300. The 300 level was rejected, never essentially the highest point that it went to. Is it tries to get close to 300 but doesn't want to cross it. But I think from a tech standpoint, these guys are going to be a big player in the hardware standpoint as well as the gaming standpoint. Mitch, we got a few comments coming in too. I'm still getting used to StreamYard as well. Mitch says he's going to help you out.
Whoa. We don't say that word.
Mitch?
Yeah. No, I'm just kidding.
Why? Oh man, come on, you can't scare me. I'm still on
the streaming platform that we're using.
Oh, YouTube.
Yeah.
YouTube
there you go.
What
exactly.
are you talking about? The YouTube comments are coming in. Did I say something? I'm sorry. My coffee still hasn't kicked in.
I do it all the time.
Mitch said he's going to help you transfer. Jason says he's loving the show. Thank you so much. Jason's the big boss man. If you haven't seen the Kevin O'Leary interview, go ahead and watch it. You will be astonished. Well, it looks like Benzinga got an exclusive that Kevin O'Leary will be investing in a Bitcoin mining company very soon for dividends of Bitcoin. So if you can find that Bitcoin company, you can make a lot of money once that press release comes out. You're going to get a big bump in that spot.
Yeah, we should just buy all of them, and then one of them will be right?
That's the thing, yeah. Or you could just buy Bitcoin, because I guess when that news comes out, Bitcoin should also get a jump as well.
I got to answer your question about the Facebook strike prices.
Sure.
Because like you guys, like I do like this stock a lot long term, and I never did before. I kind of like learned this Oculus DD that they're basically, far and away ahead of everyone else in like the augmented reality, virtual reality gaming sphere, and it seems like they're putting more and more R&D into that. So I have a 4/9, so April 9th, $300 call.
Okay, that'd be awesome.
And then I also have a 5/21, so May 25th, $310 call. And I will say just real quick, while I was watching these, those two option contracts that I had today between Apple and Facebook, even when the market kind of had like a midday dip or whatever, Facebook started recovering a lot better than Apple did, which was really surprising to me, because in the past, I would have expected Apple to kind of, when it dipped, Apple to have more attention, people buying Apple on the dip, but instead Facebook to me, it was showing me that Facebook was showing a little bit of relative strength against Apple. And after today, I'm way more bullish on that trade, on the Facebook trade, than I am on the Apple one that I made.
I agree. We really see the strength of these stocks on the red days, not on the green days. On green days, any stock can run 4, 5, 6%, but it's on red days that you kind of see the strength, and you can kind of see the sector's front runner. Like, it's no joke. It's not hidden knowledge. I'm a big fan of Mara, Marathon Digital Holdings, for the Bitcoin mining company. And the reason for that is time and time again, I've seen Bitcoin down 10%, but Mara is still green. So that shows me more signs. But of course, when Bitcoin is green, you see Riot running a lot faster. And people are like, why don't you just buy Riot? It's because, the reason Riot runs faster than Mara is because the float is different. So since it's a lower float, it will move a lot quicker in the market with less volume. Also, Riot isn't as strong during the red days for Bitcoin, plus coming from a Bitcoin hash rate, Mara is better and all that. So that whole thesis goes into play there. But it's kind of like, you got to look at the red days as red days are really good DD days, where you can kind of watch stocks and you can kind of find the really, really strong ones and use those for long-term investing, like you did today with Apple and Facebook. They're both good players.
And the same thing with Mara, as far as like you can look at the other Bitcoin stocks, Riot, SOS, and see kind of how they're tracking against each other. And on a red day, say Bitcoin's down and all of them are down, but Mara's down 2% and all the other ones are down 5%.
Right.
Then that's a sign of relative strength in that sector.
Right. Someone's asking, what's the ticker for Mara? It's MARA.
Yeah, it's Marathon. MARA, not.
So I know there's a crypto mana that everyone talks about. I don't know anything about that one, but this ticker is MARA, Magic Alpha, Magic Alpha, Ralph Alpha. I'm trying to do what Luke does, where he kind of does like
the NATO, the phonetic alphabet.
Yeah,
you got to learn it.
I always screw that up. So yeah, I'm excited. We'll definitely see how it goes. The market was ugly today. Towards the end of the day, started getting ugly, but I think that we just have to ride it out. I mean, you've got people talking about the quadruple witching event that happens tomorrow. I've lived through a bunch of these already. Nothing really happens. It really more affects the options player than the market. But of course, that fear translates over into the market. Plus, you have the bond yields fear that's transferring over into the market. You just have to use these days to either average down your high conviction plays, enter your high conviction plays, or start accumulating in your long accounts, where your long accounts are for stocks that you want to hold for years on end. It's not like your really swing account. Use these really red days to kind of take advantage and scalp shares into your account. That's what I did. I bought some more Square. I bought Square yesterday during the redness before. I bought some. No, I didn't buy Unity. I bought some Qualcomm, also QCOM, yesterday as well. So these are two really good long-term stocks that I like because one's in 5G, and Square is just massive, as we discussed Cash App earlier. Square is part of that whole ecosystem that Jack is kind of building around Twitter. Speaking of Facebook, if we could just jump into Twitter stock, I know Twitter gets a lot of flack with everything that was going on from with the whole politics and stuff, but Twitter is a stock that I also believe is extremely well. Now it's catching up to where it should be with this gap up. But before, man, this was a really undervalued stock. And I still think to a certain degree, Twitter has more movement up and it has more movement onward, especially as they're doing like Twitter Spaces, which is kind of the alternative to Clubhouse. But unfortunately, it's still not available for Android users. So us Android users are kind of stuck without any of those apps to be able to use Spaces or Clubhouse. But Twitter, and I have to give credit to Jack Dorsey for this one, he is quickly adapting to the ever-changing tech environment with his investment in Bitcoin, with his movement with Twitter into open spaces and stuff like that. So I think Twitter is a stock to keep an eye on. Now, I'm not saying it's going to run to $100, but I think if you can catch it like down here in the low 60s or even under $60, like if you see another market crash or correction, you can definitely kind of take advantage of this one. And I think this is another really good one long term. Fun fact, Twitter is the very, very first long-term stock that I ever bought back in the day on Robinhood for $18 a share. So this is one that I've had in my brokerage account for a while. I've just left it in there just kind of as an homage, like back in 2017. So if we go back all the way to 2017, when I essentially first started doing like long-term investing, it was essentially, it was in the teens back here. And look how far it's come. It went all the way up, came back down, went all the way up. But yeah, so I think we can start taking some questions from the chat.
Yeah, well, I was gonna say, so someone JJ was asking more questions about Mara. I was gonna say,
Sure.
I was gonna say, I know you have your own videos on your YouTube about Mara,
Mhm.
right? So
yeah, I've done so many of them.
Yeah, and we've talked about Mara a lot. So JJ, I think it'd be best if you want to go check out some more about Mara. Ryan has some deep DD on it. Well, he said, can you just address three things? So just real
Sure.
quick, what do you like about Mara
Sure.
more so compared to the other Bitcoin mining companies?
Definitely. So the reason that I went so deep into Mara versus the other Bitcoin mining companies is Mara sat down and kind of created a 2-year long built out plan in the beginning of 2020 into the Q1 of 2022 to increase their hash rate to 10.37 exahashes. Now that would make them the biggest Bitcoin mining company in North America. 2, they did a lot of strategic offerings around the times when Bitcoin was inching up and kind of legging up so they could recover from these offerings very quickly. It caused some dilution in their float, but they're still under 100 million float. So I saw that. Their management team, their CEO, Mariko Komodo, is brilliant. Their CFO is brilliant. These guys are going to have 90% margins next quarter. For a Bitcoin mining company, that's brilliant. And third, the biggest one is they've gone and done 2 strategic partnerships, one with Bitmain, which is a Bitcoin mining rig seller, so they can get all the most efficient and most powerful Bitcoin mining rigs, the Antmain S19s, for dirt cheap. 2, they're able to reduce their costs to 2.7 cents per watt or per kilowatt. I'm not sure what the unit is there. I'm blanking, but it's in my YouTube video. So they've got the cheapest energy in North America as of right now. So those are just 3 of the big thesis points that I always reflect back to in it. But Jay, I did a ton of analysis on the stock. I've got a 7-part series videos on my YouTube channel where you can kind of see the progression of Mara. So if you want to check it out, you just type in my name, Ryan Rozbiani, and Mara into YouTube, and it should come up for you, and you can just kind of follow it.
I linked one of your videos on Mara in the chat. So if you click on that link, it'll take you to the to his channel. But I wanted to go back to Twitter real quick before we move on to some taking tickers out of the chat.
Of course.
Which we're going to get to that in a minute. I'm excited for that. I love just running through tickers in the chat. It's the most fun part of the show.
Gun.
But so here's my thing on Twitter is I think a lot of we're learning more and more as a society, kind of like what social media does for us, maybe what it's good for, maybe what it's not good for. And I think there's a lot of, downsides to social media. And I think maybe we might start seeing not like I guess kind of a pullback from. I can't imagine that this trend of like more and more screen time on kids' phones. Like I'd imagine that there would be some sort of natural pullback from it, you know. But with that being said, Twitter, unlike Instagram or some of these other social medias, serves a real societal purpose. You know, like the real live news feed on Twitter, that's not going anywhere. That's going to be Twitter has proved to be one of, if not the most effective way to gather news in real time. Yeah, there's some disinformation on there and you have to like poke through and find what's real and do your own due diligence. But that need that it's filling isn't going anywhere.
I absolutely agree with you there. That's going to be something that we'll definitely have to see that adjusts for Twitter and all the social medias. It's essentially it's up to the user to be able to kind of adjust their timing with this app and this platforms and kind of find their niche. The big thing, the powerhouse that Twitter has versus Instagram and Facebook and I think TikTok. TikTok I don't know much about. But what Twitter has is people kind of go and find their niche community and kind of plant themselves in there and grow. It's kind of like what I did with finance, what you did with finance. You see people doing it with comic books, with NFTs, with crypto. So it's the big powerhouse there, and kind of it's a social aspect of it where you kind of meet people that you would have never imagined to meet all over the world. And two, like you said, the news aspect of Twitter is like we get all of our earnings information comes quickly through Twitter. I post from the Benzinga Pro tool. You guys have that awesome tweet function, so I can just click the tweet button and I just blast the news directly to Twitter, so people can come to it for news. And of course, like you said, you have to parse it and find what the real news is. But for financial stuff, like the stuff that we do, it's been great. And you can meet and learn from a lot of awesome people who are doing a lot of essentially free work for you, the followers.
Yeah. And 100%. And that's kind of like my point is I feel like the downsides that do come with social media are coming more so from like the Instagram, the TikToks, and maybe not as much from Twitter.
Mm-hmm. The isolated apps.
Yeah. And it's like there's all these kind of I don't even know the exact data coming out, like just from as far as what's the word, self-image, like it, like a lot of social media like really hurts kids' self-image, like growing up, all this stuff. And it's like, yeah, maybe it's not the best thing for a 16-year-old kid to be on Instagram 8 hours a day, whatever. But Twitter, like I said, is filling that need for live news, and I don't think that's going anywhere.
Yeah, like you said, the self-image stuff, like through TikTok and Instagram, it's weird. And like I know TikTok is cracking down on that. Like you have to be like 18 or older, or you have to have like a private profile and you can't post or something like that. I don't know what the deal is. That's a platform that I haven't ventured into. I do want to eventually venture into it to be able to kind of turn my content into 1-minute content and throw it up on there to build an audience there. But I think that, again, with every platform, you're going to have pluses and minuses, positives and negatives. It's a matter of the user adjusting and kind of building around that. And again, the age issue is something that all these platforms are going to have to deal with. But I think Twitter is one of those that essentially, since you're finding your clan and your community, it becomes a little bit less deterring, especially even as a younger person, because the whole self-image thing isn't there. People don't really post pictures of themselves on Twitter. It's mainly text.
It's a lot of information, being shared and stuff. And you do have that kind of with TikTok too. There's a whole financial sector of TikTok. Some people call it FinTok. I like Stock Talk better.
Stock Talk's better.
But I mean, so you have FinTwit on Twitter, you have Stock Talk on TikTok, so it's fun to find your communities on the different apps. I'm just more like, I'm kind of skeptical. I think over time we'll see the effects of what growing up on 50% of your time on Instagram, like what that is gonna do to, and I'm in that generation. Like I got Instagram,
and COVID made it even more, especially now that kids aren't in school. It's like the whole day they're on there. I'm on my phone all the time too. I gotta admit it, but I mean, it's mainly for us. It's the main like work related stuff that we're doing through the finance stuff, but most of these kids are just swiping through TikTok videos and just watching everything that they can, and just kind of absorbing that for like 30-second laughs. Or what is it? Is TikTok a minute or 30 seconds? Or
I think up to a minute, but I think a lot of the popular videos that get viral on TikTok are a little bit shorter, but you can make them like up to a minute.
Those jump take videos always they always like bobble me. I don't know how people can stand that many jump takes just in 1 second. It just blows my mind.
Oh yeah, some of the TikTok videos, they get a little crazy with their editing and stuff.
Yeah, it's wild. It's wild. Should we jump into the ticker machine gunning now? Should we?
Yeah, let's start taking some tickets from the chat. I'm not seeing. Oh, I see
All right,
one.
chat. I'm gonna need you
MRKR.
guys to come in really hard and kind of
Yeah,
bring
we're
in
ready. We're
bring
ready
in
for
the
the
tickers.
We're ready for the tickers. I got the brains here, Ryan. I'm just gonna be the one finding the tickers and giving them to him, and he's gonna
Let's
be
do
the
it.
one.
Teamwork. Let's do
baby.
it. I want to see you guys machine gun, and don't forget, I want you guys to also smash that like button while you guys are here. I want to obliterate that like button. I want to set a record. We're at 1.2K right now. Let's get this video higher. I don't know how we can get it much higher, but this has been one of the most powerful days of streaming. Here we go. They're coming, Aaron. They're coming.
All right, they're
coming in
flying.
hot.
Let's start
They're
with.
flying in. Should we go with T-Doc? Reese is asking about.
I saw Mark or MRKR first. I've never even heard of this.
MRKR, sure. MRKR. Let's do it.
Looks to be kind of like a penny stock or something. So I don't know.
Yep, penny stock. Up 30%. Up 30, almost 30%. It's doing well. Let me get my where are my indicators? There you go. Okay, so so first I want to see why it's moving, and that's the power of the Benzinga Pro tool up here. Shares are trading higher after Cantor Fitzgerald initiated coverage on the stock with an overweight rating. So that's an analyst that's coming in and saying and setting a price target. Overweight means that, hey, we want this thing to balloon, and they announced that a price target of $6. Now, one thing to be very wary of this kind of things is not all analyst price targets will affect the stock. Clearly, Cantor's price target affected the stock. I also want to get a little bit of a breakdown of what this stock does. Clinical stage immuno-oncology, so they're in the biofield, which is cool. T-cell based immunization. Okay, so let's see. There's probably a COVID connection here. So we got some activity here with S4. So it looks like insiders are buying this stock heavy. A lot of insider buying happened today, coming in. You can see right here. The cool thing is the platform here parses the data, so you don't have to actually open up all of these forms one by one and look at them. Let's look at the chart. So we can definitely see that the chart is moving. From a daily chart basis, it looks like you have a good chance of this gap that's formed right here to get filled. I want to see if I can draw a box on this with TradeView. No, I don't want all that line. Okay, let's forget about that. It's not important. Now I'm getting a little bit curious and we're playing live here. Okay, forget about it. That's not important. But I think that this gap right here, you can see the gap is already getting filled really, really quickly. And that's good. It gapped up, so that's very good. So next thing, I want to see the stock overtake that 21 moving average tomorrow. I want this momentum to continue. Does this mean that this stock will definitely go to $6? Probably not. I want to see some float data on this too before we go. Okay, low float, 63.65 million. Low float, that means you're going to see some fast movement, and you can see that here. You got the volume coming in at, what is the volume? 8.5 million volume, a lot higher volume than yesterday. You got almost 4x, a little bit over 4x of volume coming in. So I want to see this overtake that 21 moving average. So again, do your DD, see if the $6 price target makes sense, and then jump into there. Let's go with Teledoc. Reese is asking about Teledoc. Reese is a viewer that I asks a lot of really good stock questions. I've noticed throughout other streams as well. So let's go with Reese. Reese, Teledoc looks like it wants to reverse, man. Teledoc is Kathy Wood's baby. She loves buying Teledoc. Let's see the float. Not a low float, but we know that this is a powerhouse in the tech sector. COVID helped this stock big time. They did a strategic acquisition and merger with Livongo, which was another health company, and you probably know this, but you can see here, even the Benzinga Pro Tool is telling you Teledoc remains a favorite for Kathy Wood's ETFs, and that one goes into her ARK. Which ARK ETF does she keep? Let me just do a quick Google search. So there's actually a website called Kathy's ARK, where if you go there, you can actually search and see all of the different websites all the different stocks that Kathy Wood has. So again, let me just search really quickly. I just want to make sure. Yep, she has it across 4 of her funds. She has it in ARK K, ARK G, ARK W, and ARK F. I own ARK W, so that gives me exposure to this stock. That's how these ETFs work. So let's go to the chart. Okay, so we see this is fighting for a reversal. Again, the sell-off today, had you had a green candle today, would have started the reversal and started making its way back up to that 21 MA in a few days. But unfortunately, we had a big sell-off today, down 2.46%. After hours is giving me hope here. Stock is fighting back up to kind of get up there. Volume is on par. It's a little bit less than usual, but it looks like yesterday we had a lot of uptick in volume. There's a small gap here in the chart, but gap ups are a lot harder to fill than gap downs. So we'll definitely have to watch that one. But Teladoc is, I mean, look, you've got Kathy Wood. She's got it spread across 4 of her ETFs. Kathy Wood has 29 analysts plus herself. So 30 analysts, 30 of the smartest people in finance are working and saying that this is a good stock, and it's spread across 4 of her funds. I'd give this a bullish signal, man. I like this. I like Teladoc. I don't have a position. I would just, if you have a position, might be a good time to start averaging down, especially down here. If you can catch it in the 175, 180 area, it might be a good place to kind of average down and maybe average upward, depending on where your position and your average is. But we can definitely see that. So one thing that we're going to do moving forward is if you spam a ticker, we will completely ignore it, because you make our jobs a lot harder to read everyone else's tickers. So please, if you spam, we just won't look at the ticker. So Dean Martin, great name. Nokia is a stock that I was talking about a little bit earlier, I think in another stream, or I don't remember where, but I was talking about Nokia a lot. Nokia was a darling for the Wall Street bets people. Just real quick snapshot the MACD and RSI in your head that it's going down. I want to go fuller into the chart. Nokia right here was around the time period where I wanted to kind of initiate a position into Nokia. Nokia had a parallel chart to BlackBerry. Both are going to be big players in the 5G world. If we look here, of course, the Wall Street bets came in. This was a darling, and it ran it up almost to $10. And now it started to decline, and we will see more of a decline, and we'll probably see this come back down closer to $3. I do want to eventually initiate a position into this stock, but this needs to cool off. This needs to get the beating off of it, because it's a stock takes a beating once you run it up this high. The same way if you run a stock down heavy, it takes a beating from both ends. It needs to recover. Aaron, what do you think about Nokia?
I'm unsure about, I mean, I know you say they're going to be a big player in 5G, but what does that mean? Are they're building new phones, or what are they doing?
No, not phones. From a hardware standpoint. So let's go over to the news. I want to see if I can pull it up here so you can see here. Their CEO is betting long on the 5G cycle. So Nokia is building a lot of stuff around the 5G segmentation. I believe it's chipsets, if I'm not mistaken. It's around the chipset space is what they're doing. So expects a consuming 5G networks investment as it blooms.
So they're going to be like basically manufacturing the chips then that will go into Samsung, Apple phones.
I don't think they'll get Samsung and Apple contracts. That's Qualcomm has that market cornered, and Apple said they want to do their own chips eventually. But I think for like the third party manufacturing companies, like very much smaller companies, I think, but maybe these guys are more towards like the network, building around the network spaces and like the 5G towers and stuff. I'm trying to find an article that exactly talks about it. I just keep running into they're cutting 10,000 jobs article.
Which that's not it. Great.
That's definitely not it. But
that's my kind of like thesis on BlackBerry and Nokia is obviously as these companies are like losing market cap, they pick up short interest and people are shorting them, and eventually they'll drop to a point where they are being undervalued, which is I think kind of what happened. But as far as like long-term outlook for Nokia, for BlackBerry, I'm very unsure of.
The only reason that the big saving grace, I mean, the reason I like Nokia better than BlackBerry is it's becoming known as a 5G player. Again, being known as a 5G player and being a 5G player are two very different things, because you still have to deliver. And I think that Nokia might be able to get there because in the past they've performed very, very well with whatever sector they're in. They just haven't adapted very quickly. That's the reason their phone market died. That's the reason their resurgence of their phones when they start to enter the smartphone market, even though they had really cool tech in their phone and hardware, it was just really bad marketing and they couldn't get there. They came out with a phone with like a 50 megapixel camera and the phone was like this thick, so no one really wanted to put that in their pocket. if they can move quickly, they can be a strategic company that can be a big player and maybe at one point go up against something like Qualcomm. But again, it's going to be difficult for them. One cool thing that I just noticed within the Benzinga Pro Tool that I'm learning right now is you can see sympathy companies on the side here. So you can see Cisco, Qualcomm, Ericsson, Motorola Solutions. These are all companies that are in the same sector. So for example, if you're looking at Nokia and maybe you don't like Nokia, you can go to like Qualcomm, which is a company that I like in 5G. But I think Nokia is headed downward. So long story short, whoever asked about Nokia is heading downward in the short term. But as you can see here, this stock has been brutally beat up and it needs some time to recover. So let's talk about Costco. I'm Callie's asking about Costco. Costco is one of those stocks that is odd. That is odd. It's one of those stocks that thrived during COVID, and then as the COVID vaccine came out, it took a massive beating. But it looks like it's in a, if I'm catching this correctly, it's in an upward, it's fighting to keep this upward trajectory, but the RSI is telling me we're going back down. So it's going to reject this reversal and probably come back down here to the $300 area and test the $307, $300 area, between $300 and $310 area. It'll probably test that one more time. Costco pays a decent dividend. They had a special dividend a few months ago, and I think that's what hurt them a lot. They paid a $10 per share dividend. And I believe if we even look it up, this might have been the ex-dividend date. So if you hit the ex-dividend date, the brokers kind of take a snapshot of how many shares you have, and based off of that, the company pays you a dividend. But the thing that also happens is you have dividend harvesting. So people and traders come in and buy shares of Costco and run it up into the ex-dividend date. Ex-dividend date happens, snapshot occurs, people sell off, and then they move elsewhere. So the stock takes a beating. And of course, this was marred by the red February that we had as well. So this one came down. So I think this will long-term, I own shares of Costco. I like Costco long-term. It will take some time for it to regain back to that 400 territory. When we were up here, I was really, really hopeful that we would go to 400. But again, this red candle right here was always the demise of the stock, in my opinion. That was always one thing that kind of deterred me and kind of hurt. And I do need to eventually come back.
You're just saying that one big red day was enough for you to kind of. What about that? Like that one big red day just tells you there wasn't enough buyers in that to make it interesting to you, or?
It told me that this big run up that we saw into the ex-dividend date. I'm just going to quickly Google the ex-dividend date. I just want to make sure ex-div date. I just want to make sure for Costco. I want to make sure I have it correctly. I don't want to say the wrong one and then come out looking like an idiot. So the ex-dividend date we had was December 1st. So is that December 1st? I don't believe that's December 1st. No, that's November 9th. That's not December 1st. But again, a big drop in a stock like this, in a blue chip stock. I don't know what happened on November 9th, especially this was after the election. So the election stuff was here. We had the big run up and then it kind of crashed back down. And then it looked like they tried to save the stock with the ex-dividend announcement date, which was December 1st. So it ran up into this December 1st date. You can see it right here on the chart too. Ran up into December 1st and then came crashing down heavy. So it was harvested. So these special dividends, in my opinion, they're announced, they're good for existing shareholders, but they should be only given to shareholders who've had the stock for at least from the previous ex-dividend date until now, so that this kind of harvesting doesn't happen, because we can see it hurt the stock, dropped it down hard. Stock tried to fight back up with the big bull run in January. And even in January and February, where we had the initial bull runs that were happening, this stock was still taking beatings and took an even harder beating down here. And it's about $100 price drop from up here to down here. It's about $100. That's a big price difference, especially for a company like Costco, which we know it's a commodity that people buy. They do really well in sales. It's really confusing. It's really, really confusing, especially with the foot traffic and volume that I see in every single Costco that I've ever been to. It's an enigma, but I do know that they like to keep their costs low and their margins low for buyers. So I think it might be time for Costco to raise some of their prices at least to kind of cover this. But it looks like we're seeing some options activity here. 365 calls and $500 calls for July. So maybe as we go into the summer again, those Costco hot dogs will kind of help bring the Costco stock price back up.
Yeah, I know.
All right.
There was like a famous thing going around Twitter where I guess the CEO or president of Costco, some business guy said like, oh, we need to improve the bottom line. We need to increase this hot dog and soda deal to $5 instead of $1.50. And he said, I'll literally kill you if you try to change this deal or something like that.
That's the thing is like they want to keep the food court of Costco like an amusement park style thing. Keep those prices low. It's definitely 100% a loss leader for them, because the soda prices they can't keep down. The hot dogs in them they produce themselves. They're all Kirkland based products, which is Costco's kind of in-house brand. So they can use that to keep their prices low for those. But for like they're taking a bath on these sodas and condiments and stuff. So I guess good on him from a moral standpoint, but on a business standpoint, it's probably not that well. But I mean, how many people are actually buying hot dogs is also another question.
Oh yeah, look, I pulled it up real quick. The quote: Costco's founder once told the company's CEO, "If you raise the price of the effing hot dog, I will kill you." I'm long. I like the stock. I like the stock. No, I'm just kidding.
That's I guess. I mean, I'll give him credit for that one again.
But what I was going to say is, I mean, we obviously saw the stock run up a lot during COVID. People, just what are we looking at? 6 months right now, a year?
We are out. It's almost year to. We can
bring us back to last March. I want to see last March because I assume it had a little bit of drop with everything else when the market crashed last March.
So it didn't. It crashed, but it was one of the ones that recovered in 3 days.
That's because people probably saw it as a good COVID play because everyone's going to be home. They're going to go buy more bulk items for their house and stuff. So
yeah, went from a low of 271 to a high of 324. So it recovered very quickly.
So that's just a stock to me that we might see like a natural correction toward its pre-COVID kind of levels, because obviously the boost it's been getting from COVID isn't going to last long term. As people go out and eat more, they're not going to have as much need to go to Costco and buy a whole month's worth of supplies for their house for lockdown.
I don't know about you, but my family, my household, they use Costco as like a grocery store too. It's like we don't really go to like the smaller stop and shop chains. It's mainly Costco. I mean, it's higher frequency and like less bulk buys, but to me Costco used to be like a big wholesale warehouse buying place where you get like a huge 10-gallon of mayo, but now it seems like they're kind of slowly churning their way into becoming like more of a grocery store if they haven't already.
Yeah, no, 100%. I have a Sam's Club membership, which is like I think the same thing as Costco pretty much.
Yeah, exactly.
They have like the same stuff, and yeah, I'll do a lot of grocery shopping at Sam's Club, even for stuff that's not necessarily in bulk.
Sam's Club has more variety. I think Sam's Club is the one that works with Walmart. I think those two are under one corporation, if I'm not mistaken.
Yeah. Walmart owns Sam's Club, and Sam's Club is basically just their like Costco competitor. Which I don't know if you want to pull up Walmart's chart real quick, but
sure.
I do kind of like Walmart long term because I think they're trying to position themselves to be in a spot where they can kind of. That chart does not look good to me though.
It's very parallel to Costco's chart.
Yeah,
that's the thing.
I think
look here. This is last March. Same exact setup.
Yeah,
recovered in 3 days, crashed again, recovered, crashed again.
What I like about Walmart kind of long term is they're trying to position themselves as someone to kind of take on Amazon. Like they're setting up same day delivery for groceries and stuff to rival Whole Foods' delivery through Amazon. And I think as we go forward, we'll see kind of more and more people resistant to buy from Amazon because Amazon's obviously becoming so, and we used to see this with Walmart. People didn't want to shop at Walmart because they were putting out mom and pop shops, but now it's like Amazon is the one putting out. It's actually like Walmart is kind of playing, second little brother to Amazon. Yeah. People might be like, oh, let's go shop at Walmart. So we're not giving our business to Amazon.
Yeah, it's weird. It's weird how the stigma kind of jumps back and forth, and we'll eventually have to see where it goes. But I honestly, between you and me, I think Costco, Walmart, Sam's Club, long term, these will all be companies that are fortified and part of the brick and mortar that survives into the digital era, because Walmart does really well with delivery. They've got the 2-day delivery. Costco's got delivery. Sam's Club has delivery. And these are just things, sometimes you can't have Amazon for everything. And I think that's where these three companies have to kind of fight for market share against each other, even though like with Sam's Club and Walmart are the same thing, but they have to kind of fight for market share there for the instant gratification purchases for food and stuff. Because like, I'll be honest with you, I do not like ordering food online, especially with produce. I need to go out there and kind of touch it, feel it, make sure I'm getting the good one off the stand. So I guess that's just some stuff that Amazon psychologically maybe in 20, 30 years we'll be able to overcome, maybe less. But I think currently right now, from a food produce standpoint, non-frozen items, these guys will probably be still in there. I mean, I don't have a Walmart. New York doesn't have too many Walmarts, but I don't know if does Walmart carry produce and stuff?
Oh yeah. I think for Walmart acts as kind of like the go-to grocery store for a large number of Americans. The one thing that not scares me about Walmart long term, but if you look at the data, there have been more and more like dollar stores popping up in rural parts of America. So people have been shopping more at the dollar stores and less at Walmart. But
that's awesome.
With that being said, you can't go to the dollar store to buy, produce or groceries. And Walmart,
right?
Walmart, there's something to be said about it. Like, it's nice to be able to go somewhere to buy your groceries, your food for the week, and then you can also get any other household items that you may need. And I mean, Target's kind of doing the same thing. You can get groceries and household items at Target too. But
Target's a big one. Should we look at Target's chart? Target is one that has truly advanced what their whole store used to be. Target used to be like you run down one amongst all of these different companies, and Target has emerged like a champion amongst everything. Like some people call it some people joke around and call it Target as like a luxury brand, but Target is one that I like Target a lot. Their stock has a gap here, which is a little bit worrying, but again, it's so far long ago that I would completely ignore it and just kind of forget that the gap is there. But this stock, it looks like it runs up into earnings, comes down. This big red candle worries me a lot. I need to know what happened there. We can actually use the date on March 2nd, 21. Let's see what happened on March 2nd. March 15th. March 4th, 3rd.
All right, I'm seeing a couple. Let's. I want to take this one out of the chat.
Let's go into Pennyland. Let's go into Pennyland with the chat. I like having fun with the chat.
T-Cat. Someone said Lou said it made him a millionaire today. I'm jealous because I lost a few $100 today in the market. So shout out T-Cat.
Let's see if Lou's being honest. Let's see if Lou's being honest or just trolling us. He came in with a hello bag holders comment. I am very happy for you, Lou. If you became a millionaire today, happy millionaire day.
What's that little red candle at top? Is that after hours? What is that?
It looks like it jumped up, and then I don't know if the data isn't coming. It's telling me up 33%, but the candle's red. Let me see.
That might be just the after. That might be the after-hour trading session.
After hours, it's up too. That's the other thing.
Okay, interesting.
Let me see. I'll switch to Heikinashi for a second so that we can kind of see. But it looks like this guy was in the penny stock, and then for the last 4 days has jumped up higher. Okay, I see what happened. The stock rallied in recent sessions as a potential NFT play by investors, though the company said it is not aware of any material developments that would account for trading volume. So it looks like a lot of different companies are now. I think this is a Chinese company, if I'm not mistaken. A lot of Chinese companies are doing this. It's a United States-based company that operates an online electric vendors. Okay, so these are U.S. So a lot of Chinese companies have been coming out and saying, "Hey, we're going to enter the NFT market," and their stock price jumps. It looks like these guys did it too. What worries me is, and I really hope that Lou took profits, it says, though the company said it's not aware of any material developments that would account for the recent trading volume. So it looks like it's either a rumor started about this that, hey, we're going into NFTs, or someone in the company mistakenly said it, or they shouldn't have said it, and it jumped up. So I wouldn't be surprised if we see a big drop in this, if we get a press release, kind of like what would happen with Kia and Hyundai when they came out and said, hey, we are not actually going into making an Apple car. So I'd be very careful with this one. Lou. I hope you took profits, and I'm very happy that it paid off for you. Again, I can't see. It looks like it halted. Yeah, halted down 10% at a certain point.
Shout out Isaac Money, Benzinga Pro. Links in the description. We got a St. Patty's Day sale going on, as well as a free 14-day free trial. I do want to. Someone else asked about.
Sure. Yeah, you hit me with the tickers, and I'll go through them.
Okay. Oh, JJ asked about. He said he wondered if the same will happen to Peloton about going back to its pre-COVID levels.
I think so.
I think so too. We don't have to pull up that chart because we've already taken another one from JJ. I'll go to another one about we'll do Clean Spark real quick. CLSK.
Sure. CLSK, Clean Spark.
Real quick back to Peloton. I think it will see it go back to its kind of maybe. I think pre-COVID it was trading at like $25 and it's at 100 right now. I think we could see it go back down to maybe around like 50 or so. But I think it's being traded way higher than it should be right now.
I agree though. That's it needs to that stock needs to calm down.
Speaking of Sam's Club, I was grocery shopping at Sam's the other night, and and I always like to go around like the little aisles and stuff. And in their like sports equipment aisle, they had like a knockoff Peloton that looked exactly the same as a Peloton. Had. Yeah, exactly. It had like it had a screen on there and everything, and it was like $600 from Sam's Club. You get the bike, and you don't. I mean, Peloton, you're paying like $600 a month for like 2 years before you own the bike.
Wow.
I don't know. I don't know how much it really is. It's not that much, but it's expensive.
Peloton's just get expensive. A regular bike for $100 and go ride around and take in nature. That's like taking nature. So Clean Spark, let's take a look at it. Riding the 200 MAS support, so that's good. It's fighting for a reversal. We know that Clean Spark is in the Bitcoin mining space as well as clean energy, more clean energy than Bitcoin. But I think they went to Bitcoin to kind of flex like, hey, we can get really cheap prices. We can do it very affordably and very kind of energy efficient. So Clean Spark is doing well. It's kind of downward, but it's kind of flat for the past 3 days. But I like the fact that it's holding this 200 support. I take a look at it again. It looks like it had a 4% day. So I like Clean Spark. Clean Spark is a cool one. I would like them to kind of stick around more in the clean energy space than the Bitcoin space. I don't want every single clean energy company going into Bitcoin because the cost of Bitcoin is high as well. People don't realize it's very expensive to mine Bitcoin. It's about so for Morrow, their cost is $4,500 per Bitcoin, and they have like the most affordable Bitcoin mining. So I'd imagine for these guys, somewhere between $5,000 to $6,000 per Bitcoin. But Clean Spark looks like it jumped because they closed a $200 million offering. So that's always good for a stock. When you close an offering, always goes up, and we've got $35 call sweeps coming in. So that's really good. So we can see so it looks like
there was some unusual option activity on Clean Spark.
Yep, $35 calls. That's big. That's a big gap.
Does it say how much the investment was for?
Does not say.
I might have to do some more research on the Benzinga,
jump in there,
on the Benzinga Pro Unusual Options Activity tool and find that out. But I want to say a couple things about Clean Spark. First of all, I like some of these Bitcoin sympathy plays that aren't strictly like Bitcoin miners, which that's what Clean Spark isn't just a strictly Bitcoin miner. They're basically they do microgrid technology, which from kind of a macro like general standpoint. Our power grids, at least in the United States, are on like really big power grids to the point where if someone, say a foreign government or someone hacked and like shut down one of the power grids, it could shut down the whole Northeast, like from New York City to whatever, like a huge, like multiple cities on one power grid. And basically what Clean Spark does is they're saying it's safer for our communities, our military bases, whatever, to be run on their own micro power grids, these microgrids, so that you don't run into the same security issues as a million people living off of the same power grid.
Right. Yeah, that's interesting.
We kind of saw that down in Texas when they were having like power failures. If those were on microgrids, the idea is that one power outage wouldn't have caused 100,000 people or whatever it was to like lose power.
You can probably repair those a lot quicker too, I'd imagine.
Yeah. And so basically what Clean Spark is saying is that they're like, we're testing our microgrid technology by doing these Bitcoin mining because it uses so much energy. And basically if our technology, our microgrids stand the test to Bitcoin, then we're ready to go.
That makes sense. That makes perfect sense to me.
Yeah. So whether
up against the highest energy consuming asset right now.
Yeah.
And if it holds up, and it proves it's kind of like you're testing your thesis in real time.
So it's amazing what the company is doing because they're using these Bitcoin plays. Like, yeah, they might make some money off mining the Bitcoin, but they're marketing it as like, we're testing our technology that we're going to change the world with using these Bitcoin things. So I like that stock because it's not, like I said, it's not strictly a Bitcoin miner. They have some real like technology to offer behind it, and they're kind of using the Bitcoin as a way to put their technology to the test.
I'm here for it, man. I'm here for it. The stock looks good. The chart looks good. The options activity gives me hope for it. And it's a baby float right here, almost 23 million float. So it's almost like nothing. It's a very.
This
very
was
low
and
float.
shout out Jack Hurley. This was a Jack Hurley stock, and yeah,
Shout out to Jack Hurley.
I like
know
the stock.
who that
and
is, but shout out.
Well, I'm seeing in the comments someone's calling for ENG and CVI, which were two more of his calls. So I don't know if they're saying that because he called all three of those or because it's just random. But yeah, we're actually having the ENG CEO on Power Hour next Tuesday, I believe.
Dude, I like ENG a lot. Let's jump into the chart and see what the chart's telling us. ENG is a really good powerhouse clean energy company too. They're sub $5. They're a penny stocked, and they have a lot of potential. If you see here, they went to an all-time high of about $9.40. The chart was in a reversal going upward, but it looks like that reversal was rejected after all the redness that we see today. Let me go back to regular candles. It had a green day yesterday, but it looks like today it kind of sold off down 10 points. Wow, 10 points. Okay, that's a big dip, but in after hours, it wants to recover. Again, the market needs to kind of let go of all this fear. Like, come on, there's so many catalysts for green energy coming. The infrastructure bill is coming. You've got all this money being ejected to the economy. Bond yields are scaring people, and they shouldn't, in my opinion, they shouldn't. Like, you got these great companies, you're going to miss out on opportunities on stocks like this that are in 2 to 5 years are going to be Goliaths in the clean energy space. This is like the dot-com era. Again, forget the bubble that happened in the dot-com era, but it's like the dot-com era. This is back when Amazon was a $40 stock, and kind of like you can catch green energy companies or Bitcoin mining companies that are in these spaces that are going to do really, really well in a few years. It's just, you got to have some patience and have some faith. Like, I see so many traders, like, you get 2 good days, right? You see 2 big days, stocks up 43%. Stocks down 8%. You get some good days, and then like a red day comes out, and they like throw their hands up, and they're like, "I don't know what I'm gonna do. The world is ending. It's a red day." It's like, come on. It's like,
that's how I felt.
I know. I don't blame you. We're all in this together. It's difficult.
My
It's hard to
my
swallow.
stimulus check is already gone.
Already, it's like that South Park thing. It's like, and it's gone, and it's gone. You just gotta have faith, man. You gotta have faith in your conviction plays. Your strike prices for your Facebook should do well for you. Hopefully we get to the point where you can trade those premiums. And Apple, you never know. Maybe tomorrow Tim Cook comes out with that car, and then that stock goes to 140 again.
I mean, that's the thing about options, is you really do never know. But yeah, I mean, that with the Apple ones, it's like it's tough because I think when I bought them, the stock was at like 123, and I bought the 128. Like, yeah, it could go up $5 in the next 8 trading days with some good trading days, but instead the first one was bad. Now it's down to 120, and that 128 just seems ambitious, as we said now.
yeah. If today if we didn't have a sell off today and Apple closed like towards the 123, 125, 128 would be
I'd look golden. Right, I'd be, yeah, exactly. Yeah. And so, but that's the thing is I know that risk going in with options, and my mindset is I don't trade options with money that I wouldn't be okay with losing, because my option strategy is like pretty risky. There are a lot of different ways to trade options. You can trade options in a very risk averse way to make it, to where you have low risk, but maybe a little bit less of a high return potential.
Right.
I basically, just kind of do the YOLO calls with them, but that's not that makes up a very small percent of my account. Right. My portfolio is mostly, just in common stock long. So I make up for it with those little, risky options where I lose.
What's your favorite long-term position that you have right now?
That's a great question. Favorite long-term position. Let me look real quick. I have a few that I really like. I was pitching Volkswagen like 2 weeks ago, so I don't really want to pitch it now because it's already been up like 40% in the 2 weeks.
No, don't even talk to Volkswagen about me. They came out with that BS number of we're going to deliver 100 grand EV vehicles. Do you know how hard that is to deliver an EV vehicle, man? Come on, just getting the batteries for those is a pain in the neck.
Well, I would say, yeah, the one thing I liked about Volkswagen though is I saw I was doing a little car shopping, and just for fun, I went into some places that were a little out of my price range and went to the Audi dealership, and they have a full electric Audi SUV like on the floor, e-tron Audi.
Man, Jason pays you well then. The Audi dealership, man. I gotta come over.
No,
to
it was right.
Benzinga.
It was right next door to a used car dealership, and I was like, you know what? I'll walk in here, see what they got. And I was out in like 10 minutes because they were all trying to rope all the salesmen were trying to rope me into something. I was like, right now,
those dealerships are hurting these days.
I drive a car that was built in 2001 right now, so it's 20 years old.
I drive a 2003. So
almost as old as I am.
I'm proud of it.
I'm proud of it too. I like my car. But yeah, that was something that like surprised me. I was like, holy shit, Audi already has like a full SUV ready to go, ready to compete with Tesla.
That's big. That's big. That's big. I'm here for it, but I still think that at the end of the day, in a few years down the road, there'll be so many. It's kind of like what Elon Musk said about the COVID vaccines. There'll be so many companies with so many COVID vaccines. It'll be the same thing. I think at the end of the day, the reason that everyone bets on Tesla, and we can see it here, Kevin O'Leary, we've got a Benzinga exclusive. Kevin O'Leary changed his mind on Tesla and everyone else is because it's Tesla, not from the car standpoint. It's like we were talking about Facebook earlier, where we don't care about the social media aspect of Facebook. I don't care about the car aspect of Tesla. I care about the software and the self-driving and the robo-taxi network and all that stuff. That's where I see Tesla's powerhouse there. And then from an EV standpoint, EV car standpoint, I think GM is going to do really well there, and Volkswagen is going to do very well as well. I think there's going to be a lot of companies that thrive.
I'm looking at my long positions now, and it's hard to like pick out one that I say I really like right now because there's just so much uncertainty in the market. But I will say I do feel really good about both AMD and NVIDIA. Not like I'm not going to trade any like short-term call options. Like I think they're going to go up a bunch in the next 6 months or so. But where AMD and NVIDIA are sitting at right now, I'd feel very comfortable kind of buying them and just letting them sit for 5 years or so.
Chips sets are in low supply, high demand, both solid plays. NVIDIA is going into Bitcoin, and they might start delivering Bitcoin rigs soon. So I think two very, very, very solid plays. Someone's asking about Square, which is ironically my favorite long-term position. Tehnor is asking about that. Square I like a lot. I think Square is going to be a powerhouse. I think Square, Jack Dorsey is brilliant behind it. We were talking about Cash App earlier. We were talking about Twitter earlier. Square is a Goliath, and it's going to be a big player in business moving forward, especially in the whole decentralized finance world where people are getting away from banks. If you look here, the 200 support broke, but it was regained, and today almost tested it. I like this stock a lot, and I've been adding to my position. I actually averaged up yesterday on this position.
You like
I should have
the
waited
stock?
for today. I really like the stock.
You
I
like this
really
stock?
like the stock.
I
averaged up yesterday. Like I was so excited after the Fed report. I averaged up and I was like, all right, this is gonna be fine. I'm gonna be good. And then today it goes, pew.
Yeah, I actually like Square too long term. The one thing that kind of scares me with it at its current price is just if we keep seeing that kind of outflow from tech, from growth stocks.
Yeah.
I mean, Square has obviously already grown so much, the stock has throughout the past year or so. But with that being said, Square operates as not only do they have Cash App, but they have the payment operating system, the POS, for thousands and thousands of small businesses throughout the country.
Right, exactly.
And I just don't know if we've seen a company that has done that for as many companies that Square is doing it for right now. So as small businesses kind of come back with COVID and stuff, I think that will be a very strong outlook for Square.
I agree. I think long term, it's going to be a play that's going to be needed, especially as more and more people become small business owners or kind of businesses don't want to rely on banks, because getting a bank account for a business is a headache. So kind of you can just go to Square and you can kind of run everything through there. And I think they'll eventually branch out, if they haven't already, into like doing your taxes for you or something like that. We'll definitely have to see what happens there. So I think it's an interesting play long term.
Yeah, and obviously Kathy Wood's in it, so that.
Oh yeah, Kathy's. I forgot that Kathy Wood is in Square.
Yeah, she
Let me
likes.
see what fund she has it in.
She likes Square and.
She's got it in 3 funds: RKW
and I think PayPal, because in her mind she sees more and more business going from big banks to these kind of like fintech banking apps like Square and PayPal.
I think she sold out of PayPal. Let me just check the stock real quick. I'm checking that website, PYP. I think they got rid of PayPal. But let me check.
Okay.
Oh no, I was wrong. I apologize. I was wrong. She has it in her three big ETFs, K, F, and W. Also have PayPal.
Yeah, I was gonna say I think PayPal and Square are her two big like fintech plays. As far as
And I want to see her buy SoFi. I want to see her invest in IPOE because I want to see her go into there because SoFi is to me the next Robinhood. She hasn't invested in it yet, but to me that's the next Robinhood. You can trade crypto, you can trade stocks, you can have bank accounts, you can do loans, you can refinance student loans. I think she should get into that one in my opinion because that one's going to be a big competitor to Robinhood, especially with everything going on.
100%. All right, well we do have to wrap up here, but I'm going to take one more.
Sure.
We got Matthew asking he would like to buy an Upstart $90 strike put. I'm wondering when I go to sell it, does it gain more value as it goes to $90? Let's pull up Upstart real quick.
Sure. But full transparency, I'm not a options pro, but we can analyze the stock as we saw Upstart had a massive gap up with the great earnings report that they had with the acquisition news that they had. They had they had almost a 90% day. They're down 5.3% on the day. Again, what happened here was Upstart was thrown onto one of Robinhood's charts. It's a popular stock, and those stocks have the tendency to be bought up by a lot of new traders. So it kind of ran a stock up 40% all the way up to 100%, and then it came down, and now it looks like it's sort of mellowing out. It might be a better idea to look at this like on a 5-minute chart to kind of see the movement. Yeah, so you see this was earnings yesterday, and then you had Robinhood came in at 9:30 a.m. and ran this up, and now it's sort of mellowing out. I think we come back down to the $85 area would make sense with this stock, unless those Robinhood guys want to hold on to the stock forever. I think he bought a strike price. So he bought a $90 put, so he's betting that the stock comes down to $90, which I think it should, in my personal opinion. These guys are in tech as well.
I think he's looking at it, so he hasn't bought it yet. And I will say, anytime a stock runs that high up, you will be paying like a very expensive premium for the puts.
Mm-hmm. Because everyone expects the stock to come down.
Exactly. But to answer your question, Matthew, yes, if you buy the $90 puts and the stock drops toward that $90, your contract will gain value, but it will also have, it will lose value over time with the theta decay. So if the drop happens tomorrow instantly, like you're good to go. But if you hold on to that put over time and it doesn't drop to that $90 strike price, and it will start losing value.
Yeah, these are expensive contracts. It's a $1,000 contract for the $90 put.
That's anytime a stock has a huge gap up like that, people go to rush to buy the puts, which makes those puts more expensive. So you're paying a big premium. But then a lot of times those people buying those puts will tell you there's a reason, they're buying them. And the reason the premium is gaining that high, because there's a good chance that stock will go back down. I don't 100%. Usually. Luke has a funny story where he basically blew up an account trying to short a bunch of stocks that gained a bunch of, had big gains in one day.
Yeah, shorting is very expensive with a stock that gaps. So that's why shorting GameStop was so expensive and the premiums were high. People were still trying to short it, and you would see the premiums were insanely high. I don't short stocks. I have no clue how those work, but I know that like you said, it's just like puts when the stock price goes up higher and higher, especially in a very, very quick time interval like GameStop did or like Upstart did here. It looks like all the start companies are just jumping up. The puts and the short premium goes up, so it gets more and more expensive. I think GameStop was a 46 or 47% premium that you had to pay on the short position to be able to pull out. So that destroys you. Plus, you have to do shorting on margin, so that's even more. So I think that will get wild.
Awesome.
Covered calls.
Yeah, I'm still trying to learn that. But yeah, I'm glad, Matthew, we were able to get your question answered a little bit, but we do have to wrap up here. Ryan, anything you want to finish off with?
No, just thank you so much for watching. You can find me on Twitter at Ryan Rozbiani. I'm also on YouTube at Ryan Rozbiani. If you guys have any questions, Twitter is the best place to catch me. And I do a bunch of DD videos there, and you can catch me and Aaron on Benzinga 3 times a week, Tuesdays, Wednesdays, and Thursdays.
Yes, sir. And like always, please smash that like, give us a follow on Twitter. I'll throw our Twitters in there. And if y'all are enjoying the show, please subscribe to the channel and tweet out too. Tweet at us that you're enjoying the show. Tweet at Benzinga. It'll help us out a little bit.
Yeah, give us some feedback.
All right, y'all. Well, we'll be back tomorrow, 8 a.m. Eastern time, pre-market prep. We'll see you there.